Increasingly weighing up signs of de-escalation against any signs of escalation, and it's the de-escalation signals that seem to be winning. So the futures picture looks really quite positive this morning, and increasingly so, actually. This is more positive than it was just an hour ago. Up by 1.3% on Euro Stoxx 50 futures. FTSE futures up 0.8%. They were definitely lagging more than that earlier, around half an hour ago, and DAX futures up by 1.2%. So there is this sense that we're getting a very positive narrative being told by the White House, talking about winning, talking about the progress being made in the Iran conflict. We're also seeing talk of a 15-point plan that the Americans are going to be presenting to the Iranians, talk of when these meetings might take place. Could they come as soon as this week? So there's a lot of positive commentary coming, certainly from the American side, around what could be achieved here, and the market is choosing to focus on that rather than the disruption that has already been caused and continues to be in place, actually, Lizzie, for the Straits of Hormuz.
Well, speaking of that disruption from the Middle East war, in terms of the stocks to watch this morning, we begin with airlines, and Ryanair's CEO speaking to the FT, saying that the airline plans to wait for long-term prices for jet fuel to fall. He says they'd be greedy and wait until hopefully they can get under $70. So mind the airlines. We also keep an eye on UK stocks. Will there be any reaction to that UK inflation data that we broke at the top of the hour? Bang in line with expectations, but of course it was in the weeks leading up to the Iran war. And then finally, EssilorLuxottica, of course, it is Meta's partner, the owner of the Ray-Ban brand, and Meta have withheld from the EU over battery rules and supply snags. So keep an eye on EssilorLuxottica.
We will certainly watch all of those, Lizzie, and really a lot of the overall market dynamics then all to do with one trade, and that is energy. It is oil and it is gas prices, both of those dropping this morning, so we would expect to see that have an impact on some of the energy names and a more positive impact on the energy consumers, of course. So we are out of the gates positive on the FTSE 100, up by around 0.5%, waiting for the other markets to open up, and they could open up more positively. There's a lot of focus on the energy story, as I say, and that seems to be taking a lot of assets with it. We've seen the European government bond markets opening in the last half hour, and opening with those yields dropping once again quite substantially, reversing some of the move higher that we saw in yields in the yesterday's session. So certainly that will be something for yield-sensitive stocks we will watch as well. So the FTSE 100 then up by 0.7%, the CAC 40 up by 1.1%, and the IBEX over in Spain up by 1.25%. Lizzie, we wait for the DAX to open, perhaps one of the more beaten up markets, of course, around what's taking place in the Middle East, and we'll see whether that means a bigger turnaround today.
Well, in terms of the sectoral breakdown, surprise, surprise, when you've got Brent down 4.9% at $99 a barrel, the sector at the bottom of the basket today is energy, down more than 1%, but it's the only sector that's in negative territory today. The rest in the green. Travel and leisure leading the gains at 1.8%. Basic resources not far behind. Industrial goods and services, banks, retail, all up there. And just in terms of some of these energy names, if we dive into that sector, Total down 1.2%, BP down 0.9%, Shell down 1.4%. I had mentioned that we should keep an eye on EssilorLuxottica. They're up more than 1%. I mentioned Meta's rollout of the new display-equipped Ray-Ban smart glasses in the EU has been hampered, and yet EssilorLuxottica actually up this morning, along with this risk-on mood that we seem to be seeing at the start of the session here in Europe.
Yeah, and in terms of the best performers on the Stoxx 50, we've got Prosus moving higher, up by 2.9%. We had a positive session in Asia, and some of the tech names doing pretty well. That can be something that pushes the Prosus share a little higher in the Netherlands. ING Group, Diageo, Safran. So in there we've got banks, we've got drinks companies, and we've got defence. So it's a mixed bag of some of the strong performing companies this morning. To the downside, to your point though, Lizzie, we see Shell and Total Energies as the worst performers. So there's a sense that energy not having its best day, but clearly it's obviously rallied a long way given the fact that oil prices are still just under $100 a barrel. 99.32 is where we trade on the Brent price. Let us get into the markets in a broader sense and talk to Natalia Lipakina, who's head of EMEA Equity Strategy over at JP Morgan Private Bank. Natalia, very good to have you with us. Thanks for being on the programme. I wonder how you're navigating the sort of conflicting headlines that we get around what is actually taking place with regards to Iran. So the US administration very confident of the progress it's making, talking about air supremacy, talking in President Trump's words of having won in Iran. Then we hear from the military spokesperson in Iran saying the US is negotiating with itself. The market seems to be focused on the intent from the US side and saying, well, even if it doesn't lead to anything in the short term, there is the intent there, and that to some degree matters. How are you navigating all these headlines?
Yeah, good morning. Great to be here. It's a lot to navigate. And when we look into the market, we still actually remain quite constructive on the market. We think that there is an upside risk into the year end. And that's our assumption. If I look in S&P, for example, we're seeing around 7,500 on S&P. And that is predicated on the fact that the recent geopolitical developments are actually a short-term headwind. Because I think if they are, then the market comes back to the fundamentals. Then the market comes back to, well, 2025 was actually a very strong year for earnings. And most likely, you know, the earnings can stay very high in 26 and 27. We'll roughly pencil a double digit. But the key question here is how long oil stays at the current levels.
Okay, so the key question is the duration. But if we did assume that this de-escalates, and that seems to be what you're suggesting with that call on the S&P, does that translate globally then? Do you also expect good things from European stocks and Asian stocks, because arguably both of those more affected by energy issues?
I think overall that is positive for the global markets, right? But when you compare, for example, emerging markets over Europe, we actually prefer emerging markets. And we think that the recent pullback can be bought, because when I look into the fundamental, what is happening in countries like South Korea or Taiwan, they're positively impacted by the very strong momentum in semiconductors. So I think if we have de-escalation, basically, there will be more interest, again, in emerging markets. On the European side, we actually downgraded Europe earlier February because we thought that the market was pricing too much at that time. And I think the recent developments just showed that Europe is a bit more fragile and vulnerable. But overall, if we have de-escalation, that is positive for the risk on.
So you think there's going to be de-escalation, but the impact economically surely is going to outlast whatever's happening on the ground, and in terms of the central bank story. I note that you like banks when it comes to the sectors. Is it not too soon to be jumping back into banks when you've got tighter financial conditions already and perhaps further still to come, and all this worry about private credit?
Yeah, when you look into the bank sector, they actually underperformed quite a lot, especially in the US, on the worries that you just mentioned. But when you look and take a step back and look into the fundamentals, the loan growth in the US actually remains quite strong. So for us, and then you look into the shareholder returns, the dividends and buybacks, all in all looks quite interesting, especially given the pullbacks that we've seen.
Okay. And then what's your view on the Mag 7 if we're talking sectors? Is now a good time to buy in the same way?
Well, I found it very interesting that since 27th of February, basically what you have seen is tech has been one of the leaders. Yes, it was down as the rest of the sector, apart from energy, but actually it's outperformed in the relative terms. We think that tech is a very good opportunity right now, especially when it comes to semiconductors, because I think investors forgot that there is a huge capex cycle that is happening, more than 600 billion from those hyperscalers. So we actually think that those companies are quite attractive at this point.
Yes. And Natalia, so help us join the dots here, because at the same time as we've forgotten that there's a big build out around hyperscalers and around data centers and all the rest, when we were saying that in January and February, we were also talking about the energy demands that those businesses will have. And now we find ourselves in an energy crisis. So how do we get excited about the former without worrying about the latter?
Yeah, I think there are a few sectors that benefit from this trend. First of all, it's industrials, right? They benefit from the capex cycle that hyperscalers have, but also utilities. And if you look in utilities, the story is still the same. Supply is constrained, demand demand is still very strong, especially when it comes to the hyperscaler capex. So we think the utilities also is a sector that, investors should look right now. And also, if we have and continue to have a risk-off environment, utilities usually is a good sector to diversify into.
Today is a day when finally gold's broken out of its down streak, the second in a row, I think. We're up 1.6%. How do you feel about the gold miners? Because they seem to be splitting opinions.
Well, we prefer the metal over the equity. So we do like gold still on this pullback. I think the market was in general worried about what is happening in the market, and thus you saw such a big pullback in the gold. But we think that the recent pullback gives a very good opportunity to step into it, because ultimately, the metal still provides a diversification to the portfolio.
So what worries you then, Natalia, about, so I can understand lots of people talk to us about how they're going to assume de-escalation. What is the risk to your view? And should investors be protecting themselves in case these base case scenarios don't turn out to be accurate?
Yeah, the risk is if oil stays higher for longer. And I think, there are different scenarios that we can look into if oil stays 100, if oil goes to 140. But then I think there is kind of two different scenarios, which is where the market bottoms and where the market will be at the year end. And we think at this point, the market is already starting to price the earnings risk. So for us, yes, oil is an important factor. But even if we have, for example, oil at 100 for the next half a year, for example, we still think that S&P probably will be higher by the year end.
Because the thing that struck me about your notes is that, you're very confident in the de-escalation. You're determined to look through the geopolitics, but surely this is a different scenario because it's not completely in President Trump's hands to de-escalate this conflict.
Yeah, and that's why we think that, yes, if oil stays higher for longer, then you potentially can have a short-term pullback. But I think what is interesting in the equity market is usually that is reflected through the multiple. So the multiple goes down first, and then the market thinks about earnings later. And we're already seeing, the pullbacks in the market. Yes, S&P was a bit better behaved compared to the international markets. But if you look into Europe and EM, we actually had already quite a decent pullback because the market was worried about those earnings for 2026.
If earnings are resilient, Natalia, is that just because analysts haven't quite caught up yet? They need some backward-looking data to perhaps take out to really substantially change those forecasts. Is that something that we need to be aware of?
I think so, because everyone is basically watching where oil is going and how long oil stays at the current levels. And that's why there is this fear, potentially, to change the numbers at this point.
All right. Nice to see you, Natalia. Natalia Lippihinka, Head of EMEA Equity Strategy over at JP Morgan Private Bank. Thank you. Let's check in on the Core 6, shall we? How are they shaping up on this risk-on day today? Green across the screen, as you might have expected, and particular gains for Schneider Electric there, up 2.4%. Rheinmetall up 1.8% today as well. Let's get a check on some of the individual stocks that we're watching as well with Charlie Wells. Charlie.
Lizzie, let's start with the airlines, because these have been so sensitive over the past few weeks to this crisis, to this oil price story. But we are seeing green across the board when you look at Ryanair, when you look at EasyJet and IAG as well. We've got commentary from a number of these executives, from Ryanair's CEO, talking about how, they're not going to hedge until they see the oil price fall further. You heard EasyJet executives talking about how they're going to have to pass the oil price increase onto the consumer. So the market liking what it's seeing as far as optimism on that front. Again, we've got an optimism story here today coming from Fresnillo as well. Let's flip the board and look there. Because of their exposure to gold, we see them up almost 4%. Now, gold has, of course, been an interesting asset in this story because it's usually a haven play, but it's been under a lot of pressure when there's been bad news in the market. That could be a rate story, right? Because gold, of course, does not pay interest. But again, seeing some of the optimism on the conflict, some of those positive headlines, that could be spilling into Fresnillo because of their exposure on the gold front. This is a company I love talking about next. It's ASOS, as seen on screen originally. This really speaks to the consumer, right? They have said that they had some really strong metrics as far as sales. They reiterated their guidance going forward. And look, we're up almost 10% here in London. This speaks to a consumer who's at least has been confident. And given that reiteration, it looks like they're seeing at least confidence there there in the budget clothing sector, which I am closely paying attention to. Let's flip and talk about biotech, because we've got some interesting stories coming through. We've got Novonesis. They are the Danish bioengineering company. They are up over 3% here. There was a significant upgrade there on the back of this idea that, in a higher oil priced environment, you're going to need more bioengineering. That was an interesting take that we heard, and it's looking like that is really spilling through into the market. And then we've got Nanobiotics. Let's end there. That is that French kind of biotech company as well. There was a report in La Lettre that J&J was considering a takeover. So that is a report there, shooting the stock up almost 9%. So some biotechnology news coming through, the market liking what it's hearing.
Charlie, thank you. Bloomberg's Charlie Wells with some stocks on the move, and some of them, Lizzie, moving on news that has nothing to do with what is happening in Iran or energy prices, which is interesting. So those other narratives cutting through. We also see that pre-market in the US, don't we, with the arms story certainly cutting through. So pre-market, the stock is up by more than 10%, and this because of what we heard yesterday from the company, a real substantial rethinking of what it is that this business does, where in the supply chain for chips it operates.
Yeah, a transformation, according to Neil Campling. They're going to start selling their own chips for the first time. It means that they can take on the likes of AMD and Intel, although the CEO speaking to Tom McKenzie in San Francisco saying there's room for all of us. It's going to be such a massive market that we could all play in it. But as you say, shares up in the pre-market stateside. We've also seen shares in SoftBank, which of course owns a majority of ARM, up in Tokyo on that news. Well, coming up, we're going to talk about private credit. Ares joining Apollo in limiting withdrawals from their funds. Well, the latest on what's happening in the private credit space. That's coming up next. This is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot. Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Welcome back to the opening trade. 17 minutes into a session that is increasingly positive for European stocks, increasingly negative for oil prices. We're now down with a 98 handle on Brent. Lizzie, we're just starting to get some lines coming through that give us a bit more detail on what this 15-point plan might look like. More on that a little bit later. But suffice to say, it is adding to risk appetite this morning.
Well, as we keep one eye on geopolitics, we keep another on private credit. Two of the biggest names in private credit, Ares and Apollo, have blocked investors from getting even half of the money that they wanted to get out of their funds, a sign of the mounting strain in that $1.8 trillion market. For more, we're joined by Bloomberg senior reporter Silas Brown. And Silas, we get these news lines every day, more and more of these redemption caps being introduced, that making sentiment worse, and then surely precipitating more and more of these headlines. I just think to myself, at what point does it become a crisis? Because surely that's the way we're heading.
Yeah, I mean, I think it's definitely becoming a vicious cycle where I think, as you point out, the kind of news then precipitates, follow-on redemptions. I think Mike Arrighetti spoke, the Ares kind of head, spoke yesterday and basically said he hopes that cooler heads will prevail.
Everyone
at some
says
point.
that.
And I think to a certain extent, look, I think to the defence of the industry, I would say that the withdrawal caps at 5% are there for a reason. I mean, the funds are structured; they're a liquid debt, and they're over 5 to 7 years. And if you halt redemptions or curb redemptions at 5%, that should match the liquidity that naturally comes out of the loan market. So I think, in terms of it being orderly, I think that's okay. However, I do think, if this carries on, it will just, it will become more and more concerning.
Yes, I mean, the cooler head, these are cool heads, aren't they? Putting in 5% caps when investors are asking for 11% back or something. That seems like quite a calming thing to do, or at least they're attempting to calm the markets by doing that, because, as you say, there are reasons for these caps. That's why they exist in the first place. Is it possible that this market stays calm, but because retail investors can't get their money out of there when they want to, they try to take it out of other, more liquid places? And it could be that there's calm in private markets, but not so elsewhere.
Yeah, that's interesting. And I would also say, what we're seeing in terms of, the stock markets and stuff like that, people are moving money out of the areas that people are moving money out of in private credit as well. I mean, this idea that AI is this kind of transformative technology, and private credit is concentrated around areas that will be disrupted by it. And I think, you can see some resonance between the private credit market.
So it's weighing on listed BDCs, for example, in the States, that business development companies have lent to.
Yeah.
And meanwhile, at the same time, you've got inflows slowing. How much of a problem is that?
Yeah, I mean, I also think one of the other points that no one's mentioning at the time, I think there's also a problem with deployment at the moment. I mean, basically, the deal making is kind of really slowed mostly due to kind of like macro geopolitical events, right? And so even if they could raise the cash, whether or not they could deploy it at the same rate that they were doing 2 or 3 years ago, I mean, I think is a very tall order. So at the moment, I think they're both being strained on the inflows and strained on the outflows, so to speak.
How does a higher inflation and a higher interest rate environment affect this industry, Silas? Because does that link to your point about deploying the cash?
Yeah.
What impact are we seeing from that broader narrative in markets on private credit?
I mean, I think private credit funds are more opportunistic than banks, right? And so they can take a higher rate environment and be a bit more proactive about deploying capital, because banks will typically get a bit more cautious around lending, especially in the leveraged world. And so private credits can seize that opportunity, and they did that during the as rates rose through the Ukraine war and in 2022. And so there is a group of people in private credit that are believing that there may be more deal opportunities if rates go higher.
Okay.
Silas. Thank you. Silas Brown, Bloomberg's senior private credit reporter there. As we look at broader markets, Anna, risk on this morning as we keep an eye on the Middle East, and it seems like we've got some breaking lines on Iran.
Absolutely. So oil prices now down by 5.5%. So markets do seem to be moving on some of the detail that we're now getting. I'll say that this is all from AP. So AP is talking about some of the detail that could be in this 15-point plan that the people familiar with it have been telling Bloomberg does exist. So Iran has received that 15-point plan, according to AP. The US plan touches on sanctions relief and nuclear rollback. This, again, according to AP. They're also saying that it includes access to the Hormuz Strait, missile limits. I suppose none of these things are groundbreaking in the sense that these reflect the US talking points, the US ambitions that they've been talking about going into this conflict. So no surprise maybe that the market is leaning into this and sending oil prices a little bit lower. Let's talk to Anthony DePaola, who joins us now, Bloomberg's Middle East energy markets reporter, who is in Dubai. Anthony, talk us through how this is having an impact on oil markets. We see increasingly weakness in the oil price. Some of the detail that we're getting on this US plan, perhaps coming to the fore.
Good morning. The price has gone down below that ever important level of $100 a barrel this week, really, and there's been a lot of talk in the market about the jawboning from the U.S. government that trying to talk the oil price down with this good news. So we came into the week concerned that there was going to be reciprocal attacks on energy facilities like power plants, like desalination facilities, which would have been kind of one of the worst case scenarios in terms of escalation of attacks. We didn't see that. Instead, we saw this 5-day reprieve, which then has now turned into this 15-point plan and ongoing talks. We are hearing that there are some other talks going to come up potentially in person later in the week, possibly in a third country, possibly also involving the vice president and secretary of state. So these are kind of indications that this may be getting a little bit more serious, that some of the participants that are joining the group adding some weight and some heft to that. So the market is taking these as good signs, and that's what's driving the price down a little bit below that important level of $100 a barrel. At the same time, on the physical side of the market, we have Hormuz blocked. We don't have oil flowing through there. Iran is letting a trickle of cargoes go through that they choose, tankers to China, a few to India, and they're even charging some money for those cargoes to go through.
Exactly. Surely it's that really matters here. President Trump can propose what he likes to Iran. Yes, AP can be reporting that Tehran has received this proposal, Anthony, but who knows whether Iran's going to accept it? And we know that the president, in the art of the deal, likes to start with big demands, and then what we end up with could be something very different. Surely what we need to be focused on when it comes to the oil price is just how long the Gulf energy industry is going to take to recover from the Iran war and how long it's going to take for the Strait to reopen.
Yeah, clearly, what we need to see is some real actual progress in terms of reaching an agreement and in terms of getting that open. But as we're seeing in the oil market, people will look for the news that they want to see that's positive and latch onto that. For example, where I'm sitting here in Dubai, we've had a few more quiet days in terms of missile interceptions and noises that you can hear in the sky. The numbers of drones and missiles have gone down. And so people are looking at that as a good sign, saying, well, maybe they really are talking. We're feeling it on the ground here, that it seems like there's a little bit less of activity. But we're not out of it until we're out of it. So there needs to be these discussions that lead to a full reopening of Hormuz, meaning all vessels can go through, not just a select few and not paying tolls. That would not equate the free flow of energy supplies. And plus, the longer this goes on, we have the risk that it takes longer for facilities to ramp back up. Oil fields will need time to increase production. We've had producers shut in fields here because there hasn't been enough storage. There's simply nowhere to put the oil that they pump out of the ground. And a lot of the refineries as well that turn that oil into gasoline, diesel, jet fuel, those are export-oriented refineries. So even the refineries have had to slow their operational levels because they've got too much oil coming out. So what we really need to see is that vital waterway open up that allows the crude to flow and gives time for those facilities to come back online and gives time for tankers to get back to this region to lift that oil and get it out of this region.
Anthony, thank you for the update. Bloomberg's Anthony DePaola there in Dubai. And coming up on the programme, as Asia wrestles with that oil supply crunch, we'll speak to KKR's APAC infrastructure head about the effect on industry build-out. That interview next. This is Bloomberg.
And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1-1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Breaking news on this Saturday morning.
There's really only one story, and that is Iran.
Balance of Power has all the angles covered.
Trust Bloomberg for on-the-ground coverage.
An entire region pulled into this conflict.
Talking to you from the bomb shelters.
Up-to-the-minute reporting.
Iran remains a viable threat.
And the analysis you need.
There was no imminent threat.
There's never a good time, but there are better times.
Netanyahu is my opponent. However, on this issue, we stand together.
Nobody covers geopolitics like Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
This is the opening trade. 30 minutes into today's session, and European equity markets then heading decidedly higher. Something has been happening to the narrative around where this war is heading. Stocks Europe 600 is up by 1.4%. The Xetra DAX gets the best of the gains, up by 1.7% this morning, as we see stocks across most sectors in Europe in positive territory. I'll show you what's happening with oil, and we get a sense of where this is all coming from. We are considerably weaker on the oil price this morning, down by 5.8% this morning. I think we've been a little weaker than that as well, Lizzie. So we are weaker across the energy markets, and this all coming from some of the de-escalatory narrative that we have coming out of the White House, coming out of the U.S. administration. President Trump talking about winning, putting out a 15-point plan, it seems, to try and get peace in, or to try and end the war in Iran. And I'm sure that markets very cognizant of the fact that this is not sufficient to end war in Iran, but maybe a necessary condition. So necessary but not not sufficient, and it is necessary. So for that reason, it does boost risk appetite this morning. Lizzie, what are you seeing under the hood?
Well, to further illustrate just how much markets are latching on to this reason to be optimistic today, we've got 551 members of the Stock 600 higher this morning compared to only 44 lower today. Volumes are still down. We are still a little cautious about how optimistic to be here when we have so much volatility. But let's take a look at some of the leaders today. We've got Roche, aside from the geopolitics, upgraded to buy at Intron Health, so that's up nearly 2%. But on the geopolitics, Siemens Energy and Schneider are benefiting. Siemens up 4.5%. But take it to the laggards now. We've got Reckitt. It has been down over 20% so far in March, the worst month since 2000, and that continues today, down 2.6%. When we talk about energy, you talked about the lower oil price. You're seeing losses for the likes of Shell and Total today. Hence, as I last checked, energy, the worst performing sector today, Anna.
Here's some of the other news that we're focused on this morning then, Lizzie. The Italian Premier, Giorgia Meloni, has called on Tourism Minister Daniele Santanchè to resign after a defeat in a key referendum. The demand follows the exit of 2 Justice Ministry officials. It comes as Meloni attempts to clean house and stem the damage from the referendum loss to reform the governance of Italian courts. Denmark's Prime Minister Mette Frederiksen's party has won a closely contested election. The Social Democrats finished with just under 22% of the vote, their weakest result in more than a century. With no clear majority, the centrist leader Lars Løkke Rasmussen is set to play kingmaker after ruling out a renewed alliance was rejected by opposition leaders. The outcome sets the stage for complex negotiations as Frederiksen seeks to secure a 3rd term in office. And the Associated Press is reporting that Iran has received the US's 15-point plan intended to help bring the war to an end. We understand the proposal was delivered to Iran via Pakistan, but the details remain unclear. Meanwhile, Iran and Israel are showing no signs of let-up in the conflict, with Tehran signaling little willingness to compromise and Israeli officials maintaining they will continue their offensive against the country. Lizzie.
Well, the conflict is at the top of global executives' minds as the war ripples out through the markets. David Luboff, head of APAC infrastructure at KKR, joins us now from Berlin. Good morning to you, David. You're there in Berlin speaking to clients and investors. What are the biggest concerns you're hearing from them there?
Well, good morning, Lizzie. Thank you for having me on the show. Yes, you're right. I'm dialing in from Berlin. I come every year to the infrastructure conference that's hosted here. I love coming to Berlin. And we are having very engaging conversations with the investment community. I would say there's a sense of calmness that our discussions are having. People are focusing a lot on the resilience of infrastructure as an asset class. This is an infrastructure conference after all. So we're spending a lot of time with the investment community talking about our portfolios, talking about the Asia region, and in particular the pipeline that we are seeing. But again, I think one of the key features that's coming out is the resilience of infrastructure during periods of volatility.
But do you expect that that growth of KKR's Asia business in particular can continue when realistically you've got so much geopolitical uncertainty and we're seeing the pressure on Asian economies in particular from the energy shock? Can the growth be sustained at this pace?
Absolutely, Lizzie. I have never been as optimistic as I am today. I've been investing in the Asia-Pacific region for most of my 26 years of investing in infrastructure, and I have never seen a pipeline of opportunities as attractive as what we're seeing today. You know, if we take a step back, we've been operating our infrastructure strategy in Asia for 7 years now. Today, we've grown organically to $20 billion. We have 35 investments across the region. And what's really fueling that? It's the macroeconomics. It's the great opportunities that we're seeing in the key regions in which we operate. For too long, Asia has been underpenetrated from an alternatives perspective. You know, alternatives in Asia represent about 10% of GDP. Contrast that with the US at 25%. So we're in an environment where we've got very quickly growing economies, and alternatives really are expected to step up.
David, thinking about alternatives, it makes me think of the alternatives within the energy space as well. As you're rolling out investments in infrastructure in Asia, does the current war underscore a need for alternative energy sources, and is that an opportunity you're leaning into?
For sure. You know, renewable energy, decarbonization, this has been a big key theme for us over many years in Asia. We have key focus areas: digitalization, decarbonization, and deconsolidation. Within the energy market, renewable energy has been something that we've been attracted to for a long time in Asia. It's one of our key investment themes. And I think what we're seeing today, to your point, the importance of domestic security of supply, the reliance on being able to not import fossil fuels and moving effectively from molecules to electrons. So for us, this is a fantastic opportunity to continue our investment in this space.
So alternatives in terms of the energy story can be a focus, David. But of the other opportunities you talked about, you say that the pipeline is looking really strong, and some of that comes down to the macro. But what if that macro story in Asia is challenged by these higher energy prices and by dependence on energy coming out of the Middle East? How can your infrastructure plays be entirely resilient to that?
Yeah, look, I think there's no doubt higher energy prices should have an impact on economic growth, particularly in Asia, where we are a net importer of oil and gas. So we recognize that. But again, if we take a step back, we are talking about a region that is home to 60% of the global population. The majority of the world's global growth is emanating from Asia. We have 3 of the top 5 economies in the region. So the structural tailwinds we think are so exciting. And then again, when I look at the infrastructure asset class, what has been proven over so many years is the resilience of infrastructure during periods of economic shock. So we are attracted to the long-term contracted natures of the cash flows. We are attracted to the essential services that we are providing to communities. And one of the features and one of the questions that we have been discussing here in Berlin is inflation and what impact that will have on our assets. Infrastructure is long inflation. Regulators allow infrastructure owners to increase their prices at inflation to protect real returns.
Okay, so there's some resilience in that then, perhaps. David, thank you very much. Thank you for joining us. We appreciate getting your perspective. David Luboff, co-head of APAC and head of APAC infrastructure over at KKR. Coming up on the programme, the European Central Bank's Christine Lagarde is set to address the ECB and its Watchers Conference in Frankfurt. That's in just a few minutes' time. We will listen in live for comments on the economy and the impact of the war in Iran. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacqua, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacqua. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back to the opening trade. We're 41 minutes into today's session, and you can see that optimism on the screen there. The Stoxx 600 up 1.4%. Outsized gains for Germany, but we're seeing gains around the world, already in Asia, and looking for gains in the US session as well. Coming back to the geopolitics, we've got oil lower, and it comes back to President Trump's push for peace in the Middle East. The US reportedly having drafted a 15-point plan, put it to Iran, and AP reporting that Iran has now received it. So at least one of the conditions to move forwards in this conflict, de-escalate, has been met. But let's look ahead to what else we're watching throughout the day, because of course we're still considering the economic impact of the war in the Middle East. We've got the ECB and its Watchers Conference taking place in Frankfurt. Christine Lagarde is going to be speaking any minute now, and we'll bring you her remarks live. Then at 9 a.m. London time, we have the German IFO business climate data. At 12 p.m. we'll hear from central banks here in the UK. The Bank of England's Megan Green will be speaking. Later on, we'll hear from the Fed's Stephen Myron. And then later on, after market, we'll get US earnings from Jefferies, Anna.
Let's bring in Skylar Montgomery-Koenig from our Bloomberg Markets Live team as we're waiting for Christine Lagarde to start speaking at the ECB and its Watchers Conference. Then, Skylar, what are you watching from Christine Lagarde?
Yeah, I mean, I think it's very hard for Lagarde to generate a significant rally in bonds, and I think that's partly where the starting place is, right? We've already had her commentary last week. We know that they think there was enough inflationary pressure then to revise up the 2026 inflation forecast from 1.9% to 2.6%, and that was as of March 11. So since then, we've had more destruction to infrastructure, energy prices have stayed elevated, and then I also just don't think it's really within her reaction function to want to have bond prices lower, right? The idea is they want to manage inflation expectations. There's not a reason why they would want to push back against hikes in this environment where energy prices are elevated. They don't know when they're going to come down, and the risk is very much the upside on inflation. So I think both the shift that we've had in terms of prices staying elevated, as well as just Lagarde's bias and what she wants from inflation, point to it being very hard to generate a bond rally from this.
We've got yields down across the curve, across the continent this morning. You're looking at the German 2-year down 7 basis points, the Italian 2-year down 10 basis points, similar for Spain and Britain at the front end. Right now. Let's see what Lagarde does to that. But you point out that commods are more optimistic than bonds this morning.
Absolutely. And now I think there's still a question over how optimistic commodities really should be. But as we've seen from last week to this week, we've gone from something like $120 on Brent down to 100. We've taken maybe 5-10 basis points off a German 2-year yield. Now, I think with commodities, we're getting conflicting signals in terms of, yes, there's wants of a peace deal of some kind from the U.S., but you're also getting more troops actually sent there. So big question from that standpoint. But I think with bonds, as I said, you're seeing more of a reflection of actual destruction that you've already had in terms of that inflationary pressure. The reaction function from central banks seems to have changed post-2022, and so that's really baked into your bond price. And I think that makes sense. And so you're going to have these kind of sticky yields unless you have a reason to think that there's enough demand destruction that overwhelms your inflation impulse, and you don't need necessarily hikes from these central banks anymore, particularly in Europe.
I'm interested that we're getting lots of signals coming through. In fact, we're just getting some lines. Let's go to this, shall we? We're just getting the lines coming through from Christine Lagarde's statement. So a lot of those just dropping on the Bloomberg terminal. And we'll go to the red head. So even though she hasn't started speaking yet, we're getting the text of her speech. So the ECB won't be paralyzed by hesitation on Iran response. Christine Lagarde is just walking up to the podium. It strikes me that that chimes a little with what we heard from Hugh Pill about not talking about waiting too long, but we'll see whether that is indeed a parallel we should draw. Just looking at where we are on bond markets, as Christine Lagarde gets ready to speak, and we don't see a huge Amanda Chase. Let's tune in to Christine Lagarde.
Thank you particularly for convening a family reunion. And, given that we are this family, I would like us to take just 1 minute to celebrate one member of the family who is soon going to enter his 10th decade. And I leave it to the economists and the number guys and gals in the room to figure out how old he is. But I would like a big round of applause for the first chief economist of the ECB, Otmar Issing. So, my dear Volker, if you had called this meeting a month ago, my speech today would have been entirely different. And the excellent economists and speechwriters and experts who helped me draft those wonderful words had to just delete everything that they had worked on and start all over again. And what's more, we had to update almost on an hourly basis. I suppose that's what you all do as well. So if it had been a month ago, the euro area economy had ended the year with solid growth momentum. Inflation stood, last reading, at 1.9% in February. And domestic growth engines looked to be strengthening, particularly private consumption that we had been anticipating, and defense spending. That was a month ago. Today is March 25th, and wars are raging. We find ourselves yet again in a different world whose contours are not yet clear. We are facing profound uncertainty about the path that the economy will take. None of us can resolve the uncertainty about how and when the Ukraine war will end and how the war in Iran will play out. But what I want to do today is set out how we will approach this last shock. And the main message I want to convey is that our response will be rooted in our monetary policy strategy that I spoke about in 25, as you mentioned. And I believe that it equips us well in order to navigate the shock that we are facing. Our strategy, if you remember, sets out 3 key principles, and they will guide us. Principle number 1, it requires us to assess the nature, size, and persistence of the shock before taking a decision on policy. Monetary policy cannot bring down energy prices. That's obvious to all of us. But we must identify when higher energy costs risk spilling over into broad-based inflation, be it through indirect effect or through second-round effects via wages and inflation expectations. Principle number 2, it requires us to focus on risks, not only the baseline. Because the effects of significant price shocks on inflation can be non-linear. We need to work with scenarios and pay close attention to the early warning signs that the shock is embedding in broader inflation dynamic. Principle number 3, it gives us a graduated set of options on how to respond, which depend on the intensity and duration of the shock and how it propagates. Small, one-off and short-lived supply shocks can be looked through. But as expected deviations from our inflation target grow larger and more persistent, the case for action becomes stronger. So let's examine how we will be assessing the shock, and I'm going to do that with reference to what we experienced in 2022. Central banks and all of you have a long history of dealing with inflationary energy shocks, and over that time we have been able to build up a substantial body of evidence about when they risk spilling over into generalized inflation. In the euro area, the historical evidence suggests that the risk of broad pass-through from energy prices is the exception rather than the norm. When shocks are small in magnitude and short in duration, as has most often been the case, the inflation impact tends to largely stay within the energy compartment itself. But two factors can change that picture. The first factor is the intensity and duration of the shock. Our research shows that the relationship between energy price shocks and inflation can be non-linear. While small increases trigger no significant reaction in prices, larger shocks have disproportionately stronger effects. Disproportionately. The second is the propagation of the shock, which depends on the macroeconomic environment in which it lands. Firms are more likely to be able to raise prices when demand is stronger. Workers are more likely to be able to bargain for higher wages when labor markets are tighter. And both phenomena are more likely when inflation is already high. Our research confirms that pass-through is measurably stronger when capacity utilization is high and unemployment is low, and that wages feed into prices more forcefully when inflation is already elevated. An additional point. How people have experimented inflation in the recent past also matters. Research shows that lived experiences of inflation can have lasting effects on how people form expectations, with recent salient episodes carrying disproportionate weight. So, remember when the energy shock hit in 21-22? Several of these channels that I have just described were operating simultaneously. But there are factors today which point to a lesser pass-through. Let me take three. First, the initial shock has so far still been smaller. In 22, the shock was exceptionally large and persistent. Remember, even before the Russian invasion began, oil prices had increased threefold between October 20 and March 22, and natural gas prices by even more as Russia gradually throttled supplies. Then Europe was effectively cut off from a supplier that had provided around 45% of its natural gas imports and forced to find new suppliers in a disorganized way, remember? They had to compete in the global LNG market and build new import infrastructure. Oil prices peaked at around $130 per barrel in March 22, a bit lower than what we have, but in a similar range. But gas prices surged to much higher levels than what we have seen so far. 340 euros per megawatt hour in August 22 versus around 60 euros today. Second major difference. The macroeconomic background today is more benign. In 22, the economy was primed for pass-through. Europe was experiencing strong pent-up demand after the post-pandemic reopening. Supply chains were still disrupted after the pandemic. There were significant labor shortages. Headline inflation at the onset of the shock stood at around 5%. Our analysis confirms that this combination of factors exacerbated the inflationary effects. In particular, in the absence of demand pressures, the impact of supply-side shocks on inflation would have been considerably lower. There was a combination of supply and demand. Today, the euro area economy is in a moderate recovery phase without the pronounced demand-supply imbalances that characterized 2022. Headline inflation had been close to our target for almost a year. The unemployment rate is low by historical standards, yes, but we no longer face acute labor shortages in multiple sectors. Third, the macroeconomic policies are less supportive. When the invasion began in 2022, monetary policy was highly accommodative, with interest rates at minus 0.5% and ECB still engaged in net asset purchases. The fiscal stance was also expansionary, with an aggregate deficit of over 5%. Interest rates today are broadly at the neutral level, and the fiscal stance is neutral too, with an aggregate fiscal deficit of around 3%. Well, I will contend that at the same time, there are reasons for extreme vigilance. The International Energy Agency has described this as the largest supply disruption in the history of global oil market. And with the attack on energy infrastructure, especially the Ras Laffan facility in Qatar last week, the likelihood of a quick normalization is now diminishing. A further cliff edge, less talked about, is also approaching. Global oil reserves are being drawn down as we speak, and the last LNG tankers that loaded in the Gulf before the war started are now reaching their destinations, meaning the full impact of lost supply is only about to be felt. And if the shock does intensify, the response of firms and workers may be faster than last time. We have a more recent memory of high inflation, which could affect how quickly costs are passed on to and compensation sought. During the last inflation surge, firms shifted to adjusting prices significantly more frequently. The share of consumer prices changing in any given month rose from around 8% to 12%. And as inflation came down, that frequency gradually returned to near normal levels. But the operational experience of changing and increasing prices remains. That's on the corporate side. On the worker side, the initial response was relatively slow. After a long period of stability, it took time for employees and their representatives to seek inflation compensation. But research shows that as inflation rose, people began paying more attention to price developments, particularly when inflation was far away from target. Now, even though the 2022 shock was brought under control, that experience, both on the corporate side and on the workers' side, has left its mark. An entire generation has now lived through its first episode of high inflation, and it may not be as slow to react this time around. So we face a situation where if the current shock remains contained in energy markets, it may have a limited effect on broader inflation. But if it intensifies or persists, the pass-through could accelerate. So how can we calibrate policy under this level of uncertainty? There are two key elements. The first one is agility. We have followed for some time a meeting-by-meeting, data-dependent approach without pre-committing to a particular rate path. And this was precisely because we did not want to have our hand tied in an environment where the outlook could change rapidly. In 2022, we were still bound by forward guidance on asset purchases and rates when the energy shock hit. That pre-commitment limited our flexibility to act. Now we are prepared. And we're prepared, if appropriate, to make changes to our policy at any meeting. The second element after agility is a focus on risk. Last year, we updated our monetary policy strategy with precisely the type of challenges we are facing in mind. Not because we were prescient, not because we knew what was going to happen, but we judged that we were moving into a world of more frequent supply shocks. From that walk in the park that I was expecting in late 2019, well, we have faced at least 4 major shocks since 2020 and structurally higher uncertainty. So we decided in this environment that we needed to take into account not only the most likely path for inflation, but also the risks and uncertainty surrounding the baseline. This emphasis on risks was embedded in our reaction function in July 2025. Given the range of possible outcomes we face today, scenarios are an especially valuable way to capture risks. They allow us to explore what could happen if key variables were to change, in particular if the intensity, duration, and propagation of the shocks differ from our baseline assumption. Our excellent ECB staff published, I was going to say under duress, but certainly under huge time pressure, 2 such scenarios last week. They did not just 2 scenarios, but they were the 2 that we thought would be appropriate for publication. These scenarios actually allow us to explore what could happen if variable were to change. And in particular, as I said, intensity, duration, propagation. Scenarios are not forecast. Scenarios are just illustrations, constructed among other things under a no policy change assumption, as at a particular time. And we will review them and update them, those scenario analysis, regularly. And we will publish what we think is appropriate in due course. Let me take you through the 2 scenarios that you referred to, Professor Wieland. The adverse scenario assumes that the shock intensifies, but its duration is relatively short, containing its propagation through the economy. Relative to the baseline, annual inflation moves almost 1 percentage point higher in 26, but falls back steeply by 28, as indirect and second-round effects are outweighed by a large energy-related base effect. Growth would be somewhat lower in 26 and 27 before recovering in 28. The severe scenario assumes greater intensity, longer duration, and broader, more persistent propagation. Relative to the baseline, annual inflation would be significantly higher across the horizon by almost 3 percentage points in 2027 and would not return to target within the projection horizon. Growth would be notably weaker in 26 and 27 by almost 1 percentage point cumulatively before rebounding in 28. These scenarios highlight a crucial feature of the current environment, that is the non-linearity of the risks to inflation. As the shock grows in size and persistence, the response of prices and wages accelerates. The deviation from target widens disproportionately unless monetary policy steps in. Because of these non-linearities, it is essential to identify as early as possible when the shock is at risk of broadening. And that means tracking closely the indicators that can signal ahead of time the size and timing of indirect and second-round effect. You will hear a lot more about that from my colleague and friend, our chief economist, Philip Lane, in the next session. We did coordinate a little bit. of course, this will depend naturally on developments in commodity markets, because a sufficiently large shock will always spread beyond the energy component. But it will also depend on how the burden is shared. As a net energy importer, a spike in energy prices creates a terms of trade tax for us in the euro area. But who is us? It's a shock that must be absorbed by a combination of workers, firms, and governments. If firms increase their selling prices disproportionately, as we saw in 2022, early days, it could trigger an equivalent response from workers, what I have called at the time the tit-for-tat inflation. We will therefore watch very carefully firms' selling price expectations and micro evidence on price changes, as well as paying very close attention to our wage trackers and its movements. We will also monitor the demand side, as the risks to growth are on the downside. A negative supply shock weighs on demand, which can reduce the ability of firms to pass on cost and of workers to bargain for higher wages. So far, consumer confidence has fallen more sharply in Europe than following the 9/11 attacks and the war in Kuwait in 1990, but not as steeply as following the unjustifiable Russian invasion of Ukraine. If households increase precautionary savings as they budget for higher energy bills, it could point to a more limited pass-through. The fiscal response will also matter. Targeted government policies can help smooth the shock by reducing energy demand and compensating lower-income households. But broad-based and open-ended measures may add excessively to demand and strengthen the pass-through. I hope fiscal authorities have learned from the 22 episode as well. So what is the appropriate policy response in the face of this supply shock? Our strategy also helps us define how to design that monetary policy response and to do it appropriately. Supply shocks are often presented as offering central banks a binary choice: either look through or react when inflation expectations are at risk of being de-anchored. But in reality, we can respond in a more graduated way. In line with the medium-term orientation of our strategy, the appropriate response to a deviation of inflation from the target is context-specific and does not depend only on its origin, here a supply shock, no doubt, but also on its magnitude and persistence. And this points to three broad cases. First case, if the energy shock is seen to be limited in size and short-lived, the classical prescription of looking through should apply. Transmission lags mean that a monetary policy response would arrive too late and risk being counterproductive. Second case, if the shock gives rise to a large, though not too persistent overshoot of our target, some measured adjustment of policy could be warranted. The optimal response to such a deviation is smaller when the cause is exogenous supply disruptions rather than strong demand. But it is not necessarily zero. Moreover, to leave such an overshoot entirely unaddressed could pose a communication risk. The public may find it difficult to understand a reaction function that actually doesn't react. Third case, if we expect inflation to deviate significantly and persistently from target, the response must be appropriately forceful or persistent. Otherwise, self-reinforcing mechanisms would kick in and the risk of de-anchoring would become more acute. Our updated strategy is explicit on this point. Large sustained deviations call for forceful monetary policy action, shifting to persistence as the tightening cycle matures to prevent those deviations from becoming entrenched. It is too early at this stage to say where on that spectrum we will need to be. Fortunately, we can assess the situation carefully because we are entering this shock from a good starting point. As I've said, we are well positioned. The policy stance is broadly neutral. Inflation has been on target for around a year, and longer-term expectations are well anchored. So in the period ahead, incoming information will give us greater clarity on how the conflict is likely to evolve and how the economy is responding. We will monitor developments closely and set monetary policy as appropriate to deliver on our target. So as you reminded me, Professor Wieland, 4 years ago at this conference, as the energy shock from Russia's invasion of Ukraine was unfolding and gave us a chance to finally meet in person, I borrowed a line from Bertrand Russell, that the challenge we face is learning, and I quote, how to live without certainty and yet without being paralyzed by hesitation. And those words capture our challenge today just as precisely as they did back in 2022. But we are not in the same position as we were 4 years ago, nor was the conflict of the same nature. We have a strategy that is built for a world of higher uncertainty, with risks and scenarios at its core. We have a graduated set of options for responding, and we are starting from a better place should we need to act. And we will not act before we have sufficient information on the size and persistence of the shock and its propagation. But we will not be paralyzed by hesitation, because our commitment to delivering 2% inflation over the medium term is unconditional. I thank you very much for your attention.
Christine Lagarde there delivering the president's address at the ECB and its Watchers Conference in Frankfurt. Now you're watching the polls from Francine Lacqua here. In London, the European Central Bank, she says, will act decisively and swiftly if the current surge in energy costs risks a broader bout on inflation. Again, this was quite significant hearing from the president, Christine Lagarde, saying that the situation today is very different to what we saw back in 2022 when Russia's invasion of Ukraine ultimately sent consumer price growth into double digits. There are reasons for vigilance, the president said. Now, again, she also says and stressed that the bank's commitment to delivering that 2% inflation over the medium term is unconditional, therefore saying that the ECB is prepared to make changes to its policies at any meeting if appropriate. Now, coming up, we'll talk to Mark Hefele, the Chief Investment Officer of UBS Global Wealth Management, as global markets rally on hopes of an end to the conflict in the Middle East. That's coming up next, and this is Bloomberg.
Is about to start.
And you're already looking for that edge.
The Opening Trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your Opening Trade.
Only on Bloomberg. Tune in
Welcome to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a ripple effect. South Asia first to get that brunt. That's moved to Southeast Asia, Northeast Asia, and then more so into Europe as we get into April. And so we are trying to work with governments to just alert them to the various levers they will need to pull, including on the demand side.
There will be less demand. There'll be fewer people traveling as prices go up. That's part of our cut capacity 5%. Like, when airfares have to go up because of oil prices, there are going to be some people that choose not to fly, and it'd be naive not to realize that.
We have fuel security, but we have stepped up a government response to anticipate that in the future there could be disruptions to supply, as we source a lot of our refined fuel out of South Korea and Singapore, and it's obviously that region of the world that has been impacted by disrupted access to crude oil out of the Middle East.
Guests, including the Shell and Boeing chief executives, on the disruptions being caused amid the war in Iran. Now, U.S. diplomatic efforts are fueling cautious optimism on markets that the Middle East conflict may begin to ease. We've also just had Christine Lagarde, the ECB president, saying the central bank will not be paralyzed by the war. Well, joining us now from Zurich is Mark Hefele, chief investment officer of UBS Global Wealth Management. Mark, as always, thank you so much for joining us. Look, the ECB seems to be ready to act, saying they're still assessing the shock caused by the Iran war and will not act before having sufficient information on the size and persistence of the shock. I just don't know how central banks, deal with a supply shock.
Well, I think what was so interesting about what was said was that, there's clear comparisons to 2022. Maybe they're in a better place because they have a plan, but that plan does involve this energy shock flowing through to inflation. And so there is a real bias there towards hiking rates. And I think where we have a different view is that in the United States, people are also pricing in rate hikes around this, but we actually think that the Fed is more likely to cut. And so that sets up perhaps some interesting trades kind of on the 2-year in the United States.
Mark, overall, this has to be a call on what happens to the price of oil, and that has to be a call on geoeconomics or geopolitics. How difficult is it to make a clear call right now, given everything's so fluid and changing by the minute?
Well, I think that President Trump has described this conflict in every way possible, that it's near the end or it's increasing. And we all certainly hope that we've reached the peak of the escalation. On the other hand, if it's the peak but oil prices stay at this level or increase for other reasons, for several months, we know that we're going to see demand destruction and we are going to see inflation. And so we really are keying off the oil prices. And as soon as it became clear that this was not Venezuela, we took down a little bit of risk getting out of European financials. This week, we're saying, hey, take this bounce and maybe reposition a bit in equities, less in Europe and India, more in Switzerland and European healthcare. And we'll do more de-risking in the future if the oil prices stay high. Now, the last time we de-risked may be the day before the market soars because it's all over, but you have to have some discipline in here when you know that inflation and that demand destruction will happen over time. As President Lagarde said, you can't be paralyzed forever. You still have to take actions.
Mark, what is the market getting most wrong? Is there an assumption that actually once there's a ceasefire or a diplomatic solution, that energy flows like it used to?
I think that certainly, it's not going to bounce back immediately, given the actual, infrastructure destruction and other things. I think that clearly the market was a little optimistic about when the Strait of Hormuz would open. But, I think that the most interesting thing is that the way that the market trades on every headline, rather than kind of, I think more closely following, say, the longer term, the kind of forwards in the oil market, where we're trying to look a little more closely.
So what happens, again, what are you doing the next 1 or 2 weeks? If you're expecting some kind of market bounce to get into, and you kind of laid out what you'd be buying into, is it also more diversification?
Yeah, I think that this is really a time where kind of being globally diversified is the best bet, because we don't know where these pockets of inflation or where this demand destruction is necessarily going to pick up the worst, because we still have those very stretched and very intricate supply chains, and so diversification can absolutely help here. And of course, global diversification around the region, in the Middle East has certainly helped clients. I would say that, clients have been very moderate in their response to this. We're not seeing elevated cash levels. We're not seeing any panic at all yet. And so, I think most clients have locked in that strategy and are sticking to it.
UK gilts were a little bit all over the place. We know because of inflation how much energy they import, that the UK is more vulnerable to everything that's happening in the Middle East. Is that a buying opportunity, or if you look at rates volatility in Europe and the UK, you stay away from that?
I think that we would be overweight in the UK versus the US on the shorter end, and because of our view that the Fed is actually going to cut, but it's a relative trade.
What do you do with some of the Asian economies, Mark, and then we'll get on to the U.S. consumer?
Well, I think that it's interesting, because certainly there are issues around oil, but we've leaned on the tech side in Asia, and so we think that is going to stay relatively insulated due to a lot of the demand out there.
Mark, overall, if you look at the next couple of months, are there data points that you try and decipher, or how much should we worry about the U.S. consumer given all of the uncertainties?
Yeah, I think there's a couple of things. First, the longer that the oil prices stay elevated, the longer that the strait is closed, the more that these risks are piling up, that there will be impacts on the U.S. consumer. It doesn't happen linearly, because so much is about future expectations for what's going to happen with inflation and things. And it wasn't that long ago that we were very worried about AI and both, not only the CapEx spend that was going on there, but what's going on with jobs. So there's plenty of other things that we can think about, even if this crisis pulls back. That's why we think that kind of diversification makes sense. Commodity diversification, looking at gold after it's sold off, also makes sense here. But around this crisis, I don't want to be too reductive, but I think that rather than trying to track every headline and decipher which side is telling the truth about the state of the negotiations at any given minute, the oil price contains a lot of that information.
Yeah, how should we view some of the concerns around private credit, given that if interest rates go up, they could be in a even bigger, trouble or pickle trouble? I think we've just lost Mark. No, Mark is back. Maybe it's okay. We'll get back to Mark Hefele shortly. Mark, thank you. Mark Hefele, the Chief Investment Officer of UBS Global Wealth Management. Now, we'll be back, of course, with a good conversation, not only on private credit, but on AI coming up. With billions pouring into AI and businesses rolling out the technology, what does that all mean for jobs? We discuss that with Sue Duke, Head of Global Public Policy and Economics at LinkedIn, and Rob Garlick, author of AI Anarchy or Abundance. The picture for the markets is one of cautious optimism. Certainly across the world, stocks seem to be bouncing back, oil falling. Again, if you look at what stocks have been doing, they've clawed back some of the losses as the Trump administration is stepping up efforts to bring the war with Iran to a close. Coming up, but, much more on Bloomberg. This is Bloomberg.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you're good at your job, bro. Like, this is actually the first time anybody's ever asked me that. I'm not here to say what I would and wouldn't do in the future. But the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. But that's where I'm at today.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Iran has reportedly received a 15-point plan by the U.S. to try and bring the war to a close. Meanwhile, Iran continues with missile and drone attacks on Arab Gulf states and Israel overnight. And the ECB president, Christine Lagarde, says the central bank will not be paralyzed by the war and vows to act decisively against any inflation spike. So ARM is to begin selling its own chips for the first time. The UK-based chip designer says Meta will be its first major customer for the new product. Now, Rene Haas, the chief executive, spoke exclusively to Bloomberg's Tom McKenzie about the new direction for the company and how it fits into aggressive sales targets.
It is a very big day for ARM. There's no doubt about that. We've been an IP provider since we started. We started selling compute subsystems a few years ago, which was sort of the next step, but it's not a physical thing. But as we grew into the CSS business, we had customers that kept asking for more and more and more. And here we are today with ARM's first chip product, the ARM AGI CPU, which Meta is our lead partner for, and Meta asked us to do it with them. So we did.
Talk to me about Meta and the partnership then. One of your customers, OpenAI, also a customer. What are the commitments from Meta, from OpenAI to take this chip on board? When do you start shipping?
So as Mohammed said, it's available now, and we'll start shipping at the end of this year. We're not saying anything publicly about the volumes associated with it, but they are material enough that we have to start talking about the product because it's going to start showing up on our revenue this year.
The revenue starts showing up this year, and in your presentation earlier here in San Francisco, you talked about potentially just this one revenue stream, just this one part of the business, potentially $100 billion by 2030. Talk us through how you get to that $100 billion.
So we're looking here then, Tom, at the general purpose CPU TAM, which today in 2026 is about $60 billion, $70 billion, depending on your maths. I talked about agentic AI driving a 4x CPU workload even today. So $60 billion going to $100 billion by the end of the decade in terms of market opportunity is not really that much of a stretch.
How much of this is about that huge demand we're seeing, particularly here in Silicon Valley, for agentic AI? How much of this is aligned to that shift?
I think you have something key that's underpinning everything, and that's the demand for compute, period. And compute has been perceived in AI about just generating tokens. But those tokens need to be distributed, managed, orchestrated, scheduled. That's all work that only CPUs can do. So the more and more compute that drives agentic AI drives huge, huge CPU demand, which is great for the product we just announced today.
The other number that you announced was $1 trillion, and that's the entire business by 2030. You were a $4 billion revenue company in 2025, and you're looking at $1 trillion potentially by 2030. Just unpack that for us. How do you get to $1 trillion potentially by 2030?
Yeah, so what I showed there was a TAM, total available market, of $1 trillion by the end of the decade. And I showed a picture that had some other die photographs of things that we could do with the tagline, we're not stopping here. So more to come, but today's all about the ARM AGI CPU.
More to come. So you have the pipeline of CPUs. Do you move into GPUs? What else is involved in more to come?
The compute demand for AI is off the charts, and ARM is at the heart of literally every AI compute workload. So we have a lot of different ways to go address that.
Well, that was the ARM chief executive, Rene Haas, speaking exclusively to Bloomberg's Tom McKenzie in San Francisco. Now, the headlines are stark. HSBC is eyeing 20,000 job cuts as AI moves into the back office, while Bloomberg Intelligence warns that 200,000 banking roles could vanish within 5 years. With billions pouring into the technology, entry-level white-collar roles are under siege, leaving a generation of graduates to wonder if their degrees are already obsolete. Now, the urgent question, of course, is no longer what the tech can do, but how we design a labor market that still rewards humans. Well, with us now, Sue Duke, Managing Director for EMEA and LATAM, and Vice President of Global Policy, Public Policy at LinkedIn, and Rob Garlick, former EMEA Head of Research at Citi and author of the book AI, Anarchy or Abundance. So thank you both for joining us. Rob, congratulations on the book. The cover is really fantastic, but it's also an unusual. You basically put Einstein as Uncle Sam. Why?
So I was really inspired by his last public act. So obviously when he was 26 years old, he gave birth to the most famous equation in history, which is E equals mc squared. That gave birth to nuclear technology. Nuclear technology both powers us or could make us extinct. His last act when he was 76 years old, so he was at that time a genius with a lifetime of wisdom, was something relatively simple. He basically appealed to humanity in the Bertrand Russell Einstein Manifesto to say, we appeal as human beings, remember your humanity and forget the rest. And I think the same will be true of artificial intelligence. It can both power us, but it can also cause some big issues. And ultimately, we have to remember humanity has to be at the center of this.
Yeah, which is what your book about is trying to, of course, not lose sight of that. So, I mean, we all often, focus on job losses or job creation, but you also argue there's a really deep transformation in how people will work, so we should focus maybe on the tasks that employees need to do.
That's right. What's absolutely at the heart of this transformation is that work and skills transformation that's been driven by the technology. So what we see very clearly in our data is not that AI is displacing jobs, but AI is fundamentally changing jobs at that skills level. And what we see are three very big categories coming through that are really driving this transition. The first of those AI technical skills, the skills that build the technology, large language model development, those kind of skills. Second big bucket, those AI literacy skills, how to use Copilot, how to prompt engineer correctly. But then thirdly, to Rob's very good point, crucially, all important third category are those human skills, those irreplaceable communication, leadership, team building skills that will be right at the heart of this transformation. And to your point, making sure that we get workers those skills, equip them with the capability and expertise that they need to leverage the technology will mean that workers, companies and economies are in a spot where they can realize the gains of this technology.
But Rob, again, if we have, non-human workers outnumbering human workers, it kind of changes everything, right? It puts downward pressure on wages, working conditions could be much tougher. So what's the solution?
So part of the wake-up call that I had, and by the way, so we did several reports on what the skills of the future are, because I used to get asked that question after every meeting, going to see CIOs or fund managers, and on the way out they say, what do I tell my children? But one of the wake-up calls that I had, we did a report on robotics when I was at Citi, and this is not, you talked about white-collar work, this is not just white-collar, this is also blue-collar work. Yeah. So some of the most out there humanoid robots you can already buy on the market today with less than a 10-week payback period, okay? Yeah. So the economic cost of putting in new technology, let alone large language models and the like, which are coming at kind of costs which sometimes are 99% cheaper than humans, makes it very difficult. And unfortunately, those human skills that we're talking about, very often are not particularly well valued. I mean, my son, just for example, is a trainee doctor. All of the people that do that are extremely clever and extremely valuable in terms of society, but not necessarily paid so much. So we have to kind of think about what sort of society do we want to make sure we value those. And going back to Sue's point on skills, we know the education system has been cognitive credentialing for years that large language models can do just like that. And so one of the questions is, how do we get better at credentialing, measuring, training those human skills as well as valuing them?
Whose job is that, Sue? Right, to train. I mean, first of all, just the big ideas of how we value humanity. The politicians don't really have time. I mean, they should maybe make time, but they have a lot of stuff to deal with at the moment. And businesses are just trying to build it to make sure they survive.
So what we see is organizations increasingly valuing those human skills. So over the past couple of years, we've seen an increase of 10% in the demand for those human skills and 20% where traditionally those skills haven't been valued. So I'll give you a very good example. It's software engineer. That's a job that is going to undergo fundamental transformation. And actually what we're seeing coming through there is Gen AI skills. 4 years ago, 0 Gen AI skills on the top most in-demand skills for a software engineer. Today, they make up over half of the most in-demand skills for software engineers. But just as interesting are those soft skills, traditionally absent from that role and the demands for those roles today. Skills like strategic leadership and communication, cross-team collaboration, they're all in the top 20 demand for software engineer skills today. So that tells you that we have to very, very clearly put the focus on skills. That means government, private sector and workers coming together to make sure that we're building out at scale and at speed these skills development courses that are going to allow workers to keep pace with what is undoubtedly a very, very fast-changing labour market.
How does it achieve exec, how does a company know if they're ready for AI, if they survive this AI wave?
Well, one of the things that happened, that ChatGPT moment at the end of 2022, was that just about every CEO, every board basically said, we have to do something. So in terms of being ready, one of the reasons why it's different this time is that everyone's going full speed to make this happen.
Yeah, but it doesn't mean they're ready.
It doesn't mean they're ready. And by the way, obviously will take time. Implementation usually is not about the technology, it's about the people and the process that's there. But I think, I mean, you mentioned, politicians have a stake in this. I think we need more than just the CEOs, because what's happened in capitalism, and I've had a front row seat of capitalism for the last 30 years in the roles that I've had, is that we have a society that's basically built to be pro-profitability. And that's that moment in time in 1970 when Milton Friedman gave his seminal essay on shareholder primacy. We have a system that's going to be very pro-machine, and we also have a system that's very pro-profitability. And how do we make sure we value the humans in that? I think, back to your question, Charlie Munger, the brilliant Charlie Munger, said it perfectly, which is, show me the incentive and I'll show you the outcome. And at the moment, we have a lot of companies that are incentivized for profitability, and this is possibly the biggest trade in history, because the biggest cost of goods sold item is basically labor. And so we need to make sure that we're not just substituting, we're augmenting people and valuing people in that process. And that's one of the cruxes. And it's not an easy thing to do, but we have to work out how to do that, and we can.
So, I mean, you really have also, a front row seat to, I guess, people's anxiousness because they're on LinkedIn, because that's how people find jobs, that's how, jobs get advertised. Have you seen the labor market significantly change over the last 2 years?
There is no question that we are currently in a labour market that is sluggish but not stagnant. So since 2022, effectively, we have seen a real slowdown in hiring precisely because of that business caution that's out there, that pandemic spillover, and that hike in interest rates. That has had a material impact on those hiring rates, such that in large economies across Europe, including the UK, we're now somewhere between 20 and 35% down on hiring compared to pre-COVID. However, there are some bright spots out there, right? Sectors like healthcare, government, education, they continue to hire, they continue to grow. And these AI-enabled jobs, Rob mentioned white-collar and blue-collar jobs. We see this whole new collar of jobs coming through, where over the past 2 years, we've seen 1.3 million AI-enabled jobs created. They're brand new jobs like AI engineer, currently the #1 title in the UK. Secondly, jobs like forward-deployed engineers, so the people going into organizations precisely to deeply integrate the technology into workflows and systems, and then jobs like data annotator. So there is growth out there, there are hotspots out there, but it is a sluggish environment generally.
I mean, what do you think, Robert, are the jobs of tomorrow?
There's a section in here on new jobs. There's a danger that a lot of the new jobs go to the non-human workers that are getting more aggressive and are cheaper. But in terms of, as Sue says, there'll be a whole wave of jobs in the technology sector. I mean, it's a little worrying that some of the biggest tech companies are the ones that are actually laying people off, because in theory they should be the ones that are booming. But I do think as the infrastructure basically widens, there'll be a lot of jobs there. The biggest job category, and Sue said it, there could be an enormous amount of care jobs that machines won't be very good at doing. They can do some of it, but I think that having the human in there will be really important. And there is obviously, depending on your view of sustainability, but there is the green transition that probably will reappear in terms of the jobs of the future. There's a wild card there as well, which is this could be a new renaissance. And actually, in a way, you painted it. This could be a new renaissance with amazing new tools to do amazing new things that we haven't yet thought of. And that could capture an enormous amount of new jobs that we don't know about. The problem is artificial intelligence at the moment is really pointed at the existing jobs and how you do them more efficiently. And what you see in history is the new jobs usually come, but they usually come with a lag. And so we've got this. I think we'll get to a good place, but unfortunately I think we'll get to a difficult place first, that then we reset and get to a good place in the end.
But fewer jobs. I mean, is there any doubt that there will be fewer jobs, given some of them will go to non-human workers?
Right now, what we're seeing is this job creation, those 1.3 million jobs being created precisely because we see this shift to an AI-driven economy, and we're seeing these new roles emerging exactly as you said. I think what's crucially important is that we put workers in a spot where they're empowered to take advantage of this, and that goes back to this fundamental point that we need to move away from how we've traditionally hired people, where we focused on those traditional credentials that Rob mentioned, like degrees degrees and instead shift a fundamental focus to skills. The key question we need to be asking is, do you have the skills to do these new jobs? And how do we ensure that we get you the skills to do these jobs?
So we launched a new podcast actually last week on leadership, to go with our work and management vertical, because there's just much more appetite for people to get noticed. How do people get noticed on LinkedIn?
3 things to think about. Firstly, showcase your skills. Members on our platform who list just one skill are going to get twice as many views from recruiters or employers. So showcase those skills, tell future employers about how you built those skills, what you did with those skills, and the impact you can have. Second thing, build those skills. Exactly as we've been discussing, the pace of change is so quick out there. You need to be continually investing in new skills so that you can take advantage of those roles. And again, to really focus in on right now are those AI literacy skills and those soft skills, and a ton of resources available on LinkedIn for you to develop those skills. And then the third thing, networking. For all of this shift to an AI economy, for all of the talk about this new technology, there is no substitute for that human connection, going out and building those networks, going out and making those connections. If you are connected to an employee of a company on LinkedIn that you want to work at, you are almost 4 times more likely to land a job at that company. So showcase your skills, keep investing in those skills, go out and network.
So interesting. Thank you both for joining us. Hugh Duke, Managing Director for EMEA and LATAM and Vice President of Global Public Policy on LinkedIn, and Rob Garlick, author of AI, Anarchy and Abundance. It's great because it's not too pessimistic, but it's not too optimistic. It's balanced, Rob.
And it really is trying to be on solutions. What we need is solutions. That's what the focus is.
We do need solutions, and this is what this show focuses on, actually. Coming up, the latest diplomatic endeavors to bring the war in Iran to a close. We'll discuss that with Hélène Conway-Mouret, the Vice President of the French Senate Foreign Affairs Committee. That's coming up next, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And
I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Breaking news on this Saturday morning.
There's really only one story, and that is Iran.
Balance of Power has all the angles covered.
Trust Bloomberg for on-the-ground coverage.
An entire region pulled into this conflict.
Talking to you from the bomb shelters.
Up-to-the-minute reporting.
Iran remains a viable threat.
And the analysis you need.
There was no imminent threat. There's never a good time, but there are better times.
Netanyahu is my opponent. However, on this issue, we stand together.
Nobody covers geopolitics like Bloomberg.
Now, Bloomberg understands the U.S. has drafted a 15-point plan to help bring the war with Iran to an end, which Tehran has reportedly received. This comes as the U.S. deploys more troops to the Middle East. Now, let's bring in Laura Davison, Bloomberg's Washington Deputy Bureau Chief. Laura, thank you for joining us. So what's the latest regarding this diplomatic endeavors to end the war?
Yes, so this is a U.S.-led effort, this 15-point plan that the U.S. sent over. The AP is now reporting that Iran has rejected this proposal, and there's some points in this that Iran needs to abandon its nuclear program, its missile program, open up the Strait of Hormuz to trafficking. There are some concessions there in terms of sanctions, but essentially this is at least from Iran's perspective, a non-starter diplomatically. Trump has been out there the past couple days very vocally saying that Iran wants to make a deal, that he is looking, for a way to end this war. There have also been reports potentially of a 30-day ceasefire to negotiate some of these peace plans. But for right now, this seems to be more of a U.S. ask than a U.S.-Iranian co-led effort and negotiation.
So, despite apparent efforts to de-escalate, the administration is set to deploy 2,000 soldiers to the region.
Yes, this adds a sort of another layer of complication to all that we're hearing from Trump in terms of looking for a way to end this war and bring an end to the conflict. While Trump is out there talking about this, the Pentagon is doing something quite different. In fact, sending thousands of more troops to the region. Earlier in the week it was announced there'd be 5,000 Marines going. Just yesterday they announced that there would be forces from the 82nd Airborne Division. These are special forces, the kinds of troops that you would send in the front lines if you were doing some sort of special operation, particularly a ground operation. So this has caused a lot of confusion, both among U.S. allies and in Iran as well, of, if the U.S. is talking about peace, why are they in the process of sending thousands more troops? They take several weeks to reach the region. So is the U.S. really thinking about peace, or is this more of a negotiating tactic to distract Iran while more military planning may be afoot?
Laura, thank you so much. Laura Davison there, Bloomberg's Washington Deputy Bureau Chief. So where to from here? Joining us now to discuss all of this is Hélène Conway-Mouret, the Vice President of the French Senate Foreign Affairs Committee. Thank you so much, Ms. Conway-Mouret. Where do you see this ending? Again, it seems that every day it's either a de-escalation slightly, but then with the re-escalation. What do you think happens in the next 2 weeks?
Well, it's extremely difficult to foresee anything, as the previous speaker just rightly pointed out. We have very contradictory statements being made sometimes in the same day. But with no very clear objective as to how the war started and what the objectives to be achieved are, it's difficult to see how it can be ended. Of course, the United States doesn't want to lose face, and neither does Iran. And Iran, I think, was totally underestimated as to its strengths and what it could do with the regime that has been in place for too long, too many people involved, too much to lose, and therefore that they will not give up in spite of the almighty military power being displayed in front of them.
But how do you look, what are the signs that you're looking for to see whether there's a real de-escalation? We understand that there's this 15-point proposal drafted by the U.S. Would Iran say openly that they're looking at it or interested, or are there other signs in terms of tactical military ones, if, for example, the missiles are fewer or less aggressive?
Yes, and this is very good news indeed that negotiations have started. But there is another player in this war, and it is Israel, which has been waiting for decades to strike Iran, which is a country which is putting into question the very existence of Israel, and through the Hezbollah, through Hamas, through the Houthis, has been striking Israel repeatedly. And Israel now, I don't think, wants to give up until Iran is showing sign of weaknesses, and which is not the case at the moment. So while the efforts are being made by the United States, I do not see how Israel will actually give up halfway through the mission that they have, because if the US doesn't have a clear objective in this war, Israel does. So under that pressure, while the negotiations are going on, I think that there will still be a lot of bombing and a lot of destructions on the Iranian territory by Israel and by the US to achieve Israel's objectives.
Do you think France and Europe will eventually really be drawn into this conflict because of the price of oil and the effective closure of the Strait of Hormuz?
Well, it is not our war, and as you know, we are extremely involved in supporting Ukraine, which is under a lot of pressure from Russia. Now that the sanctions have been lifted on Russian oil, it's making life much more difficult for all of us, as the oil is actually financing the war efforts by Russia against Ukraine. So the role we can play is by not being involved in this war is to actually, both on the diplomatic end, to support the United States in the negotiations, and also to reopen, which is really absolutely crucial for the world economy, the Strait of Hormuz. And, just remember that France was the only country for a very long time to actually patrol the Red Sea and be tolerated, because we never got involved in the war in Yemen, by the Houthis. So we actually intercepted their missiles, but we were the only country that was able to be present in that region to actually support and intercept anything that may have hit the ships going through. So that's where our role will be, to enter a coalition to help reopen this. But things will have to quieten down before we do it, because we do not get involved in this war, and we won't.
Thank you so much. Very, very interesting insights. Hélène Conway-Mouret, Vice President of the French Senate Foreign Affairs Committee. This is a picture for, again, markets that are a little bit in tenterhooks. Not only do they want to know what central banks are thinking, we heard a fantastic speech from President Lagarde a little bit earlier on, but stocks are rising as the Trump administration is stepping up efforts to bring the war with Iran to a close. Again, the retreat in oil prices prompted traders to scale back expectations for tighter monetary policy from central banks. Swaps now pricing in less than a 1 in 5 chance of Fed interest rate hike this year. Up next, it's Bloomberg Surveillance, and this is Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg.
It's just so difficult to determine what's going to happen next in this market.
If we continue to see this volatility, there likely will be long-term buying opportunities.
There is a big disconnect between the physical and the financial markets.
The risk aversion has been increasing dramatically.
At the end of the day, we have to ask ourselves the questions whether or not these positive trends can continue after the war.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Wednesday, clinging to cautious optimism. The White House pushing a 15-point peace plan to end the war with Iran as plans are being made to increase the troop presence in the Middle East. It's leaving investors continuing to face down substantial two-way risk, heading into a weekend deadline.
This has been the issue. So many people have wanted to avoid missing out on the upward rip when there was some sort of capitulation or a sense of de-escalation. Question that an increasing number of investors are asking, are we reaching the point at which any kind of upside rally based on de-escalation is getting capped? We're sort of reaching the limits of how far that can go based on the fact that we're reaching real cannibalization from oil supplies and a real sense of destabilization in the region.
It's starting to appear in the data. So let's sit on the data. The stagflationary hit to the PMIs. So output a little bit lower, prices a little bit higher. You're starting to see it cascade through the economy. Asia first, and the Shell CEO saying Europe next.
Yeah, and we saw that in some of the PMIs coming out of Europe, and you see that with respect to what the ECB president is saying, which is essentially, we will not hesitate to act, and this time does feel a little bit different in terms of the upside risk of inflation. There still is that downside risk, though, to growth, and that's what an increasing number of people are talking about. Larry Fink saying, if this is not resolved, and you get oil to $120 to $150 a barrel, brace yourself for a global recession.
Equity futures doing okay. No sign of a global recession here. Equity futures this morning positive by close to 1% on the S&P 500. Comfort again from a deeply backwardated futures curve. And the disconnect. How many times have you heard this line? The disconnect between the physical market and what is happening in the paper market and the futures curve.
So you could raise questions about whether this is some sort of manipulation, some sort of big trader coming from a variety of different places that have an incentive to lower the appearance of pain in the paper market, even as the physical market really experiences some real strain. On the other hand, there is a question of how low prices can go if this does continue, if there is demand destruction. Honestly, this remains to be a question. The Speaker of the Iranian parliament coming out and saying, well, right now, it seems like they might be winning the war of words, but you can't print molecules, going back to what Jeff Curry had to say.
I think maybe he watched the Jeff Curry interview on this program.
It was pretty
just possibly
verbatim.
It's like word for word.
It was kind of shocking. I was thinking the exact same thing. I was like, hey, he's quoting Jeff Curry. Look at that.
Crude this morning, down by close to 6% on Brent crude. Brent, south of triple digits, 98.50 on Brent crude. WTI at about 87. Coming up on this program, we'll catch up with Martin Horn of Barings, with markets at the mercy of the headlines. Flexport CEO Ryan Pedersen with global shipping upended by the war, and Francis Donald of RBC as inflationary pressures continue to increase. We begin this hour with our top story. The US sending Iran a 15-point plan to end the war. President Trump saying negotiations have begun. Bloomberg's Jumana Basechi joins us now from Dubai. Jumana, welcome to the program. So we've got a 15-point peace plan. What's Iran's response to it so far?
Well, nothing yet, John, and that's the critical question. What we understand, Bloomberg reporting overnight, is that the U.S. have sent their 15-point draft proposal to Iran, delivered via Pakistan, and much of the contents of the proposal are similar to the negotiating stance that the U.S. had even prior to the war, and some of those key elements on the nuclear deal, including that Iran should give up their plans to develop a nuclear weapon, they should dismantle some of their key centrifuges, limit their missile activity, stop funding proxies around the region. So none of that is new, but there is one new element per the draft proposal, which is Iran would have to commit to the full reopening of the strait without threats. And of course, as we've understood over the last couple of days, the strait is not closed. It is effectively being controlled by Iran still. And there's a letter that was being circulated by the International Maritime organization overnight, suggesting that Iran are allowing vessels to pass through so long as they deem them not to be hostile. So that is one part of the conversation. But I think what's key here is, number one, we don't know who exactly the U.S. is negotiating with. There has been no acknowledgement from Iran, at least from official voices, that direct negotiations are underway. There's been an offer to mediate from Pakistan, but still no official commentary. And the second point here is, even if they are speaking to somebody, let's say one of these political figures, like the Speaker of the Parliament that Lisa just referenced, or Abbas Araghchi, the foreign minister, does that person actually have the clout and the influence to convince the hardliners in the IRGC and the clerics to actually sign on to some of the negotiating terms that the U.S. are putting forward? No doubt they too will be asking for very heavy concessions because they know that they have this leverage over the Strait of Hormuz now. So there's still a lot of daylight between the two sides and no official commentary coming through. I think there's some skepticism that diplomacy will actually lead to a positive outcome in the next couple of days. And that being said, look, it's still day 26 of this war. It's still ongoing. The operations are still ongoing. More strikes overnight. Israel hitting some key facilities around Iran. Iran striking back, yes, with a lower volume of projectiles than we had seen in the first couple of weeks, but they're still being very targeted about what they're hitting. Another fuel depot site hit near Kuwait. That disrupted some of the airline activity. More drones being intercepted in Saudi Arabia as well. So the war is still very much going on. Markets seem to be pricing in some form of a diplomatic breakthrough, but I think in this part of the world, there's some serious skepticism that this is actually going to yield anything tangible in the coming days.
Jumana, appreciate the update. No doubt we'll hear from you a little bit later in the programme. Jumana Basechi leading our coverage out of Dubai once again this morning. To Jumana's point, the economy's a mess right now in Iran, and power is very fragmented. So when we say we're negotiating with Iran, we have to keep on asking the question, who are you negotiating with, and is everybody on the right side?
Yeah, how much control does any given person have over the regime? You can also question, who's the we? Is it the U.S.? Is it Israel? Is it Saudi Arabia? Is it UAE? And is there a splintering of some of the parties involved?
Here's the view on Wall Street so far this morning. Martin Horn of Barings writing, geopolitical headlines typically have only short-lived effect on markets. We believe the inflationary bubble will likely be contained. Martin joins us now for more. Martin, welcome to the programme. Let's spend some time on that belief. What underpins that belief?
Well, when you've got two parties that are committing an act of mutual self-harm, generally speaking, those parties find a way to come together to find a conclusion. I think that's exactly what we're in. There's so much noise in the world. It's very difficult to be definitive around this. But you've seen fundamentally over many, many decades that geopolitical events, even the most tragic geopolitical events, the ones that shaped our history, have generally had a short-lived effect on financial markets, and then the markets pretty quickly revert to a position that is, okay, well, what's happening to interest rate policies? Where's inflation? Where's global growth? And of those three things, global growth is demonstrably at a low ebb, and this isn't going to be helpful to global growth. So I think markets will pretty quickly revert to the fact that commodity prices will adjust. But my core assumption there is that there will be a conclusion to this in a relatively discrete period of time. You and I could debate what discrete means.
Martin, we won't have that debate right now because ultimately we'll be back and forth all morning. I do want to talk about your faith, though, in the streams of earnings the US equities, US companies will generate in the next 12 months. That's where the faith seems to be stateside, and we see that in the equity market almost every single day. Earnings revisions aren't dramatically lower. In fact, in many cases, the outlook for earnings seems to be improving, which seems crazy. Martin, can you speak to that? What makes corporate America and that stream of earnings so resilient?
Well, at its core, you've still got a relatively good employment situation in America. At its core, you've got one of the economies that's investing the most significant amount in AI and AI generation. And let's face it, there's no point to AI if it doesn't produce an increased efficiency in the corporate landscape. And there's been a resilience now demonstrated by corporate earnings over the last 6 years. I mean, you think about it, we've had COVID, double-digit inflation, the largest rate rise you've seen in 30 years, various geopolitical events, the fundamental rewriting of trade lines across the planet. All of this should have produced a much, much dire situation, and it hasn't. And it hasn't because actually, when you look at it, I think corporates are appropriately geared for this marketplace. The management teams of corporates have generally been relatively conservative because when would you have been bulled up? And they all see the necessity for AI adoption as a route to increased profitability, increased efficiency in the future. And they're all running at it, and some are running at it pretty hard.
I understand the earnings story, and a lot of people have pointed to that, Martin. How predicated, though, is the stock price performance aspect predicated on the idea of central banks not hiking rates in response to the inflationary stress?
Look, I think it depends if you think about short term or long term. In the short term, I think we all know that if rates go into reverse, in particular in the US, you're going to get a market reaction, and you can just stand back and watch that happen. Again, in the longer term, do I think that rates will be elevated well above their current level for long? No, and I think when you listen to some of the narrative from Madame Lagarde earlier in the day, one of the things she pointed out was the rates in the European market were far more embedded around the neutral position, which was very, very different from 2022, was the point that she was making. I think in the US, arguably, rates are still slightly above the neutral position. And therefore, you've got latitude, I think, to bring rates down. That said, we live in a more inflationary world. Forget about the geopolitics of today. There's all sorts of dynamics that have changed over the last decade that mean I think we should be having a debate around whether 2% or 3% is a more relevant, stable picture. But I do believe that any rate rises will be followed by a kind of a movement back downwards, because what in the economy tells you that we're going to go up and up. I'm not a buyer of stagflation, as you can tell.
It strikes me, Martin, that you're incredibly optimistic relative to a lot of the people who I've been speaking with over the past 6-7 days, who seem much more concerned about even a de-escalation yielding a scenario where suddenly Iran controls one of the main waterways of the world, and energy prices and, frankly, commodity prices have to remain elevated for a longer period of time, creating stress that people are not recognizing but is being recognized in the physical market. What gives you confidence to be bullish at a time where so many people are raising some real structural concerns and saying the most dangerous words in finance this time is different?
Yeah, listen, I've been in the credit markets for nearly 35 years. That makes me generically one of the most miserable people you'll ever meet. So I'm not often referred to as bullish. When you think about what I'm actually saying is, I think the world is in a pretty low growth environment right now, and I don't see that fundamentally changing. And I think to consider the rate policy will go into reverse. Do I think we're in structurally the same place as the 1970s when we last saw stagflation? No, I don't. I think the world is different, and I think the likelihood of stagflation is very, very limited. To be absolutely confident in light of changing dynamics that literally change by the hours, and you guys know that as much as anyone, no, you can't be that, and you've got to be flexible, and you've got to be flexible in your outlook, and you've got to be flexible in your thought process. But history tells us that there are some truths to these situations, including these situations generally get contained. It's not easy to see it when you're at the bottom of the pit and looking up, when you're in the heat of the moment, but these situations generally do get contained. We generally do revert to basic supply and demand dynamics around the world. We generally see rate policy and commodity pricing reflect that. And that's the core assumption here. I don't think it's too radical, but I'm sure that the news flow over the next 4 or 5 days might make us think again.
Martin, I've made a note. We'll never accuse you of being bullish again, okay? Martin, it's good to see you. Thank you, buddy. Martin Horn there of Barron's breaking down, I think, the consensus view where a lot of people are right now looking down this shock. As for Lagarde, I read that speech earlier on this morning, said a lot without saying anything at all, almost perfectly neutral, which might be somewhat hawkish compared to where they were a few months ago, but relative to very hawkish market pricing, that was somewhat dovish. That's not an ECB that's in a rush to do anything anytime soon.
No, she wanted to say, I hear you, I see your feelings, I see you pricing in a rate hike. We're not doing anything right now. We remain open to the option of doing something later. Everyone, calm down. And that's essentially, the message that she's been saying for a while.
We're waiting for the data, and once we get it, then we can act. but it's too early to really draw any conclusions about where we are. So here's one scenario, and here's the other. That's kind of where a lot of central banks are at the moment. They can't say much more than that.
Which is a reason why you've got the likes of PIMCO saying right now this market is completely pricing wrongly how much these central banks are going to hike rates, and this continues to be the debate.
Futures this morning, positive by 0.8%, crude lower, bond yields down. Let's get you an update on news worldwide with your Bloomberg brief. Yahara has more. Hey, Yahara.
Good morning, John. The U.S. drafting a 15-point plan to end the war in Iran. Sources telling us here at Bloomberg the plan was delivered to Iran via Pakistan. The details of the proposal are unclear, but President Donald Trump has publicly said any agreement would have to include a prohibition on Iran ever obtaining a nuclear weapon. As the U.S. waits for Iran's response to that plan, it's also deploying about 2,000 soldiers to the Middle East. They will join about 5,000 Marines expected to arrive in the region this week. Sources telling us here at Bloomberg the troops could be tasked with a variety of support roles or participate in a ground attack, which could include seizing Karg Island. And no end in sight for the partial government shutdown that has led to long delays at the nation's airports. Senate Democrats rejecting the latest offer from Republicans to fund most of the Department of Homeland Security. Senate Democratic leader Chuck Schumer saying the GOP plan does not include any of the ICE policy reforms they've insisted on. That's your Bloomberg brief. John?
Yahara, thank you. Thanks for the update. More from Yahara later this hour. Do you want the Bramo travel review? What is it out of 10? How bad is it?
I have to be really honest. First of all, I sold out and I actually bought Clear, which I haven't done and I haven't wanted to do because I feel like it's pay to play, so I felt really bad about myself for having done that. But nonetheless, there was no line anywhere that I went. I think it's just certain chokeholds that have significant lines, but I did not experience
Which airport was this?
Either JFK at the time that I went, which was a very unpopular time, evidently, as well as LAX. I just didn't have a line.
Okay, there you go.
But that's, I'm not diminishing what other people experienced. That was just my personal experience.
This is your lived experience.
This is my lived experience.
There is value in that, and we appreciate it. It's good to have you back.
That.
Up next on the program, declaring victory.
We've won this. This war has been won. The leaders are all gone. Nobody knows who to talk to. But we're actually talking to the right people, and they want to make a deal so badly.
Up next, we'll catch up with the Flexport CEO, Ryan Pedersen, from New York City this morning. Good morning.
Politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
We are placing a lot of optimism in a diplomatic process that Iran denies it's engaging in. setting the tone for the market this morning. Crude lower, down by more than 5%. Brent a break of 198.63. That sets the tone for this. Equities higher on the S&P 500 and up across the board on the S&P up by 0.8% and bond yields lower at the front end of the curve and across the curve. Two's down by 386 following a very sloppy 2-year auction in yesterday's session. I think a 5-year coming today, 7-year coming tomorrow.
Yeah, watch those auctions because that 2-year note auction, it was $69 billion of debt. Usually these are super sleepy. Nobody pays attention because they're incredibly easy. The bid to cover ratio, the lowest going back to 2024. Dealers forced to take up the most going back to 2022, igniting a sell-off. So people care about the auctions.
Even with a big repricing in yields higher as well, which is an interesting moment for fixed income. Under surveillance this morning, the focus on the diplomatic effort declaring victory.
We've won this. This war has been won. They have no Navy left. They have no Air Force left. They have no anti-aircraft equipment left. No radar left. No leaders left. The leaders are all gone. Nobody knows who to talk to. But we're actually talking to the right people, and they want to make a deal so badly.
So here's the latest this morning. The US delivering a 15-point plan to Iran that would bring an end to the war. Tehran yet to respond to the proposal and firing fresh attacks across the Gulf overnight. For more, Anne-Marie joins us from Washington. Morning, Anne-Marie.
Good morning, Jonathan. That's right. What we have is this administration potentially looking for this diplomatic off-ramp, and the Associated Press saying that via Pakistani officials, the Iranians have received this plan. But it's really unclear, and you hear that from the president even yesterday saying we're unclear of who is running the country. So it's unclear, Jonathan, who exactly in Washington is talking to who exactly in Tehran. And amidst all of this, we still have the Strait of Hormuz effectively shut, especially for Western allies, as the Iranians continue to control that key waterway. And that is the focus of this morning's conversation with Ryan Pedersen of Flexport, of course, the global logistics company. He is here in Washington, D.C. He's a friend of the show. And I want to begin with a trip you made to the White House this week. You have been in discussions with this administration. What are they telling you about what is going on in terms of cargoes and shipping throughout these key waterways?
Yeah, thanks for having me on. Well, so actually a lot of our conversations are about tariffs, but I did get a little bit of insight into what's happening, especially with jet fuel, with the accessibility of fuel on the West Coast and in Alaska. That's been a major concern for the administration to make sure that these areas get fuel. And as you know, California shut down a lot of our refineries in California where I live. And so there's a real risk there because they don't have enough connectivity to the rest of America's energy infrastructure. So they waived the Jones Act. So the Jones Act is this act that says that for domestic ocean freight, so if you want to ship oil or refined products from Texas, other parts of the United States to California, or especially to Alaska, because Anchorage is such an important air freight airport, you can't do it on a foreign ship. That's what the Jones Act said. So the president waived the Jones Act to allow for these regions to get jet fuel from other parts of our country on non-U.S. made ships, which I think was a vital, there was a real fear that Anchorage Airport wouldn't have air freight. And a lot of people don't know this, but Anchorage is probably the most important cargo airport in the United States because cargo planes flying from Asia to the United States have to stop in Anchorage to refuel.
What are companies, your clients, telling you right now? Do they feel like some of the pressure is easing, or are things getting even more challenging?
No, it's definitely getting more and more challenging. I mean, the price of air freight especially has gone through the roof. If you're shipping from Asia to the United States, we're seeing prices have doubled since the beginning of the month, since the start of the conflict. Even that's carried over to the Asia to U.S. trade lanes, where air freight prices have gone up a lot. Initially it was around a 60%. It kind of stabilized a little bit, but more like across all of the lanes, Asia to U.S. is up about 25%. So obviously you're going to hear about that, complaints about that. But actually the bigger problem is just available capacity. 20% of all the capacity in air cargo, it's actually 18% of the air cargo capacity in the world is operated by Middle Eastern airlines.
So it's been cut off.
Yeah, think Emirates, think Qatar Airways, Etihad. That probably includes Saudia, the Saudi airline. So that's a lot of capacity. It's effectively removed from the market. They've been operating limited flights. They've been trying to restore, but every time they come back, there's like another attack at the airport and they drop it again. So that's actually made it very difficult to get air freight moving at all in some cases. There's just not enough capacity.
I want to briefly end on the point you made about most of your conversation with the White House is about tariffs. About what exactly?
Yeah, well, we've been seeing a lot of tariff fraud. The United States allows foreign companies to import goods into the U.S. without having any nexus, think of an entity or an LLC or anything like that. Foreign companies can just import into the United States. So we've observed at Flexport a huge percentage of trade has flipped to where the Chinese companies are importing it with Chinese freight forwarders and under declaring the commercial invoice value, effectively cheating on their tariffs. So we've been calling attention to this and partnering with them on how they might enforce this. So that was like a big agenda point for me, is sharing what we're seeing in the data, how this is happening, but also trying to learn what's going to happen with tariff refunds. As you know, the Supreme Court overturned the IEEPA tariffs. There's $166 billion that companies are owed. And CBP has said publicly that only 6% of companies have registered their bank account with the government to receive these refunds. So that's something that Flexport's been all over, trying to help companies get their refunds back when that process starts.
Ryan, thank you so much. Very insightful, especially off the heels of your conversations with the White House. Of course, Jonathan, that was Ryan Peterson of Flexport. He and his company really dealing with trifecta of issues. First, of course, it was COVID-19. Then, of course, it was tariffs under the Biden administration, the issues in the Red Sea. And now it's the Strait of Hormuz.
Anne-Marie, appreciate the update. The shock of the last month or so, reducing capacity, the tariff volatility of the last 12 months, increase in friction. And overall, when you increase friction, you increase costs. It's making it more expensive to do business.
Yeah, and how much can some of these companies pass along those costs? That is going to be the key question during earnings season. How much do margins take a hit? How much do people's pocketbooks take a hit?
It's the key question for central banks as well. Up next on the program, Dan Pickering of Pickering Energy Partners, with crude falling back into double digits. Plus, Yahira has your morning movers, travel stocks rallying in the pre-market. From New York, you're watching Bloomberg TV.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal, with athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
a high-energy board member. I'm very passionate. I have a lot of opinions.
Up in our zone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Once again, as we've seen a few times already, many times over the last few weeks, crude setting the tone for financial markets more broadly. Brent crude down by 5%, WTI down by 5% also. The faith in the diplomatic process, the hope, how misplaced is that hope heading into the weekend? Substantial two-way risk still just lingering over this market. That's the price of crude this morning. Once you've seen that, you know what this looks like. Equities higher across the board. On the S&P 500 by 0.75%. The Nasdaq up by almost 1 percentage point. And in the bond market, 2-year, 10-year, 30-year yields down across the yield curve. We're down by 2 basis points on 2s. 10s down by 3. Look out for the auctions. The 2-year was really soft yesterday. Mentioned that just moments ago. 5-year supply coming later. 7-year supply coming tomorrow. I wanted to finish on this, though. Gold snapping a 9-day losing streak in yesterday's session, looking to build on yesterday's gains. This morning, high by close to 2%. Gold, a really interesting story right now because central bank buying has been a major tailwind for this particular precious metal. Buying gold, buying gold, buying gold. And what do you do if you've been buying gold and you start to get in a bit of trouble? You sell it, and that's what some countries are starting to think about.
Yeah, whether it's the actual countries that are selling gold, whether it's the hedge funds that are selling gold to meet certain positions that have gotten stopped out. Had there been a 10th straight day of losses yesterday, it would have been an unprecedented run of declines for the precious metal. Again, this raises the question, how much is this positioning unwinds? How much are we reaching the end of that? And how much can this precious metal be the haven asset that is the hedge if this is how it responds in a time of turmoil?
Turkey. We put out the story this week that Turkey was considering selling its gold holdings, part of them anyway, to defend the Turkish lira. There is speculation about what Gulf nations will do with their gold reserves if they haven't got the oil revenue coming in the same way. It's question after question about who's going to monetize what and when.
Exactly, and at a time when everyone is looking to monetize at the same time. I think there is this extra element, too, that people keep talking about, which is that an increasing number of hedge funds and just average investors have used gold as the hedge instead of U.S. Treasuries, and suddenly there is a reassertion. There is the ultimate pain trade of buy U.S. assets once again coming back, upending some of the trades that people put on. Again, are we getting to a cleaner position now where suddenly people can start assessing exactly what the real value is? Or does this really undermine gold's proposition as what it is, which is a store of value?
Gold this morning high by 1.8% as we count you down to the opening bell, 3 hours away. Let's get you some single names, some morning movers. Yahira has more. Hey, Yahira.
Hi, John. We are seeing the travel stocks rising this morning. And no, it's not because Lisa finally got clear. All jokes aside, we are seeing the airlines and cruise lines rising as investors latch onto signs that the Iran situation may not be getting worse, at least for now. Now that we know that the U.S. has sent Iran this 15-point plan to try and resolve this conflict, helping to ease oil prices this morning, as you just said. And that goes a long way for the airline stocks, which had felt the brunt of this sell-off. Moving on to the chip stocks, we turn to ARM shares. They are rising 13% in the pre-market as the company moves to sell its own chips, moving beyond its traditional licensing model. And it's a big pivot for this company as it takes aim at the fast-growing data center market tied to AI. But that same demand is pushing supply to its limits, and for that reason we are seeing other chip stocks like AMD and Intel rising this morning on reports from Nikkei warning customers about another round of price hikes for their CPUs. It's the latest sign that the chip shortage is moving beyond memory and into processors, and that is adding pressure for PC and server makers, smartphone makers as they compete with these data centers to try and get their chips. John?
Yahara, thank you. Thanks for the update. More from Yahara in about 10 minutes' time. On our radar this morning, the US sending around a 15-point peace plan to bring an end to the war. The details reportedly including sanctions relief, a rollback of Iran's nuclear program, and shipping access through the Strait of Hormuz. Elsewhere, the White House ordering the 82nd Airborne Division to deploy about 2,000 soldiers to the Middle East. Sources telling us here at Bloomberg the troops could take part in ground operations on Karg Island or occupy land along Iran's coast. And finally, travel disruptions continuing at U.S. airports across the nation as Senate Democrats reject an offer from President Trump to fund most of the DHS. United Airlines CEO Scott Kirby urging Congress to get the deal done.
There are places where we've had long lines. It's really the last week that it's started to increase a little bit. I am hopeful that we're near the finish line. I've been talking to folks in the Senate on both sides of the aisle. It does feel to me like we're close.
The hits keep coming for this industry. Kirby also warning airline ticket prices could increase up to 20%, Bramo, if jet fuel prices remain elevated.
So on the first point, I will just point out that in a February Gallup poll, the approval rating for Congress was 16%. That was down from more than 40% before the financial crisis in 2008. Just gives you a sense of how people feel about being held hostage in terms of the TSA agents when it comes to travel in order for Congress to get anything done. I'll leave that there. When it comes to fuel prices, there's a feeling right now that you have to game out some sort of bogey point if you're an airline, which is about a third of all costs of airlines are tied to oil prices. How do you do that at a time where things are moving so quickly? Scott Kirby, the CEO, is saying that prices will average above $100 a barrel through 2027, reach up to $175 at the peak, and that if they're going to offset the $11 billion of extra costs just where oil prices are now, ticket prices are going to have to go up 20%, and that will cannibalize from demand. He expects demand to fall off in response.
I've only got one question. Lie flat across 3 seats and I can buy them all at once. Have you seen this? Can you describe what United is unveiling and how much I'm going to have to pay? Because the question I had, and many people had the same question, do those 3 seats in coach cost the same amount as 1 seat in business? Or do I get to pay less to have the same amount of space?
Great questions. I'm sure will all be answered in time. What is notable to me, you look at the new planes, they smell like new planes. You walk in, it's very cool. The vast majority of the plane is premium seating. Only a small subset in the back is economy, is coach. And that, to me, tells you the path of travel for airlines, that premium is where they are going to make their money, and that is where they're going to put the dollars in terms of the plans for the planes. So even if you're not in premium, you can pretend to play premium if you just buy out all the seats and lie across.
Did you get to see the seats?
I did.
Okay. And what's it look like? Did you lie across them? Is it comfortable?
I did not lie across them.
Okay, you didn't try them out.
Have
we got any video of this? If we get some video of this, we'll play it later.
That'd be amazing. But, they look beautiful, and they're investing in these planes to try to cater to a higher-end kind of consumer. Interesting that they're doing this at a time of incredible volatility. And interesting that this comes after this has been where the primary income has come from. This is the K-shaped economy really demonstrating itself through the airline industry. Who can afford paying those seats? Who wants to pay for those seats? And how are these airlines going to keep going despite some of the volatility that we've been talking about?
If you haven't seen it, I'll try and describe it. Essentially, United is doing what we always wanted airlines to do, which is get rid of the armrests. You can pull them up and you can turn the 3 seats into a lie-flat bed, essentially, right? And you can share that with your family or just lie there alone.
Share that with your family?
Apparently.
Really? You could actually, I saw some people doing that yesterday.
Right, see? There you go.
I actually did witness this. The lie flat, it's a good
We need to have a serious conversation, apparently, so let's do that right now. Let's talk about crude. Dipping below triple digits as the US sent Iran a peace plan, reportedly demanding shipping access through the Strait of Hormuz. Tehran currently charging select vessels as much as $2 million to pass. Dan Pickering of Pickering Energy Partners writing, time is not the threat of the US as the oil markets tighten every day with so much oil bottlenecked behind the strait. Dan joins us now for more. Dan, welcome to the program. We've heard this a million times now over the past few weeks, that there is a massive disconnect between the physical market and paper markets. Can you briefly talk about that and maybe try and explain why that disconnect exists at the moment?
Sure, John. When you look at the demand for oil, particularly in the Middle East, oil and products, the spot market's very tight. Access is an issue. When you've got an access issue, prices are high. You look to the financial markets, Brent and TI, further removed both in terms of paper barrels versus physical barrels, and further removed in terms of distance and that accessibility issue. So if you're in the U.S., record level of production here, 14 million barrels a day, biggest in the world. Less issues with access, prices are lower. Go to Europe, better paper barrels there, trading at a premium, closer to the conflict, but not in the conflict. Prices are higher than the U.S., lower than in Asia. So it's proximity and it's physical versus paper barrels.
And whoever's dependent on those physical barrels coming out of that region, Dan, you can see what's happening. Shortages are beginning to emerge. Can you help us track how the dominoes are falling at the moment? Where the shortages are appearing, in what product and where you think is going to show up next?
You bet. If you look to Middle East, you look to Asia, what you're seeing is jet fuel, for instance, trading over $200 a barrel. You look at gasoline and oil trading in the $150 a barrel range. What you're starting to see in Asia, where accessibility is the issue, you're starting to see conservation measures, work from home initiatives, et cetera. So you're seeing price start to impact demand in Asia because they're feeling the brunt of it immediately. That's the risk over time, is that availability issue spreads beyond just Asia, moves across the globe, and that's one of the reasons you're seeing this release from the strategic petroleum reserves across the world.
Dan, do you see a possibility for oil prices to go back to $65 or $75 a barrel if there is some de-escalation right now?
Yeah, if you open the straits, if barrels move through the straits, regardless of why, prices are going lower. We're trading WTI below 90 today. You'll go well below that if the straits open up. You will then move, so 65, 75 feels to me the landing point when things are back to normal. Hard to get to normal. What's normal look like on a go-forward basis? Is Iran in charge? If they are, there's going to be a risk premium that you've talked about on your program already this morning. So I think 65, 75 would be a logical landing point. If you snapped your fingers and everything went back to the way it was, that feels like a challenging outcome.
Some people are arguing, whether it's Morgan Stanley or Carlyle, that already there is a risk premium that needs to be baked into oil prices, even if there is some sort of de-escalation, because that new normal is so hard to put your finger on. Why do you disagree with a lot of these analysts saying that oil prices are never going back to that, and that frankly are stuck at these levels or above for the foreseeable future?
Yeah, well, right now the market's pricing in something like 10 or 15 million barrels a day offline. If that number comes down, I think price comes down. It doesn't go back to where it was. And the longer we go, and this I think is the key issue, we're burning up, 70 million barrels of inventory every week. If this stretches into, April and May, you're going to have a market that's, dramatically tightening, and you're putting consistently, every week means a higher floor. So right now, if we think things go to 65, 75, and this conflict lasts for 2 or 3 months, the 65, 75 goes up $10, $15, $20 a barrel. So that's, I think, where the more bullish folks are coming, is they're expecting this to last for a while. And if it does, prices will be higher, kind of painfully higher.
Dan, we talked a lot over here in New York about how insulated America is. They're not going to suffer from shortages because we produce close to 14 million barrels of crude per day. It's not quite true. It depends what state you're talking about. The average across the country right now for gasoline is about 4. For California, it's higher. And as you know, California, very dependent on importing refined product from abroad, from elsewhere. Dan, how are you tracking how things are building? What kind of tension could we see in the coming weeks for California?
Yeah, California is in a pickle. Their policies have resulted in refineries shutting down, lack of production in the local market, reliance on imports. And so, the worse it gets in California, it's a big headline focus, and they are most at risk. They look more like Asia than anywhere in the U.S. And so, the easiest measure for all of us at home is just watching what gasoline prices do. And if U.S. prices nationally move from 4 to 5, which they would if this conflict continues, then I think you see California take even another step higher. So they've got a structural problem. Yeah, I don't think the U.S. is going to let it go crazy. But as the rest of the U.S. ratchets up, so will California.
Hey, Dan, it's good to see you. Thanks for making time for us. Dan Pickering there of Pickering Energy Partners. It is true that America's net position with energy is decent, fantastic. It's better than most compared to, say, Asia. But to Dan's point there, California looks a lot more like Asia. State by state, the story is radically different.
Yeah, in California, incredibly vulnerable, both from their own policies that have restricted some domestic or local production, I should say, as well as just the imports from Asia. I wonder what this does politically with Gavin Newsom potentially being the Democratic nominee.
Well, I think he's trying to blame what's happening at the White House for what's taking place right now.
Well, we get to talk about it for a couple more years. It'll be really fun.
Like the situation in California, how many times has Chevron talked about this? And Chevron again overnight warning about what could happen in that state and how vulnerable they are to this situation. Just to go back over that line again, California is more like Asia when it comes to energy. Even though you've got this massive resource sitting in this country, they're not taking advantage of it.
Yeah, there's been a real effort to move away from fossil fuels, and that has been translated into much higher prices at the pump, just regardless of any kind of base increase, but also an increase in exports from elsewhere rather than domestic production.
Crude this morning, negative by close to 5%, 87 on WTI. Brent crude at about 99, with an update on stories elsewhere this morning with your Bloomberg Brief. Yahara has more. Hey, Yahara.
Hi, John. The Strait of Hormuz beginning to reopen. Iran saying foreign ships can cross the strait as long as they aren't supporting acts of aggression against the country. Sources telling us here at Bloomberg, Tehran is charging transit fees on some commercial vessels passing through the strait. And as you all were just discussing, Chevron is warning that California is heading toward an energy crisis because of the Iran war and says state officials should declare an emergency. The company says it may quit refining oil in California within a decade unless officials roll back taxes and regulations. Now the latest on the investigation into the deadly crash at New York's LaGuardia Airport, a system designed to help air traffic controllers monitor vehicles and planes on the ground failed to alert personnel before a jet collided with the fire truck on the runway. The truck wasn't equipped with a transponder that would have helped pinpoint its exact location. That's your Bloomberg Brief. John.
Yahara, thank you. Thanks for that update. Appreciate it. Up next on the program, withstanding the shock.
We'll really start to see that energy price shock feeding through in the March data. But really what matters is the persistence of that shock. We've taken up our expectations for headline inflation by around 50 basis points.
Up next, we'll catch up with the brilliant Francis Donald of RBC from New York City. You're watching Bloomberg TV.
problem we've got as an industry is when the government's overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of the net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Good morning.
this is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Stocks are positive this morning, higher by 0.8% on the S&P 500, setting the tone for that. This move in crude, Brent and WTI. Brent lower, WTI lower, down by more than 4%. A break of 100, back into double digits on Brent crude, 98.84. Unlocking some gains in the bond market and lower yields, down by about 3 basis points on 2s, 3.87 on 10s, down 3 also to 4.33. Under surveillance this morning, withstanding the shock.
We'll really start to see that energy price shock feeding through in the March data. We've taken up our expectations for headline inflation by around 50 basis points so far off the back of the energy price shock. I think the key thing to watch in terms of thinking about the feed through into inflation is not where the oil price is today, but really what matters is the persistence of that shock.
So here's the latest this morning. Economic impacts of the Iran war mounting, with average gasoline prices in the US nearing $4 per gallon. Global central banks weighing potential rate hikes, with inflation not expected to fall to target levels. Joining us now to discuss, Francis Donald of RBC. Francis, can we just begin with your outlook, your base case before this war, and whether it's changed at all looking out 12 months?
Our base case before this war was something that looked a lot like stagflation-like growth that was slightly below comfort level and inflation that was slightly above comfort level, importantly driven by services inflation. Our outlook now is maybe stagflation medium, so more weighing on growth and more upside to inflation. Now, these are not massive figures. We're looking at 3+-ish inflation, still high ones on growth, but it's not as comfortable as we would have liked. It certainly negates the tailwind coming from government spending, and inflation is probably going to lap itself again. I suspect next March we'll be celebrating the 6-year anniversary of inflation above that 2% target. So same directions and the wrong directions for this economy.
Let's go with your medium-grade stagflation. Francis, if we get medium-grade stagflation, how does this Federal Reserve respond? How much space do they have?
They don't have space. Monetary policy is not the right tool for what ails the U.S. economy. And let's be clear, the U.S. economy is not close to a recession. The unemployment rate is going to stay very low for supply-side reasons, lack of workers in the American economy rather than lack of demand going forward. And there's nothing the Federal Reserve can do. They can hike or cut all they want. It's not going to open the Strait of Hormuz. We are once again in a supply shock that limits the abilities of central banks to deal with what needs help in the U.S. economy or any economy across the world. This is why we are increasingly leaning on fiscal policy. This is why government spending gets bigger and bigger. This is why the long end starts to rise. It's the same type of shock of a different flavor, unfortunately.
So we were talking about the fiscal lever, and a lot of people are looking at that and wondering, are we really going to foot the bill for it? Yesterday, we saw a pretty messy 2-year bond auction. Today, we've got 5-year. Tomorrow, we have 7-year notes being sold by the U.S. Treasury. How much are you getting concerned about buying government debt at these levels, given the concern about how much that fiscal lever will be pulled on?
Well, what I'm concerned about is more long run with U.S. fiscal position, which is we have rising pressures on Social Security coming through. Interest costs are also rising. Defense costs are high. And again, this is not a uniquely U.S. situation. We see this in developed markets across the entire world. So leaving or having to rely on the fiscal lever necessitates big government and big government becoming the new norm going forward. And again, it's not just a U.S. issue. It's a new global macro factor. We have to switch our minds away from monetary policy being the cyclical driver towards governments and fiscal being the cyclical driver. The problem problem is that fiscal levers or governments tend to be more politically motivated. So your cycle becomes more attached to the political cycle as opposed to the economic one.
How much does your outlook change should this conflict go on in the Middle East for a longer period of time? In other words, you're talking about stagflation light going to stagflation medium. The rest of the world is talking about runaway growth or recession, and there's nothing in between, depending on whether there's de-escalation or not. How do you look at an ongoing, prolonged closure of the Strait of Hormuz and conflict in Iran as pressuring stagflation medium?
It's very uneven, and this is one of the challenges with a shock of this magnitude. Of course, we have net exporters of energy, so the United States, Canada, where GDP doesn't get impacted on the top line to the same amount, and then you have net importers. Your net exporters, like the United States or Canada, for example, they're dealing with predominantly a price shock. That's one type of shock. But your net importers, well, they're dealing with a price shock and a supply shock. That's a whole different ballgame than just an inflationary element that's being on top of what the US and Canada are currently facing. Underneath the surface, we also know it's an incredibly uneven shock for consumers. So on average, Americans, for example, spend less than 2% of all of what they spend on gasoline, but it's more near 4% for the bottom half of Americans. And so what concerns me more is we've talked a lot about things like K-shapes. We've talked a lot about the U.S. separating from the rest of the world. The longer this shock goes on, of course, it's going to change forecast numbers, but there's something a little more nefarious happening under the surface. We should be mindful of what that divergence underneath the forecast is going to do, both to households, but also to their sentiment shocks, how they vote. There are big implications to these shocks that are that create these divergences.
Francis, appreciate the update. Good to see you as always. Francis Donald there of RBC. From stag light to medium grade stagflation, neither's good and one's worse, unfortunately. This is from Barclays. I think this is the boldest move I've possibly seen in the last 3 weeks in financial markets. Vinu Krishna, raising the price target on the S&P 500 to 7650 from 7400 just yesterday.
Yeah, just again, and he's not completely alone. I think that JP Morgan also has a pretty high bogey when it comes to what they're expecting for the remainder of the year. To raise their forecast, he might be alone. I am curious how much people are seeing that earnings estimates are getting revised to the upside. You were talking about that at the beginning of the show, and I think it's a really important point. People look at that, AI dominance still very present, and saying you can still get all in. And frankly, the rest of the world's going to go all in as well.
We believe the US continues to offer stronger nominal growth than other major economies and a secular growth engine in technology that shows few signs of stopping. Raising the outlook over at Barclays. Venu Krishna, amazing. From New York City this morning, good morning to you all. The second hour of Bloomberg Surveillance up next.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court that aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
We'll really start to see that energy price shock feeding through in the March data.
Central banks are going to be as hawkish as possible without hiking.
The Fed is going to have to become a lot more dovish in the medium term.
We think eventually that bond investors will kind of wake up and smell that disinflation coming.
What's really important is to take a step back, not get too worked up.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now. The price action looks like this. Equities higher by 0.8% on the S&P 500. On the NASDAQ, up 1%. In the bond market, yields down across the curve. 2s, 10s, and 30s. 2s at 386. Only about 24 hours ago, 48 hours ago, we were talking about 4% on a 2-year yield following a very sloppy auction yesterday. More auctions to come later on this morning. We'll be looking ahead to a 5-year and 7-year auction over the next 24 hours. Setting the tone for this market, this move right here in crude. WTI and Brent lower by 6%. Brent crude at 98, WTI at 87. There is a lot of faith being put in the diplomatic process between the US and Iran, a process that Iran denies is even happening.
Yeah, as Bob Elliott of Unlimited Funds said on Twitter or X, whatever you want to call it, echoing what you said, the challenge right now is that there are two possible futures, escalation and de-escalation, with nearly opposite economic outcomes and asset returns. Question that I have, an increasing number of investors have, at what point do you reach diminishing upside just by virtue of how long this conflict goes on? And yes, you can get potential talks, as one side is saying, no talks, as the other side is saying. You can maybe get to a resolution. What does normal look like? And do we get the Strait of Hormuz operating in a way that actually does help facilitate the flow of a fifth of the world's oil and gas?
It depends how you look at it. There's a major difference between short-term transit risk, the Strait of Hormuz and reopening down again and traffic moving again, and long-term production problems. This has already shifted towards long-term production problems, and we'll have to grapple with that for months. Even if this war is addressed, settled, peace comes tomorrow. Yeah. The problem now already is arriving in the data, stagflationary risk arriving in the PMIs, output down, prices up, and you're starting to hear more and more companies warn about what they believe is also a disconnect between the physical world that they experience and the paper markets we're talking about on a daily basis.
Yeah, you could put United Airlines right there in that, considering the fact that Scott Kirby is talking about $100 a barrel on average through the remainder of 2027, saying the prices are going to have to rise for airline tickets and that he expects demand to go down. How much are people thinking about that growth shock? That doesn't seem to be in the equation when people look at the response by central bankers, which is why they're starting to price in rate hikes. It is a very murky situation. The fact that you mentioned the 2-year yield, really interesting given the auction yesterday. Incredibly messy for a 2-year yield. Today we've got $70 billion of 5-year notes. Tomorrow, $44 billion of 7-year notes. How do people get any certainty around how to price the path of inflation and, frankly, term premium, given the backdrop that we're looking at right now?
Futures this morning, rosy, positive, up again on the S&P 500, looking ahead to a few days of very important talks, potentially between the US and Iran. Coming up this hour, we'll catch up with David Levitz of JP Morgan Asset Management, with equities rising on de-escalation hope probes. Claudio Galimberti of Rystad Energy on normalizing flows through the Strait of Hormuz, and Richard Clarida of PIMCO as central banks assess the Iran war shock. We begin this hour with stocks grinding higher as crude swings. David Lebowitz of JP Morgan Asset Management writing, we see more opportunity in US equities as the economy is more insulated from the energy shock than the rest of the world. David joins us now for more. David, good morning. Good
morning.
How are you characterizing this energy shock to clients at the moment?
So whenever there's a geopolitical event, we try to take a step back and think about what is the transmission mechanism by which this could impact the economy. There are usually two channels, one being fiscal spending, the other being commodity prices. And I think the point that you were just making about it's not only the level to which energy prices rise, but the duration at which they stay there that really causes a problem. Because first it shows up at the pump, and that was evident on Sunday when we were coming back from the grocery store. Then it begins to show up in goods prices more broadly. Then it begins to show up in services prices. And I think that's really the concern right now, and that's what volatilities are telling you. If you look at the MOVE index, it still remains very elevated, reflecting that uncertainty around where prices are headed and what that inflation growth mix is going to look like going forward.
People are reflecting on a 2022 type shock all over again, and a shock to the market. And to be clear what we mean by that, stocks and bonds both struggle. Is it different in 2026?
So I think that there's a little bit of an offset, which does make it slightly different, which is we do have fiscal stimulus coming through this year. So there is a bit of an offset on the growth side that wasn't necessarily there back in 2022. But when I think about it from a portfolio perspective, we are looking at a world where stock bond correlations are flat to slightly positive. That means diversification isn't as easy to find as perhaps it is in a more normal negatively correlated environment. And that necessitates the use of things like real assets, not necessarily gold, but things like real estate and infrastructure as a way of protecting yourself while we figure out exactly what the world's going to look like going forward.
Do you think that in some ways you could even upgrade your expectation for U.S. equities based on the growth and based on the fact that suddenly the rest of the world is seeing the U.S. as something of a haven again after rejecting it for a couple of months?
It's funny how perceptions can change very quickly, but I think you make a good point, which is the U.S., we've seen energy intensity come down over time. We are a net exporter of energy at the end of the day. We are much more insulated from this shock than is the case for the rest of the world. You also think about the nature of our businesses, right? We tend to be very oriented towards capital light technology, communication services, so on and so forth. That's going to be the final frontier where I think you see these inflationary pressures show up. Where are they going to show up more quickly? Goods, staples, materials, and that's going to be punitive for some markets if it does result in demand destruction. And so we are viewing U.S. equities as a bit of a safe haven in this environment, despite coming into the year with more of a constructive view on opportunities outside.
What's fascinating is how much this year rhymes with last year. Everyone was talking about the broadening out at the beginning of 2025, how the broader economy would really experience a wave of growth. Then all of a sudden it was a Magnificent Seven again after Liberation Day. Are we going back to that kind of dynamic? Because the growth is going to come from price inelastic investments tied to technology, not necessarily the consumer feeling good about their situation.
So I do think that we are going back to a world where people view technology and growth stocks in the U.S. as a bit more defensive, but I do think that there's going to be more differentiation going forward. I'm not sure it's going to be this blind buy of the Magnificent Seven that we've seen over the past couple of years. The reason for that is that we have concerns in the credit market, and those concerns in the credit market are directly tied to software and technology. And so, I think people are going to put their push their spectacles up their nose, if you will, when they're looking at these investments going forward. And it's not going to be about buying the beta. It's going to be about understanding as we go from adoption to implementation of a lot of these technologies where those alpha opportunities actually exist.
I find myself doing that all the time.
I know. I found myself doing that without even glasses.
Often when you're looking at the bond market.
Just, going like
and
this.
And overpriced equities. Inevitable when things get messy that people look for anchors and secular tailwinds. The question I have at the moment when it comes to tech and the secular tailwinds is just how cyclical the AI ecosystem might turn out to be in the next 12 months.
So I do think that you are going to see a period where volatility is challenged to decline, both on the rate side as well as on the equity side. I do think that there are some concerns around, can debt markets absorb the issuance that's coming from the hyperscalers? Do we have enough power to get these data centers, when they are up and running, to get them functioning? What does adoption actually look like? I mean, to me, this is kind of like the trillion-dollar question. If you look at the Business Trend and Outlook survey that the Census Bureau produces, you are seeing more and more businesses adopt AI in their day-to-day. But are we really seeing those productivity benefits? I think that saying that we're already seeing them, to my mind, is a bridge too far. And I think that's what investors are really looking for. They talk about the ROI on all of this. we're going to see it once it's there. Nobody's going to have an edge trying to forecast exactly where that shows up. The question is, are we seeing the productivity benefits? Because to bring it back to the beginning, that's the cure for inflation should it begin to become a
When business is good and financial conditions are loose, it's easy to come out and say things like, the greatest risk right now is underinvesting and not overinvesting. And we've heard that from tech CEO after tech CEO. Let's go through the scenario. Let's say financial conditions tighten, and let's say business is not as good over the next 12 months. Who is upping their outlook for CapEx in the next 12 months? And how many companies are forced, pressured by this market to do the opposite, to cut?
So I think more in the long term, and there's a very tight relationship between capital spending and profit growth. And so what we need to watch here, and earnings estimates have been incredibly resilient given everything that's been going on over the past couple of weeks. We need to watch what happens with profitability, because if the money continues to come through the door, even at a slower pace, I do think you'll continue to see investment by these large technology firms. But if you really begin to see profitability hit the skids and miss to the downside in a notable way, that's going to force their hand in the opposite direction. That's going to create questions among the investment community. Is the ROI actually there? You know, are they pulling back on their investment because they don't have the cash, or are they pulling back on their investment because they're seeing something else?
To build on what John is talking about, there already has been a slight tightening of financial conditions, but from pretty loose levels, and you still are seeing things getting done. If the Fed hikes rates, and there's right now a 1 in 5 chance of the Fed hiking rates, does that torpedo the cycle in a material way that is experienced in the equity market and beyond?
I'm not sure that it torpedoes the economic cycle, but I think it creates a significant challenge for the equity market. You know, coming into the year, looking for 1 to 2 cuts, now we're talking about hikes. We're not just talking about hikes in the U.S., right? We're talking about hikes around the world. That creates a more challenging environment in a situation that you're already seeing that fragility begin to come through. Now, I think, again, the U.S. economy can take a few more punches than the rest of the world, given that fiscal support and given the health of the consumer, but obviously higher short-term rates, greater term risk premium, tighter financial conditions, that's tough if you're a risk-on investor.
David, it's good to see you. It always is. Thanks for dropping by. David Lebowitz there of JP Morgan Asset Management. I was just thinking about the Citrini research piece from a number of weeks ago, which of course no one talks about anymore because of this war, and the nightmare that they envisioned, which is ultimately that companies would substitute OPEX for CapEx if the ROI was big enough, that you would see people cut their staffs to increase the CapEx to replace them with AI and agentic intelligence. And then the spiral, the deadly spiral begins in the year ahead, and we hope we go nowhere near that stuff.
But they're not alone. I mean, the Anthropic CEO has been banging the table saying the exact same thing, that a significant portion of white-collar jobs are going to go away, and you are seeing these job cuts being announced. You can argue why they're being announced at places like Block and whether it really is tied to AI. But yesterday, it just shows how we're not out of the woods when you have Amazon, AWS come out with new AI technology that torpedoes software stocks yet again and raises questions about the value there. So this isn't going away, and I think it's a really important question.
This is not going to win me any friends in that community. I really don't trust a lot of the stuff coming out of the leadership teams of the companies that are being run by these guys. I really don't trust some of the lines. I wonder what the motives are. I wonder what's behind it. Some of the lines coming out of these companies just feel so offside to reality. When you turn around and say you're going to lose 40% of the staff in any given occupation, you've got to wonder just what's behind that. Is it on the edge of arrogance? Is it well-informed? How is the government going to respond to that? How do you think the government's going to respond to that if you lost 40%, 50% of white-collar work in the next 18 months? How much tax do you think that company's going to face if that's going to be the case? All those things. It's getting increasingly concerning, these individuals that run these companies that could have all this power in years to come.
And part of this is a lobbying effort in Washington, D.C. to get ahead of some of those measures. They can get in on the ground regulating it now before they're regulated later in ways that maybe they don't really want.
Of course, the media that covers these stories, they want the access with the CEOs, right? So they entertain some of these ideas without pushing back aggressively.
I would argue you are getting market pushback, not so much with Anthropic, although on the margins, but with OpenAI. A number of people have actually canceled their deals with OpenAI and investments. There is more scrutiny, but not to the level that you're talking about.
Lost enough friends already. Equity futures positive by 0.9% on the S&P. Let's get you an update on stories worldwide with your Bloomberg brief. Yahara has more. Hey, Yahara.
Hi, John.
The U.S. drafting a 15-point plan to end the war in Iran. Sources telling us here at Bloomberg the plan was delivered to Iran via Pakistan. The details of the proposal are unclear, but President Donald Trump has said publicly any agreement would have to include a prohibition on Iran ever obtaining a nuclear weapon. We are seeing arms shares surging 12.5% in the pre-market following an announcement that the semiconductor designer will start selling its own chips for the first time. TSMC will produce the chips, and its first major customer for the product will be Meta, of course. The company expects the new business to generate about $15 billion annually within 5 years. And U.S. mortgage rates climbing for a third straight week. According to Mortgage Bankers Association data, home financing costs have risen to the highest level since October. The group's index of mortgage applications for home purchases fell 5.4% last week, the biggest drop since January. That's your Bloomberg Brief. John.
Yahara, thank you. Thank you for the update. Up next on the program, President Trump's big triumph.
We've won this. This war has been won. The leaders are all gone. Nobody knows who to talk to. But we're actually talking to the right people, and they want to make a deal so badly.
We'll get into those talks in just a moment. Adam Hodge of Bully Pulpit International joins us next.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
Breaking news on this Saturday morning.
There's really only one story, and that is Iran.
Balance of Power has all the angles covered.
Trust Bloomberg for on-the-ground coverage.
An entire region pulled into this conflict.
Talking to you from the bomb shelters.
Up-to-the-minute reporting.
Iran remains a viable threat.
And the analysis you need.
There was no imminent threat. There's never a good time, but there are better times.
Netanyahu is my opponent. However, on this issue, we stand together.
Nobody covers geopolitics like Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Equity futures positive here by 0.9% on the S&P 500. A lift across the equity board on the Nasdaq, up by 1 percentage point. Bond yields lower across the curve. 2s out to 30s. 2-year this morning, 386. 10s at 431 later on this afternoon. Some issuance to look out for. 5-year notes today, 7-year notes tomorrow. Setting the tone for this market, this move right here. Brent and WTI lower on the diplomatic front. Things improving apparently. We're down by more than 6% on Brent to 97. WTI at 86.60. Under surveillance this morning, President Trump's big triumph.
We've won this. This war has been won. They have no Navy left. They have no Air Force left. They have no anti-aircraft equipment left. No radar left. No leaders left. The leaders are all gone. Nobody knows who to talk to. But we're actually talking to the right people, and they want to make a deal so badly.
So here's the latest this morning. The U.S. sending a 15-point peace plan to Iran. Tehran signaling little willingness to compromise. Anne-Marie joins us now from Washington for more. Morning, Anne-Marie.
Good morning, Jonathan. Well, what we're seeing from the Iranians is a very much so, as you say, not there when it comes to compromise. Iran's armed forces had this to say: the level of your internal conflicts has reached the point
where you are negotiating with yourselves. When it comes to this 15-point peace plan, according to Pakistani officials speaking to the Associated Press, the Iranians have been delivered it. And a lot of on the table is things that we've been talking about. And this administration was already talking to the Iranians about before the conflict began. And I want to talk about how the United States is conducting this conflict. We're joined by our colleague right now, Katrina Manson. She just wrote this entire book about Project Maven, which is being used right now from the DOD to deploy this war in Iran. And yesterday, the Palantir CTO, Katrina, told our colleagues Ed Lolo and Caroline Hyde that when you look back, this will be the first big conflict where AI is part of it. What are you seeing?
Yes, he said that this conflict is, we'll look back and see that it was driven, enhanced, and made substantially more productive by the help of AI. It's an interesting turn of phrase. I think it points to the number of targets the US has been hitting. 9,000, more than 9,000 so far, more than 1,000 in the first 24 hours of the operations. And that comes down to Maven Smart System, a product that Palantir makes that can rapidly identify targets and pair them with weapons. Now, that's not to say that hitting targets alone is the answer, but speeding those processes has perhaps buoyed US confidence that they could deliver a result.
And it maybe accelerated some of their targets in terms of strategic targets for trying to win this conflict. We also heard, though, from the president's former defense official yesterday, Jim Mattis, who was saying that hitting targets is not enough.
Yes, he really focused on this word targetry, to say targetry is no substitute for strategy. And the whole point of AI, bringing that breadth of data into the battlefield, has always been claimed to be about bringing greater intelligence for decision-making. So if it has enabled hitting a lot of military targets without understanding the impact that taking those targets out might have, there's really a disconnect. And I think the US military operators will have to focus on what it is that actually starts and ends a war. And perhaps Trump will be asking chatbots, how do I open the Strait of Hormuz?
Wow, potentially that's going on right now at the DOD. Katrina Manson, thank you so much for your time. And I've started her book. Absolutely incredible to understand how AI has been working through the Department of Defense and how it's being used right now on the ground. But Jonathan, to back that up, we also need to bring up to the point, 2 Marine expeditionary units are on their way to the Middle East, as well as being deployed, 2,000 soldiers from the 82nd Airborne.
Anne-Marie, appreciate the update down in Washington, D.C. The prospect of facing down substantial two-way risk heading into the weekend. Let's talk about the diplomatic effort. Adam Hodge of Bully Pulpit International is saying the White House doesn't have the structure or people in place to find a durable solution to the war they started. Adam joins us now for more. Adam, good morning.
Good to be here.
Good to see you in person. So let's get to a question we've asked many times in the past 3 weeks. When we say Iran, who are we talking about? When the US says we're talking to Iran, who are they talking about?
It's really unclear. I mean, what you've heard from the president in the comments he made yesterday, that we've killed most of the people that we were then talking to. Even at the start of the war, he said, there's all these people that we're going to talk to, but now most of them are dead. It's hard to negotiate and have a real, find a real deal if you've killed the people that you could be offering the deal with. And I think the key question that I have going forward is, how do they actually resolve this war in a way that is durable, that is sustainable? And I keep coming back to the fact that you need people in place who understand the country, who understand the ins and outs of the market in the region to really reach a lasting deal. And you get a lot of mixed signals over the last couple of days.
It's one thing to have some sort of cohesive crew in the United States. It's another thing to understand who we is when this is a multifaceted war being fought by Israel with increasing participation, or at least buy-in, say-in from Saudi Arabia and UAE and other regional countries. How closely do you think that all of these different nations are aligned right now with signals coming out of the White House?
I've been a little bit concerned with what it seems to be somewhat of a rift or a gap between the U.S. and Israel and some of the strategic priorities. And I think that is a question like, how do they continue to coordinate? Do they continue to attack the right targets? Does that coordination continue? That, I think, going forward is a question. I think you've seen reports, Mohammed bin Salman in Saudi Arabia openly pushing the White House and the president to go deeper into Iran. You've got 50,000 troops already in the region. The Marine Expeditionary Unit on its way. They're not going there to get a suntan, right? They're there to do lethal work. The 82nd Airborne, also very lethal. And so I think that is a a sign to Iran that this is a good chance that this conflict does continue. And they just have to look back to what happened at the start of this conflict. They were negotiating a deal. They were willing to give up their enrichment, and we then bombed them. So I don't think that if you get a 15-point plan, they're going to be all that quick to try to resolve this conflict if they are watching the same vessels and the same troops moving to the region.
At the same time, the Democrats have come out and tried to pass legislation putting a stop to some of the incursion by the U.S. in the region. Do you think that that is a viable solution, given the fact that essentially that would give Iran control over this crucial waterway should the U.S. walk away now?
I mean, I think what Democrats say is, like, we should never have gotten into this conflict in the first place, right? And so the quickest way to get is to find a negotiated solution to the war. Now, like, we're in this box. We're in this Pandora's box that the president got us in. And so it is ultimately the president's responsibility to get us out of it. I think the key is if you do hold back some of the funding for the war, it puts the pressure on the president to do that. And now I think that is, without boots on the ground right now, the Defense Department has all the money that they need to wage this war. I think the more you start putting, if American boots go on the ground, which the president said was a red line from the beginning of his administration, then it becomes a harder political issue for the Democrats to hold on to. But for right now, I think they're on pretty firm footing.
Adam, it's good to see you. Thanks for being here. Yeah. Thanks for breaking it down. Adam Hodge there of Bully Pulpit International on the very complicated, and I think we should stress that, very complicated diplomatic effort heading into the weekend.
It is incredibly complicated because we don't know who's negotiating with who. We don't have a sense of how concrete any deal could possibly be. We don't understand exactly what kind of consensus there is among people who are ostensibly fighting in tandem. And it's unclear how dependable any kind of truce could be, given the fact that Iran is waging an existential battle and is now claiming this power in a way that it knows it can use as a cudgel. It is talking about how oil prices need to go higher to exert that influence and that pain on the global economy to show their clout. So this is an incredibly difficult situation on every single front.
We keep framing the calendar. We should keep going back to the calendar. Adam talked about it. By the weekend, you've got a new deadline, a self-imposed deadline by the president. Let's talk about the original deadline. It was to really escalate things and go after Iranian power plants. That's been pushed back. We avoided the escalation, but it's been pushed back, delayed potentially. You face substantial two-way risk into the weekend. Either you get the ceasefire, a diplomatic resolution of some kind, I've got no idea how durable that would be, or you end up in a situation where you have an increased military presence in the region by the time you get to the weekend and a totally different option about how to progress and move forward.
This is a reason why a lot of people feel pretty paralyzed, and that's why it's pretty shocking that Vina Krishna actually increased his target for the S&P 500.
That's a trade for the brave. I respect that.
I respect that too.
Make a call.
Go for it.
Making a bold call. We'll catch up with Venu in the next week or so. Up next on the programme, Claudio Galimberti of Rystad Energy on stabilising flows through the Strait of Hormuz.
world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
It is the first thing we look at every single morning. It looks like this morning. I'm sure you're intrigued if you're just waking up. It's lower, by the way. Crude down by 6%. Brent back to 98. WTI down by 6%. Also 86.84. Setting the tone for this in the equity market. Equity futures higher across the board, up by 0.9% on the S&P. On the Nasdaq, up by 1 full percentage point. In the bond market, actually quite a volatile couple of days in fixed income. And you don't usually see that volatility at the front end of the curve. The 2-year, usually very sensitive to what the Fed rate path might be. 386.27, yields down by 3 basis points. And usually when you get a back up in yields, say 4% on 2s, which by the way is above Fed funds right now, you get a decent set of demand coming into the market as well. You did not see that yesterday at that auction.
Yep, not only did you have dealers take down the greatest amount going back to 2022 of this 2-year yield auction, but you saw yields go up, actually sold at a higher level, priced lower at the actual auction. That's where they traded immediately after the sale, highlighting that people didn't feel like they were being sufficiently compensated. How do you make any trade in this market, given the fact that you could be whipsawed by a headline, given the fact that you don't know who you're playing against, and given the fact that the backdrop is just so uncertain?
I'm pleased you went there. Let's go there.
Okay.
If you're in the market right now and you've witnessed the past few days, particularly what happened on Monday morning, is that going to lead you to reduce how much money you put at play in this market right now? Does that lead to a reduction in liquidity? That's what I'm trying to figure out in the next few weeks. If this carries on, if you keep believing the perception that someone has a line, some information that you don't have, and that you're vulnerable to a headline or a social media post in the next several minutes, do you want to take risk in that kind of market? Because the kind of market that gets fantastic liquidity is the kind of market that has fantastic transparency. And if you start to question the lack of transparency, I just wonder what happens ultimately to liquidity.
So anecdotally, I've been speaking to a number of investors over the past week, and they all say, I can't trade this. This is completely untradeable. This is a market that does not feel like it is rational or something that I could have an edge in. They are pulling back. You see that on the margins with cash balances going up. Whether this leads to a full pullback in liquidity, I think is a fair question. Inconclusive at this point. It feels like a casino where you thought you were playing at the poker table, and now you're playing at the slot machine, and the house has rigged it every single time, and it is not a fun place to be.
Coin flipping at the moment. Really does feel that way. $1 trillion coin flips at the moment. Equity futures still positive by about 1% on the S&P 500, 2 hours away from the opening bell. Let's get you some morning movers. Yahara has more for you. Hey, Yahara.
Hi, John. Airline stocks have felt the brunt of this conflict, but today they are all higher as investors lean into signs that the situation with Iran may not be getting worse, at least for now. But the backdrop for the airlines remains strained. We still have an ongoing partial government shutdown, so lines out the door at airports still. United CEO telling Lisa yesterday that demand remains strong despite all the issues going on in that sector. Meanwhile, moving on to KB Homes, those shares are down 4.25% after the builder issued a weaker than expected forecast for deliveries. The company pointing to a more cautious consumer, still concerned about affordability. And adding to that, KB Home saying that concerns around the Middle East conflict are creating another level of uncertainty for buyers. Add to that still elevated yields, and it's a tough time to buy a home. And we end on ARM shares on a good note. Those shares rising nearly 13% in the pre-market as the company moves to start selling its own chips for the first time, moving beyond its traditional licensing model. It's a big pivot as it takes aim at the growing data center market tied to AI. And the company expects this business to generate about $15 billion annually within 5 years. John?
Yahara, thank you. Appreciate it. More from Yahara a little bit later. On our radar this morning, the United States proposing a 15-point peace plan to end the war in Iran. The plan reportedly requiring Tehran to dismantle all of its nuclear capabilities and fully reopen the Strait of Hormuz. Elsewhere, Iran allowing some foreign vessels to pass through that strait. Officials saying ships can cross as long as they are not supporting acts of aggression against the country. And finally, elsewhere, the DOJ admitting it found no evidence of a crime in its investigation into the Federal Reserve renovation project. The revelation reportedly coming during a closed-door hearing earlier this month, the judge calling the probe an illegal attempt to pressure Fed Chair Jay Powell.
First of all, can I just say, remember, and I'm reminiscing fondly, remember when we were thinking that this was such a big story? This was the biggest story of the day, sort of a question about the fate of the Fed chair and just this shenanigan with respect to what the Justice Department would do. Look, this goes back to the point that you and Anne-Marie have been making a lot, which is why didn't the Trump administration, why didn't the U.S. attorney take the win and just simply say, okay, Supreme Court, or okay, court system, we'll just simply drop this case, allow the nomination process of Kevin Warsh to go through and be done with this. Why dig your heels in? And this just adds to questions around that.
I don't know. Here is what I do know. As things stand, things could get very, very messy this summer, based on the three-point plan that came from Chairman Powell in the news conference last week, which is, I'm going to stay if no one's confirmed. I'm going to stay if the DOJ investigation hasn't wrapped up. And I'm not committing to leaving. Even if those other two things happen, I might stay on the Board of Governors for the time being until that term expires. Stay tuned. Think about what that might look like later this summer.
I think the administration is already thinking about it, and they've signaled that they will probably contest it legally and that they don't think that there is necessarily the pro tempora precedent to have him stay on as Fed chair. That in the past, when someone has stayed on as Fed chair, they were going to be already the next Fed chair. They just hadn't yet been confirmed. It wasn't necessarily waiting for the confirmation of another figure. It may get messy, whether it affects the path of an already highly volatile Fed funds rate.
Yep.
Just gives you a sense of how much is at stake.
It's not going to help, that's for sure. We'll catch up with the former Fed Vice Chair, Richard Clarida, a little bit later this hour. We'll get his thoughts on the politics and on the policy. Let's talk about crude. Prices falling this morning as President Trump signals a possible off-ramp for the war with Iran. Claudio Galimberti of Rystad Energy writing, even if a ceasefire were to be agreed today, it will still take at least a couple of months to normalize the flows through the Strait of Hormuz. Claudio joins us now for more. Claudio, welcome to the program. We've seen headlines coming out of Asia about rationing. We've seen those building over the past few weeks. How long before we start seeing similar things in places like Europe and maybe even places like California?
Thank you for inviting me, John and Lisa. I think we are only weeks away from a situation of rationing if the Strait of Hormuz remains virtually closed. Now, there are some good news, of course, coming today from the White House, potentially from Tehran. We should welcome those, but let's not forget that as of today, 10 million barrels a day of production in the Middle East are shut in. And this is an unprecedented situation. And the benchmarks for Asia, for crude in Asia, are still well above $120, $130 per barrel. And these, I think, are more representative of the situation on the ground. So the rationing that we begin to see right now in Asia was well forecasted, and before long, if the Strait of Hormuz is not reopened, we'll see it in Europe. As far as the United States is concerned, the situation is less of a problem because the United States, let's not forget, it is a net oil exporter. But even in the United States, in some parts, we'll begin to see some problem at some point.
Claudia, let's draw a distinction between short-term transit risk, which is the Strait of Hormuz, anything can happen there at any moment, and long-term production problems. We've seen damage to production facilities already. That's going to take time to repair physically. What I think is less understood by people outside of your world are the wells themselves. We often talk about them as if they're taps. You can turn them off, turn them back on again. When you shut in production, how difficult is it to restart? How long can it take?
The rule of thumb says that the longer they stay shut, the longer it's going to take to bring them back to the previous level, and you might not get there. So let's suppose that right now we are in the fourth week of the war. Rule of thumb is going to take, if the war ends today, it's going to take 4 weeks to bring them back on average. Of course, some it's going to take a short amount of time, so it's going to take much longer, but on average, that is the rule of thumb. And it's not a given that it's going to cost a lot, by the way, to bring them back. And it's not a given that you get to the same level. So it's always a complicated thing. And that's why all the producers are very, they don't want to do it. They don't want to shut in. They exhaust all the alternative. Eventually, in this case, there was no alternative. Because we were reaching containment in the tanks. Started in Iraq, Kuwait, and then pretty much right now it's all around the Middle Eastern producer west of Suez. So that's an unfortunate situation, and that's the reason why we need to be careful at assuming that once the war is over, then the situation normalizes. It's going to take, logistically and from the production perspective, months to go back to normal. And as you correctly pointed out, Jonathan, for those facilities that have been damaged by the bombing and by the missile, that can take years, right? So we know Ras Laffan in Qatar, which is the LNG facility, that may take 3 years according to the Qatari. And we don't know how many facilities have been, there are some rumors that there are more facilities being damaged across the Middle East than we actually know. So
Claudia,
we need to be aware of that.
There are two conclusions that you could draw from this. One would be because there could be destruction to the actual production facilities that it takes a longer time to bring back on, that prices will be higher. On the flip side, you could say demand destruction is going to really start to kick in, especially because it's actual physical shortages in certain places, particularly in Asia, and that could potentially cap how high prices could go. At what point has that dynamic started to play into the equation?
Excellent point, Lisa. I think that we need to be careful at assuming that demand will be a shock absorber, because we are talking about 10 million barrels a day of shock on the supply side. To assume 10 million barrels a day of shock on the demand, it's basically we need to go back to COVID, right? So remember when we were all shutting down and being inside the house, and that's not going to happen. So there's going to be some rationing, and probably starting with petrochemical, because that is a very long supply chain, and therefore it can absorb basically the rationing much better. Then it's going to be jet, and then it's eventually going to hit all the transportation fuel, main transportation fuel, diesel and gasoline, if it continues. But let's not forget that we still have a lot of inventories around the world, so things can we're not necessarily in a nightmare scenario, but at some point the oil demand will start to be curtailed. And but assuming that all the supply is going to be matched, the supply shock is going to be matched by demand, that's really a very, very dark scenario. I don't think that that's going to happen. So what I think is going to happen first is that if this is not resolved, prices are going to scale up at very high level. At that point, you're going to have some discretionary travel is going to be trimmed. We're probably going to have some impact on the economy at some point through inflation, through higher interest rates, and then demand will start to fall. But it's going to take some time even for the demand to actually readjust. So it's a long process. We are still in the middle of that, I'm afraid.
Hey, Claudio, it's good to see you. Thanks for the update. Let's do it again soon. Claudio Galaberti there of Rystad Energy. I'm not enjoying the phrase demand destruction at the moment. I understand where it comes from, but it almost implies that prices get so high that people just aren't willing to pay them. When actually what it means right now in places like Asia is just pure shortages. Demand is being destroyed because people can't access the thing they need. It's a shortage problem in so many of these places, and the price is a reflection of that shortage.
Wasn't it Jeff Curry who came out and said that we will experience what happens with respect to people understanding the scope of this energy situation when there are lines?
Yep.
at the pump. And that, I think, really goes to what you're saying. It's not that people don't want to pay. It's when people won't be able to access the gasoline to power their vehicles and have to go from gas station to gas station. And that, I think, is what a lot of people are worried
Different
about.
way of framing things. Of course, you'll see both to a certain extent, but it's the shortages that I think is just front and center right now. And the Shell CEO basically saying that what you're seeing in Asia, you'll see in Europe next. That's when people might start to wake up big time to this cascading through the global economy and not just being a problem for Asian importers.
And there is a demand destruction aspect to it that actually is people choosing not to pay. And that is when the prices are passed through different goods and services, and suddenly people start to ration how much they go out, ration how much they travel. And that is the hit that people are very concerned about right now, how that plays through in a stagflationary type of feel in the market.
The story better in energy this morning. We're down by 5 to 6%. Brent at about 98.56. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Yahara has more. Hey, Yahara.
On that note, John, Chevron is warning that California is heading toward an energy crisis because of the war in Iran. California is highly exposed to the disruption because it imports about 20% of its refined fuels from Asia, which is struggling, as you said, to meet its own demand. Chevron says it may quit refining oil in California within a decade unless officials cut taxes and regulations. OpenAI plans to discontinue its Sora AI video generator and wind down its partnership with Disney. The move coincides with the ChatGPT maker's push to streamline its product lineup. In the staff memo, CEO Sam Altman saying it plans to reorganize to raise capital and focus on infrastructure projects. And JP Morgan Chairman and CEO Jamie Dimon says China is beating the U.S. in specific strategic areas and needs to acknowledge Beijing's advancements.
Our GDP per person is $85,000. Theirs is $15,000. We should acknowledge they've done some things magnificently well. We should look at our own shortcomings and then be prepared if they ever become an adversary to face off against.
Dimon also warning that AI could cost the U.S. jobs and suggested the government could create an incentive system for businesses to help soften the blow. That's your Bloomberg Brief. John?
Yahara, thank you. Thanks for the update. More from Yahara in the next hour. Up next on the program, committing to anchoring inflation.
We will not be paralyzed by hesitation because our commitment to delivering 2% inflation over the medium term is unconditional.
Up next, we'll catch up with Richard Clouder of PIMCO, the former Fed Vice Chair, right here in the studio.
Climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm election.
Hear it first on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest. And this is Bloomberg.
Just off session high, stocks are still positive by 0.8% on the S&P. On the Nasdaq, higher by 1 percentage point. Center the tone for this is what's happening in the energy market. Crude lower on Brent and WTI, down by some 5%. Brent around 99, WTI around 87. Some confidence, apparently, in the diplomatic push from the U.S. side heading into this weekend.
Well, the signal is actually important, which is, at least rhetorically, the U.S. is de-escalating and pushed back the accusations about what would happen should there not be some sort of agreement. This alone was enough to get people somewhat excited.
Signal's important, substance is too, and at the moment Iran says there is no diplomatic effort to engage in.
Well, yeah, Pakistan's maybe doing this,
right?
and let's just take it as bullish.
We often ask all the time, who is Iran, who is talking to who, and when Iran denies it, who is Iran and who is saying that? And it's very complicated right now. Imagine being a central banker, trying to set policy, under surveillance this morning, committing to anchoring inflation.
And we will not act before we have sufficient information on the size and persistence of the shock and its propagation. But we will not be paralyzed by hesitation, because our commitment to delivering 2% inflation over the medium term is unconditional.
So here's the latest this morning. The ECB, among central banks, assessing its next moves as the extent of the Iran war energy shock remains unknown. Joining us now to discuss is the former Fed Vice Chair and Global Economic Advisor at PIMCO, an old friend of this program, Richard Clarida. Rich, good to see you, sir.
Thanks for having me.
Thank you for being here. This feels different for the ECB versus the Fed. Is that fair?
I think it's fair. I think, obviously, the shock is probably going to be larger for them, given their imports of oil and natural gas. Also, remember, the ECB has a single mandate. Their job is price stability. The Fed has a dual mandate. And so I think they are data dependent. I take them at their word. I don't think a hike is a slam dunk, but it's an option.
Is this a shock you should look through as a central banker?
My inclination would be to look through it initially, although the caveat, of course, is the last 5 years, inflation's been too damn high and above target. So I think that's a case to maybe think a little bit harder about it. But my inclination would be to look through, especially given, I think most economies, including the U.S., are at a point where if we do get a stagflationary shock, there will be a contraction in growth and higher unemployment, and central banks are going to have to factor that in as well.
Well, with the ECB right now, markets are pricing in a number of rate hikes for the remainder of this year. And in the past, there has been a history for the ECB of hiking in the face of an oil price shock. Do you think that would be a policy error that would send the region into recession?
I think it's a possible policy error. You know, you don't have a crystal ball, at least as a central banker, so you make those judgment calls. But you are correct. Both in 2008 and 2011, as I recall, the ECB was hiking when headline inflation went up for an oil shock, and both of those moves, in retrospect, did not pan out too well. So I think that could be on their mind.
PIMCO recently put out a paper pushing back against some of the rate hike expectations in the United States, saying it's a little bit overdone given what the rhetoric has been and the dual mandate that we're facing. Do you think that a rate hike, that the bar is just so high that it really wouldn't happen, especially under Kevin Walsh whenever he gets in?
Well, Jay Powell was asked that question at the press conference, and I think he said again, as he did in January, that the committee's not really considering a rate hike now, and it's really not something that They anticipate, you do have some members of the committee, I think some of the presidents, who would like the statement at least to acknowledge there could be a rate hike. I do think the bar is high for a couple of reasons. The Fed is a dual mandate central bank. The unemployment rate is low, but let's face it, job creation's been virtually zero for the last year or so, especially in the private sector. And I don't think it would take much to push the unemployment rate up, and I think that'll also be a factor for them. So I think the most likely path is the uncertainty in the Middle East may put them on hold for a while, but I think eventually this will be resolved. It'll be in the rearview mirror, and I think at that point, Kevin Warsh, when he does arrive, will be inclined to lower rates at least down to the neutral level of around 3%.
Can I talk about football, but the international kind?
Okay.
Okay, right.
Have you ever asked for permission to talk about football?
When you are defending a corner, the rules of the games are ultimately the unwritten rule of the game. As a manager, you shouldn't make a substitution in that moment. You shouldn't change things up. Things can get complicated. It feels like we're doing more than just defending a corner later on this summer, and you've got the captain refusing to come off potentially, and another guy that wants to come on. And this can get really, really messy. Is this working? I hope it's working.
I think it's great.
It's working. I'm with you, John.
Can you explain to me what this is going to look like later this summer?
Well, there's the very real prospect that at least for a meeting or two, or perhaps more, that you'll have a Fed Chair Warsh, and you'll have a Governor Powell who remains on the committee. The last time that happened was in the 1940s, when a Fed Chair named Mariner Eccles stayed on as a governor for 4 years when Truman selected another chairman. And so I think it could complicate things for Kevin Warsh. Kevin Warsh knows the Fed. He was a governor. Kevin Warsh understands that to raise or lower rates or to buy or sell treasuries, you need to get a committee vote. And so he only has one vote. And I think, obviously, Powell, if he stays on, will be a very persuasive voice on the committee, even as a governor, Powell.
Do you think the chairman is right to worry so much about central bank independence that it requires him to stay beyond his term as chair?
I think we're at a juncture where it's important for the Fed as an institution to demonstrate that it will make decisions based upon its mandate. I think Warsh is a good choice to bring that about. I expect he will get confirmed and will go in, I think, with that support and expectation. I would not expect Jay Powell to stay on the Fed until the remainder of his term, which is January of 2028. But I think given the circumstances that we're in, and in particular the ongoing issues the Fed is navigating, he may well stay on, I think, for some time.
Rich, you're a gent. Thanks for entertaining me.
Thanks for
Appreciate
having
it.
me.
Thank you, sir. The former Fed Vice Chair, Richard Clarida, now with PIMCO on the future of this Federal Reserve.
Yeah, and how things might get messy, but they will shake out, given the fact that, frankly, Kevin Warsh has been represented and respected by a lot of people who really fit within the establishment of the economics profession. So it's not as though it is a rogue character coming in, which raises a question how much he can really cut rates, although Rich did say it's neutral or below.
If this war continues, this is going to be a really difficult moment to communicate policy. And I don't think you want confusion about leadership at that moment. And that's where we might be in a few months' time.
I'm just watching the MOVE index.
Right.
I mean, that's essentially giving you a sense of just how much concern there is and lack of clarity.
No more football in the next hour, don't worry. Coming up, Stuart Kaiser of Citi, Crispin Love of Piper Sandler, the Republican Senator Dave McCormick, and Matt Zizok of Merrill and Bank of America Private Bank.
Now, Wissam, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurant opened. He asked me to come to open the restaurant in New York, and beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know what he doing because I never watched the movies. You know, I was traveling the business. But of course, after people, hey, no good, so you must know him, and then I understand.
How is he as a partner?
He's for me, and a great partner. He understands to my concept. He support me 100%. But he's a very smart people. Sometimes so strange idea, but it's good idea. So, example, Noble Hotels idea come from him. He said, hey, Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we start Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, it's just actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
It's just so difficult to determine what's going to happen next in this market.
If we continue to see this volatility, there likely will be long-term buying opportunities.
There is a big disconnect between the physical and the financial markets.
The risk aversion has been increasing dramatically.
At the end of the day, we have to ask ourselves the questions whether or not these positive trends can continue after the war.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance stats right now. The price action, your scores look like this. Near session highs at 1% on the S&P 500. Similar move elsewhere. The Nasdaq up by 1.2. The Russell up by 1.4. In the bond market, yields declining across the curve. 2s, 10s, 30s, 2s down 3, 10s down 5, 431 on a 10-year maturity. And setting the tone for markets worldwide, this board right here. WTI and Brent crude down by close to 6%. Likewise on WTI crude, a lot of faith, a lot of hope in the diplomatic effort and the push coming from the U.S. side heading into the weekend.
Yeah, and it's not just in the actual futures, but when you take a look at the 6-month and 12-month curve, you're also seeing levels come in. There seems to be more of a sense that the signal is more important than the noise when it comes to, the signal is more important than the substance when it comes to President Trump. The fact that there was a ratcheting down in the pace of rhetoric and just how heated things were, that there wasn't some sort of attack on oil futures in Iran, seemed to be rejoiced upon by markets that have been absolutely beset by a slew of headlines.
I've never liked the taco phrase, and we can get into that another time. It takes two to taco is a phrase I've heard a million times over the past 3 weeks or so. This is not just in the president's hands. It's Iran on board with this. They came out in the last few weeks and said, we want to make sure that this never happens again. Establish a long-term, durable deterrence. Now, they're going to have a lack of trust when they come into these talks. The U.S. will have a lack of trust coming into these talks as well. Justifiably so, given how Iran's behaved over the last few decades. That makes it very difficult to get this peace plan agreed to in just several days' time?
That's the reason why I don't totally understand why this is a tradable market. And I'm sure our next guest will explain why this is a tradable market in any kind of way. How do you get any edge? How do you get any conviction? How do you get a sense of whether people are overly bearish when you don't know how long this is going to last? You don't know whether this is a delay just to get troops in position to potentially take this a step further, which is a speculation among some, including Iran. I mean, there's so many questions here that are so out of everybody's hands and sight. I just wonder how you get signal from this and say, I want to play in that.
The fear of missing out seems to be greater than the fear of losses right now, even though we're confronting substantial two-way risk in a few days' time.
And part of the reason why is because people say, look past the noise, if you can call this noise, and typically geopolitics does not have a lasting effect in equity markets, and U.S. equities still look good. Profits are still increasing. You are seeing companies, particularly tech companies, investing heavily in their infrastructure, and they want to go back to that and say, look, it can be a viable dip. Whether that's the case remains to be seen.
So buy stocks. Vinu Krishna over at Barclays just sent me a message moments ago as we've been talking about this call, raising your outlook on the S&P 500 in a moment like this one. Quality move. I think that's bold. I respect it, whether it's right or wrong. 76.50 is the price target now over at Barclays. They've raised the outlook for earnings as well. They acknowledge that the scenario analysis skews left, so more bear downside than bull upside. But ultimately, the earnings outlook for them is solid enough, the tech story is strong enough that they've still got this commitment, this faith, optimism, if you will, in the U.S. stock market story.
Look, a lot of the big tech names are still investing heavily and are price inelastic because it is an expectation of efficiency gains and revolution in the eyes of many that is worth the investment. And for that reason alone, not only do some people see their prices and their valuations going up, but they're increasingly a haven for the rest of the world that now are wondering, okay, what about gold? Nah. What about Europe? Nah. What about Asia? And so suddenly the U.S. seems to be a better trade again.
Asia, I apologize. That's not directed at anyone in particular. Okay, Anyway, I'm just making sure we clear that up, just in case someone's awake and they're watching.
Oh, yeah, look, no, I'm just saying, okay, like, in terms of markets, whether it's the haven. I'm talking
important
markets.
To clarify. People are easily offended these days. All right, it's important to address that.
Thank you. Thanks for trying to save me. I appreciate that.
Equities on the S&P up by 1%. Coming up this hour, Stuart Kaiser of Citi, with stocks whipsawed by diplomatic efforts. Crispin Love of Piper Sandler, as stress continues building in the private credit markets. And Senator Dave McCormick breaking down President Trump's 15-point plan to end the war. We begin this hour with stocks rebounding on hopes a ceasefire might be on the horizon. Stuart Kaiser of Citi writing, we're still not buyers of the proverbial dip. The tail risks from this event are time-dependent. The longer it lasts, the worse they get. Stuart joins us now for more. Stuart, good morning.
Good morning.
How long are the tails from this one already?
I think they're getting pretty long, and I think it actually takes three to taco in this case. And I would add in the Gulf countries here that they need to be accepting of whatever this resolution is, because essentially their economies are being held hostage by the Strait of Hormuz. So I think it's a very complicated thing. I think you're maybe playing for 3 to 5% to the upside, and your downside tail risk could be 10% plus. So we just don't like the risk reward here. I would say if you want to be positive, you have had a lot of de-risking. The bar for bad news is obviously exceptionally high here. And people remember what happened last spring, which was when Trump started to soften his rhetoric. You wanted to add risk. So I think you have this tactical, trade going on. But again, the medium-term risks are extremely large here, and we're being very careful about it at this point.
Should we get to the Bramo question? Let's just hit it head on. How tradable is this market?
Not very tradable. I mean, it's been a very, very difficult kind of intraday, trading environment. A lot of headlines are happening in the overnights. You're getting large moves that you couldn't even hedge or risk manage to begin with. So extremely difficult. I think you also have, you mentioned AI. You've had this environment too, where you trade Iran risk for 2 days, but then you'll trade private credit risk for 3 or 4 hours, and then you'll trade AI risk for 6 or 7 hours. So, like hedge funds in particular, who are thematically invested, are getting kind of yanked in 3 or 4 directions. So, extremely, extremely untradeable market, I would say.
Well, if John's going to ask my question, I'll ask his question, which is, at what point do people withdraw liquidity then from the market? Because how do you get an edge, given the fact that you don't know who has more information than you are? You don't know who's putting on a big trade when it comes to oil or when it comes to a certain sleeve of equity holdings?
Yeah, look, I think it is time in the end. I mean, I think the negative, in that context is that longer dated oil has started to move. And the question, I think, on all of this is, do we just get the front down, or does that 2-year oil, which went from 60 to 70, start to come in a little bit? I'd say the one positive is that long-only investors have generally not participated in the selling over the last couple of weeks, which is positive, because long-only sells when retail pulls out, and long-only sells when they get extremely, worried about, I think, the macro conditions. So that would be the big risk, I think. think is if this lasts long enough that it becomes a recessionary risk, do you start then to get long-only money kind of pulling out of the market? And I think that would be, to your point, liquidity sort of coming out of the system.
Has the deck already been restacked, not only with respect to oil prices, but also the reaction function from central banks? The idea that we're pricing out rate cuts, you can argue all you want about whether rate hikes are truly on the table in the United States. It is a very different backdrop. Does that automatically mean that risk assets just cannot do as well, given that constraint added to the potential concerns in private credit?
Yeah, look, I mean, the central banks are in a tough spot, I think, particularly in Europe, where you're kind of inflation targeted and you might be tightening into a very large demand shock, you know, from higher oil prices. So it's an issue, and it does create, I think, negative risk reward in a lot of markets. I think Europe in particular is a part of the market that we're not looking to dip by, especially, you know, if we were going to put some risk on, you could talk yourself into Japan or Korea, which have sold off a lot, have a lot of oil exposure, but also have positive AI trends, positive memory trends. The U.S., the same. You have a Fed that's dual mandated, that has a generally strong economy already, and that also has kind of the AI impulse. If you have higher energy prices, structurally, that is a massive impact on Europe, and you don't have the good news on the AI side as well. So I think Europe is the area that we're most concerned about from a risk-reward perspective. But to your point, I mean, it's tough. I mean, there's not a whole lot of good news out there right now.
And the argument as to why they won't hike rates is hardly encouraging either. If you're turning around and saying the likelihood of second-order effects are low because the economy is not as great as it once was, that's not a great argument to buy risk either.
Either way, you start to wonder at what point does that affect the broader market trade, and it includes even AI. And you talked about this, John, but the idea of how much money some of these companies are raising. Can they raise that much money if private credit funds aren't raising money right now? And frankly, if they're facing redemptions, and if you see banks tightening up their standards, it creates a higher bar. At what point does that bleed into some of the investments?
April 24, I think it's Alphabet. The week after, you're going to hear from Microsoft. CapEx budget's in focus for me. If the economy's not doing as well, if financial conditions are tight, what's the outlook for CapEx from those big players?
Well, I mean, honestly, the economy is CapEx, right? I mean, most of the GDP growth came from CapEx last year. You know, to Lisa's point, I do think they are relatively price independent here. I mean, they view this as existential. They need to do their spending. But the CapEx impulse into U.S. economic growth was massive. So even if that just starts to flatten out at a very high level, that means your growth rates are slowing, right? And that is kind of a risk going forward. And look, we've seen, you know, Blue Owl tried to raise money for that data center for CoreWeave. It was only $4 billion, which actually isn't that big a number in the context of data centers, and didn't get that done. So yeah, there's a lot of kind of, you know, wobbly pieces out there right now, but you know, we are still an economy with relatively low rates and an unemployment rate of 4.4% and a massive CapEx, you know, kind of spending tailwind, and tax refunds are coming in not great, but pretty strong as well. So there are some positives. It's easy to kind of focus on all the negatives.
Well, now being spent on energy bills, and that's probably the problem too. On credit, on private credit, we'll have this conversation in a bit more depth in just a moment. If redemptions are up, is it fair to say that loans being underwritten are down? Isn't that fair to say if you're seeing one, you're going to see the other? And the read-through to the broader economy, powered by private markets in a much greater way over the last several years, it's not great, is it?
I think the debate there with private credit is this something that looks like 2007, 2008, or is this something that looks like a couple years ago with commercial real estate, where everybody was very worried about commercial real estate values collapsing, the impact on banks. You had a big ETF that everybody wanted to be short. You had alternative asset managers that must be exposed to this. And it ended up being a much smaller problem than we imagined. So I think for private credit, that's a little bit of the debate right now. Is this a sort of problem that we can size and compartmentalize, and it's not big enough to be a global financial crisis? Or is it something where there's a lot of leverage in the system and it becomes kind of a cascade effect?
It depends how you come at it. I'm not looking at it from a systemic risk perspective. We can do that. I can entertain that conversation. But at the moment, I'm coming at it more from what does it mean for the economy? What's the economic risk? I'm thinking more about tighter financial conditions, the kind of things you can't see right now in public markets.
The idea of how much of this money went to the more peripheral businesses that were more highly levered. If you take a look, how much is this truly just tied to the software story too? Because about a third of all of these loans, an estimated 1/3, were tied to software companies with increasingly speculative kinds of deal documents, et cetera. So how much is this one particular sleeve, and how much is this going to disseminate between tighter credit conditions at the banks that already are exposed to some of these credit firms?
So much of this stuff is connected right now. Final question. Favorite trade? I know it's difficult to trade this market, but I know you've got a favorite. You've got to advocate for something. What's your favorite trade right now?
You know, our favorite bounce back trade would be like the chemicals and materials space in the U.S. I think that's the area that's sold off a ton and should get the most relief if you kind of get energy prices down. There's probably a few stocks in the consumer space as well, but if we had to own something, it'd probably be that chemical space in the U.S.
There we go. Stuart, thank you, sir. Stuart Kaiser at Citi. You got a favorite trade?
Fed.
I agree.
I mean, at a certain point, you know, you wake up, everything changes, go back to bed.
I'll take that life flight on United Airlines. You seen that, Coach? The 3 seats that drop. Seen that?
Well, I can tell you, I'm not going to LaGuardia anytime soon.
No, I'm not either.
You're not alone.
I'm not either. Let's give you an update on stories elsewhere this morning with your Bloomberg brief. Yahara has more. Hey, Yahara.
Hi, John. Apple is testing a standalone app for its Siri voice assistant and a new Ask Siri feature as part of a broader AI overhaul. Sources telling us here at Bloomberg, the new Siri is designed to tap into personal data and interact with users in a conversational format through text and voice. The upgrade will likely be unveiled in June at Apple's developer conference. And speaking of those lay-flat seats, United Airlines is cutting 5% of its capacity on routes that are not profitable and don't cover higher fuel prices. CEO Scott Kirby speaking to Lisa yesterday about the impact of the war in Iran.
There will be less demand. There'll be fewer people traveling as prices go up. That's part of our cut capacity 5%. Like, you know, when airfares have to go up because of oil prices, there are going to be some people that choose not to fly, and it'd be naive not to realize that. If oil prices stayed where they are today, that's $11 billion of expense for us. And that would require prices to be up 20% to break even.
Kirby adding the airline would have to increase prices by 20% to break even. And ECB President Christine Lagarde signaling the bank is ready to act if surging energy costs create broader bouts of inflation. At the moment, however, policymakers are paused, assessing the global impact caused by the Iran war.
And we will not act before we have sufficient information on the size and persistence of the shock and its propagation. But we will not be paralyzed by hesitation, because our commitment to delivering 2% inflation over the medium term is unconditional.
Lagarde also saying we are prepared, if appropriate, to make changes to our policy at any meeting. That's your Bloomberg brief. John.
Yahara, thank you. Appreciate it. Up next on the program, the Morning Calls Plus. Crispin Love of Piper Sandler as stress continues to build in private credit markets. That conversation up next, live from New York City this morning. Good morning.
Politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Access is an issue. When you've got an access issue, prices are high. You're seeing price start to impact demand in Asia because they're feeling the brunt of it immediately. That's the risk over time, is that that availability issue spreads beyond just Asia, moves across the globe. The longer we go, and this I think is the key issue.
That was Dan Pickering of Pickering Energy Partners weighing in on the energy issues right now. Live from New York City this morning. Good morning to you all. Equity futures taking their cues off this right now. The move in crude. We're down by 5% on Brent to 99. WTI down to about 88 and negative 4.4% on the session. Off the back of that, you're seeing lower yields, higher equity prices. On the S&P 500 this morning, we are higher, but off session highs, up by 0.75%. On the Nasdaq, up by 0.9. And here's the move in bond yields, just slightly lower after a really volatile 24 hours in the bond market, particularly at the front end of the curve. Two's down about a basis point to 387.91. Going into more supply later on today.
Yeah, we've got $70 billion of 5-year notes being sold at 1 p.m. Eastern today, and we've got $44 billion of 7-year notes tomorrow. How does anybody game out what benchmark yields should be, given the panoply of potential outcomes here, a Fed that has an unclear reaction function, and a conflict with unclear outcomes that could potentially transform the world energy market?
Is it tradable? It's always tradable. It's just difficult to trade right now going into the weekend.
It feels like a very tenuous time to take a lot of risk, and it explains why we're seeing such big swings. How much is this on the heels of lighter liquidity, a lighter real conviction that you're seeing in the market?
It's got this Friday deadline, this weekend deadline hanging over this market for the next several days or so, and all these other stories coming out about what the requests are, what the asks are in diplomacy and talks, and if Iran even acknowledges these talks are happening, you're going to have days of this now for the next several days.
It's one thing to have economic data volatility. When you have tweet or truth volatility, it becomes very difficult for people to get ahead of that.
That's the price action and all the volatility. Let's get you some morning calls. First up, Morgan Stanley downgrading Shell to equal weight, reflecting limited upside in the current pricing environment. Your second call from Goldman, lowering its price target on KB Home, noting order slowdowns driven by the Middle East conflict and rising rates. And finally, Wolfe Research upgrading General Motors to outperform, citing a lower tariff burden and improved EV losses. That stock is up by 2% in the pre-market. Let's turn to credit. Concerns continuing to build. Ares and Apollo, the latest to limit withdrawals from private credit funds, blocking more than $1 billion worth of redemptions. Crispin Love of Piper Sandler writing, we believe adhering to the cap appropriately balances the interests of new, existing and redeeming shareholders. Crispin joins us now for more. Krista, good morning. Good to see you.
Thank you, Jonathan.
Thank you very much for being here. Let's just talk about these credit issues and the redemptions specifically. Right. What's behind the redemptions? Who are the people doing the redeeming right now?
Yeah, so the redemptions right now, it's coming from the wealth channel. So it's family offices and it's high net worth individuals who are looking out. And I think a lot of them didn't necessarily know exactly the product they were buying into, where you have this semi-liquid name of the product, and it can be a little bit of a misnomer where it's liquid when you want to get money out and it becomes illiquid when many are running for the exits.
There's another foresight I'd love to get your thoughts on. If it was me and I was redeeming and I knew I'd only get 50% of whatever I was asking for, I'd just ask for double. Right. How much of that is happening right now?
It's definitely happening, and that happened a lot in B-REIT a few years ago with Blackstone's real estate fund. So you're definitely seeing that, and where people are asking for more. And one thing on the 5% caps that Apollo, Ares, BlackRock's product has put up, I think that can actually help some of the forward redemptions, where if you're a current investor in that fund and they're letting, and the funds are returning more than that 5% limit, if you're in the fund right now, you're thinking, oh, geez, I need to get out now, where I think they're actually doing a prudent thing and using those caps.
Yeah, having the caps really has gotten a lot of attention in the media's eye. What has gotten less attention is how difficult it is to raise money for some of these private credit funds in this environment. How much has that curtailed the raising of new funds?
Right, absolutely, and it's a great question. And I think one thing that we're seeing in the headlines is the redemptions numbers. The requested redemptions were over 11%, But what the headlines aren't talking about are the inflows that came in. So using Apollo, they had gross inflows of about $725 million in this quarter. And what they're going to be paying out is right around $730 million. So net flows in the product are actually relatively stable. Who knows what that's going to be in the next couple of months, but it's not as if you're just seeing redemptions and you're not seeing any new capital coming in.
On a broader level, though, I wonder, private credit's been the golden child of the private asset management industry for a number of years now. It outperformed for a couple of years, and then it had more tepid performance numbers. And I just wonder if it really has the same kind of sheen going forward, or if the bloom's off the rose. And frankly, they're not going to have the same kind of power raising money from these family offices as they've had in the past couple of years.
Yeah, no, and I think that's a great point, where private credit is not as attractive right now as it was a couple of years ago, where the environment's changed, where just first base rates have come down, credit quality was extremely strong, and our view is right now is you're going to see credit issues that come up. There are going to be one-offs, there are going to be two-offs, but when you look at the broader portfolio, we don't see systemic issues with many of these companies with loan-to-values at 30 to 40% and on the EBITDA in the hundreds of millions of dollars. So what we don't think that a lot of people are talking about is private equity, then private credit, where in order for the credit funds to lose money, private equity needs to be completely wiped out.
Getting some headlines on Iran. Just going to jump in with this. You're seeing a bit of a turnaround in the equity market. It was higher by close to 1% on the S&P 500, now positive by just 0.7%. We understand the push, the 15-point peace plan coming from the US side. The Iranian response, they've suggested there is no negotiation right now. This from state media just moments ago. Iran does not accept the ceasefire. The US talks are what they call illogical.
And a lot of the points that the U.S. put out there were the points that were being discussed before the bombing began, before March. And you just wonder, is this really that surprising? The fact that essentially you're saying that the U.S. is trying really hard to secure the ceasefire, and Iran keeps saying, we don't want it. This is an existential battle, and we need to establish deterrence.
This particular news report citing an informed source on the U.S. ceasefire talks. Of course, this is so hard to track, because you don't know who anybody is actually talking about. And when Iran comes out and says, this isn't happening, we keep going back to this. I know it sounds like a broken record, but who is Iran? Who is the official? Who are the people we're talking about here? And is that official the person who the U.S. is speaking to right now?
To take that a step further, if you want to go into conspiracy theory land, on one hand, you've got the U.S. and other nations that want to keep oil prices low, and you have Iran that wants to push oil prices as high as possible. So you're going to get the jawboning on both sides trying to achieve those aims, and the market's trading on it.
Crispin, at least you're getting a break. You don't have to talk about these things anymore. Crispin Love there of Piper Sandler. Crispin, thanks for being here.
Thank you,
Appreciate
Jonathan.
it. Otherwise, private markets, as you said repeatedly, this would be the top headline every single morning we're doing this program if it wasn't for this shock in the Middle East.
It would be a question around how much systemic risk is there, not just when it comes to private credit, but more broadly in the fact that we haven't seen a credit cycle. And in certain pockets, there was lending that wasn't as prudent as it has been done in the past, and that there is a shakeup that would be really foisted upon the market should there be some sort of downturn.
The signal this market is taking is that the U.S. is looking for a ceasefire. That's the signal. Those headlines out of Iran also speak to that, and that's where the optimism is coming. And the difference between where we are now compared to where we were first thing Monday morning, which was the prospect of escalation risk, the conversation of a ceasefire is a very different place to be, whether you think these talks have got legs or not.
Which is the reason why the market's a lot more comfortable. Whether it will stay that way, we shall see.
And still positive by 0.8%. Up next, we'll catch up with Senator Dave McCormick from New York City. You're watching Bloomberg TV.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television. Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersachi in Davos, Switzerland, and this is Bloomberg.
Breaking news on this Saturday morning.
There's really only one story, and that is Iran.
Balance of Power has all the angles covered.
Trust Bloomberg for on-the-ground coverage.
An entire region pulled into this conflict.
Talking to you from the bomb shelters.
Up-to-the-minute reporting.
Iran remains a viable threat.
And the analysis you need.
There was no imminent threat.
There's never a good time, but there are better times.
Netanyahu is my opponent. However, on this issue, we stand together.
Nobody covers geopolitics like Bloomberg.
Stocks just off session highs. We'll get to the why in just a moment. Here's the price. We're positive by 0.7% on the S&P. On the Nasdaq, up by 0.9. We were higher by more than 1% on the Nasdaq and about 1% higher on the S&P 500. In the bond market, yields were lower across the curve. 2s, 10s, 30s. 2s right now, almost unchanged, down almost a basis point on 2s to 3.88. And in the commodity market, crude was down by more than 6% at one point. Brent now down 3.9, $100.40. Call it 50. Let's talk about the why. So there's a massive diplomatic push coming from the US side, and hopefully it generates some results. We all want that. You all want to see a ceasefire. You don't want to see any more death, that's for sure, across the Middle East. This is coming from the Iranian side. This according to the semi-official news agency. Iran says the truce and the talks are not viable in the current conditions. That's the pushback coming from the Iranian side.
Yeah, saying that the U.S. talks are illogical, according to the semi-official state media. And it raises this issue of, can you get confidence in the signal coming from the White House that they are efforting some sort of diplomatic solution? Or is the reality something that is a protracted battle where both sides are gearing up for a longer situation, and ultimately the market is going with the more optimistic view, at least for the moment?
It's clinging to the signal for now that this is an administration looking for talks, but you have to keep your eye on the horizon, and that's what makes this market so difficult to trade right now. Most people acknowledge that. We've said this repeatedly throughout this morning. We're confronting substantial two-way risk. This can break one way or the other, and it's the other way it can break that I think we have to spend some more time on. Look at the calendar and look where we'll be by the time we get to this weekend. There's a potential for a real troop buildup in the Middle East in the next several days. That puts us in a very, very different position, facing a very, very different scenario. And choosing what to weight, one versus the other right now, is a huge judgment call you've got operating in this market.
Which is the reason why people are pointing to that troop buildup. Initially 5,000 troops sent to the region, then an additional 2,000 from this special unit that is known to be called up quickly and go in. It raises for Iran a question of whether the U.S. is delaying in order to make a bigger incursion on land, with boots on the ground. This is the reason why this is such a difficult conflict.
The S&P giving up some gains, still just about positive by 0.5% with the opening bell just around the corner. Let's get you some morning movers, your single names with Yahara. Hey, Yahara.
Hi, John. After a sharp sell-off in software stocks yesterday on reports Amazon is developing new AI tools, I want to show you this name, Braze, surging 20%. This is a software company, one of the top performers on the NASDAQ in the pre-market. And bucking those disruption fears due to its earnings, with the company pointing to strong demand, including strong enterprise bookings, up 50% year on year. And turning to the Mag 7, we are still seeing resilience despite those headlines we just got that you just broke on Iran not accepting this ceasefire, as investors continue to lean into this idea that President Trump is trying to de-escalate, trying to have a ceasefire. So you are seeing Tesla, NVIDIA, Amazon all still up in the pre-market. And we end on AMD and Intel also showing some resilience. Intel up 3.6% on reports from Nikkei that both companies are warning customers about another round of price hikes for their CPUs. It's the latest sign that the chip shortage is moving beyond just memory and into processors, and that's adding pressure on PC, server, and smartphone makers as they compete with data centers trying to get those memory and CPU chips. John?
Yahara, thank you. Thanks for the update. Let's turn back to our top story. The Iranian semi-official media just moments ago saying Iran does not accept a ceasefire proposal from the United States. The U.S. proposing a 15-point plan to formally end the war between the two nations. Anne-Marie is joining us now from Washington, D.C. and joins us with a special guest. Hey, Anne-Marie.
Thank you so much, Jonathan. Yeah, the Iranians are saying that these talks are illogical, and a man that sits really at the center, the intersection of all of this, his experience now and prior experience, whether it's geopolitics, financial markets, or actually a decorated combat veteran. I am joined now by Senator David McCormick from Pennsylvania. Senator, thank you so much for joining me, and good morning to you.
Good morning.
So I'm not sure if you just saw the news, but Iran is saying that these ceasefire talks are non-existent, and they're calling what the U.S. is calling for as illogical. What is your understanding right now what the White House is putting forward? You sit on the Senate Foreign Relations Committee. Is the president buying time? Is this diplomacy or is this a distraction?
Well, I wouldn't put much stock into what the Iranian spokesman say. Think about it this way. If you're the person that's trying to negotiate some sort of end game and you've got a bunch of radicals as part of the constellation of forces in Iran, you're certainly not going to present yourself as the voice of reason. So a lot of what's happening, I think, in the public domain shouldn't give us too much insight into what's happening behind the scenes. I think stepping back, bottom line, if you would have said on the first day of combat operations, where will we be 20, 21 days, 22 days into this, I think from a military perspective, we've made enormous progress. We still have work to do, but we've eliminated ballistic missiles, drones, manufacturing capability, the Navy. And those are the goals that President Trump set out, along with making sure Iran can never get a nuclear weapon. So question one for America, I think, is where are we relative to those goals? I think we've made a lot of progress, but we got to finish that job. And then second, we've got to make sure we secure the Straits of Hormuz. And I think there's multiple ways to try to lessen the blow on oil markets. One, the administration is doing a lot of things to make sure there's adequate supply. But inevitably, we're going to have to be able to show the markets and show the world that we can put ships through the straits. And that's going to require some combination of our allies working together with our military to eliminate that threat. Once those two things happen, I think we have a much more stable, secure situation. And I think we're on a path to being able to look back and saying we've achieved the objectives there. But obviously, there's more work to do.
Well, could that happen through this 15-point plan the administration has given the Iranians via Pakistani officials?
Yeah, I think it could. I mean, the most important goal of the United States, and it was the goal from day one, this was a regime that was underwriting terrorist organizations around the world. It had more American blood on its hands than any other country. It was building up an enormous ballistic missile capability. If you think Iran was formidable today, imagine 3 years from now. It had called America the Great Satan that it wanted to destroy, and it was committed to a nuclear weapon. That was an unsustainable position. We had to eliminate that threat. If that threat is eliminated and the Iranian regime, whatever form it takes, is committed to not rebuilding nuclear weapons and not restarting its ballistic missile, then that's the basis for a negotiation. The Straits of Hormuz. This is. I laugh when I hear people saying maybe they didn't think of that. I mean, this has been the strategic question for decades. When I deployed to the Gulf in 1990, this was a primary consideration. Oil prices were over $100 in today's dollars. And in the financial crisis, when I was the Undersecretary for the Treasury, oil prices hit $200 in today's prices. So creating stability in the Straits and making sure it's secure is a critical geopolitical objective, and we're going to have to. We can't leave this situation until we're sure the Straits are going to be secure. And certainly, Iran as a military threat is going to be dramatically diminished, which was the goal.
I want to pick up on your past. Your old division, the 82nd Airborne, is being deployed, 2,000 troops. Is it your understanding that those service members, along with the 2 Marine expeditionary units, will be used to secure the Strait?
I think the president's doing exactly what he should do, which is he's creating maximum optionality. Those forces in the region, relatively small numbers, 5,000 or 6,000 in total, once the 82nd gets there, they just give him lots of optionality. There's all sorts of potential ways that you might use the combination of air power, naval power, and ground troops to secure the straits. So I think the president's smart to create options. And he's made the objectives clear, which is we got to get rid of this military capacity to kill Americans, threaten our allies, and we've got to have the straits secure and open to global commerce. Those 2 things are critical. I also want to make a point that if you look at this situation compared to those past situations, 2008 that I mentioned or 1990, what's different is the commitment to energy dominance that we have here in America. And I give President Trump a lot of credit for that. We're a net exporter. We are well on the way to building enormous capacity based on the steps the president's taken. So we are more isolated from the shock associated with what's going on in the Middle East than we've ever been in the past. And others, China and Europe and others, are not as isolated because they haven't had that kind of capability and leadership that we have in the United States.
Of course, your former job, our audience knows you very well. You ran Bridgewater Associates, this massive hedge fund. I just would also love to get your take in terms of what's going on with financial markets. Energy prices have been whipsawing. We're seeing trading ranges you would normally see in a year, even 2 years, that are happening within moments, especially most recently regarding what's happening in the oil futures moment. Do you understand exactly what is going on in terms of the financial markets? Do you think they're paying too close attention to potentially what Trump says and not exactly what he's doing?
Well, listen, I wouldn't be one to want to stand here and try to predict markets, but I do think if you look through this moment, so look weeks, months ahead, and don't get caught up in the day-to-day whipsawing, I think you can see a path to a circumstance where energy markets more broadly and American interests more specifically are in a much better situation than they were before the president took action in Venezuela and in Iran. So imagine a world where Iran no longer has the capacity to threaten the straits. The straits are open, and so we have that constant supply that goes through there with security. 30% of the oil reserves in the world are in Venezuela and Iran, and those certainly Venezuela, but hopefully Iran will be much more amenable, pro-Western when the dust settles. I'm not trying to be too Pollyannish here, but if you think through the path of what we might see in 3 months, 6 months, I think it's a much more stable world. I think it's a much more stable Middle East. I think the Straits of Hormuz are more secure than they were before this started. And I think global oil markets and global energy markets are much more stable. And again, I want to come back to this. This happens within the context of America Energy and Pennsylvania Energy. We're the 2nd largest energy producer in America. We're the 4th largest natural gas reserves in the world. We're unlocking that potential. So I would imagine, again, when the dust settles, that Europe will be a much bigger buyer and recipient of American energy because they've now seen some of the uncertainty that goes with having Russia as a supplier or the Middle East as a supplier. So I think there is
Senator, just specifically on the oil futures market, there was a massive trade just minutes before the president's truth came out. And we've had guests on this program, some of your former colleagues in your old world, saying that is highly suspicious at minimum. Didn't want to go far to say it's manipulation, but are you concerned that there has been manipulation when it comes to some of the posts or statements we're seeing from the White House and massive trades taken just before those moments?
Well, in general, without going specific to that, in general, I'm concerned about the fact that that information can be leaked in a way out of the government or to public officials in a way that people benefit from, whether it's public officials or otherwise. I just co-sponsored a piece of legislation to eliminate the ability of members of Congress to trade equities. Not because I think there's massive fraud going on or something like that, but because even the perception of people benefiting from insider information that resides within the government, I think is extremely problematic. So I can't comment on the specifics of those trades, but what I will comment on is I think there's a clear set of rules and laws that everybody needs to adhere to if you're in public life. And then second, we also need to worry about the perceptions associated with that and take the extra mile to make sure that the public can be confident that that public officials are acting solely in the interest of the public.
We hear a lot, and I've been hearing a lot, how the physical market is so different right now than the paper market when it comes to energy. You mentioned what is going on in terms of how America really is a net exporter now, so we are a little bit more insulated from this. But still, I'm sure you've heard from constituents, prices are going up. Gasoline is a hair away from $4 a gallon. How is Congress set to address this?
Yeah, I'm glad you mentioned that. It's I should have mentioned that. That's a huge issue that's happening on the ground in Pennsylvania. The gallon of gas is about 60 cents more than it was before this started. And if you're a working family, the median income in Pennsylvania is about $52,000 a year. If you're a working family, this puts real pressure on you. And so, you know, we've made enormous progress since the president took office on bringing down the rate of inflation to about 2.5. It was on average 5 during the Biden administration, 22% total, and wages up. So wages are greater than inflation, but people are still feeling pressures from housing costs, from healthcare costs, and from energy prices. And so there's a number of things we're trying to do. The president just sat down with a number of the governors from the PJM states in the Northeast to try to bring down electricity prices. These deals that are being done with the hyperscalers for the big data centers, we're a big recipient of that investment. They're now being done with a covenant that essentially ensures that they bring energy that exceeds what their demand's going to be, so it doesn't raise energy prices for folks. So there's a number of things underway, permitting reform to bring down the price of energy. But in the near term, I take your point, and it's a very real one. People are feeling this pressure, and that's, I think, one of the reasons we hope to get this thing wrapped up in the coming weeks so we can have that stability and get these price increases behind us and go back to normal.
And some of our viewers, of course, might be, and I just want to end on this, might be going to the airport today, and I'm sure you've seen the lines, some of them up to 5 hours long. What is going on with funding DHS? You know, there's lots of reporting that there is this GOP bill, potentially, where we could fund DHS, but it wouldn't go to ICE enforcement. Would you be a yes on that?
Well, you know, listen, and I hope you have me be back to my program, but you can test this sometime down the road if this ever happens. But whether I'm a Republican or a Democrat, in the majority or the minority, I will never vote to defund the government or not fund the government. This is it's a real disgrace, and this is the second time it happened. And what happens is the Democrats are trying to use this as political leverage to get reforms in ICE, and the people that are suffering are the members of TSA or the Coast Guard, the Secret Service, CISA, which is the Homeland Security Cyber Office. The bottom line here is this is creating additional risk for Americans because the threat level's up based on what's going on in the Middle East. It's a huge burden on those TSA agents. We've got a call-in rate in Philadelphia of about 25%. So 25% of people aren't coming to work. They have to go earn money elsewhere. And it's a huge burden. I flew on Monday. It was a disaster. I had flights canceled. I sat on the runway. It was a 6-hour trip that took
So sounds like you're
hours.
a yes.
I am a yes.
Sounds like you're a yes?
We've got to fund the government. Absolutely. We've got to fund Homeland Security. The reforms that the Democrats are talking about, many of them were already in the bill. Body cams, money for de-escalation training. The president already put forward a set of reforms. This is political theater. This is not good policy, and we got to get it behind us. I think the American people are rightly incredibly frustrated, as am I. I'm a yes.
Senator Dave McCormick, thank you for your time. And of course, this conversation focused on Iran. Thank you for your service in the 90s. Jonathan, of course, that was a senator from Pennsylvania. He's a yes when it comes to funding DHS. And the question was not for ICE enforcement. When it comes to Iran, he said the job's not done. Interesting take.
Anne-Marie, appreciate the update. Fantastic exchange. Senator McCormick, uniquely positioned to talk about these issues. Experience with policy, experience in financial markets, experience in the military as well. On Monday morning's price action, I really liked how he framed this. This is important. Who knew what and when? It's not proven that anything nefarious happened, But the activity in the lead up to that social media post is raising lots of questions. And the perception, just the perception of people benefiting, is a problem in and of itself.
That's the reason why he's backing things to prevent certain types of trading in Congress more broadly. But it goes to the bigger question, how confident can people be investing in a market that feels rigged on some level? And that, I think, is something that people will increasingly discuss, even if nobody can prove a thing. And even if it isn't necessarily anything nefarious, the perception is there, and that's a problem.
His line on Iran is really important as well, and we've talked about this in various ways throughout the last few days. When you get denial and pushback from the Iranian side, even if you were negotiating, would you want to talk about it publicly? Would you like to tell your other friends in Iran that you're having those conversations with the US right now about securing some kind of peace deal?
Just this adds to the question around market dynamics right now as well, because the U.S. would like to see oil prices come in, and they would like a sense of stability, and Iran wants oil prices to go up and have the perception that this is an existential battle, that they will act like cornered cats and keep fighting and keep doing moves, however desperate, to make sure that this is a disruption that exerts the maximum pain on the international economy.
It's a battle to secure leverage right now and getting visibility on these talks. Increasingly difficult. Let's get you an update on stories worldwide this morning with your Bloomberg brief. Yahara has more. Hey, Yahara.
Hi, John. Iranian officials rejecting the U.S.'s 15-point peace plan a day after receiving the offer. State media saying Iran does not believe it is logical to enter talks with parties that violate agreements, acknowledging the U.S. has stepped up efforts to secure a ceasefire with indirect talks. Meanwhile, Barclays shares are rising 3% in London. The bank is scaling back its asset-backed lending to smaller borrowers. The move follows losses Barclays suffered from the collapse of financial solutions and Tricolor Holdings. Barclays is shifting its focus to loans for larger corporates, already pulling back from several deals with higher perceived risks. And SpaceX could file for its highly anticipated IPO as early as this week. The information reporting Elon Musk's company may try to raise a record of more than $75 billion. That would make it the largest in history, topping Saudi Aramco's more than $29 billion listing back in 2019. That's your Bloomberg brief, John.
What a time. What a time to deliver. And Yahara, thank you. What a time to deliver. One of the biggest IPOs ever.
I mean, this to me shows how financial conditions are not that tight, right? When we've all been talking about tightening financial conditions, but that IPO, which might be the biggest or one of the biggest ever in history, still potentially slated for this week.
I think it's fair to say that's a particularly unique company that might get some particularly unique attention.
There are a lot of unique companies, though, and this is the reason why people keep saying you could still increase maybe your forecast for U.S. equities.
Yeah, Barclays. What a call from Barclays to lift your price target on this stock market. Amazing. At this moment. Up next on the program, we'll set you up for the day ahead from New York City this morning. Good morning. You're watching Bloomberg TV.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal, with athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1-1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The most likely path is the uncertainty in the Middle East may put them on hold for a while, but I think eventually this will be resolved. It'll be in the rearview mirror, and I think at that point, Kevin Warsh, when he does arrive, will be inclined to lower rates at least down to the neutral level of around 3%.
Could be an interesting summer for the Federal Reserve. That was Richard Clowder of PIMCO, formerly, of course, the Fed Vice Chair. Not so long ago. If you're just joining us, welcome to the program. Equity futures right now in the S&P 500 positive by 0.8%. On the S&P, on the NASDAQ, up by 1%. On the Russell, also higher by 1 percentage point, with the opening bell just around the corner. Bond yields set up as follows: 2s, 10s, and 30s. Yields are just a little bit lower by a basis point on 2s, with crude down on the session. Going into some important auctions, Bramo, over the next few days.
$70 billion of 5-year notes coming later today. And then, of course, on tomorrow, you get $44 billion of 7-year notes. Do you get the same kind of indigestion that we got yesterday with the 2-year auction? And if you do, what does that say about people's appetite to absorb interest rate risk at a time of such volatility?
It is a very interesting market. I think we can say that right now, right? It's a very confusing time. Difficult to really put money to work, but a very interesting market.
I think that is completely believed across Wall Street.
From New York City this morning, good morning. This was Bloomberg Surveillance.
Day 8 at the Miami Open. Jannik Sinner dispatched Alex Mickelson in 2 tight sets to punch his ticket into the quarterfinals. The Italian remains on course to complete the elusive Sunshine Double after his recent victory at Indian Wells. And don't forget, you can watch all the action live daily and head on over to tennischannel.com to download the app.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are. where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
The problem we've got as an industry is when the government's overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of your net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
30 minutes till the start of the cash trade with futures higher. I'm Matt Miller.
I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, Iran officially rejects President Trump's 15-point peace plan, calling U.S. talks illogical.
The war's impact on companies and supply chains continues to play out. United and Dow warn of price hikes.
Plus, ARM shakes up the AI chip race, unveiling a major strategic shift from designer to producer, kind of.
Very exciting. And a reason for stocks to rally today, or at least some stocks to rally beyond the optimism over deals. So I'm looking at those share prices pre-market. ARM up 9.7%. They're planning to sell its own chips. They hope to reach $15 billion in annual sales within 5 years. And then there's Intel and AMD have reportedly told clients to prepare for price hikes of its memory processors. I'm not sure why that's new news. We knew that prices were going up, but maybe it's the fact we finally have companies saying, yeah, it's going to go up even more.
Right. Well, and a lot of companies are hiking prices, so we'll talk about that in this program. EchoStar climbing on a report that SpaceX will file for its IPO as early as this week. EchoStar is a major supplier of spectrum, wireless spectrum for SpaceX, and that's why it matters to this company. Shares up 5% in the pre-market.
It's good to see the IPO market alive and well despite the volatility. Let's get to the source of it. Our top story, Iran launched fresh attacks across the Middle East overnight as the U.S. steps up efforts to broker a deal. President Trump spoke yesterday.
They have no Navy left. They have no Air Force left. They have no anti-aircraft equipment left, no radar left, no leaders left. The leaders are all gone. Nobody knows who to talk to. But we're actually talking to the right people, and they want to make a deal so badly. You have no idea how badly they want to make a deal.
Iran state media says the regime is rejecting U.S. ceasefire talks and calls the Trump administration's peace proposal illogical. Joining us now is Wayne Sanders, Bloomberg Intelligence senior defense weapons analyst and a retired Army colonel. Wayne, just how different is the reality on the ground of Iran continuing and amping up strikes versus an administration that repeatedly says that talks are happening and that Iran wants to make a deal?
Yeah, I think this is somewhat bifurcated because you're seeing the military side of the house is going to continue what they're doing, right? IRGC-led attacks are going to continue until they're told otherwise, just as they did in the 12-day war against Israel. From the U.S. side, it's actually very difficult. When you look at this as from a regime-to-regime perspective, if you will, one of the big problems that you have is who are you actually communicating with? Who are you actually trying to negotiate these deals with? Because you have unconfirmed about where Khamenei is now and after his injury, and you're seeing everything done through spokespeople, through news agencies, state-sponsored news agencies that don't always depict what it is. So you might see something that's on the intelligence side, something that's political, that's actually going on behind the scenes, but very difficult to pinpoint when you don't have the center of gravity, supreme allied, the leader that's actually coming up and having these talks with people.
Colonel, if we did declare victory, as President Trump seems to keep doing, and just leave the current regime in place with, some hardline leader like the head of parliament there, is that an acceptable outcome, do you think, to Israel, to the Saudis, the other GCC countries? Is that an acceptable outcome for us as well?
I think that from Israel, no. I think they would want to continue to see a full-blown regime change. I think some of the other, especially Saudi Arabia, is looking to press for continued strikes to take Iran further down. I think on the U.S. side, I think the only way that this actually works is if missiles, munitions, and money, munitions, and monitoring are probably the three big things that are non-negotiables, right? You need to stop funding of the proxies to Hezbollah and the Houthis and others. There's got to be some type of the nuclear proliferation has to be completely stopped. That's one of Trump's biggest ones, and then obviously the monitoring of how that's actually going to take place, and then missile stockpiles, probably looking at somewhere between a 5 to 10 year ban on any type of missile production in the region. I think those are some of the non-negotiables. Some of the others, in terms of arms control and others, could potentially be there. But I don't think you can declare a win without having those, because those were some of the original objectives that President Trump set out for.
Colonel, that we already had in place. I mean, monitoring of their nuclear stockpiles or their enriched uranium stockpiles was something we've been doing for 20 years now. What would be better about that kind of monitoring this time?
Well, I think the access, if you look at the IAEA and how it was actually being used, right? They actually, Iran started to restrict the access in terms of where they could go, what they could see in order to be able to provide that. So I think that you might be looking at some type of additional partnership with the United States. There would probably be some type of ambassador that would go along with this. So they're the independent body, but then the ambassador would be that representative to say that these are the things that we're trying to get done.
All right, retired Army Colonel Wayne Sanders there, now with Bloomberg Intelligence in Washington, D.C. Really appreciate your intel. Let's discuss the market moves with Bloomberg macro strategist Michael Ball. And Michael, it seems like we're just up or down depending on whichever Trump tweet has recently come out, or I guess attacks on any kind of energy infrastructure. How do you trade this?
Yeah, I mean, just looking at the SPX, which is kind of the gauge of all things at a risk, we're just in this free, wider range, and intraday moves are much larger, right? With the VIX where it is now, we're implying a 1.7% move a day. And the kind of day traders, the zero DTE guys, are coming in and they're hammering it, and they're the ones really moving the tape. Whereas longer-term positioning has kind of come off. People are waiting. People aren't trying to, get involved with all the uncertainty. And until we really get anything credible, and I don't think that's actually going to come from the U.S. administration. I think it is something more we'll see from Iran and maybe mediated by someone like China. We're not really going to have any reason to jump into this. And volatility will stay actually elevated. And although realized vol, funny enough, is not where implied vol is, you still have a story where you're just cautious.
Hard to say, though, that like the beacon of credibility is going to be coming from Iran, though, to be fair. Yeah. I do wonder, though, of what we've already experienced in markets that maybe a rebound like today isn't fully pricing in. We had flash PMIs yesterday. Output price years rose to the highest in September 2022. They put in their commentary that higher costs were passed on to customers to generate the largest rise in selling prices in over 3.5 years. Is some of the damage already being done, even if we are on our way to a talk and a peace plan?
Yeah, I mean, I've talked to a couple traders, and the pain trade right now is sort of a squeeze higher on some positive headlines. Everyone gets back involved, takes on risk, appetite grows. Then all of a sudden, the real effects of this start to hit the economy with growth weaker, earnings revisions coming lower. And to your point, that stagflationary worry materializing into the real data. PMI is obviously a leader there. But, this has tightened financial conditions while still having an inflationary effect from the energy cost increases. So this is the worst of both worlds.
All right, Michael Ball, thank you so much for joining us. That's Bloomberg macro strategist. Let's stay with the world of defense. The Wall Street Journal reporting that Palantir and Anduril are part of a group developing software to run President Trump's planned Golden Dome anti-missile shield. Palantir's chief technology officer joined Bloomberg Tech yesterday to discuss AI's role in defense.
Obviously, current operations are ongoing, but I think people will reflect back and say this is the first large-scale combat operation that was really driven, enhanced, made substantially more productive with technology, with AI.
Bloomberg Tech's Caroline Hyde conducted that interview and joins us from Washington. Caroline had the so-called Golden Dome. It was something that had been discussed even before the war in Iran, but Palantir share prices up nearly 13% since the war broke out. How have the conversations, you've been talking to many tech folks in Washington, D.C., how is the corporate American world reacting to war in Iran, and how are they changing their behavior?
Well, defense tech had already become the theme du jour throughout 2025, 2026, and it's just been amplified ever more so. And there you had, really, the CTO of Palantir saying AI is at the heart of this conflict, like never before. He should know his Maven program system is something that is being used, the smart system, for basically understanding all the software inputs that they're coming in, all of the data, and they then amalgamate that to ensure that really this is becoming a far more efficient targeting system. Now, with that is then Palantir also, as we hear from the Wall Street Journal reporting, Palantir and Anduril maybe becoming command control center for the future of software when it comes to protecting the United States and its territories. This Golden Dome theory, $185 billion project that was already announced, as you say, could be being started to be tested, the software, as soon as this summer. Now, this would really be bringing together other tech companies as well. Scale AI, for example. Swoop is another company that's involved, we understand, according to that reporting. But all of this just shows the billions of dollars that can go to these sorts of companies and long-term commitments coming from the Pentagon more broadly, but also that AI technology is at the heart of future conflict, at the heart of future defense. And that's exactly what we're hearing at Hill and Valley yesterday.
You know, I can't get over this AMD story, or sorry, this ARM story, because for my whole life I've thought of it as a chip designer, and I've always thought it's interesting that they design chips for companies that take those designs and then make them at TSMC. Like, what do the companies actually do? Now, ARM is going to be doing their own chip design. Are they going to be a competitor?
An AGI CPU. Everyone wants in on CPUs. NVIDIA's just come in to take and eat up some of the market share of Intel and AMD as well. It's a fierce fight going on in the world of chips for AI data centers because it's so lucrative. Now, what's amazing about ARM is how phenomenally profitable they are in terms of their overall margin. Their margins sit at about 98%. If they start actually making the chips, look, that margin does get impacted, but the overall profit dollars goes up and to the right. And the CFO was talking about if you take a $1,000 chip, they would therefore be able to get far more, maybe $500 worth of that if they're actually making the chip, not just lending either the licensing to be able to use basically the underlying way in which the chip talks to other software, but also not just licensing, but the royalties. They had, of course, been designing chips for others, but now this just goes on another leap. This is really Rene Haas wanting to beef up revenue. Yes, he's already driven revenues up some 20% since he's taken over. More broadly, we're seeing 20% increase in revenue. But look, you're talking about going from $5 billion up to $25 billion in the next 5 years. $10 billion of that is still the area that they currently dominate in the licensing and royalties, the design of chips. But they think that they could be getting $15 billion worth more than they currently make on their revenue and the importance of their current business by making AGI CPUs. It's all about the fight for the data center, not just the smartphone, which is where, of course, ARM dominated first.
All right, Caroline, thanks very much. Bloomberg, Caroline Hyde in Washington. Watch more of her at 11 o'clock when Bloomberg Tech kicks off. Now, let's get a check on the markets here. S&P futures up 0.9%. NASDAQ futures up 1% and change after we saw big drops yesterday. Not big drops, but less than 1% drops. U.S. 10-year yield coming back down about 4 basis points. So now you're looking at 4.32, and Brent crude under just barely $100 a barrel at 99.19. Let's get a look at some of the single stock stories we're following today. KB Home issued an outlook that was disappointing to Wall Street, with the firm saying the Middle East war is adding another layer of uncertainty for home buyers in the U.S.
In deal news, Merck will be buying Terns Pharmaceutical for $53 a share in a cash for equity value of $6.7 billion. And we're going to discuss this plus much more. Bloomberg Deals today, every Wednesday, in case you haven't heard, at 12 p.m. New York time.
I'm very much looking forward to it. Also, Disney's new CEO having a rough first week. Epic Games laid off employees after a $1.5 billion investment from Disney. Separately, OpenAI shut down its video app Sora and ended its partnership with Disney. That was fast.
That was very, I feel like we were just talking about this partnership last month, was it? It was very quickly. We're saying this is going to reshape all of content production. And
I guess you'll no longer be able to use Moana with Sora.
There goes my weekend plans. Coming up, ready for liftoff, SpaceX's U.S. IPO may be coming as soon as next week, and boldly going where no IPO has gone before. Great pun from producers. This is Bloomberg Open Interest.
7 million pounds of thrust now propelling Falcon 9, Crew 12. Vehicle is pitching downrange and all.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Up in our zone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Get to high interest now. Look what's making headlines around the world. Barclays is scaling back asset-based lending to smaller borrowers after losses tied to MFS and Tricolor. The bank is shifting toward loans and securitizations for larger corporates. The collapse of the UK property lender and US subprime auto company are drawing attention to lending outside of regulatory oversight. And it's been a wild ride for the new CEO of the Walt Disney Company, Josh D'Amaro. In less than a week, $2 billion bets have unraveled. Epic Games, the parent of Fortnite, is cutting 1,000 jobs after new versions of the video game failed to connect with fans. And OpenAI is shutting down its Sora video tool and ending its partnership with Disney. Now, SpaceX could file for an IPO as soon as this week. That, according to The Information, the company may look to raise over $75 billion with a possible June listing. It could seek a $1.75 trillion valuation. That would make it one of the most anticipated debuts. No, that's got to be the most anticipated debut this year.
I don't know, there's OpenAI reportedly, right?
But that's not a $1.75 trillion valuation, right?
Yeah, fair enough. Okay, let's
half that.
Let's bring in Bloomberg senior reporter Bailey Lipschultz. Bailey, which is the more anticipated one? SpaceX. Okay.
Changes the game. I think there's so much excitement around what it could be and what it brings to the table. It's an older company, just given the kind of pent-up demand for anything Elon and the potential speculation that they ultimately merge the company with Tesla. I think that takes the cake, personally. But I do think OpenAI, if and when that happens, will be closely watched.
So, $75 billion, is that the most ever raised in an IPO?
Yeah. I mean, $50 billion would basically be the largest ever. The largest was Aramco, which, depending who you talk to, had a little bit of hair. But so essentially, pretty much signed, sealed, delivered SpaceX.
How do they do this between, I mean, every retail investor is going to want shares. I imagine institutions will be committing, what, at least half of that money.
Billions,
How is it going to split up?
Yeah, so the information put out that they expect potentially more than 20% of the IPO to go to retail. We've seen Elon Musk talk ad nauseum about wanting retail to have access to the company, retail to have access to his entire ecosystem. So I think
he loves people.
That round
Elon
makes sense. He's a man of the people, some would say, maybe. But no, I think it will be heavily allocated to retail. Again, if you're talking about $50 to $75 billion, you need a lot of pockets to tap.
What about the timing of this? Because I know there have been some reporting that maybe would happen in the fall. It looks maybe more like June if they're going to be putting out the paperwork this week if they're filing. It's a really volatile market. But if a behemoth like SpaceX, does it matter if there's market volatility? Is it just like so prized that they can kind of take their pick of when they bring themselves to market?
Yeah, it's kind of the expectation is that if and when they decide to go, obviously you have the regulatory hurdles, you have to go back and forth with the SEC on the documents. The game plan has for a while been to potentially go late June. The big question, though, is they do have a closely watched launch of Starship next month in April that could not make or break, but have a tremendous impact on the actual valuation. You know, fundamentals do matter even for Elon's companies. So I think that
is not true.
Be a bigger, well, to an extent.
What do fundamentals? what do fundamentals? How do they play a role in Tesla's valuation?
Because Tesla is not a car company, Matt.
Even if it's not a car company. I mean, how is a robot company worth $1.5 trillion? By the way, does he eventually fold all of his companies into each other? Because he needs to hit an $8.5 trillion valuation on Tesla in order to unlock his $1 trillion pay package. And Tesla right now is only worth $1.5 trillion. If SpaceX is worth $2 trillion, that gets him to $3.5. Like, doesn't he have to put them together?
That's kind of been a talking point for a while, depending who you ask. Dan Ives obviously has been quite bullish on the potential merger of the two. Elon kind of seemingly on X vindicated the take that they would be merged into one super company. How does that ultimately play out in the timing is a big question mark. And obviously SpaceX, if the game plan is to take it public later this year, how does that set up a potential merger? How difficult is that? And then also you have, midterm elections later this year, and 2028 is not too far away.
He's always wanted a one-stop shop, right?
Yeah, he has.
He has, even before the $1 trillion thing.
Right, well, everything has X in the name, except for Tesla, but he's been setting himself up for this. I think he sees, everything come together as a way to kind of, dominate the current world and the environment we're in. Also, if we're going to go to Mars, maybe you need the firepower that combining everything would bring.
Yeah, all right. It's always a cool story to talk about Tesla and whatever Elon's doing, especially if it's the world's largest IPO,
ever.
Yeah.
By a lot.
Bailey Lipschultz, thank you very much for that. He covers IPOs and SPACs as well as meme stocks for us. Citi Wealth's Kristen Bitterly shares what clients are saying about volatility and how that is framing her earnings outlook with us next. Stay with us for that. This is Bloomberg Open Interest.
is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Haslida Amin in Davos, Switzerland, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The war is not stopping earnings growth, according to Morgan Stanley. Chief equity strategist Mike Wilson says S&P 500 earnings will rise 20% over the next year, and the probability remains low for this oil spike to end the business cycle. Let's bring in Citi Wealth Head of Global Wealth at Work. It's Kristen Bitterly. Kristen, thank you so much for joining.
Good to see you.
How are you seeing how elevated oil prices are going to impact the fundamentals for corporate America?
So I think it's what everyone's been saying, and I hate to be someone repetitive here, but it's all about the duration of this conflict and really trying to see if we can negotiate some type of resolution. Because the longer that oil prices are elevated, obviously that's a concern to companies. It's inflationary in nature. And I think the main conversation around the Strait of Hormuz is the fact that it's not just oil, it's nat gas, it's agriculture in terms of fertilizer. So once we start seeing that type of inflationary pressure, the question right now, though, is we don't know. We don't know the duration of this conflict. We don't know how long the strait is going to be closed.
But it's already
which is
biting.
Why
Plastics, Dow Chemical today said they're going to double the increase that they were already planning.
Chemicals, plastics, fertilizers, it's in everything.
And you heard from United CEO as well in terms of saying something similar, that if we see these elevated levels, that's going to translate into a 20% increase in fares. So I think right now the market's looking through it because the fundamentals are strong from an earnings perspective. We're looking at Q4 earnings. We're going to kick off Q1 earnings. And coming into this conflict, yes, there was a very strong backdrop in terms of anticipating anywhere from about 13 to 15% earnings growth. You're still seeing a lot of that come through in the numbers, but as we start to see exactly what you mentioned, these types of inflationary pressures, both for corporates as well as individuals, how does that change the picture?
I guess, though, if you have a long-term outlook, and I've been hearing this from, traders who aren't doing anything for clients right now are telling me, I'm still buying stocks for my kids because, in 20 years, this dip is going to be will have looked very advantageous.
Well, I think the other thing too is for our clients, none of our clients are panicking right now. You look at our portfolios, they are very well diversified, and we came into this year saying, even with put the conflict aside, some of the challenges that you could see about CapEx spending, is it too much? Some of the questions on the table about, are we going to see a broadening out? Are we going to see cracks within private credit? And so you look within our portfolios, and we have a lot of balance across equities and fixed income. We've pulled in duration a lot within our fixed income portfolios because of some of the potential inflationary pressures. So that's the key.
All right, Kristen, we're going to go to a break. We're going to come back with the opening bells, and you're going to stay with us. More from Kristen Bitterly after the break.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Bloomberg has learned that there are discussions around a potential all-cash offer for Warner's studio and streaming businesses.
For the past few years, we hadn't really seen any deals above $30 billion. And now we're seeing, Warner Brothers, $80 billion, the big railroad deal. And what we're hearing from sources is that next year we're going to see more of the same. It's just going to be the mega deal.
I would expect next year will be an even better year for M&A and IPOs.
That's just kind of what we do at Serena Ventures, is just kind of learn how we can fill in different gaps in different areas that are being missed. And by the way, these gaps tend to be really, really massive.
I know you've been very bullish on the return of M&A. Do you expect more deals, if they are of this size, to have the same sort of structure and contours?
I think we're going to see the return of large transactions, and I think they're going to avail themselves of both private credit options and public options.
There's a lot of merger talk. There's a lot of firepower.
Investors wanted to know at what price would this deal be, and now they answered that question at $70 a share.
So congratulations to Bloomberg's deals team for getting it first.
I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
We are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. Futures higher this morning right now. 0.8% gain on S&P futures to 6,660, and NASDAQ futures gaining a little bit more. We have Michael Dell down at the New York Stock Exchange to ring the bell for his Invest America. Michael and Susan ringing the bell for Invest America for the Trump accounts that they are helping to bring to realization. So that's exciting with a little patriotic baby there. And then a bunch of Irish people down at the NASDAQ market site ringing the bell for CP Unlimited, which is like a nonprofit corporate partnerships. And they're wearing green, I guess, because stocks are rising. That's why.
I thought you were going to say St. Patty's Day. I'm like, they're a week too late.
It's never too late, Stanny. It's never too late to celebrate your potential Irish heritage.
A good reason to go to the pub after work or in the middle of the day, I suppose. Matt, here at the Open, I'm looking at a few of the tech stocks. ARM is surging. I know you've been interested in this as of late. It's up 12.33% thereabouts. It's planning to sell its own chips and hopes of reaching $15 billion in annual sales within 5 years, so not just designing them. Intel and AMD, reportedly, they have told clients prepare for price hikes of its memory processors. So they're up 5.6%, 3.8%. So add memory processors to plastics, fertilizers, what have you, of higher prices to expect from here on out.
Yeah, well, we can make those connections. We're going to make a weird one here. EchoStar is climbing. This on a report that SpaceX is filing for its IPO as early as this week. What do the two have in common, you wonder? Well, it's all about wireless spectrum, apparently, that EchoStar has and SpaceX uses, and as a result, we're saying that's why the shares are up 5.5%.
Wait, so were you saying that the connection is weird between
EchoStar and SpaceX?
No, but before AMD and Intel and...
No, I mean, the ARM story.
Oh, okay, I see what you're saying.
And those two, but
yes.
No, the connection is weird between,
I
think, chip prices, memory prices, and the Straits of Hormuz.
No, what I'm saying is just that there are other parts of the economy where prices are rising,
yes.
That's one of them. I'm always
There are a lot of parts of the economy where prices are rising.
Yes,
in fact, let's bring back in Citi Wealth, head of global wealth at work, Kristen Bitterly. Kristen, we were talking about this a little bit, but it's got to affect the way you expect not only earnings, but economic growth and the Fed to react. Like, what does the Fed do if we're still rising at more than 3% after so much inflation already has hurt the consumer.
Yeah, well, this has always been the conundrum for the Fed in terms of looking at inflation and looking at their dual mandate in terms of full employment and price stability. We came into this year, though, I think the market did get a little ahead of itself in anticipating rate cuts in the second half of the year. We were always in the camp that we would expect maybe 1 or 2. Obviously, those have been entirely priced out given what we're seeing from additional inflationary pressures. But that's why within our fixed income portfolios, we were managing that duration as well to avoid some of that volatility. So it's all about translating some of these risks into how are you preparing a portfolio that can be resilient throughout the next several weeks, but ideally years.
So what exactly have you changed in the fixed income portion of the portfolio?
So one of the recent changes that we made, actually just last week with some of the volatility in rates and some of the spikes that we were seeing, is we rebalance out of some of our EM fixed income into some of the short duration US treasuries. That just gives you some really attractive yield in this environment, but also you're mitigating some of the volatility as well. We're still holding on to our gold position. Obviously, that's been one of the big questions on everyone's mind. We see this conflict. We also see some inflationary shocks. Why did gold sell off? Well, obviously, it kind of got a little bit ahead of itself. But when you look at the fundamental story there and what could happen, aside from the spike in the dollar, aside from the spike in real rates, it still will, over time, if we see continued inflationary pressure, serve as that hedge within your portfolio.
What's the biggest change you've made in portfolios due to the war in Iran? I mean, around the world, across assets, what's the big headline?
I would say the 2 changes that I just mentioned, staying with our position in gold, looking at really kind of shoring up our fixed income exposure and going up in quality. Our portfolios were very high in quality coming into this. So when you look at, like, there were a lot of parts of the market that were chasing small caps, some of the more levered parts of the market, we've always had a bias towards the US and to large caps within our portfolios.
But did you like EM before this? And
so we liked international, but we weren't overweight to the degree that we are US. And so I think what really kind of creates some caution, something to watch within this market, is you have to look at European equities and you have to look at Asia as well, because there's a very delineated experience that could happen between the impact of this conflict if it is extended in the US market versus the rest of the world.
One of the things that Matt and I were looking at in the first weeks of this conflict was just the fact that software did so well, which was a bit of a head scratcher. Maybe it was just short covering after the painful run it had.
Oversold, yeah.
Very oversold, but then we get a day like yesterday where Amazon Web Services announces a new AI tool and software sells off again. What is priced into the sector right now? Have we seen the worst of it?
So I think the market originally reacted in a very hyperbolic way to software. Like, this became like AR Darwinian existential. Like, are we going to need any software at all? And so when you started looking through that sector, there were clearly some very high quality companies. There was also, when you look at top line revenues, like, not impacted at all. So you started looking at the earnings, and this is more trying to extrapolate out in time what is going to be essentially an existential question versus ones that maybe we just needed to see some multiple contraction.
I wonder, we had a quote in the Bloomberg stock story from a guy at ABN AMRO, Christophe Boucher, I'm going to read it French. He says, one can actually feel the algos reacting to the peace, negotiation, and ceasefire keywords. And I wonder if they also react to something like that on software. Like, I was messaging with Joe Saluzzi at Themis Trading. He's like my market structure go-to guy. But do the algos, are they like the tail wagging the dog in this market right now?
I mean, if you look at intraday volatility versus overall volatility, you're going to see that. If you look at the 0-day to maturity options market, you're going to see a lot of activity around that as well. And so the intraday movements versus then what's happening kind of at the open and close and over time, which is why I think you have to take that big step back and say, ask fundamental questions and also look at the fundamentals of these sectors. Like, is software not going to be valid in a future state? Like, absolutely not. Are there going to be cracks in terms of maybe some highly levered companies, some models that are very easy to disrupt? Absolutely. So both of those things can be true, but that doesn't mean the entire sector has to sell off.
I just wonder if it's impossible to think about these markets in like months or quarters, and if you have to have a very long-term outlook. Because I think about this dynamic that you're discussing, the fact that pod shops are essentially just giant momentum bets, the way that they function, that retail has gotten big into the markets too and love to hop on momentum bets too, which can turn very quickly. So is it really hard to look at a market and be like, the fundamental pricing will play out in a month? Do you need to be extremely extremely patient?
I think patience is absolutely, playing the long game, and patience is very important. But if we actually look at, so we're talking about some of the movements under the surface. When you actually look at the market levels, we could say the same thing with the economic data. When you look at the index level, when you look at the economic data, it's actually very orderly and very calm. The idea that we're trading within 5% of all-time highs, which is a very normal environment, doesn't actually kind of highlight all of the risks that we're seeing. Same thing with the economic data. When you look at the economic data overall, it's actually quite healthy, quite robust. And so if you're someone who's positioned then in a diversified way, and you're not exposing yourself to parts of the market that are overly levered or could suffer for some liquidity crunches, then you're well positioned for this market.
All right, Kristen, thank you so much for joining us. It was a pleasure to have you on.
Thank you.
Citi Wealth's Kristen Bitterly. About 9 minutes into your trading day, let's get a check on your equity market. The gains are holding and accelerating. We are up more than 1%, despite some of the denials coming from Iran that these talks are able to happen and that anything like a ceasefire would make sense. What's leading us there? It's because the big giants of this equity market are having very good days. Nvidia, Amazon, Apple, Tesla, Alphabet, Microsoft, a who's who of the Mag 7, gaining at least 1%, Nvidia adding 12 points to the S&P. Meta is up 2 this morning, up 1.6%. The information just out with a story about reducing staff further. On the downside, this one's interesting too. A lot of the chip makers are down. So in the biggest losers, Micron, Lam, SanDisk, Western Digital, Seagate, Google, or Alphabet rather, put out on their social medias announcing something called TurboQuant. It's essentially a new algorithm which supposedly reduces the need for memory by 6 times. So maybe that's why they're feeling some of the pressure, not as necessary in that world if you do have things looking more efficient. Looking at some of the sectors, consumer discretionary at the top of the pile, that's up 2%. Communication services, thanks to Meta, some of those, again, big hyperscalers, which I was showing you. And again, when energy is falling, you get kind of the inverse that we have had on days where the headlines drive things. So energy down 0.7%. Overall index, Matt, again, is at more than 1%, but still a very jumpy headline roulette kind of day.
Yeah, absolutely, and it has been like that since this war started. Coming up, big news in the chip world. ARM will be, I guess, it already designs chips for others. Now it's going to design a chip for itself. And also for Meta, for Facebook, as we get headlines, as Danny said, from the information that they're going to fire hundreds more of their staff. Mandeep Singh from Bloomberg Intelligence joins us to break it all down. This is Open Interest.
The problem we've got as an industry is when the government's overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of the net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Breaking news
news on this Saturday morning.
There's really only one story, and that is Iran.
Balance of Power has all the angles covered.
Trust Bloomberg for on-the-ground coverage.
An entire region pulled into this conflict.
Talking to you from the bomb shelters.
Up-to-the-minute reporting.
Iran remains a viable threat.
And the analysis you need.
There was no imminent threat.
There's never a good time, but there are better times.
Netanyahu is my opponent. However, on this issue, we stand together.
Nobody covers geopolitics like Bloomberg.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Let's get you some top calls with the sell side is saying this morning. First up, General Motors. That gets an upgrade at Wolfe Research. The firm says that investors are underestimating key tailwinds, including lower tariff burdens and improving EV losses. Shares up more than 2%. Next up, Rothschild & Co. Redburn cutting the Oreo maker Mondelez, saying that the snack giant is running into multiple issues, including weaker demand, tougher competition in European chocolate, and slower U.S. biscuit markets tied to SNAP changes. Shares are little changed. Plus, but this company uses a lot of plastic, and as we're going to discuss later in the show, plastic prices are rising. Finally, Raymond James is upgrading ARM after news that the chip designer will build and sell its own chip for the first time. Meta already lined up as one of the first big customers. The new business is expected to generate about $15 billion annually within 5 years. Bloomberg spoke to ARM's CEO yesterday.
Memory is going to be tough to get, period. I think it's going to be a driver of growth for the industry. But to the point we were talking about, more and more of these inference models, more and more compute, means demand for a lot of memory. I think the memory market is going to be a tough market if you listen to SK Hynix or Samsung or Micron the next year to 18 months. I think it's going to be quite supply constrained.
All right, let's discuss the ARM news with Bloomberg Intelligence Global Head of Tech Coverage, Mandeep Singh. He joins us here on set. And this is a fascinating story for me because I've always thought of ARM as a chip designer, and these chip makers don't actually make chips. They just take a design from ARM, and then they have TSMC build it. So, like, what do they do? It's clear that ARM should make this leap in my mind, but I guess it's more complicated.
I mean, ARM gives you the basic instruction set. So think of their biggest customers are Apple and Qualcomm. I mean, basically Apple uses the ARM instruction sets, designs their own chip, TSMC fabs it, and it is a very volume-driven business because one, you get licensing from Apple to use their, chip design set, and then for every unit Apple sells, ARM is getting a royalty. The problem is the royalty is in cents. So when you think about, a server designed on ARM, the royalty is much higher because server designs are more complex, and we are talking about a $3 to $4 trillion data center spend that Jensen has laid out. So from that perspective, it is a very fast-growing, large, addressable market. And if ARM can participate as a volume-driven player over there, then it could be huge, which is what they are expecting. Like, even if they land up Meta and OpenAI as customers, that could be in billions of dollars. They don't need every hyperscaler. I mean, Amazon AWS is an ARM kind of customer that designs on ARM's chips, and they have their own CPU server. So ARM is not supplying the server. ARM is just supplying the instruction set. But what they're saying in the case of Meta, they could supply the whole chip. It's a lower gross margin business, but in the end, they get to participate in that data center build out, which is the $3 to $4 trillion spend everyone is excited about.
Is this different from some of the hyperscalers developing their own chips? Is this a different part of the stack? Who exactly is our competition?
So the perfect example is Amazon. Amazon has its own CPU server. It doesn't use Intel. It doesn't use anyone else. It's designed on ARM. So Graviton. And in this case, Amazon just pays a royalty and a licensing fee. In the case of Meta, what it sounds like is ARM will not only provide the designs, but it will supply the whole chip. What NVIDIA is saying they're doing with their system co-design, because it works better if it's complete ARM and NVIDIA gets to control the performance per watt, which is the real metric that everyone is focused on. Power constraints are real. They're not going away anytime soon. I want the highest performance per unit of power. And that's where, as the industry started to use ARM with Apple, the reason why they made so much inroads is because ARM is the lowest power chip. And so that's what they're hoping they can expand vertically.
By the way, just to confirm, and my ignorance of this industry, ARM won't, though, actually make the chip, right? They'll still outsource that to TSMC or perhaps, we don't know, maybe Intel or someone else.
Most likely it will be TSMC.
Right.
I can't imagine Intel making a chip for ARM, given, that's what they're trying to replace. They're saying, don't use x86 server CPUs, use ARM-based server CPUs. So my guess is it will be TSMC.
It's like the only choice, right?
At least for the leading nodes. And in the case of servers, you do need leading node. May not be 2 nanometer, but still you need leading node capacity.
This has been an educational session. Mandeep, I think we all needed this. Thank you so much for joining. Mandeep Singh from our Bloomberg Intelligence team. Coming up, consumers facing higher costs. Dow doubles its plastic price. United warns that airfares will also likely rise. We're going to discuss that next, right here after the commercial break on Open Interest.
Up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersetchi in Davos, Switzerland, and this is Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome to Bloomberg This Weekend. I'm David Burke.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Let's get a quick check on what's going on. Where else we're going to see inflation, Stuart? We've heard these two inputs today, but obviously with gas at $4 a gallon across the country, in California, more than $6 a gallon, the consumers are really feeling the pinch.
Yeah, they're definitely feeling the pinch. By my estimates, with the move in gasoline prices we've seen so far, consumers should be paying an additional about $12 billion during the month to gasoline retailers. Now, a lot of that money has to come from somewhere. Consumers have been under-saving quite a bit, just about a 4% saving rate. Any sort of lending for consumer revolvers, that's been pulling back quite a bit. So a lot of the additional $12 billion that is going to need to get directed towards gasoline retailers is going to need to come from real spending elsewhere within the consumption bundle. And a lot of that is going to have to come from a lot of discretionary categories, including services like travel, where we will see higher airfares because of jet fuel prices.
How alarming? Because there's been a lot of people coming on the show saying it all depends on how long this lasts, how bad the effects is. We already saw flash PMIs yesterday, the highest rising of prices since September of 2022 for the composite output price series. Are we not already here? Are we not already in a world where the inflation pressure is making itself known to consumers?
It's a super important point, and you're exactly right. Diffusion of core inflation is still very high. So even outside the effect of energy prices, outside of the consequences of the war, about 40% of the core CPI basket has seen price increases on a monthly basis that's above 4% annualized. So that's a very rapid and diffuse degree of core inflation going on. Even throughout the beginning of this year, PMI price indices were rising rapidly, indicating both, again, diffuse, pervasive, and rapid price increases throughout the supply chain. And so this is something that was taking root in the economy, just a broadening of inflationary pressures even before the war began.
More and more we're hearing about a difference between the actual prices on the ground and, you know, the numbers that we look at on the Bloomberg terminal all day long. And the difference is a bad one, right? Scott Kirby was telling Lisa yesterday he's looking at $100 barrels, even though that's the price for the highest grade. That's for Brent, right? I mean, here in the U.S., we're more likely to refine like Canadian or Mexican Maya or heavier, more sour crudes. So where else do you see that?
Where else do we see
prices on the ground that are different from the indicators that we see flashing across the terminal all day?
We see it in things like manufactured goods, right? It's really difficult to see any sort of composite for manufactured goods. We see it for raw materials prices. Anything where you need to ship from point A to point B, and there's a lot of friction in moving from point A to point B. For example, we've been talking about base metals, it feels like, for a long time. Locality and origin matters a lot for base metals, and that's going to, again, matter a lot for manufactured goods. Right now in the United States, aluminum deposits and aluminum supplies, inventories are really depleted. Producing any sort of aluminum in North America is really difficult. Trying to account for that friction in getting aluminum to the United States and manufacturing goods that require it is going to be really difficult. So anywhere where you have that manufacturing process and locality of origin matters, you're going to see a pretty big difference between the price index on the screen and what consumers and businesses are feeling, and that's going to end up mattering for economic activity.
And friction, I guess, worse for hard assets even than it is for Citrini's banking. Stuart Paul of Bloomberg Economics, always great to have you on. Coming up in the next hour, Nancy Tangler joins us here on set.
Say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later on over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up to the minute news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
CBS News on the Hour, sponsored by JTV.com.
I'm Deborah Rodriguez. Tehran isn't backing down after receiving a 15-point plan from the Trump administration to end the war. A military spokesman through an interpreter.
Has the level of your internal discord reached a point where you are negotiating with yourselves? There will be neither any sign of your investments in the region, nor will you see previous energy and oil prices until you understand this. Stability in the region is guaranteed by the powerful hand of our armed forces.
CBS's Aaron Navarro.
This could be seen as a pressure tactic during these negotiations that the president has claimed that they are in with Iran, or it could be a sign of potential military actions to come should negotiations there go south before the president's 5-day deadline that he instituted on Monday.
Tehran launched more strikes at Israel and Gulf Arab nations today. A House committee holds a hearing this hour on the shutdown at the Department of Homeland Security. That's hobbling operations at airports across the country. United Airlines CEO Scott Kirby tells CBS News.
I think it's unconscionable that our politicians haven't gotten this done, and that we have security agents that are not being paid, and they're still showing up, and kudos to them for doing that.
Delta is suspending special services for members of Congress. A homecoming in Texas for a U.S. citizen held hostage in Afghanistan for more than a year. Family members cheered as Dennis Coyle walked down the steps of a plane in San Antonio. He was released by Afghanistan's Taliban-run foreign ministry yesterday. The Today Show's Savannah Guthrie's given her first on-camera interview since her 84-year-old mother, Nancy, disappeared almost 2 months ago. She sat down with her friend and colleague, Hoda Kotb.
I wake up every night, in the middle of the night, every night, and in the darkness, I imagine her terror, and it is unthinkable.
Savannah Guthrie is still in Arizona, where her mother lived and where she was kidnapped. She says she will not rest until they're reunited. A home-cooked meal could be just what the doctor ordered for older people at risk of dementia. Here's CBS's Michael George.
A survey in Japan found that people over 65 who cooked food from scratch at least once a week had a 30% lower risk of dementia. The benefit was even greater for people with fewer cooking skills. The study's authors say meal preparation can provide cognitive stimulus, which promotes brain health.
Dow is up 408 in early trading. Nasdaq's ahead 222. This is CBS News. Church of England gets its first female Archbishop of Canterbury today.
I'm Vicky Barker in London. Sarah Mullally, a cancer nurse turned cleric, to be formally enthroned in Canterbury Cathedral. Ahead of the ceremony, she said,
I recognise the significance of being the first female Archbishop, but I am also aware of the women that have supported me in my ministry and also the men as well.
As head of the Church of England, Mullally becomes spiritual leader of the worldwide Anglican Communion, which includes the Episcopalian Church in America.
Lord of the Rings creator Peter Jackson is teaming with Tolkien fan Stephen Colbert and his son for a new movie.
The thing I found myself reading over and over again were the 6 chapters early on in the Fellowship that y'all never developed.
Colbert says he should have plenty of time to make Shadows of the Past.
It turns out I'm going to be free starting this summer.
CBS's Late Show ends in May. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they perform.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
All right, good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. Risk on day today, that's for sure. We'll stay on top of that. It is Scarlett Fu and Paul Sweeney. This is the Bloomberg Intelligence Program. Coming up, we're going to check in with Dan Williams, reporter for Bloomberg News. He is based in Jerusalem. We'll get the latest reporting out of that part of the world. Erica Edelberg will join us, Bloomberg Intelligence Chief Mortgage-Backed Securities. Mortgage rates, they're rising yet again. What does that mean for the housing market? What does that mean for the mortgage-backed securities market? Alexis Maxwell, Bloomberg Intelligence Senior Fertilizer Analyst. I didn't know we had one of those. On the fertilizer crunch, It's not good when energy costs go up. That impacts a lot of things, including fertilizer. Why are we talking to them? Because Bloomberg Intelligence has a conference going on out in, I think, Missouri, Kansas City, Missouri.
Kansas City, Missouri.
Farm, Food, and Fuel Conference. So we're going to talk to some of the folks out there because this is issue number one for a lot of these farmers out there is the cost of running their farm. So we'll have a lot of reporting coming out of the Midwest today. That'll be a good thing. Right now, let's go to John Tucker and kick it off with a Bloomberg.
All right, right now, 9 of the 11 major industry groups in the S&P 500. They're actually higher, but pairing the earlier gains. We're being led by consumer discretionary. This comes despite denials from Iran. Traders have latched onto some optimism. There are peace overtures to end the war. Right now, the S&P 500, 48 points higher. That's up 0.6%. 65.97 on the index. The Dow Jones Industrial Average up 274 points. That's a rise of 0.6%. The Nasdaq 100, 206 points higher. That is up just about 0.9%. Brent crude still above $100 a barrel, 137. It is down just about 3.9% in the early going. And among the most active, Terns Pharmaceuticals up right now 5%. We'll have more of this coming up, but they're being bought by Merck for $53 a share. And I just want to bring you this breaking news. A look at shares of Cox Communications. Looks like the trading's been suspended, but they have won a Supreme Court ruling that curbs music copyright suits. You'll recall they were being sued by Sony Music Entertainment, Cox Communications. But again, the late word is that they have won the Supreme Court ruling that was supposed to curb music copyright suits. And again, the shares of Cox Communications right now, it looks like they are on hold. Meta shares up 0.8%. The information reports Meta Platform is going to lay off a few hundred workers across the company today. The cuts will impact Meta's hardware platforms and wearable division, Reality Labs, as well as the social media teams, recruiting operations, and a smaller figure in sales. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Oh, by the way, I didn't do the update on the brackets. Paul is in the lead. Did you know that, Scarlett? 91.
Who did you pick again to win the final?
Who do you think?
I just wanted to give him a chance to say it again.
That's the St. John's and your Dookies.
Yeah, that'll be a
tomorrow.
great game Friday night.
That's going to be awesome.
That's going to be good. Friday night will be good. So we'll be there
watching.
watching.
Have you ever won this?
Not the Bloomberg one. I have another one.
Another bracket, a more lucrative bracket.
15 large.
Wow.
Yeah, you pay back $2,500 to the organizer as a little vig, and then I donated the rest to my local parish, and the priest was
he donated it.
He didn't want it.
Say.
He was very reluctant to take this white envelope filled with 20s and 50s. Like, where did you get this?
Who's this guy?
So, but it all worked out. So yeah, I've won once. But anyway, it's a lot of fun out there. So
That's
we'll see
a lot of altar wine.
Yeah, exactly. You know what? It's not with all the nil money and all that kind of stuff. It's just the blue bloods now that are just winning. You know, it's tough to pick Cinderella stories and all that kind of stuff. So we'll figure it out. John Tucker, thank you so much. We appreciate that. Scarlet Fu, Paul Sweeney. We are live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube and streaming live on Bloomberg.com. John Tucker has been reporting. Got stocks moving higher here today, but they are off the highs of the day, but still S&P up 0.6%. Let's take a look at stocks on the move. We can do that today with Bloomberg's Avalon Purnell. Avalon, what are you looking at?
Yeah, we can start off with ARM Holdings. That's ticker ARM, gaining about 17% most intraday since last April. That's after the semiconductor devices firm said it will begin to sell its own chips for the first time in a bid for AI sales. Meta will be the first major customer, and the chips will be produced by Taiwan Semiconductor Manufacturing. What I found to be really interesting is that ARM expects annual sales from the new chip business to be about $15 billion within 5 years.
Interesting. That's a big business. And the numbers they keep throwing around are just crazy.
I know. Well, anything that has to do with chips and AI, right? Yeah. All right. A number that we've been throwing around for Chewy is $60 because that's what I just paid to that company for the latest tranche of dog food.
Yes, Chewy, ticker CHWY, rising about 16% right now for its biggest intraday leap since 2024. That's after the pet products retailer gave a net sales outlook for the fiscal year 2027 that beat expectations. Citi is writing in a note that given significant weakness in Chewy shares, this print should support the stock, that fundamentals are still healthy at Chewy, even if some people were concerned previously.
That's a big market. Huge. Yeah, because it's dog food, the toys, the whole 9 yards.
More families in America have pets than they have children.
Really?
Yes.
Now,
well,
do your
it's more
dogs,
affordable.
does your
One dog
freak out when he sees the Chewy package arrive, or she?
No, she sniffs it and then she kind of goes back to her kennel.
What are you getting? What are you getting? Like food or play toys?
No, just food. I get all my stuff generally from TJ Maxx or Marshalls because it's a better price point. But food I have to get from Chewy because it's a pain to bring all of that back into the house.
Absolutely. I feel you. SAT. SATS.
Yes, EchoStar gaining about 8.8% right now. That's after the information reported that SpaceX plans to file for an IPO as soon as this week. As we all kind of know, SpaceX's IPO is highly anticipated and is expected to raise somewhere between $50 and $75 billion. And if you remember, last September, SpaceX agreed to acquire EchoStar's spectrum for about $17 billion, to help the company pay down some debt and also resolve a regulatory probe. So definitely also worth noting that EchoStar's stock has been on a tear for the last year, up more than 350% since last year this time.
All right, very good. We appreciate that. I remember back in the early 90s, these satellite companies were flying us Wall Street folks down to French Guiana to watch these satellites launch. Talk about a boondoggle. Holy cow. Jet down, boondoggle, watch it rocket go up, then come on back. I mean,
yeah, why not?
Why not? That's how we did it back in the day. All right, Avalon, appreciate that. We got all the latest there. And for more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple CarPlay and Apple Podcast, Spotify, or anywhere you listen. Let's check in on these markets here. Let's check in. We have some green on the screen here, but there's still a lot of political uncertainty about what's happening over in the Middle East. There's some peace plans being floated around.
By the U.S.
By the U.S. I'm not seeing a lot of engagement, at least at this early stage, by Iran, but let's get the latest reporting. Dan Williams, he's a reporter for Bloomberg News based in Jerusalem. Dan, what do we hear? We have the U.S. with a 15-point peace proposal. The Iranian news agency saying we're not really interested. What's the latest?
It's a very fast-moving situation, as you noted. In fact, as I'm speaking to you, I'm hearing the updates come out on the Bloomberg terminal. We're now 2 days after President Trump dropped that bombshell revelation of what he said had been back-channel talks with Iran on an end to this war, potentially imminently, and giving a 5-day reprieve on some of the U.S. bombing in order to allow that to happen. We're also 1 day ahead of what had been speculated over, which is a peace summit or a peace conference, bringing the sides together in Pakistan. However, now we're hearing that the Iranians are having none of it. They haven't even confirmed that those back-channel talks were going on in the first place. They're saying that the positions or the demands put forward by the Americans, which are essentially Iranian capitulation peaceably on points that Israel and the United States went to war to stop through force, that's a non-starter for the Iranians. And in fact, they're coming back with their own demands now, which effectively are for guaranteed immunity for this Iranian regime, a guarantee of no resumption of war, and for compensation for war damages. Very ambitious, given the rhetoric, given the extent of this war, given that the way the U.S. and Israel have described this was a necessary war to prevent major threats to the national security and indeed geostrategic grievances against Iran going back decades. So it seems the sides are digging in. It does not appear that there's any real prospect of a breakthrough, of an accommodation. I imagine, should that situation hold, we'll be going back to full force fighting in the very near future.
Dan, can you give us a sense of who are the main players involved here? On the U.S. side, Steve Witkoff and Jared Kushner, and increasingly the Secretary of State, Marco Rubio, are kind of the lead negotiators. Pakistan has offered to be a mediator, but who on the Iran side is the U.S. negotiating with? I mean, it's not really clear because the power structure has changed so much there.
It certainly isn't clear, and to my knowledge, President Trump has not named the senior Iranian official that he says he's been in touch with or his administration, other than to say it's not the supreme leader, the son of the late supreme leader Khamenei, who hasn't been seen in public since the killing of his father and his sub rosa appointment as his father's successor. As you recall, there's some suggestion he may have been wounded, he may even have been killed. He's been communicating with the nation through written statements read out over national broadcasters. It's not clear who's negotiating. It's not clear if there is anyone capable of representing the state. And for all we know, perhaps this figure alluded to by President Trump is an opposition figure or someone soon to be in the opposition, someone they're trying to peel away from the regime to handle a post-war, more peaceable, more cooperative regime, government administration rule in post-war Iran. It's anyone's guess, but insofar as this being a prospect for a diplomatic resolution that would stop the war now or in the foreseeable future, it really does sound like a non-starter.
All right, Dan, we appreciate that reporting. Dan Williams, he is based in Jerusalem, Bloomberg News, giving us the latest reporting here. There's a lot going back and forth, Scarlett, but again, the markets are getting whipsawed by this, almost by tweet, which we're kind of used to, and there's nothing new there, whether it's tariffs or this situation here. But it's unclear, I think, to a lot of folks, just, who on both sides is really speaking. And President Trump has the 15-point plan, but I'm just not sure, and I think the market's unsure as to how it's being received and by whom it's being received.
Yeah, and you're seeing this play out in real time. The other thing that we don't really know is how Israel would respond to any deal. Not that these are deals that are even being discussed right now, but how and what Israel's goals are and how that compares with what the U.S.'s goals are at this point.
Right, and we asked Dan Williams that earlier this morning, and his understanding, he cited Benjamin Netanyahu, who said, we will do what the U.S., we will follow the U.S.'s
We're
lead.
the junior partner here.
Yes, and that's kind of what is the last statement by the Israelis, so we'll see how that plays out, but they are certainly taking advantage of this situation to inflict as much damage here. The market's positive here this morning. S&P's up 50 points. That's 0.75%. Oil, it's lower by about 4%.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. We're brought to you by IBKR. In 2025, IBKR retail clients averaged a 19.2% return, beating the S&P 500 17.9%. The broker you choose matters. Visit ibkr.com/2025. We have stocks rising right now. They paired some of the earlier gains. S&P 500 up 51 points. We're at 6608 on the index. The Dow Jones Industrial Average up 350 points. That's up about 0.8%. NASDAQ 100 268 points higher. That is a pop of 1.1%. Brent crude is down right now, just about 4%. Still above $100 per barrel for Brent. In the yield space, the 2-year down 2 basis points, 388. 10-year is down 2 basis points right now at 433. The Supreme Court has thrown out a copyright infringement verdict against Cox Communications. So this undercuts the music industry efforts to hold internet providers responsible for piracy by their customers. Voting unanimously, the justices at Cox couldn't be held liable for failing to shut down the accounts of people who repeatedly downloaded and distributed songs without permission. The Meta platform's cutting several hundred jobs. This is part of a restructuring effort. It's impacting several teams at the company, including sales, recruiting, and the Reality Labs hardware divisions. And looking shares of Meta right now, they're 1% higher. And then, of course, Merck making an acquisition. We told you about that earlier this morning. They've agreed to buy Terns Pharmaceuticals of California for $6.7 billion. Merck's going to pay $53 per share in cash. Terns Pharmaceuticals shares up 5.4%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
All right, JT, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. All right, when I acquired and put together the Jersey Shore compound, my mortgage rate was 6%. I felt like such a chump because they had been forever that had been like 3-4%. John's sitting on his 3-point-nothing mortgage. But then the interest rates, mortgage rates went up to like 7.
So then you felt good.
Felt good. Felt like a medium, like a real estate mogul there. Then it came down, and it got close to 6% for, like, as Tom Keene would say, a cup of coffee. And here they are back up. I'm looking at the Mortgage Bankers Association 30-year fixed, 6.43%.
Okay, so you got to wait a little bit longer for that refi.
Got to wait for the refi. There's people that care about this stuff, and one of them is sitting right next to us, Erica Edelberg, Chief Mortgage-Backed Security Strategist for Bloomberg Intelligence. Erica, what's this, bumping around? We did have rates come down through most of 2025, but still north of 6, or right around 6. And now we're bouncing back higher here with some of the uncertainty in the capital markets. What does it mean for your world of housing and mortgage-backed securities and all that stuff?
Hi, nice to talk to you guys as always. It's interesting. I guess I have to be consistent and say I didn't actually think that the decline that we saw recently to mortgage rates to about 6% was going to help the purchase market very much at all, because there's still a lot of people who are pretty much priced out of the market.
Yep.
And it didn't make that big a difference in actual dollars and cents. We have a lot of other frictions there too, most of which is, home prices.
Yep.
So I bet your home has actually gone up in price. But at the same time, I did say, and I was right about this, that a bunch of people who had taken out mortgage rates quite a bit higher than 6% over the last 4 years had their first and best opportunity to refinance in quite a while. And there was a big rush to refinance, and that's retreating as quickly almost as it started, because it really cut the number of people who might be able to refinance by about half relative to what we saw just a couple weeks ago.
Yeah, a couple of weeks ago, we also saw people start to take out those adjustable rate mortgages for a shorter period of time. How did those arms work now versus in the lead up to the 2008 crisis?
They are quite a different instrument. Most of the arms that they're taking out now have a fixed period for 5, 7, or 10 years.
Oh, okay.
So as a result, just if interest rates, reverse right away for some reason at this point, they're not going to see the same kind of rate hit. They also have better caps, and a lot of times the borrowers are a lot better vetted as well. So back in pre-crisis era, Some of these were called pay option arms, where you didn't even have to pay your principal if you wanted. You could roll that principal right into the loan amount. They didn't have the same kind of caps, and more importantly, they reset more frequently. So when rates rose very quickly in 2006, 2007, those people all of a sudden couldn't afford their mortgages at all. And again, today's product's quite different, but it does generally come at a little lower rate than 30 years. So for people who have a shorter term horizon, might offer them an opportunity.
Are they harder to get as a result because they're so different an instrument from what they were before?
They are definitely harder to get. I mean, for conventional ones, for instance, you actually have to be able to qualify even after the cap resets a little bit higher. So your qualification rate, the amount of income you have to have, is quite a bit higher.
Gotcha.
So what's happening in the mortgage-backed security market? I see a lot of red on the screen across fixed income this year to date. How are mortgages trading relative to the rest of the market?
Unfortunately, mortgages have given up the entire gains that they were able to get. They had a great start to the year, at least after the first week of January, because the GSEs, Fannie and Freddie came in and said that they were going to put their thumb on the scale of mortgage rates and buy up to $200 billion this year, which relative to what they used to own is not that much, but it was enough to excite the market and get a lot of follow-through buying, and mortgage spreads tightened a lot. They've given up the entire gains from that period, and they're now negative both on a total and excess return year to date. So stay tuned on that.
Mm-hmm. So what are mortgage-backed security customers? People you talk to, are they clipping coupons this year? Did they come into the year saying my expectations are lower, I'm just going to be clipping coupons here?
I think actually, if anything, they were hoping to continue to ride the good performance we had last year, which was one of the best years since actually, I think 2009, with over 8% returns. And they were hoping to actually ride that a little bit further, especially, with the GSEs adding to the demand base. But on the other hand, we kind of felt that they would just be clipping coupons because we felt like a lot of the tightening had already been played out with volatility having come down as much as it had since Liberation Day in April last year. I think it was probably mixed, but I don't think too many people expected rates to rise like they have. I don't think too many people really had priced in this war.
Yep, I think that makes a lot of sense. We see that across, I think, the capital markets in general, so that makes sense here in the mortgage business. Erica Edelberg, thank you so much. Appreciate getting the update there on the mortgage market, housing market, Bloomberg Intelligence Chief Mortgage-Backed Securities Strategist joining us in studio here. We want to head out to Kansas City, Missouri. Why? Because that's where the Bloomberg Intelligence Farm, Food, and Fuel Conference is taking place. And boy, they couldn't have picked a better time, because with what's happening in the world and global energy markets, that is certainly impacting the farmer who uses a lot of inputs that require energy and fertilizer and all that kind of stuff, and fuel, and what it means for food prices. So let's go to Alexis Maxwell. She's the fertilizer analyst for Bloomberg Intelligence. Alexis, thanks so much for joining us here. What are you hearing out there at your conference in Kansas City, right in the middle of farm country? What are the farmers telling you about the cost of fertilizer?
Yeah, well, thank you for having me. It's a bit of a mixed picture as we talk to farmers here in Kansas today. A lot of farmers in the U.S. have pre-bought their fertilizer, thus escaping some of the pain that we're seeing as urea prices have effectively doubled since the start of Operation Epic Fury. U.S. farmers may be slightly insulated, but farmers elsewhere around the world are shortly going to be seeing shortages and higher priced inputs to make their agriculture goods.
If that's the case, how does that change how they respond to these rising prices? What kind of decisions are they likely to make now that are going to be felt in a year's time or 2 years' time or 5 years' time?
Yeah, so farmers have a sort of 4 bad options when you can't get fertilizer at an affordable price. You can cut back on your fertilizer. That tends to lead to lower crop yields. You could also switch what you're planting. Maybe you switch from some corn acres into soybean acres, which is what we're expecting to happen in the U.S. by about 1.5 million acres. You could also, if you're a farmer in the U.S., switch among your nitrogen products. There's a lot of different flavors of nitrogen in the U.S. market. It's the most sophisticated nitrogen market in the world. Or your, let's say, last worst option is you can just stop planting. because you can't afford the fertilizer.
Where for the average American farmer, where do they get their fertilizer from generally?
Yeah, so it's split among the products. So a farmer is going to demand nitrogen, phosphate, and potash. About 90% of the nitrogen that's consumed in the U.S. is produced here in the U.S., thus leading to us in the U.S. being relatively isolated from some of these global supply shortages. About 70% of our phosphate comes from domestic production in the U.S. And then our neighbors to the north in Canada are our main supplier for potash. About 90% of the potash that we consume in the U.S. comes from Canada.
Yeah, we're not in great shape right now, our relations with Canada at the moment.
Yeah. So I guess that's a good point, Alexis. In terms of our relationship with Canada, whether it's tariffs or just otherwise, how has that impacted some of those fertilizer feedstocks?
Yeah, so the potash that comes in from Canada enters the U.S. duty-free under the USMCA. We're very pleased to have that come into the U.S. But what we've seen pivot here in the United States on a policy perspective is the U.S. has added phosphate and potash to our critical minerals list. And that's supposed to help ease financing and permitting to help move these potential mines for those minerals in the U.S. to completion. But we're talking on a time frame here of, let's say, bringing on a new potash mine or phosphate mine. We're talking at least 4 years and probably over $2 to $4 billion in capex. It's going to take a long time to pivot the ship to increase the domestic production of fertilizers in the U.S.
So, Alexis, put this all together. What are investors misunderstanding or underestimating when it comes to our food supply in a year's time, in 5 years' time, that perhaps they should be taking into consideration?
Yeah, so I'm really thinking about the demand pullback that we're going to see with prices at a near costly record level. We've gone through a series of supply side shocks to push prices up to this really unaffordable peak for farmers. And I'm already thinking about what's going to happen when U.S. farmers in the fourth quarter of this coming year go to apply their fertilizers for the crop year in 27. I'm anticipating that because we still will have some supply side shocks, that this story is going to extend out for at least another 2 years. And if you get a chance to come to our conference again next year, I'll be dealing with the ramifications and talking about potentially lower crop yields at that point as well.
Oh boy. All right, Alexis, thanks so much for joining us there. Alexis Maxwell, Bloomberg Intelligence Senior Fertilizer Analyst on site at the Bloomberg Intelligence Farm, Food, and Fuel Conference out there in Kansas City. I'm not sure if they're like Kansas City, Kansas, Kansas City, Missouri.
Missouri.
I'm sure if you live out there, it's big to say,
you're
hey,
not a Royals fan or
yes. So I mean, but
Chiefs
to us,
fan?
I can't figure that stuff out. I also don't know like
he's New York centric,
the Chicago
Jersey-centric
thing. I don't know the Chicago, like, Red Sox versus, White Sox versus a Cubs fan. I know it's geographic for the city, but I haven't figured that out yet. We need to get somebody from Chicago.
Someone write in and let us know.
Yeah, know how that whole Chicago and Kansas City thing works. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. So at this point, the markets seem to be positioning for conflict resolution, even though there's still a great deal of ambiguity. S&P 500, 51 points higher, actually pairing some of the earlier gains. So that's up 0.8%, 6607 on the index. The Dow Jones Industrial Average is up 333 points. That's a rise of 0.7%. And the NASDAQ 100 is 265 points higher. That's up 1%. Brent crude down just about 4%, still above 155 a barrel. In the yield space, the benchmark, the 10's down 3 basis points. That's at 432. The 2-year is 2 basis points lower. That is at 387. Merck agreeing to buy Terns Pharmaceuticals. The price tag there, $6.7 billion. Terns of California up 5.3%, giving Merck access to promising new leukemia treatment. Merck's got to make this move because it faces the patent expiration of its best-selling cancer drug, Keytruda. And they have shares of ARM Holdings. Right now, ARM is up close to 17%. They made their name licensing technologies to semiconductor makers. This is a rise of almost the most in almost a year. They're going to sell their own chips for the first time. This is forecast to generate about $15 billion a year within 5 years, they say. Meta is going to be the first major customer for this chip. And the Pentagon agreeing with major defense contractors on a series of framework agreements meant to accelerate production of key missile systems, which, of course, have seen heavy use during the initial phases of the war against Iran. So defense contractors, they're getting a pop today. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
All right, thank you so much, John Tucker, with our Bloomberg Business Flash. As John mentioned, stocks are rising, bonds are rising, oil is falling. As we all try to make sense of what's going on with these possible ceasefire talks that the U.S. proposed, and for now, Iran has shot down. Nevertheless, you're seeing a bit of risk on in the markets here. And I want to bring in Nancy Tengler. Nancy is, of course, one of our favorite guests. She is CEO and CIO of Laffer Tengler Investments, and she's here with us in studio today. So good to see you in the cold, because I know you're usually somewhere in the Southwest. Nancy, you write about how you have gone through so many bouts of geopolitics and geopolitical tension and markets climbing a wall of worry. For today, markets don't appear to be climbing that wall of worry, but put into perspective what we have here with us that we're kind of contending with as you look forward.
Yeah, thanks for having me, Scarlett. It's good to be here in the cold, actually. I would say a couple things. I mean, you never want to dismiss the implications, but I think what we know about Wall Street, and maybe all of us, is that we sort of take today's event and extrapolate it out to infinity. And I think there's a lot of positive news in the U.S. economy. I think the energy spike will subside. There was a great story on the terminal that referenced how NVIDIA is doing a productivity deal with SLB. I love that they changed the name, so I don't have to stumble through Schlumberger.
Yeah.
But I think those are the things that we pay attention to. We've been trimming earlier this week. We trimmed energy about 20% in our portfolios.
Even though this is the group that has been the clear winner.
Yeah, because it's the group. Yeah, absolutely. And we added to software, one of the worst performing groups. And we also bought calls on the S&P on Friday. And we're not big options players, but I think our sense was that this was coming to an end, that we never do anything on Friday in our business, at least at Laffer Tengler, but the president likes to make announcements over the weekend, and so hopefully we're right about this. We've had 2 out of 3 days where the market's traded up, but I think you have to step away and say fundamentals are really strong. Earnings growth last quarter was great. That's backward looking. Guidance was pretty darn good. Margins are at all-time highs, and companies are using technology to improve, and it's not just AI, to improve productivity. And productivity, though it may not be good for the job market, is very good for the economy and for earnings.
You mentioned software stocks. They were a victim earlier in the year of maybe a little bit of a different side of the AI trade. Not just is AI great, okay, we get that, but there's going to be some winners and losers. Let's start thinking about that. And initially, some of these software stocks, particularly software as a service stocks, were hit. How do you think about that overall theme?
Yeah, that's a great question, Paul. So since Citrini, the IGV is up like 10 or 13%, depending on the day. And I think what we saw was that we were in a flush out. And so they will be winners and losers. We thought that Adobe was going to be a loser, so we exited a while ago, not because we're prescient about AI eating software, but because we didn't see the company pivoting. That was a great decision. Some of the best stuff we do is stuff our clients never see. But we've also been adding to names like Palantir, CrowdStrike, Microsoft. We added some to ServiceNow, which really took a big gulp because the stock has underperformed. It underperformed dramatically last year and again this year. But I do think the CEO has pivoted. They are building in vertical integration and security into their systems. They will be a go-to once all this settles down, and AI will not displace them.
We love talking to you because you are willing to go into the nitty-gritty of not just sectors, but specific company names. So you like software right now. You have been trimming back on energy. Where does that leave you with memory chip makers? Because they have been huge beneficiaries of the concern about AI and also the buildup of AI because they make those high bandwidth memory chips and therefore aren't spending as much time making regular analog memory chips. And they're going to have a lot of orders for the years to come.
Big backlog.
Have they peaked already, or?
I don't think so. We actually, in our ETF TGLR, our largest holding is Lam Research. So they're kind of a backdoor beneficiary, particularly in the DRAM space, as AI continues to accelerate. And I think this SLB NVIDIA story is huge because when you start seeing applications across sectors and in energy in particular, but also in all other sectors, you start to you begin to understand as an investor that this is a lasting technology. This is not just the internet bubble where we had eyeballs on a website. So I think you can still step into the memory names, Micron in particular. You just want to wait for some pullbacks. It did pull back recently. We are going to begin nibbling at it, I think, because that was one that we missed. But we benefited through our holding in Lam, which we've had to trim multiple times in the last couple of months.
One of the names that you're familiar with, it's one of your big holdings that we haven't actually heard a whole lot from recently, which I would think is a good thing, Tesla.
Yeah.
What's the latest Tesla call? Am I totally kind of ignoring the auto business and trying to focus where Elon wants me to focus, which is the autonomous driving and the AI and all that kind of stuff?
So that's a great one. Actually, Paul, I mean, there's not a lot to love right now, which is usually when we're in buying.
Yeah.
So you had the regulatory concerns with FSD. You did see a spike in sales in Europe, but it's still below previous year levels. I do think you're going to see a merger between Tesla and SpaceX, and this fab that they're building down in Austin, I think is a precursor to that.
Before or after the?
I think after the IPO. Yeah.
How long do we think after the IPO?
I mean, I think it could be the end of this year.
Really?
But as with all things Tesla, you know, the deadlines are fungible, right? So we're going to have an Optimus robot in January of this year. Well, we're not. We're going to have it in January of next year.
Right.
But he is at the forefront of all of the technologies that will change the way we live. And so it's in our thematic portfolio, which is robotics, quantum, space, and nuclear. And then it's one of our largest holdings in our growth portfolio. And I think you have to own that stock.
And you're going to get phone calls from the underwriters for this SpaceX thing.
I would love some. Can I please have some shares of SpaceX?
Exactly. I'm sure
Sign her up right now.
You're going to get plenty of I mean, that's just going to be something to really, it's going to be fun to watch how that all just technically unfolds. I guess it's just like any other deal, just bigger numbers. But I mean,
well, and I think it'll be synergistic because you know, the chip business that he's building. I mean, it will take longer than we think. Maybe it's a decade away. But he thinks about things like in a macro up here level while he's playing chess, while the rest of us are playing checkers. If you haven't read his biography, you ought to read it.
Okay, very good. Nancy, thank you so much for joining us.
Thanks.
Nancy Tengler, CEO and Chief Investment Officer, Laffer Tengler Investments. We never see Nancy in the dead of winter. Just when it gets a little warm out there.
She wanted to tempt fate.
That's when she comes. Yeah, exactly. She's a fair weather friend here to us in New York. She comes when it gets 100 degrees.
Well, she is bringing the warm weather because tomorrow I believe it's going up to 70.
Yeah,
so thank you, Nancy.
Thank you. S&P 500 up 60 points. That's 0.9%. The Nasdaq's up 290 points. That's 1.3%. And guess what? Oil is lower here today. We got WTI crude oil down 4%, $88.50. This is Bloomberg.
This is Bloomberg Intelligence.
All right, Scarlet Food, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. This is the Bloomberg Intelligence program. Our good friends at Bloomberg Intelligence, again, 500 research analysts around the world covering 2,000 companies in 130 industries. One of the things they provide for investors is a lot of these great investor conferences around the world, focusing on different key areas that investors want to get a little bit smarter on. One of them is the Bloomberg Intelligence Farm, Food, and Fuel Conference. If you're going to have that kind of conference, where do you do it? You do it in Kansas City. That's where you don't do it in New York. You don't do it in LA. You do it in Kansas City, and that's what our folks are doing out there. Chris Ciolino's out there. He's a senior U.S. machinery analyst at Bloomberg Intelligence. He follows all the big machinery companies. And Chris, the companies you cover, like the Deeres of the world, the Caterpillars, and so on and so forth, they're oftentimes a good gauge of how maybe the certain sectors of the economy are doing. Like Deere, for example, I think of the U.S. farmer here. You're out there in Kansas. You're talking to a lot of people in the industry. What are you hearing from terms of the financial health of the U.S. farmer and how that might translate into business for some of the companies?
Yeah, so this is going to be a challenging year. I think that's pretty well understood. But one thing that's kind of struck me as surprising, or a little bit more surprising at the conference this year, is the optimism that dealers and just industry participants have as we move into 2027. We hosted a panel yesterday with a number of the largest dealers here in North America, representing the top two players, both in the green and the red equipment. And I think one thing that really was pretty encouraging was that they're seeing signs of stabilization in their business. They're really optimistic as we move forward to next year. Now, part of that is, farmers and people in the industry are generally optimists by nature. But it does seem like some of the stones are starting to fall into place in terms of inventories normalizing. You have a little stability on crop prices now. Hopefully we get some export market clarity, and then, we could kind of be off to the races in 2027.
So when it comes to this recovery that these equipment dealers are optimistic about, where is it centered? Is it in the Americas? Is it in Europe? I'm just trying to get a sense of how global this recovery is projected to be.
So it's a little bifurcated right now. So in terms of 2026, Europe will definitely be the recovery. That's one of the more stable markets. So that's going to be a market that should be up, mid-single digits this year. Now, remember, Europe's a little bit of a different animal in terms of a lot of their farmers are heavily subsidized by the government. If you look down south to Brazil and in South America, that's a deeply cyclical market, very similar to North America. I'd say even more volatile than North America. That down in Brazil, as well as North America, are still going to be quite challenged this year in terms of volumes. At least in North America, for large ag equipment, so large tractors, combines, we're looking at a third straight year of double-digit declines. But we're reasonably confident that this should mark the trough. Volumes are going to be at the lowest level in more than 3 decades. So we see kind of limited downside risk from here. And then as we move into 27, 28, we think, South America and North America are really going to be leading that recovery.
Chris, thanks so much for joining us. Really appreciate it. Chris Ciolino, senior U.S. machinery analyst. He's out there in Kansas City at the Bloomberg Intelligence Farm, Food, and Fuel Conference, getting us the latest on what's happening with the U.S. farmer out there in the breadbasket. Here's a New York City story, but it might have some interest for folks around the country and the world. New York City faces possible strike by 34,000 doormen and building workers. For a lot of people, that's a problem.
Absolutely.
New York, because
right.
you depend upon those people to get all your, your packages and all that kind of stuff.
To let in the plumber or let in the electrician, to make sure that the dog walker has a way into the house.
It's totally a New York City thing, but I mean, it's just, but I don't know. But I just know from my friends that live in dormant buildings, and they really are an integral part of the building, but these people are not happy. First of all, I didn't know they were unionized until like 10 years ago.
Yeah, the union wants to maintain workers' health insurance, so I guess there's a risk that it could go away or it could be downgraded. They also want to maintain wage increases, stronger pension benefits, and of course, better working conditions. The advisory board, meantime, is asking workers to contribute to their healthcare premiums and also form a different classification for future employees. So those who are just coming into the union, the newer generation of doormen perhaps won't get the same kinds of benefits and protection that the older generation of doormen have gotten.
Yep, and you have to have discretion if you're a doorman. You know.
Yes, they could write books. They could write some great books.
Yes, they could. I think some have in the past here. Mayor Zoran Mamdani, seeking to deliver on his campaign promise to freeze rents last month, announced 6 new appointments to the 9-member panel that governs rent-stabilized units. So this goes just to the overall housing issue in New York City and the affordability or lack thereof affordability in New York City, which has always been an issue. I would say it's going back forever, but it's still one today.
And so there were always pockets of the city that were more affordable, but it feels like the entirety of Manhattan and increasingly the other boroughs are just now unaffordable for everyone, but the very wealthiest. And by the way, the last work stoppage by door workers back in 1991.
Okay, it's going back. Okay.
So I don't know how many people remember that. And those folks who were working back in the early 90s, they likely have retired by now.
Yeah, the average door person or porter earns about $62,000 a year. That's according to the RAB.
But you got to consider tips.
That's right.
Year-end tips make a big difference. All of that is cash.
Yep. Very good. All right, so we'll keep on top of that New York story for everyone. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now with the S&P 500 up 55 points or 0.8%.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Wednesday morning. We are risk on right now. If you look across the financial markets, stocks are higher, bonds are also higher, and that is pushing yields lower. This is Bloomberg Intelligence with Paul Sweeney and Scarlett Fu. And of course, we're keeping an eye as we continue to monitor the fallout from the war in Iran. We've got a lot coming up in this next hour of Bloomberg Intelligence. We're actually going to go to Kansas City, where Bloomberg Intelligence is hosting its Farm, Food, and Fuel Conference, and check in with a couple folks there, including our friend of the show, Mike McGlone, our senior commodity strategist. Of course, we got to get his take on what's going on with oil. Those prices are lower at the moment. Michelle Davis, she's our senior deals reporter here at Bloomberg News, has the latest on Merck, which is acquiring Terns Pharmaceuticals in a $6.7 billion deal to restock its pipeline as Keytruda is facing patent expiration in the coming years. Brian Whalen, he is Chief Investment Officer and Generalist Portfolio Manager at TCW's Fixed Income Group, talks to us about the bond market and how to position. And we're also going to check in with Geetha Ranganathan. She is our senior media analyst on the latest headlines here in the media space. Disney's new CEO has had kind of a rough week. We're going to dig into all of that coming up. But first, let's go to Amy Morris for our Bloomberg Business Flash. Hi, Amy.
Hi, Scarlett. A big drop in U.S. crude exports this week. Shipments fell over 1.6 million barrels a day to just over 3 million barrels daily. That's the lowest level since November of 2025. Imports also fell, so it was a slow week for U.S. oil trade. Energy analyst Stephen Shork with the Short Group says there's a disconnect between prices and oil futures contracts and the barrels themselves.
We're focused on these prices that are now, okay, yes, Brent and WTI are plunging right now, but their discounts are growing relative to where the actual war is.
Short Group President Stephen Shork tells Bloomberg Daybreak he expects oil prices to settle to where they were before the conflict started, around the $50 to $60 range if the war is resolved. Stocks and bonds rose while oil slid as traders trying to gauge the viability of U.S.-Iran ceasefire talks sent global markets into a series of some big swings. WTI now about $89 per barrel. Brent crude down to about $100 a barrel. The S&P 500 is 0.8% higher. NASDAQ 1.25% higher, and the Dow up 0.9%. The 10-year Treasury yield at 4.32%, and the 2-year yield at 3.87%. Bitcoin now 1.6% higher, around $71,000. The cost of imports into the U.S. jumped in February by the most in nearly 4 years, reflecting a broad pickup in prices even before the war in the Middle East. Labor Department figures show import prices increased 1.3% from the month before, boosted in part by higher prices for petroleum and natural gas. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Amy Morris, how are you feeling about your South Carolina Lady Gamecocks basketball? They're looking pretty darn good.
Sir, if you jinx me, if you jinx this run,
I got them going all the way. I'm just saying.
So do I, but that's just because of my love for them.
Okay.
And Dawn Staley is just, oh my goodness.
Yep, so there you go. The University of South Carolina
terrific.
women's basketball team, a juggernaut. So we'll keep an eye on them. They're playing Oklahoma in their Sweet 16. Amy Morris, thank you so much. We appreciate that. It is Scarlett Fu, Paul Sweeney. We're live here in our Bloomberg Interactive Brokerage Studio, streaming live on YouTube as well. Markets moving higher, as Amy was just reporting. Let's see about some stocks on the move today. We can do that with Bloomberg's Avalon Purnell. Avalon, what are you looking at today?
Yeah, we can go ahead and start off with ARM Holdings. That's ticker ARM, gaining about 17% for its biggest intraday leap since last April. That's after the semiconductor devices firm said it will begin to sell its own chips for the first time in another bid for AI sales. Meta has already said that it's going to be the first major customer, and the chips will be produced by Taiwan Semiconductor Manufacturing. Raymond James actually upgraded the stock to outperform from market perform on the news of the business shift.
All right, sounds good. Next one on your list.
Yes, KB Home, that's ticker KBH, sliding about 5.6% for its most intraday since December. That's after the home builder's second quarter forecast trailed estimates practically across the board. It also reported revenue and home deliveries for the first quarter that slightly missed expectations. True is saying that the results were generally disappointing and somewhat surprising given the growth in new orders. And management also saying in the release that concerns surrounding the conflict in the Middle East have introduced another layer of uncertainty for consumers who were already facing a lot of challenges across the macro sphere.
All right, one more.
Yes, Terns Pharmaceuticals, that's ticker TERN, rising about 5.5% to hit a record high. That's after Merck agreed to buy the biotech in a deal valued around $6.7 billion. Terns is developing a treatment for a hard-to-treat type of leukemia that analysts expect could eventually rival Novartis. Merck has been on the hunt for new growth drivers as it continues to prep for its blockbuster cancer drug Keytruda to lose its patent in 2028. And important to note that Mizuho is actually calling this deal an excellent outcome for Terns shareholders.
Yeah, also, however, a lot of analysts are saying that Merck is maybe not paying high enough of a premium, and so it could open the door to competing bids and maybe a bidding war.
I'm seeing Merck stock up 2% today on the day, which you don't typically see for a buyer.
There
But it's
you
a
go.
relatively small deal for Merck. And what we've seen from these pharmaceutical companies, they pump gajillions of dollars into R&D every year, and that yields product. But sometimes you just got to go out and buy it.
Absolutely, especially when you've got a big one like Keytruda nearing patent expiration.
That's right.
All right, Avalon Parnell, thank you so much. She is our Bloomberg Equities reporter here for us in New York. And for more conversations like this, be sure to subscribe to our Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. All right, no episode of Bloomberg Intelligence is complete without checking in with our Mike McGlone, our senior commodity strategist, especially on these oil prices, but also across the commodity space. Today, we're looking at gold higher, silver higher, copper higher as well. Mike McGlone is actually on site in Kansas City attending the Bloomberg Intelligence Farm, Food, and Fuel Conference. Mike, I imagine everyone's keeping a close eye on oil, and right now oil prices are lower, even with the headlines coming out of the Middle East, pretty confusing for investors to sort through. We're not sure if there is a ceasefire plan underway. We're not sure who the U.S. is supposedly negotiating with. How is this all playing out?
Well, you're right, Scarlett. Right now, we're at a ag conference, and it's all about crude oil. the thing about crude oil is that sometimes markets speak. It's what they say to people like me. So last week, the end of the week ending March 20th, crude oil, the front contract, was actually down on the week, and gold collapsed. It was telling you, it was looking forward to a world where Iran's offensive capabilities will be completely repressed. And now we're seeing that. Whatever the negotiation is, every day that goes by, we have these overwhelming ear supporting the ability for Iran to repress and to object to disrupt shipping in the strait, I think, is priced in. And the key thing about crude oil is, like Mr. Stork said earlier, crude oil was running around $55 a barrel before this happened. So in commodities, we like to skate where the puck's going. You look at that December contract. Right now, it's about $75 a barrel. And I just sent an editorial that I think by the time we get the midterms, that's going to be the front contract. I think it's going to be much likely to be closer to 50 than 100. And just think of the repercussions if it's near 100. That's a global recession. 50 is normal reversion. And what does the leader of the world's largest energy producer, net exporter, want? Mr. Trump, I think, is more happier with crude oil at 50.
What are you hearing from the conference out there from folks about just, I don't know, the volatility in commodities led by oil, but, you know, the farmers, boy, they consume a lot of stuff. They're impacted by a lot of different commodities out there.
Well, Paul, right now, this price bump is a gift for U.S. farmers. I was at an ag conference a few weeks ago, and corn was hovering around 4. So it's the DEES contract, which again will be where the puck's going. That's the front contract towards the end of the year, got to near 5. And every elevator operator I talked to said almost all their clients are selling that new crop into there, saying, thank you very much. Now I can bring on supply. I've locked in most of my fertilizer costs last year. Fertilizer really an issue for next year, and they're going to bring it on. So this is a normal example of superabundance. We have an oversupply of corn, soybeans, wheat, and grains in this country. We need to export it and have some other form of demand, maybe from biofuels. Well, what does that mean? More of a surplus of fuel. We have a surplus of fuel, crude oil, natural gas. And to me, this has just sparked that trend. And something really bad has to happen for that cycle, which typically needs to get to a low price cure, to not happen. I think it just accelerated it. But here I'm hearing a lot of fear about fertilizer, but also what Chris Ciolino pointed out is capital budget decisions are being shut down, which I think reflects the global consumer, which means by the time we get to data about this period a few months from now, it's going to be pretty bad on a global scale, I think, for most consumers and businesses.
So, Mike, Alexis Maxwell, our senior fertilizer analyst, was telling us earlier that farmers may start to switch from planting corn to soybeans because of the fertilizer prices. Won't that lead to higher gas prices at the pump eventually? Because less corn planted means ethanol, which is made from corn, will become more expensive, and ethanol has to be a part of gas.
So the key factor to remember there, Scarlett, is the average bushel of corn right now in a new ethanol plant can produce about 3 gallons of ethanol. In the past, it was 2 gallons. That technology is kicking in, yet demand for liquid motor fuels is declining with EVs and things picking it. So Alexis is spot on. But typically in this part of the world, the major corn and soybean production in the world, you stick with your rotation. If you planted corn last year, you plant beans this year and switch back. To really add more corn or more beans, you really would do that more in the southern countries. So the bottom line is corn is we have a major overhang in supply from last year, over almost 2.1 billion bushels, which is near a historical high. And we have a major overhang of supply of soybeans from Brazil. What are prices going to do to that? It brings on more. So fertilizer is a bit of an issue, but not so much this season, mostly for next season. And by then it'll probably be cleared up.
Mike, what are you hearing out there at the conference about China as a buyer of U.S. grains? Has anything changed?
No, the key theme, though, Paul, about China is they have an option of buying U.S. grains, but they're cheaper, and there's tons of it coming from Brazil. So a good example is in August, before the negotiations with Chinese, U.S. soybeans were running around 20% discount to soybeans out of Brazil. Now that's picked up. Harvest is coming on, so soybeans are getting cheap in Brazil. And the fact is, the one number to think about is 180 million metric tons. That's going to be the supply from Brazil last year. Just a few years ago, it was 170. A few years before that, it was 120. And the U.S. only produces about 50 to 60 million metric tons. That's been flat for 10 years. The price maker in soybeans is shifted over to Brazil and somewhat corn. So it's just a massive supply coming from the rest of the world. That is mostly the thing. And for China to buy U.S. corn, yeah, it's like, thank you. Or U.S. soybeans, it's like, thank you. But they can get them cheaper in Brazil now. So it's just not economically feasible.
All right, good stuff. Mike McClone, really appreciate it. Mike McClone is our senior commodity strategist. He is on site at the Bloomberg Intelligence Farm, Food, and Fuel Conference taking place in Kansas City. We will return to that conference later on in the hour, but we need to talk about the M&A deal that has come out in New York this morning. Merck to buy Terns Pharmaceuticals for $6.7 billion to grow in the blood cancer space. Michelle Davis is our senior deals reporter here in New York and is covering this story for us. Feel like we should call it M&A Wednesday now because the deals no longer happen on Monday anymore.
You know, it's because we have a deals show now, so of course that's why they're happening on Wednesday. But yeah, big deal for Merck today. It makes a lot of sense that they're doing this because their best-selling drug, Keytruda, which contributed half of their sales last year, $31 billion, and is also the world's best-selling drug, is going off patent. So they really need to do M&A to replenish their pipeline. Terns is not, its drug is not yet approved, but analysts are saying that in a few years, assuming it does get approval, it could have peak sales of several $billion. And so Merck, for Merck, it's a bet that at the end of the decade, around the same time that Keytruda is going off patent, they will have this drug, coming in to kind of help fill some of that hole.
Merck, what are they saying about their M&A appetite, I guess? Because we joke that the pharmaceutical industry is such a deal-heavy industry, pharma, biotech, that kind of thing. What's Merck saying? Because they do have that Keytruda risk.
Exactly. So Merck has been one of the most aggressive when it comes to M&A. Earlier this year at the JP Morgan Healthcare Conference, the CEO, Rob Davis, said that he wants to do several deals in the tens of billion-dollar range. And so that means we'll probably see more from them. Also interesting to note that Merck's stock is up today on the news, and normally in M&A, the buyer stock tends to go down on an announcement, but the fact that, shares are up means investors are applauding this and they, want Merck to keep doing stuff like this.
So the deal's worth $6.7 billion. It's a $53 a share in cash, which is a 6% premium to Terns' last close. There are some analysts out there who say that maybe Merck is not spending enough here, and this invites other companies to come in and make their own bid for Terns Pharmaceuticals as well.
We will see if that happens. There were some bidding wars in pharma last year, with the Metsera deal being, one of the most notable ones. That said, Terns' stock has increased like 50% since January on basically no news. So there could be an argument that maybe there was some built-in, M&A speculation already into baked into the price. But you never know. There are other pharma companies out there who are also trying to replenish their pipeline, so it wouldn't be unprecedented.
And of course, which bankers were on this deal? They didn't list the acquirer advisor, but the financial target, Centerview Partners, and Jefferies. So a couple unusual, or not unusual, but just
more boutique-y.
More boutique-y, yeah.
Centerview has, they're generally on most of these on the sell side, and Jefferies has been doing a lot more on the sell side too.
Yeah, the boutiques, or like we used to call them boutiques, but in M&A, they're not really boutiques anymore, are they?
Exactly.
They've really made a commitment, doing real PJT and all those guys. Is there any regulatory risk when these healthcare deals get done? Or is it just a big Merck buying a little biotech thing and nobody really cares? How's that work?
Not as much. The last time we saw something kind of splashy get attention was when Amgen tried to buy Horizon, and the FTC tried to block that deal. They ended up settling and the deal went through anyway. But in something like this where, Terns' drug isn't even approved and its biggest competitor is owned by Novartis, the competing kind of compound, it seems unlikely.
So given what Merck has done and the fact that investors like the deals that it's made so far, I'm guessing we're going to expect to see more acquisitions from Merck in the coming weeks and months?
That's probably, definitely.
And it's got the firepower for that, too.
I always say, my next lifetime, I'm coming back as a healthcare M&A banker. They get paid every single year. Every year. It doesn't matter what. Something's always coming off of a patent, and you got to go refresh it. And so let's go ahead and do a
Paul's
deal.
turn as a radio star is just like a pit stop.
Pit stop. Yeah, I'm coming back.
It's never too late to start over.
Exactly. Well, that's why I'm here at Bloomberg. There you go. Michelle Davis, senior deals reporter, Bloomberg News, joining us live here in our Bloomberg Interactive Broker studio. Again, the news is Merck agrees to buy Terns Pharmaceutical.
And of course, Michelle will be in the Bloomberg Deals Show, which airs at 12 p.m. Eastern Time on Bloomberg Television, hosted by Danny Berger, with several of us contributing. So we look forward to seeing Michelle later on.
Again, a UVA grad, as much as I begrudge them, they're very good here. They do a great job here. I'm just saying. Hoops, not as good as they.
Oh, you just had to get that in,
had
right?
to get that in there. Yeah, but
Ouch.
anyway, it's good to have them here. Looking at the markets here, still got green on the screen here today. It's one of those days where on the margin, the news is a little bit positive, but we're giving back a lot of the gains of earlier today. Now the S&P is only up 14 points. That's 0.2%. It had been up a little more than 1% earlier here. So again, people are trying to suss out, where are we, the U.S., Israel versus Iran in terms of maybe coming to some negotiations, but maybe getting to a point where they can think about ending this war. Started out strong or optimistic this morning. That's fading a little bit. We'll have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. I'm Amy Morris. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or a 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Stocks and bonds rose, oil fell. Traders trying to gauge the viability of U.S.-Iran ceasefire talks. Oil now paring back those earlier losses. WTI down nearly 3%, now about $90 a barrel. Brent crude down about 3%, about $101 a barrel. We check markets for you all day long here at Bloomberg. The S&P 500 is up 0.4%, NASDAQ up 0.75%, and the Dow up 0.4%. 10-year Treasury yield at 4.32%, the 2-year yield at 3.88%. Meta Platforms will reportedly lay off a few hundred people across the company today. Sources tell the information the cuts will affect staffers in Reality Labs, its social media teams, recruiting operations, and sales. Meta employs more than 78,000 people. Meta shares are little changed. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Surveillance, or rather Bloomberg Intelligence, with Scarlett Fu and Paul Sweeney.
All right, thank you so much, Amy Morris in Washington with our Bloomberg Business Flash. We are looking at the markets, and there's been a lot of movement here. Right now, stocks are higher, bonds are also higher, and that is leaving yields somewhat lower. But I think it's safe to say, Paul, that there's confusion over what's going on in Iran and how investors should look at whether we're going to get any kind of end to this conflict anytime soon.
Right, exactly. And again, what's kind of been leading this market, oddly enough, has been oil. So you kind of, however oil goes, so goes the rest of some of these risk assets here. Certainly in the stock market.
All right. And of course, we've seen the 10-year yield and the 2-year yield come back down after reaching a high of 4.44% at the end of last week. Brian Whalen is the Chief Investment Officer of Fixed Income at TCW, and he joins us now from Los Angeles. Brian, was that the top 4.44% and we got the Trump put in action?
Yeah, thanks for having me. It was, that kind of put the 10-year about 20, 25 basis points higher in the yield. But, as much as we talk about the 10-year, the real conversation in yields is on the front end of the curves. Most of the developed global interest rate markets popped higher. In the U.S. here, the 2 years higher in yield by about 40 basis points on the year, about 50 basis points from the lows just at the end of February. And, if you think that sounds like a lot, over in the UK, their 2-year jumped almost 100 basis points. It's kind of somewhere in the middle of this last 2 weeks of this war.
Hey, Brian, I was talking to an equity portfolio recently, and they made the point that, there's a lot of volatility and swings in the equity markets, but nobody feels a sense of panic, either on the up days or the down days. How would you characterize the trading in your market, in the bond market?
I think that's good. I've actually, it's funny you said we were kind of categorizing, moves just across the capital markets this morning. And obviously, like the big news and the moves and the volatility, front end of the rate curves, we talked about that. And that's all about kind of a short-term kind of fear of an inflation spike. Although we have not seen that kind of unanchor long-term expectations, basically the market thinking this is going to be kind of a short-term impact on inflation. Commodity prices are all over the place. Currencies a little bit. But yeah, with regards to equities, we're down, 3% on the year in the S&P. Credit markets, in the bond world, high yield bonds are out about 30, 40 basis points, but they're still very low in terms of the risk premium you get to invest in them versus treasuries. And then, with regards to investment grade corporate bonds, you got to squint to even see the moves. From a widening perspective relative to treasuries, just been a few basis points on the year. And so basically the narrative there, the way I would describe it is no panic. And in fact, because we've had this jump in yields, the all-in yields you get to invest in these markets look more attractive today than it did when we started the year. And that's actually attracting money. So at this point in time, there isn't kind of a credit fear or fear about kind of broader risk premium rising. It's more viewed as an opportunity to put money to work at higher coupon rates.
So that begs the question, where do you put money to work? What looks most attractive right now?
Yeah, I'd say this everything going on with the war, it's grabbed the front of the headlines. I think, we kind of talk about, you trade first order effects and you invest around second order effects. So, from our perspective at TCW, like the trade right now is to take advantage of some of these sharp jumps in front end interest rates. And so, we found the front end of the U.S. curve is interesting. The front end of the U.K. curve we talked about even more interesting to us. And we think these are kind of short-term phenomenon. But, later on in terms of like second order effects and investing for the long term, we view this jump in energy costs less about inflation inducing and more about demand destruction, meaning that, the broader consumers and business in the UK, the US, and some other parts of the developed world just isn't in the point where we were like in 2022 to kind of absorb this jump in prices. And so what it'll lead to is demand destruction. It'll be a headwind to growth. And then once this conflict, this war is over, what should happen is that we're going to get back to the story, the narrative that occupied kind of our, these conversations for the first 2 months of the year. And if you remember these terms, it was about, private credit and cockroaches and BDC shutting down and all this kind of change in capital flow across the markets. And I think, what that should lead you to conclude is that eventually when this is over, we're going to start talking about that again. And what we think that will lead to is probably wider spreads in corporate bonds, both investment grade and high yield. So from our perspective, the trade in the short term, interest rates in the front end of the curve, in the longer term, it's going to be about kind of preserving capital and looking for better opportunities in credit when the market starts to get pricing and the fundamentals that were in place before the war began.
So Brian, to that end, I mean, if you're at a cocktail party or a cookout and somebody comes up to you and says, hey, should I be worried about this private credit stuff? What's the current thinking there?
Well, if anybody brings up private credit at a cocktail party, that's one you probably shouldn't be at. I don't know. Yeah, I think, here's what we'd say. Private credit's here to stay. We've forever changed the ecosystem of our capital markets. It's not going anywhere, but, like a lot of new great things that maybe has gone too far in the last couple of years. So there's been, it's been too easy for a lot of borrowers. So we're going to go through a period of time, and it may take a couple of years where we're going to have to kind of rejigger the private credit markets. Probably there'll be some pullback of capital. We'll push some of those borrowers into default. Some of those borrowers will have to go back to the public markets. And in the meantime, what I would say is expect probably higher loss rates, higher default rates. Make sure you're comfortable with the liquidity you have if you're investing in it. Understand your rights and also the rights of the GP to potentially shut down or gate things. So this is probably, with regards to the private credit, this is not going to be kind of a blink your eyes, 1 month, 2 month, 3 month type of thing. This is going to be probably a couple of years of an adjustment. And with those adjustments will come kind of sporadic opportunities to invest.
All right, good stuff. Brian, always appreciate your joining us. Brian Whalen, he is a regular here on Bloomberg Intelligence. He is the Chief Investment Officer of Fixed Income at TCW, joining us from sunny Los Angeles. Actually, more than sunny. They've been stuck in a heat wave for a couple of days now. We could use some of that heat, but not to that extent. All right, let's check in with Justin Pryden right now. He is Vice President of Consulting Services at Revenue Management Solutions, and he's also an attendee at the Bloomberg Intelligence Farm, Food, and Fuel Conference, where they are talking about rising costs, especially fertilizer costs, what that means for agriculture, and what that means down the line for food operators, restaurant trends. Justin, thank you so much for joining us. Tell me about what you've discussed at this conference and how you think about what that means for restaurant menus and the restaurant industry.
Well, Scarlett, thank you so much for having me. And again, this conference has been wonderful about talking about some of those input pieces that's really fundamental to restaurants and what their costs they're seeing on that bottom line when it comes to the products on their menu. At Revenue Management Solutions, we're always working to keep our clients ahead of the curve and be proactive when it comes to those cost inputs so that they can meet the guest where they're at when it comes to what items are on the menu, their prices, and all these pieces. And a lot of the topics that have been really important at this conference is what the downstream effects are going to, or what the initial effects here are going to cause for those menus when it comes to costs and when it comes to operators are going to be reacting to in that food and beverage industry.
All right, here's the term I dislike/hate the most in the food business over the last 6 months, and that is protein. When did they start using protein as opposed to just saying, hey, do you want chicken on your salad?
It sounds better.
I don't know. So talk to us about that. I mean, Justin, protein, tell us why it's become an issue or a topic within the restaurant and food industry and how we should think about it.
Paul, I hear you there, and it's so fun as a restaurateur originally myself. Just calling it protein and going there just doesn't sound as good, right? It's not something that you think about when you're on the menu and think about, hey, I really feel like a protein section today.
Yes.
But really, it's become a major piece, and it's always been a major piece of menus. I mean, we see right now roughly about 85% just of menu items making up that, just the core chicken, beef, pork type of items. So it's always been there, but the real focus on it right now is you're starting to see a lot of trends focus on protein-rich or a lot of protein within the diet these are becoming even more important to consumers. Some of the generational shift too, you're starting to see is that it's even more important to the millennials who are in the market now and really becoming some of the chief spenders from now and moving forward, really looking for protein as a deciding factor in how they're choosing restaurants and how they're choosing their items. Also, just some trends with GLP-1 and what you're seeing in dietary trends is really focused back on protein being a core of that decision process for guests on menus. I think a recent survey we saw, again, 3 top reasons: it's good for my health, it's satisfying, and it's something that I need as part of my active lifestyle. And that just keeps increasing as we ask guests out there for menus. And just what we're seeing is items come to menus.
Justin, I want to ask you about some trendy food that has become like kind of the thing that everyone wants. It's certainly showing up all over social media, whether it's matcha out of Japan or Asia overall, ube out of the Philippines, Dubai chocolate, that's a big thing.
Well, you're way ahead of me on this.
Well, I mean, this is what's all over Instagram, and these things photograph really well, and they also lead to increased demand from consumers, and restaurants are kind of meeting this demand by incorporating it into their menus. Is this something that restaurants do with an eye to like just do it for a couple of weeks before going back to their normal menu, or is it something that they incorporate permanently?
Well, I think you're seeing more and more of those trendy types of pieces to menu, if you want to call them trendy, but they're also following a lot of that global taste and that unique taste piece to cause buzz around items and a buzz around parts of the menu to be able to bring folks in. Again, right now, as you're starting to see affordability as a total thing for guest visits and transactions being more of a fight for share as guests are coming in, not necessarily maybe new occasions, utilizing what's there, the what's really current, what's good, those short-term promotions, the social media aspects and the photographing, let the camera eat first type of principle of being able to see food that's really exciting. You're seeing that get leveraged a lot as global cuisine, as some of those trends are really there. And again, resonating with millennials, but again, across all folks, as whether it's mainstay menus, there's a real balance. I think you're seeing more of that short-term type of menu options come in, promotions, and then whether that has staying power or how that balances with what you might consider the core of the menu, the things that you're known for, what you come in for. So it's that balance of getting the folks coming in for excitement and for the things that they know and always love.
All right, Justin, really appreciate it. Justin Pride, and Vice President of Consulting Services at Revenue Management Solutions, attending our Bloomberg Intelligence Farm, Food, and Fuel Conference. Have you had matcha? Have you had ube?
I've had matcha, and I will never have it again. I did not go for the taste. Everybody puts stuff in it, as it used to say.
All right, this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
11:40 on Wall Street. I'm Amy Morris. The Supreme Court has thrown out a copyright infringement verdict against Cox Communications. The justices said that Cox could not be held liable for failing to shut down the accounts of people who repeatedly downloaded and distributed songs without permission. Crude imports from the Middle East edged lower in the week to March 20th. Inflows from Saudi Arabia fell by 24% to 605,000 barrels a day, mostly offset by a jump in the amount of crude arriving from Iraq, which rose by 139% to 270,000 barrels a day. Crude arriving the past week left the Gulf in February, all of that before the war in Iran. WTI now down about 3%, around $89 a barrel. Brent crude down 3.3%, around $101 a barrel. We do check markets for you all day long here at Bloomberg. The S&P 500 is up 0.6%. NASDAQ up 0.8%. The Dow up 0.6%. The Russell 2000 Index up a little more than 1%. The 10-year Treasury yield at 4.31% and the 2-year yield at 3.87%. Bitcoin now more than 1% higher, around $70,000. The Pentagon has made a deal with major defense contractors to accelerate production of key missile systems that have seen heavy use during the initial phases of the war with Iran. The Pentagon says Lockheed Martin and BAE Systems both agreed to quadruple the production of Seekers for the Terminal High Altitude Area Defense Interceptor. And Honeywell Aerospace will invest $500 million over several years to surge production of critical components for America's munition stockpile. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. We go back to Bloomberg Intelligence now with Scarlett Fu and Paul Sweeney.
Amy Morris, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. You had some critical information for me, Scarlett?
Yes, there's some matcha shortbread upstairs.
Oh.
So I brought some for you.
No, thank you. Oh, my goodness. Matcha.
We'll make
matcha.
a convert of him yet.
All right, we'll see how that plays out. Let's talk a little media here. Interesting story on the Bloomberg terminal. Walt Disney Chief Executive Officer Josh D'Amaro has seen $2 billion technology bets falter, one of them unraveling entirely just days into his new job. Let's see what this means for the Walt Disney Company. We got some other media stuff to talk about. And we turn to Geetha Ranganathan. She is the media analyst for Bloomberg Intelligence. Hey, Geetha, there's news out regarding Disney. Can you talk to us about a couple of these deals that seemingly are falling apart here?
Yeah, this is a big deal, Paul. I mean, Josh D'Amaro obviously took the helm at Disney just a week ago, and we're seeing this OpenAI Sora deal that Disney had kind of inked about 3 months ago. And basically the deal here was that this would be a 3-year licensing agreement where Disney would make a $1 billion equity investment into OpenAI, and Sora would be allowed to use about 200 of Disney's characters to kind of create all of these short form videos, which users could basically engage with on the Disney Plus platform. This was kind of, I think, Disney's way of playing offense, defense with the whole rise in AI, and kind of, if you can't beat them, join them, kind of really joining the bandwagon and saying, yes, we have a stake here with AI. So this falling apart definitely kind of leaves Disney, definitely they were blindsided. They've been kind of trying to do different things in terms of really monetizing their IP, creating like this really this franchise fandom, if you will, right? Really digging deep into it. That's what Josh D'Amaro has spoken, both with this OpenAI deal as well as the Epic Games deal. That was a deal that actually Josh D'Amaro had kind of brokered, and just over the past few days, we've kind of seen, a lot of news with Epic Games too. And so this really kind of now raises the stakes for them to kind of find out whom else they can partner with to kind of deepen that fan engagement.
Okay, so he's got his work cut out for him. Certainly makes for a busy first week on the job. Geetha, we also want to talk to you about what's going on with Netflix. It's bolstering its live streaming mega events. There was the BTS comeback show, which I guess the live show didn't attract as many people as thought, actually attending the event, but the actual streaming of it was a monster hit, wasn't it?
It was a monster hit, Scarlett. You're absolutely right. Over 18 million viewers worldwide. And this is, again, we come back to the basic buzzword in media right now, which is engagement. What are all the different ways that you can build engagement? And, again, the OpenAI Sora deal with Disney was, again, a way for Disney to build that engagement with their fans. Netflix kind of chasing all of these different types of content, whether it is sports, whether it is this live event, the BTS comeback tour, again, trying to deepen that engagement, trying to deepen their connection with fans as you have more and more sources of, video basically competing for time spent. Again, huge, you're absolutely right, huge event for Netflix, really shows how they can kind of go after all of these different genres and build that scale, build that appointment television kind of buzz. And really get a good ROI on their investment. By the way, they're increasing their content spending for events like this year by $2 billion. That's a pretty sizable step up. So we're looking at them, spending about $20 billion, Scarlett, this year on content.
Wow. All right, Geetha, it's opening day for my New York Yankees. They'll be opening up out in San Francisco this evening, 8 p.m. Eastern first pitch.
That'll be a good game.
Yep, I'm not going to ESPN to watch this. I'm not even going to the Yankees' own network. Yes, I'm going to Netflix to watch this game tonight.
Where are we in this world?
Where are we in this world? Talk to us about, Netflix has said, we're never getting into sports. Well, that's gone by the wayside. What do you think their sports strategy is?
So their sports strategy, Paul, I mean, this is a really important point. Their sports strategy has been very, very calculated, very, very measured. At a time when we've seen other media companies like, Disney and Amazon and YouTube kind of spend billions and billions of dollars on sports rights, Netflix has taken a far more cautious approach, but an approach that has really served them well. So they started out with this $500 million deal for, WWE content. They went after some NFL Christmas Day games, but this World Baseball Classic was actually their first big foray into world live sports, an event in Japan, and it has really served them well. So you just look at the ROI on that event. They spent about $100 million for, 47 games, and they got something like 31 million global viewers. Really a huge, huge viewing record for them. And again, just shows how, by making really calculated bets, again, you can kind of build that buzz and for them really build that critical engagement metric.
Yeah, that is pretty incredible. And I guess part of it is also to build up the Netflix brand outside of the U.S., where sports rights have gotten to the point where it's prohibitive. But you look at the rest of the world, and it's a little bit more doable.
Absolutely. So if you're just looking this year at sports rights, Scarlett, companies are spending about over $40 billion just this year across the board for U.S. sports rights. And we're only looking at that going up further and further as, the NFL looks to hike its fees, the NBA looks to hike its fees. So yes, they are making this really smart move by diversifying, going across the board, and it's paying off. That's what's so great about it.
To me, the defining moment will be when Netflix takes a Sunday package from
the NFL.
And Geetha, I think that day is coming. What do you think?
I also think it is coming. So they've already kind of dabbled with that, Paul. They've done the Christmas Day games. Again, they had some of the highest viewerships ever for the Christmas Day games, something like 35 million viewers.
Yeah.
Yeah.
Anyway.
So I also think that they are definitely, probably going to go for a digital package. I mean, the NFL wants to go there. They know that majority of the viewership is migrating to streaming, and it would be stupid for them not to kind of sell a digital package. So I definitely think it's going to happen sooner rather than later.
All right, Geetha, great stuff as always. Geetha Raghunathan, she is the media analyst for Bloomberg Intelligence. Disney trying to figure out, I've been following the Disney company as a banker and an analyst for more than 30 years. They have never figured out the games business. And they
Do you mean like video games?
Yes, and let's take my content, all my characters, all my content, and port them into the game because that's where the kids are spending all their time.
It's such valuable IP for them, and so they need to tread really carefully. They don't want to, just throw it around everywhere and have it get
and so
diluted.
they've tried, just in the last 30 years, 3 or 4 times, really tried a big strategy, and it just never worked. It's never worked, and here's just another example. So, whereas for Netflix, everything they touch seems to work.
Well, I mean, they're coming at it from a completely different mindset, right? They're not a content company first. They're a distribution company first.
Yes, exactly right there. And the best thing that could happen to them is they did not buy Warner Brothers Discovery. I think that's just
investors liked it too.
That plays out. S&P Up 36 points, stabilizing here. That's 0.5%. The Nasdaq's up 170 points. That's 0.8%. Off the highs, but off the lows as well. Brent crude down 3%, $101 per barrel. This is Bloomberg. Good morning.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney. We are live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube and streaming live now on Bloomberg.com/video. They've got all the live video that gets produced every day here at Bloomberg Radio and TV, as well as all the curated stuff, so it's all there. Chewy, forecasted sales for the year that beat analyst expectations. Stock's up pretty big here, 10-12% here today, so that's good news here. Let's break it down with Diana Rosero Peña, consumer staples analyst at Bloomberg Intelligence. She joins us live here in our Bloomberg Interactive Broker Studio. So, Chewy, what did you learn on their earnings call?
Yeah, I mean, they have been doing pretty well, both on the top line and profitability. There's no complaints from investors, or at least they shouldn't be for this quarter.
So I'm just looking at the stock here. The stock's up, again, about 12% today, but it is down 20% year to date and down about 20% over the trailing 12 months. What's the investment call here for Chewy? What are the growth drivers top line for this company?
Yes, so it's their ability to grab consumers. Once you enter, I guess, the Chewy environment, it's difficult for you to leave. They have about 84% of their revenue comes from auto ship. So it's pretty much you set it up. It's subscription based, pretty much. So you set it up, and every so often you get your goodies at your doorstep.
So who did they compete against? The Amazons of the world, the Walmarts of the world, the Pets.com?
They do, yes. So, you know, they have about a third of the e-commerce, market share in the United States. They compete with Amazon. It has around the same.
Well, there are not many companies out there that can say they have a third of a market where you compete against an Amazon and a Walmart and things like that.
Exactly. And the thing with Chewy is that they have expanded beyond merchandise, beyond food. Now you can get your pharmacy, you can get, your vet needs. They actually have vet locations, 18 vet locations. They're starting to do that. They see that engages customers more. So that is, an upside for them.
So how is that business? I have no idea, because it's all kinds of pet food in general, then stuff like toys and all that kind of stuff. What's the tariff situation for that kind of stuff?
So it seems that they have been able to navigate that. Obviously, some of the pressure, they pass that through consumers. They're seeing a net sales per active consumer, which is kind of like, their pricing grow in the low single digits. So they're comfortable with that. The scale and the price and the product mix that they have allows them to kind of like get the hit on the margin without, showing it to us.
This was obviously a COVID stock that just like a Peloton a little bit, but this is obviously done much better post. How do people view this? Is this a kind of a consumer staple kind of name, or how do you think about that?
I would say it's a retailer. The way that I would see it. Going back to the pandemic and COVID, they actually had, obviously this was a very favored stock because everybody was at home, and then the cohorts that were acquired during the pandemic, they kind of reduced. And that was kind of like a story of 2024. It was difficult for them to grow consumers because, the cohort was so massive that it was pretty much they couldn't keep up with, they couldn't keep a lot of those consumers. But that has turned around, and they are seeing, significant growth. We actually expect that most of the growth in sales is probably going to come from active consumers rather than pricing.
I mean, I look at, I know nothing about this business, but I look at the first place I look for when I look at a P&L is the free cash flow. Great free cash flow here. I mean, got $700 million for calendar year 26, maybe $850 projected for calendar year 27. What do they do with the free cash flow?
They invested in the business. They're growing scale. Obviously, they're opening vets. That is something that they haven't pretty much experienced. They're actually, investing outside of the United States. They're trying to get into Canada. They're giving some of that back in share repurchases, but we don't necessarily expect it to be significant, in 2026.
So what's the margin analysis you guys do as analysts and investors? Where's the leverage in the income statement to maybe improve margins? Because as a retailer, tight margins. What can they do really?
I mean, they're actually, it seems that, they're working a lot with leverage, operating leverage. In their distribution centers, they seem to be, they are automated. So that has been building scale, trying to get consumers to buy more premium brands. They have private label, which they wanted to grow it to like the mid-teens. That is going to add about 500 basis points to gross margin. And other non-merchandise revenue. So that is usually higher profit than merchandise.
Are you a Chewy user?
I am not.
You're not? Okay.
No.
Yeah. All right. Well, interesting. But a lot going on there. Company's based in Plantation, Florida. 18,000 employees. Got a market cap of about $11 billion. So this is a sizable company. And I know for their users, just indispensable. And the boxes show up everywhere. They're like Walmart boxes and, Amazon boxes, the Chewy boxes everywhere. Sure. All right, Diana, thank you so much. We appreciate that. Diana Rodoseto-Pena, Consumer Staples Analyst for Bloomberg Intelligence. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment with the stock market holding on to the gains. S&P, the Dow, the Nasdaq, all up about 0.7 to 0.8% here today, with oil trading lower. WTI crude oil right at $90 per barrel. This is Bloomberg. Good morning.
This is CBS News on the Hour, your home for original reporting.
Steve Kathan, the acting administrator of the TSA, spells it out. Airport security officers need to be paid and new ones need to be recruited.
As the shutdown drags on, we fear we will continue to lose talented and experienced employees to other jobs that can provide a steady paycheck. At this point, newly hired officers will not be able to work on the checkpoint until well after the 2026 FIFA World Cup. This is a dire situation.
Ha Nguyen McNeil appearing before a House committee. Correspondent Nicole Skanga is at one of the airports where security lines have been the longest, Houston's Bush Airport.
DHS has surged some extra personnel, including ICE officers who have been helping direct traffic and hand out water, but really it's those TSA officers that are the ones screening passengers, looking at the X-ray machines, and observing any security anomalies. And they have been calling out at high rates, particularly here in Houston, where the TSA sick-out rate on Monday was around 36%.
There's word Iran has rejected the 15-point U.S. plan to end the war. CBS's Natalie Brands.
According to a state TV broadcast, it's essentially rejecting the 15-point proposal by the U.S., although an anonymous source was cited. And it's really unclear at this point, remains unclear, who the White House's negotiating team is speaking to, other than the president again saying that it is not the supreme leader.
Earlier, President Trump ordered additional American troops to the region. American Dennis Coyle is back in the U.S. after being held in Afghanistan for more than a year. His sister says,
"There's been so many people praying and supporting our family, and from the bottom of our hearts, we thank everybody for this day."
It was never clear why Coyle was detained. Episcopalians in the U.S. and others in the Anglican Church around the world have a new groundbreaking leader.
I'm Vicky Barker in London. Like the 105 before her, the 106th Archbishop knocked 3 times on the door of Canterbury Cathedral, symbolizing that Sarah Mullally was coming as a servant of her congregants, not their master. Prince William and Kate were among the 2,000 watching the elevation of this, the first female Archbishop of Canterbury in Church of England history. More than 300 mostly African bishops boycotted the ceremony, among those still opposed to the ordination of women.
NBA owners have voted to explore expansion to Las Vegas and Seattle. Wall Street, right now the Dow is up 311 points. This is CBS News. We're getting a peek at Harry Potter's return, this time on the small screen.
HBO has released the first official photo from the set of the new Potter TV series.
You're a wizard, Harry.
I'm a what? The shot on Instagram shows the young wizard from behind, wearing a Gryffindor cloak, holding his broom. Other Hogwarts students are lined up in front of him. It teases more to come. possibly in a trailer. Young cast members are newcomers, but John Lithgow plays Dumbledore and Papa Isiadu Snape. Each season is expected to focus on one of J.K. Rowling's original 7 Potter books. The series is expected to debut next year. Deborah Rodriguez, CBS News.
OpenAI is shutting down its social media app Sora, which went viral last fall as a place to share short-form videos generated by artificial intelligence. Disney had made a deal to bring its characters to Sora. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Iran rejects the peace plan. Welcome to the Wednesday edition, as a 15-point proposal from the Trump administration is met by a counter-proposal from Iran. They've got conditions of their own, it turns out. All the while, strikes continue from both sides, and we're going to get the latest in just a moment from Bloomberg national security expert Nick Wadhams. He's with us in our Washington bureau. With rising oil prices now bringing a new wrinkle and a new challenge to the data center. We're going to talk about that with Bloomberg's Ed Ludlow as AI takes a leading role in the war with Iran. And a deal to reopen the Department of Homeland Security has hit the rocks. A lot has changed since we last spoke. We'll have more for you from Capitol Hill, and we'll get analysis from our political panel. All after a look at Wall Street. Amy Morris has the latest on the markets for us to get things started. Amy, what do you have?
I've got a lot of green on the screen, Joe. Thank you so much. Stocks and bonds rising, oil falling. Traders weighing the viability of U.S.-Iran ceasefire talks. Energy analyst Stephen Shork with the Short Group says there's disconnect between prices and oil futures contracts and the barrels themselves.
Oil where we need it. The oil that is pent up in the Strait of Hormuz is trading at upwards of $130, $140, $150 today. So that distance, that schism between the Brent market, the WTI market, those large discounts just tells you that where the shortage is. And the shortage of oil is not in the Atlantic Basin.
Short Group President Stephen Shork telling Bloomberg Daybreak he expects oil prices to settle to where they were before the conflict started, around the $50 to $60 range if the war is resolved. We do check markets for you all day long here at Bloomberg. WTI now near $90 a barrel. Brent crude topping $101 a barrel. S&P 500 up 0.5%, NASDAQ up 0.7%, the Dow up 0.6%, Russell 2000 index up more than 1% now, 10-year Treasury yield at 4.31%, the 2-year yield at 3.87%, Bitcoin right now a little more than 1% higher, around $70,000. The cost of imports into the U.S. jumped in February by the most in nearly 4 years, reflecting a broad pickup in prices even before war in the Middle East. Labor Department figures show import prices increased 1.3% from the month before, boosted in part by higher prices for petroleum and natural gas. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Balance of Power with Joe Matthew.
All right, Amy, thank you so much. Amy Morris will have more on the markets in about 15 minutes' time. We keep this rolling throughout the day here on Balance of Power, and it's great to see you. Welcome to the Wednesday edition on Bloomberg Radio, streaming live on YouTube. Search Bloomberg Business News Live. You can catch all of our shows. You could have been watching B-Tech a minute ago. How about that? Live from Washington. Ed and Caroline. And Ed Ludlow is going to join us a little bit later on the hour, as I mentioned, following a series of really important interviews here with a tech conference, an AI conference underway that they have been talking about on B-Tech. Stand by with a lot more on the role that AI is playing in this war with Iran, which is not getting any easier and apparently not ending anytime soon. We talked yesterday about the 15-point plan. We had a president saying repeatedly that we'd already won, and now news today that Iran has rejected that plan that would have called for a rollback of the nuclear program, resumption of monitoring, limits on missiles, and access for shipping through the Strait. Iran says, no, thanks anyway. In fact, they have demands of their own, including the closure of all American bases in the Gulf, the payment of reparations for missile attacks on Iran, the lifting of existing sanctions. We're not getting anywhere here. The president, though, speaking very differently when he addressed reporters at the White House yesterday. Listen.
We've won this. This war has been won. They have no Navy left. They have no Air Force left. They have no anti-aircraft equipment left, no radar left, no leaders left. The leaders are all gone. Nobody knows who to talk to. But we're actually talking to the right people, and they want to make a deal so badly.
That last part we're not sure about. But to be clear, mediators from Turkey, from Egypt, from Pakistan are all pushing to help mediate some sort of formal meeting between the U.S. and Iranian officials. We'll see if that happens. The strikes continue in the meantime from both sides, the U.S. and Israel, and of course Iran, which managed to get a cruise missile launched in the direction of the USS Abraham Lincoln, the aircraft carrier, which did not apparently meet its final destination here, its intended destination, but they're still throwing missiles at us here, and the strait is closed at least for Western interests here. And that's an interesting part of the story. Vessels trying to get through Hormuz, depending on where they're going and where they're from, can get Iranian protection. It's like the mob inside the strait. According to accounts from people familiar here, Iran, and of course it wants to get payments from ships going through the strait here, but these vessels are being asked to provide lists of crew and cargo, and then they kind of sneak them through the strait in a way that U.S. vessels would not be allowed. Let's get into this with Nick Wadhams, Bloomberg's team leader for our national security here in our Washington bureau. Nick, it's great to see you. It's been too long, and this is a very busy time, I realize, for your team, and just trying to figure out exactly what's going on here. We've had quite a back and forth, but the fact is oil prices are a bit lower today on this hope that the strait could be reopened, and the markets are following. Stocks move higher when oil goes down. We take the markets out of this for a minute. Do we have any reason to really be more optimistic today than we were yesterday?
I mean, that is the question, and my feeling watching and being involved in the coverage is not really. I mean, the issue, the thing that we are really hearing is Iran has been through this rodeo a couple times before where they engaged in talks with the United States, and both times President Trump has a different version of events, but their feeling was that those talks were just a feint and essentially a pretense for the U.S. to accumulate its forces, prepare its attack plans, and then essentially use them as a ruse before it went ahead with fresh strikes. So the question is, why would they have any faith that this latest round of potential talks would achieve a different result?
Sure.
The other issue is that Iran would be perfectly fine with oil going higher, you know, $200 a barrel, who knows? Sky's the limit there. Whereas that puts an enormous amount of pressure on Donald Trump. So yes, they're getting pounded really hard. The military situation is not in their favor, but they continue to exert leverage over the Strait of Hormuz. They are less vulnerable to the pressures that President Trump is under. They may feel that there's plenty of runway left to go on this campaign.
Democratic Congressman Jake Auchincloss was with us last evening, a leading voice for national security and military matters. He's a combat Marine Corps veteran. When I asked him about the latest that we were hearing, he said, Joe, stop listening to the president because he's lying about negotiations. Just like the Iranians are saying, essentially, that there's a troop buildup. We've got Marines and members of the 82nd Airborne on the way. They could be in theater by Friday, right when that 5-day deadline is up. Is it just as likely that we have boots on the ground by this weekend?
You know, I mean, this is the big question. I mean, whether or not the president is lying, I mean, I can't get inside his head. But like, you know, we saw this happen before, where prior to February 28th, this was all visible. You saw forces streaming to the region, and the question was, is this a point of leverage where he's trying to extract concessions during the talks, so this is essentially for show? Or are we in a situation where, hey, he's sending all these military assets to the only reason he would do that is that he intends to use them. So if he then says, okay, we're sending 2 Marine Expeditionary Units, each with 2,500 troops, we're sending the 82nd Airborne, estimates vary between 1,000, 2,000, 3,000. So, you know, a total of anywhere from 6,000 to 8,000 troops to the region. If you're going to send that many troops to the region, you intend to use them.
Yeah, wow.
The issue is that boots on the ground in Iran, even in a very limited way, is such obviously a red line in some ways for a lot of the MAGA base who elected President Trump on the promise of no new wars. It would potentially escalate casualties in a way that we have not seen so far in this conflict. And it would obviously, it might, it may even be something that Iran says, okay, you occupy this island, or you occupy the coast, or you take our nuclear material. I mean, it exposes those troops to an enormous amount of risk. And the question is, how open-ended is that? So a lot of unknowns.
Well, that's right. And that's a great answer. Enter Benjamin Netanyahu. And of course, much has been said about our competing interests here, potentially when it comes to end games, when it comes to objectives. Netanyahu saying just now, the military campaign against Iran is in full swing. He's not looking for a ceasefire, is he?
It does not seem like that. I mean, the impression that we have gotten from the reporting is essentially that Israel doesn't mind if there's essentially chaos and disorder in Iran, and they would like to keep up this military campaign for as long as possible. President Trump has a different set of priorities and a different set of pressures. The price of oil, politics back home are very different from the politics in Israel. So I think you're seeing the president want to give the impression that this thing is steering toward conclusion. So the fundamental split screen between him saying, hey, we are seeking an off-ramp, we're on an off-ramp here, and Netanyahu saying this continues full force. I mean, it's just, it's two very different, it shows that there are two very different realities in terms of what these two leaders want.
With a gallon of gas today selling for $3.98, ever closer to $4 a gallon. There's reporting today from NBC, and I'll just sneak up with you on this because you're a friend of the show. Every day since the start of the war, the president has not only had his daily briefing that's brought forth they put the binders on the table and walk him through this material, but he's being shown a video compilation, a montage of the biggest, most successful strikes on Iranian targets from the previous 48 hours. They're basically showing him a movie trailer of what has blown up in the last 2 days, sometimes about 2 minutes, sometimes longer. Apparently, an official described each daily video as a series of clips of stuff blowing up. And it's gotten to the point where the president doesn't understand why this isn't what's being reported, because we're blowing stuff up and the Iranians are not. Have you ever heard of this form of communication to the president, getting kind of a video trailer of what's going on?
I have not heard of that, but as you're talking, and I also saw that report, it really reminds me, I was not around for Vietnam, but I did cover the Iraq War in 2003, and went to a lot of briefings and listened to a lot of briefings where it's that cliche, the military reports targets hit, infrastructure destroyed, and that is a signal of all the progress that the United States is making. The Iranians operate on a different timetable and a different set of priorities. So you can show the president as many videos as you want of things being blown up, but that does not fundamentally change the strategic equation. So looks like history repeating a little bit.
Shock and awe. Nick Wadhams, thank you. It's great to see you as always. Don't be a stranger. He helps to lead our national security coverage here in Washington, D.C. and getting us rolling here on a Wednesday. We thank Nick. Ed Ludlow, aforementioned from BTEC, is in the nation's capital, and he's going to join us next to talk about what these high energy prices mean for the data center, and a lot more ahead on Bloomberg.
It's 12:21 on Wall Street. I'm Amy Morris. Iran says it rejected a U.S. ceasefire proposal and maintained attacks on Israel and Gulf Arab states. That was a blow to Washington's efforts to end the war. Stocks rose, oil fell. We do check markets all day long at Bloomberg. The S&P 500 up 0.5%, NASDAQ up 0.75%, the Dow up 0.5%, the Russell 2000 index up right about 1%. The 10-year Treasury yield at 4.32%, the 2-year yield at 3.87%. Bitcoin is up about 1.2%, around $70,000. NYMEX crude oil down 2.2%, around $90 a barrel. Brent crude down 2.8%, around $101 per barrel. Meta Platforms reportedly laying off a few hundred people across the company. Sources tell the information that the cuts will affect staffers in Reality Labs, its social media teams, recruiting operations, and sales. Meta employs more than 78,000 people. Meta shares are less than 1% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew.
Okay, Amy, thanks so much. Amy Morris will have more on stocks coming up at the top of the hour, 1 p.m. Eastern Time, as we welcome our global television audience to the program. Kaylee Lyons will join us, too, as we keep rolling here on a Wednesday. It's great to see you. Thanks for being with us on the Wednesday edition of Balance of Power. We're live on Bloomberg Radio, streaming live on YouTube, of course, Bloomberg Originals, and on your satellite radio, channel 121. They've added a briefing to the schedule. If I hadn't mentioned this, Caroline Hyde will be holding forth in the briefing room, also at the top of the hour. We'll see how close to on time it is. Did I say... Caroline Levitt will be doing that. Did I say Caroline Hyde, James? That's I just saw her in the pantry. There's famous people all over here today because B-Tech is in town. I can't even think straight. It's not often I see Caroline Hyde in the flesh. She was on her way out. We managed to grab a hold of Ed Ludlow, though, to spend a little bit of time talking about some of the news that's been happening on the other side of town, the Hill and Valley Forum that B-Tech has been live from the last couple of days. Imagine Caroline Hyde at the podium in the briefing room. Now I want to see the AI video of that. There will be some tough questions to answer when it comes, of course, to the war in Iran and what's happening with the counter-proposal. There was a 15-point plan. The president talking about winding things down in Iran has rejected this whole idea. Also, a deal to fund DHS that we thought was pretty close to being sealed last night has fallen apart. We'll have more on that, too. We'll talk to our political panel about that. But let's get into where we are now, with an important conversation about the data center in a world where $100 a barrel oil appears to be our reality, and that could be for some time. He's the co-host of B-Tech, and he's with us now. Imagine Caroline at the podium. I think
it's not a job I'd want to do.
No, yeah. I also wouldn't want to, meet Caroline Hyde in a dark alley over policy, so we'll leave it there. You and I are incredibly lucky, by the way. You get to spend half of your program with Caroline Hyde. I have Kaylee Lyons with me every day here on Bloomberg, and I think we're doing pretty well for ourselves, don't you?
Yeah, I mean, it's not as if there is a lack of news to keep us in post.
Correct.
Right, and it's cool to be here in DC this week. There is, it sounds abstract. You talk about the intersection of technology and politics.
Mm-hmm.
That is a core tenet of this administration, right? If you
That's
think about
sure.
the people around the president and the direction that news flow's gone relating to AI or data center, there's a reason to be in town. Thanks for having me.
Gosh, absolutely. Yeah. So what happens when you sit down with Chase Lockmiller like you did yesterday, and you say, okay, Brent's at $100 a barrel. We were already talking about how you don't have enough energy to support this massive data center build out. Are we bumping into the ceiling because of what's happening in Iran?
Yeah, so something to understand with data center is that there isn't necessarily as much of a direct causal relationship between oil price and the energy usage of data center that you might think. You probably want to more closely track natural gas.
This is LNG.
Yeah.
Okay.
But generally speaking, the concern that people, and we had the congressman from Virginia on the program earlier, have is that there is generally an inflationary impact of the demand that comes from data centers for energy and how that impacts everyday Americans. Now, the industry itself argues the complete opposite. they're saying, well, we're spending all the money, and that modernizes grids in zip codes around this nation.
Yeah.
And while the evidence is that in those zip codes, electricity prices have gone up, they would argue that if they take on the capital burden, they buy wholesale electricity, it should benefit Americans in the long run. And that's kind of been the president's policy platform. Deregulate, expedite permitting, let the companies spend capex to build out that infrastructure.
And maybe put small reactors on site and start putting some power back into the grid, or
It's
is
to
the idea to
believe it
siphon
when
them
you
off
see
the
it.
grid? Okay,
It's to
fair
believe
enough.
it when you see it when it comes to SMRs and nuclear.
Yeah.
But again, it is part of the longer term strategy.
Interesting. So what is happening as this war unfolds on the technological side? We heard Palantir and Andrew and others, for instance, sign on to this Golden Dome system, but that's way down the road. The fact is, right now, Palantir and Anthropic are helping to lead this war effort in a way that might not have been possible a couple of years ago.
I mean, 10 days since this war started, it feels a little longer than that. But the first weekend that the mission was launched, if you want to put it that way, there was CBS reporting that Anthropic's technology had been used in the planning phase of America's entry into Iran. By entry, I mean its military operation, and that came at the same time that the Pentagon was trying to look elsewhere, and you've been over the red lines. The vast reality of this is I look at data sets of or unclassified missile spending. It's backward-looking data, but the reality is the vast majority of what has been used in the American assault in Iran and activity in the region, whether on offense or defense, is money that is spent and contracted with the legacy primes. None of that really goes to Iran or Ill. Now, on the software side, Palantir, of course, its technology is deployed in many different arms of the military. That is software used in planning, essentially. But that's where we're at. There isn't this sort of big, huge pivot by the Pentagon to spend money with the nimble startups that we have.
Understood. But the fact is, we are setting precedents and creating use cases that we might not have thought of just a short time ago. How much is AI shaping the day-to-day at the Pentagon?
Yeah, one thing I would say just on Anduril as an example, they have anti-drone technology. Drones are a core tenet of Iran's strategy in that region. And they have their technology at U.S. military bases throughout the Gulf. It's just there's no evidence that they've been engaged yet.
I see.
Or that actual technology has been used. How the Pentagon uses artificial intelligence. By artificial intelligence, we mean a very broad range of things, but is in targeting, essentially. And that is part of its planning phase. Then there are the red lines, which if you want to talk about them,
Of course. Well, and just the emergence of autonomous. This is something that we're obviously fighting and that this Pentagon can't seem to get enough of right now. Even manned aircraft will have autonomous components in the future platforms that we're talking about. But I want to get into this tech council that we've been reporting on with President Trump, because it gets back to the policymakers here. Zuckerberg, Andreessen, Wong. Where's this going?
Yeah. By the way, a presidential council on technology and science isn't new.
That's
I believe
for sure.
George Bush had one in 2001,
Absolutely
and
right.
one other name on that list is Michael Dell. Michael Dell is in President Trump's PCAST. He was also on President Bush's PCAST. So, it is a structure that's existed. Its focus is going to be artificial intelligence policy. And if I were to join the two stories we've just discussed, what being here this week has made crystal clear, and this is reporting based on dozens of conversations with executives, investors, and officials in this administration, is everyone believes there needs to be a codified set of rules, that the president needs actual policy, whether that goes through Congress or a different mechanism, because to date, this administration's artificial intelligence plan has been to deregulate, allow, again, the infrastructures to build. And the way that it's been framed to me is, it's not up to Anthropic how the Pentagon uses its technology. However, if they're going to have red lines, they would be easier to benchmark and set against if there were a list of rules that this country had at the federal level. And that doesn't exist yet. So the aim of this council is to inform artificial intelligence policy. And I guess it's consistent with what this president's done in the early part of this administration with those he's kept around him to advise him on such things.
Larry Ellison is on this board as well. You think about the council you referred to in the Bush administration, that was seen sort of as a blue ribbon panel, a photo op. These are all people President Trump has deep relationships with, calls them. Is this some sort of shadow cabinet?
And I'd also point out the panel is or the council is co-chaired by David Sachs, who to this point has been acting as the AI czar and crypto czar to advise the president on policy, and also Michael Kratsios, who leads OSTP. And OSTP is in and of itself a pretty important unit of government that the president seems to listen to. Yeah. One thing that we need to understand is all of these companies and the CEOs that are on this council, they want to export American technology. And so the political story here is there are different grades of China hawkishness, as an example. You know, everyone believes that America should export its technology, be that hardware or software. Whether they should or not to China, that's where there's differing opinions. And you know, in our reporting, that's been what's in front of the president. There are people around him who are from industry, and they want American technology out there. There are people who are from the world of politics, and they might be more true in their definition of China hawks and think, no way. And so that will be interesting to see how this council does influence policy.
Well, that's for sure. As the president gears up for a meeting with President Xi that was, I guess it was supposed to happen just a couple of weeks from now. Now that's been delayed. To what extent could we potentially hear coming out of a meeting like that, that Jensen Huang will have a budget line for China in that next earnings report?
You know, NVIDIA is a case study. What Jensen Huang said last week, felt like longer than that, at his company's own annual conference was that they have received licenses from the US government to ship their technology to various Chinese companies. They've received the orders from those companies. What they hinted at in the hallways of that conference was that there's also approval from China. But that's not how it works. The Chinese government doesn't write you a letter and saying, yeah, you know what, we're okay with this. Let's do business with you. It just goes through the companies. You know, if they are allowed to make orders, they make orders. And so I think that meeting, the president and President Xi, you know, it would be interesting if it comes up, because you remember, you and I talked about this prior to the last phone call meeting. And it never even came up.
How about that?
With NVIDIA at the heart of it is the kind of case study of two countries doing business with one another.
So we've got about a minute left, Ed Ludlow. I don't get to sit down with you too often. Where's the market on all of this? Are we just taking a year off? I mean, Jensen Huang could show up with billions of dollars in China sales and the stock would go down, it seems like. We're just spending so much time digesting what's happened in the last year or two. Where's the investor's mind on all of this?
I always go back to basics. NVIDIA is the world's most valuable company, but its stock performance so far in this calendar year is nowhere mirroring what it has done in prior years. And that's because there is no evidence of absolutely ongoing massive upside. The market right now is trying to digest a war in Iran that is directly impacting semiconductor supply chains. You're so focused on oil, quite rightly, but helium gas, sulfur, those are two core elements used in stabilization. And I love to go into technical details, but all you need to know is they are important 100%. In the fabrication process. And that's a lot of anxiety for that investor base to digest right now.
Really interesting. It's not just party balloons when we talk about the helium thing. You know who I'm talking to on Twitter. Ed Ludlow, the half of B-Tech who we could get on the program today. They're in Washington, at least for now. Are you back in San Francisco tomorrow? All right, we're looking forward to that. It's great to see you in person with us only here on Balance of Power.
12:40 on Wall Street. I'm Amy Morris, and this just crossing the Bloomberg Terminal semaphore reporting that JetBlue is exploring potential merger partners, looking into the viability of selling itself to a rival airline. Shares of JetBlue jumped on the news, now 10% higher. The Supreme Court threw out a copyright infringement verdict against Cox Communications. Justices saying that Cox can't be held liable for failing to shut down the accounts of people who repeatedly downloaded and distributed songs without permission. Crude imports from the Middle East edged lower in the week to March 20th. Inflows from Saudi Arabia fell by 24%. That was mostly offset by a jump in the amount of crude arriving from Iraq, which rose by 139%. Crude arriving in the past week left the Gulf in February. That was before the war in Iran. WTI near $90 a barrel. Brent crude now near $101 a barrel. We do check these markets for you all day long here at Bloomberg. The S&P 500 up 0.75%. NASDAQ up 1%. The Dow up at 0.8%. The Russell 2000 index up 1.3%. 10-year Treasury yield at 4.31%. The 2-year yield at 3.86%. Bitcoin little more than 2% higher, now topping $71,000. Walt Disney CEO Josh D'Amaro has seen $2 billion tech bets falter just days into his new job. A deal Disney struck with OpenAI dissolved. Disney's $1.5 billion investment in Epic Games also impacted. Bloomberg intelligence analyst Geetha Raghunathan.
This was kind of, I think, Disney's way of playing offense, defense with, the whole rise in AI and kind of, if you can't beat them, join them, kind of really joining the bandwagon and saying, yes, we have a stake here with AI. So this falling apart definitely kind of leaves Disney, definitely they were blindsided.
Geetha Raghunathan on Bloomberg Intelligence. Disney shares are 0.1% lower, touching a 10-month intraday low. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew.
All right, Amy, thank you so much. We'll have more on Wall Street with Amy coming up at the top of the hour, 1 p.m. Eastern Time, as we welcome our global television audience to the program, and presumably we'll have a briefing at the White House. At least that's the schedule. Caroline Leavitt, the press secretary, adding one stop on the schedule for a 1 p.m. briefing with a lot of questions to answer about the war with Iran and, of course, DHS. Just looking at the wait times at Reagan National Airport, it's not bad. You roll into Terminal 2 right now, James, you might want to get out of here. 8 to 11 minutes? That's good on a normal day. So what is it with this? No ICE agents here in D.C., and the lines are moving fine here in D.C.? Not the case around the country, of course, where we're just hearing stories about people waiting 4, 5, 8 hours, even if they, people are missing their flight because they're waiting in line, even though they showed up 4 hours early. And we've got ICE on the ground in 13 cities now, 13 airports around the country. The president says it is going really well. He just posted on Truth Social while Amy was talking. Here we go. I'm so proud of our ICE patriots, he writes. They were unfairly maligned by the lunatic Democrats for years. And now at the airports, he says, in addition to what they're supposed to be doing, they're helping people with bags, even picking up and cleaning areas. They are so proud to be there, exclamation point. He goes on to write more about the radical left Democrat politicians knowing that DHS is still closed. So imagine if you're a TSA agent, you drove Uber all night so you could pay groceries. You show back up at the airport this morning, not being paid, set to miss a second paycheck. But the ICE guys who are over there getting their picture taken by the news media are drawing paychecks. Good for morale. As another deal falls apart. Not the one in Iran. This is Capitol Hill. Remember this time yesterday, we were talking about optimism. Katie Britt worked the whole thing out. They were going to siphon off ICE funding, pay for the rest, and then come back around in reconciliation. Republicans would be able to get the Save America Act and fund ICE, and everybody goes home happy. Maybe not all the Democrats, because demasking still wasn't handled, judicial warrants still not addressed. But now the whole thing goes poof. Senate Democrats are demanding additional concessions, like demasking, before anybody gets to a deal. And Republicans don't want to split off ICE funding in many cases, certainly not Mike Johnson, the Speaker of the House, talked about this morning, knowing that all the negotiating is happening next door in the Senate. Wait till it gets to the House. Here he is.
It's one of the 12 appropriations bills in their annual appropriations packages, and we always have Homeland funded as an entire department. There's obvious reasons for that. It's very important. I don't think we need to be breaking it apart, and so I think that's what the president is reflecting there. He wants Congress to do its dang job. We have done it, the Republicans have, but the Democrats are refusing to go along on that, even though just several weeks ago, they were in favor of it.
Congress should do its dang job, says the Speaker, as we assemble our political panel. Bloomberg Politics contributor Rick Davis is back with us today, Republican strategist, partner at Stone Court Capital, and Archie Siddiqui is with us as well, Democratic strategist, former senior aide to House Speaker Nancy Pelosi, now at Bellwether Government Affairs. Great to see you both. Archie, I'll start with you as a Democrat. Are you encouraged that Chuck Schumer and others are demanding more concessions, or is this an opportunity lost?
Well, listen, the facts and circumstances have changed on the ground because you look at what's obviously, you mentioned what's happening in these TSA lines. You have ICE there on the ground as well, but just as easily, there's, as you well know, and we've discussed in the past, $75 billion was given to ICE before. Yeah. This administration has had no problem moving money around, but they could have easily created a bridge for these TSA workers to be paid, and they haven't. So I think in terms of the negotiations falling apart, the other fact and circumstance I think that really did change was the fact of this reconciliation effort to really kind of subvert this commitment to actually make changes on with ICE. So I think Democrats were put in a position where they had to actually make sure that they tried to leverage as much as possible in terms of getting these common sense reforms.
Really interesting how reconciliation can spoil the conversation, unlike rescissions. Two recent memories from Capitol Hill. Rick Davis, are you going to tell me that it's darkest before dawn? How are you feeling about this today?
You know, look, I mean, it won't be the first time the Senate's jammed the House. You heard what the Speaker basically give the standard House line. Hey, look at this. We've done this bill already. How many times in the last year have we heard him say that and then have to vote on the Senate bill? Look, the reality is the Senate has a different voting makeup, and they have different rules, and they play by a different set of rules of the game. And in this case, they're the only ones negotiating an outcome. If the Democrats say yes, I have no doubt that Johnson and enough Democrats will be able to get the votes to pass this out of the House. Because at the end of the day, I think what people are aligned on is they want to have reforms. They just got to decide on which ones. And they want to have funding for the balance of those duties that are not ICE within DHS. So you smell a deal in the air, but the clock's ticking. We got Easter recess coming up, and that's usually the best possible elixir for getting people to agree.
I was going to ask you that next, Rick. So that means you think they actually get a deal in the Senate before they go away on recess?
I can't imagine a scenario where these guys will go home and have to face their voters with the kinds of lines that you've been describing at these airports. Although I must admit, I was in Atlanta yesterday, and I walked up, and there was no line. I walked straight into TSA. I walked straight into the security, and it was the fastest I've been through an airport in my lifetime.
Amazing. Well, it's good to hear, Rick. Did you see ICE agents while you were there? They're in Atlanta, right?
Sure did. Saw ICE agents mostly just patrolling around. They weren't picking up trash or helping with baggage that I saw, but they could have been. Look, this is the best PR campaign I've seen of this administration, trying to rehabilitate the ICE image by having them there being helpful.
There's a lot to be said for that, right, Archie? What do you make of this? I mean, he's talking about, this is like what they're walking old ladies across the street. The president says here they're helping people with their bags. They're even picking up and cleaning areas. They're not wearing masks. Will Americans have a different idea or a different feeling about ICE by the time this is done?
I think the challenge here is that where I started in terms of being above the law and not following any of these like judicial warrants, masking, body cams. I think that there was a lot of PR work to be done, and I think Americans are a lot smarter than falling for this whole notion. Now, at the same time, also it's really important to note that these reforms aren't an attack on ICE. They're an effort to make sure that everybody follows the rules, and it creates greater confidence in the system. So I think from that perspective, I think a lot of these ICE agents are trying to do the right thing, but we have to have some sort of uniformity, and they can't be above the law.
Tim Kaine, of course, Democrat from Virginia. Until we get the reforms we want in ICE, We do not want to vote for ICE funding, knowing they already pre-funded it, referring to the big, beautiful bill. Will he still be talking like that when it's time to go on recess?
Yeah, I think we cannot overestimate the impact of this reconciliation effort by Republicans. Not only do they want to do kind of get out of this ICE funding reform issue, but they also, the Save America Act, where they've taken this one issue of voter ID, super hypercharged it, but also added a bunch of other issues to this where it will make it much harder for Americans to vote.
Interesting. What do you think about reconciliation spoiling the water here? Rick, is that what changed Democrats' minds on this in the last 24 hours? We seem to be feeling a lot more optimistic yesterday.
Yeah, it could. I mean, there's a lot of pressure, as Archie says, about like what would be in that package. And don't forget, the administration is still looking for $200 billion for defense spending, which is really going to cause a lot of wrinkles, even with some Republicans. So, I mean, you could have another massive reconciliation bill headed this way, all off of a deal getting cut on funding for the DHS non-ICE agencies. So this is a high stakes game, and the results of what seems to be a simple vote on reopening DHS could result in a avalanche of spending by this administration. And at some point, the issue with voters is going to be the deficit, and this administration is poorly equipped to answer those questions.
At some point, God knows it. And of course, Democrats feel emboldened as well by what took place in Florida yesterday. We talked a little bit about the special election, the so-called Mar-a-Lago seat. And indeed, Florida State House, District 87 turns blue. Democratic candidate Emily Gregory projected to win here over John Maples in the special, more than 51% of the vote. This is a district that voted for Donald Trump by 11 points in 2024, Archie. But again, this is State House in Florida. And it's Palm Beach. Are we reading into this a little much?
Listen, when we were talking about these types of overperformance issues and examples a couple of months ago, I was a little bit tentative. But now
it's one after the other.
It's one after the other. This is a running trend, and we're talking about 15, 16 percentage points on average of overperformance. So I think there is something that's building towards the midterm elections, but we still obviously have a long ways to go.
DNC Chair Ken Martin, Rick, says if Democrats can win in Trump's own backyard, we can win anywhere. What do you think?
Yeah, no, I'd echo Archie's view. Democrats have averaged, since Donald Trump was elected, winning by an average of 12% over what Kamala Harris got in these districts, in the special elections and in the congressionals. So if you believe that is a continuation of where we're going to be headed into the midterm, then you're talking about a pretty sizable Republican loss in the House of Representatives, and at least making a bunch of these Senate seats very competitive. So the only thing I think the Democrats really are lacking right now to enter this is a decent competitive financial advantage. They are way behind on fundraising, and I can't imagine with the wind at their back why they're having such a hard time.
Well, tonight, President Trump will be the speaker at the NRCC March dinner, expected to bring in tens of millions of dollars to that end. Tom Emmer raised over $3.5 million for the dinner, including a transfer from his own campaign account. How worried are you about the money?
The money is a real issue, and I think dark money even more so. So I think, and so from that perspective, I think Democrats are very focused. I think some of the numbers are a little misleading. When you look at DNC, we're not in a presidential cycle, but at the same time, the money is always an issue. But candidates matter, and I think what we're seeing is that there's real energy on the ground. So campaigns that really have a strong ground game, a strong local approach, and a really focused message, I think can do well. But Democrats really have always been at a disadvantage, and I think I think Rick is right. That's a real concern.
I find it interesting that this race we're talking about, the special in Florida, President Trump, Melania Trump, and Barron Trump all voted by mail-in ballot. Archie, I thought, well, the president says that's called mail-in cheating.
Yes, well, as we know, the president can be very fluid in how he approaches these things. So, and I think mail-in voting, when you look at voters across the country, there is a lot of support for that as well. And the need here needs to be about making voting easier, but at the same time, actually ensuring that there's confidence in the system. And I think that's the biggest problem that we're facing right now, is that there are the president continues to kind of throw sand in the air in terms of diluting that confidence.
Interesting. Archie Siddiqui and Rick Davis, our great panel today. We'll be back in our second hour with a lot more. We'll get into geopolitics and talk about the latest from Iran. Kaylee Lyons is on her way in, and as we always say, our global television audience will welcome to the conversation as well. We'll update the markets too. Things have been going pretty well so far, despite all the news we've been talking about. We've got an S&P 500 up 50 points at the lunch hour on the East Coast. This is Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lyons.
Iran says no to a ceasefire. Welcome to the Wednesday edition as Tehran rejects President Trump's 15-point peace proposal, offering now its own conditions to stop the war. As strikes continue from both sides. I'm Joe Matthew alongside Kaylee Lyons in Washington. And Kaylee, markets seem to be fairly optimistic about things right now, despite the headlines today.
Yeah, these may be financial markets that aren't quite sure what to believe as the narrative does seem to change. basically every time you go to check the latest, Joe. Yes, the U.S. has put forward this 15-point peace plan. It seems Iran is not at this time looking to accept that. As you say, they're making their own demands, including potentially recognition over its authority over the Strait of Hormuz.
Yeah.
Effectively, you could argue Iran still wants to be able to keep the global economy, global shipping in somewhat of a chokehold.
Oil prices don't seem terribly bothered by that today. They also want the U.S. to close all bases in the Gulf, which I don't think is going to be happening anytime soon. So nothing has really changed in the trajectory of this war, aside from some back channeling and optimism over talks. But the fact is, oil prices are lower, and it's given stocks a lift.
Yeah, and of course, that is the kind of thing that arguably President Trump would like to see, is the markets not feeling as much pain on the equity side, or, of course, prices at the pump. Perhaps for now, at least, not going to tick any higher today, though we can't guarantee that either. That's going to be up to refining margins and those kind of decisions. But obviously, this is something that the president has to consider, is these market forces and the market's belief about the prosecution of this war continuing.
Yeah. We'll bring you up to date on the very latest from the Middle East here. There's a bit of traffic controlling going on the Strait, which is also giving some folks in the oil markets a bit of a reason to feel optimistic. We'll talk about it with Adam Farrer from Bloomberg Economics, and we'll be spending some time with Congressman Marlin Stutzman to get a Republican member's point of view on this, and also talk about the shutdown of DHS, which may have just gotten longer. There was hopes for a deal yesterday, not so much today, Kaylee.
Yeah, deal or no deal, it seems right now no deal is where we are, but that always could change as well. So we'll keep you up to date on that this hour, but of course we also keep you up to date on financial markets, and for a check on those, we turn to Amy Morris here in Washington. Hey, Amy.
All right, thank you, Kaylee. Semaphore reporting JetBlue is exploring potential merger partners, looking into the viability of selling itself to a rival airline. Shares of JetBlue jumped on the news, now 12% higher. A big drop in U.S. crude exports this week. Shipments fell over 1.6 million barrels a day to just over 3 million barrels daily. That's the lowest level since November 2025. Imports also fell, so it was a slow week for the U.S. oil trade. WTI right now around $90 per barrel. Brent crude topping $101 per barrel. And, of course, we check markets for you all day long here at Bloomberg. S&P 500 up 0.75%. NASDAQ up 1%. The Dow up 0.8%. Russell 2000 index up 1.4%. The 10-year Treasury yield at 4.32%. The 2-year yield at 3.87%. Gold extending gains after snapping a 9-day losing streak. Traders weighing the likelihood of a ceasefire talk with Iran. Spot gold up 1.8%. Now, the cost of imports into the U.S. jumped in February by the most in nearly 4 years, reflecting a broad pickup in prices even before the war in the Middle East. Labor Department figures show import prices increased 1.3% from the month before, boosted in part by higher prices for petroleum and natural gas. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go to Balance of Power now with Joe Matthew and Kaylee Lines.
All right, Amy Morris checking on the markets for us. Thank you so much. Meantime, Joe and I, of course, are tracking the developments when it comes to the war with Iran, which is still continuing on day 26. Israel and the U.S. continuing to strike targets in and around Iran. Iran continuing its retaliatory strikes really all throughout the Gulf, despite the fact that the president is pushing for a deal, says Iran wants the same, that there may be a diplomatic off-ramp that is being pursued here by the U.S. at least, though Iran right now is rejecting the U.S.'s 15-point plan that it initially put forward. And of course, the president still maintains that even as he looks for a deal to end this war, the war itself is already won. This is what he said yesterday.
We've won this. This war has been won. They have no Navy left. They have no Air Force left. They have no anti-aircraft equipment left, no radar left, no leaders left. The leaders are all gone. Nobody knows who to talk to. But we're actually talking to the right people, and they want to make a deal so badly.
That has been challenged by the rhetoric that we've been hearing from Iran, pushing back on the 15-point plan, and in fact suggesting conditions of its own, including the closure of all American bases in the Gulf, the payment of reparations for missile attacks against Iran, and the lifting of all existing sanctions. It does not sound like we're getting closer to a deal, but that's why we have Adam Farrer to talk to, a true expert here, Bloomberg Economics senior geoeconomics analyst. Adam, it's great to see you back. The last 24 hours have been very confusing for a lot of people. Should the markets be optimistic the way they appear to be feeling today?
So it certainly seems that the markets are moving on the vibes of the president and the president alone, notwithstanding the fact that it is probably unfair to judge exclusively on how the Iranians are responding publicly to these conversations.
Tell us why.
Because the reality is the Iranians have a lot of constituencies they have to handle, and particularly with a hardline leadership that is taking control, they have to be very careful as to how they articulate the next steps in this conflict. On one hand, we're absolutely right, and this narrative we've talked about here at Bloomberg a lot is that the Iranians feel more empowered now than they have at any point during the war. They feel like the pressure is building on the United States, not on them. They're still taking a lot of hits, but that the energy consequences of the Strait of Hormuz remaining closed will hurt the United States and our partners globally more than Iran. That said, they are taking a lot of hits, right? Iran is getting battered by an ongoing air campaign that has not let up, as you said in the intro. And so there are reasons for them to want to bring this to a close on their own timeline. And even though they, over the last 48 hours, we had them saying, we're not talking, we're not even engaging, there are now indications that someone's talking, right? And it does look like there was some element of showing they were talking to the right people with the administration by allowing one vessel through the Strait of Hormuz yesterday. Again, trying to start this conversation. But the proof will be if substantive conversations really move forward in this conversation now about maybe J.D. Vance leading a U.S. delegation to Pakistan, I guess.
Yeah, the president suggesting Vance, Witkoff, Kushner, Rubio, they will all be involved in these conversations if the conversations, ultimately direct ones, even happen. I also wonder, Adam, about the increased buildup in assets we are seeing once again while this diplomatic path apparently is being pursued. This is what happened before the initial strikes. We saw an amassing of forces in the Middle East. The second aircraft strike group, carrier strike group, was on the way as they were talking in Geneva. Now you have thousands more troops headed to the region as they're supposedly looking at talking or at least pushing for talks. Why would Iran buy that a second time?
So I think there's no doubt that they view it the way you just described. And the reality is that the war has not stopped, as we've said, and that the United States now has the better part of 8,000 plus ground troops that are moving into the region with the announcement of elements of the 82nd Airborne that could be arriving in the coming days and weeks. But the question here that is a little different is that the risks of implementing a ground invasion are so much higher, both militarily and politically, for the administration, that it probably is in a different category than what we saw with the buildup of aviation assets and naval assets in the lead up to the initial engagement. That doesn't mean it's off the table, right? I think the president is willing to escalate to theoretically force the Iranians to de-escalate. But the choice there is much more stark than dropping bombs from afar.
Interesting. We've set ourselves up then for, I guess, a pretty important deadline after the closing bell on Friday. Should the market be holding its breath at that point?
Well, certainly not sure if the 5 days or the deadline we really need to be looking at. Within that timeline, we do get, theoretically, the arrival of that first Marine contingent from Japan. But the remainder of that force, both the 82nd Airborne and the other Marines, won't arrive for a much longer period of time, maybe several weeks. So it's certainly possible the administration could take some sort of limited ground incursion, as we said, in Kharg Island or another part of the Gulf. But in and of itself, I'm not sure the 5 days is make or break. I think more importantly, the president will probably be hoping that it moves away from a conversation of the United States bombing energy infrastructure, which he seems to have decided not to do.
At least for now. Adam Farrer, thank you so much for joining us. Bloomberg Economics Senior Geoeconomics Analyst here with us in our Washington, D.C. studio. But we go now to Capitol Hill, where we're joined by Republican Congressman Marlin Stutzman of Indiana's 3rd District. Welcome back to Bloomberg TV and Radio, Congressman. Appreciate you joining us, and I'm sure you heard part of our conversation there with Adam. Despite the president's pursuit of a deal, this war is still ongoing, and that means that we are still spending money in the Middle East, which raises the specter once again of a potential supplemental funding request. I know that has not yet been received, but considering you sit on the Budget Committee, I'm wondering if it is your expectation, your base case, that it will just be a simple supplemental, or ultimately if this is going to be folded into a wider budget reconciliation process.
Yeah, Kaylee, great to be with you, and Joe, thanks for having me. But yeah, great question. As we've been talking here on the Hill, it looks like the number is going to be around that $200 billion number, and there's the ability to offset that. More than likely, it probably is done through a reconciliation package. That's what I'm pushing for. That's what I'm working with colleagues on the Budget Committee to do. That would require only 51 votes. in the Senate under a reconciliation process. That way we don't have to worry about what we're seeing right now with DHS not being funded because of the filibuster rule. But this is, obviously a critical moment as assessments are being done. Of course, the work that our men and women did through the air and from our ships in the region did a remarkable job. And but knowing now what's happening next with a transition and who is going to transition to does make a big difference to all of us. And so we're really watching and waiting to see how President Trump and his team handle the negotiations going forward.
What are you hearing from voters in your state, Congressman? I'm looking at AAA here, $3.98 a gallon nationally. You're above $4 on average in the state of Indiana. How many weeks can people take of this?
Yeah, I mean, it obviously affects people immediately. I mean, we all kind of gauge our economic attitude by the gas pump. My boys are calling me up and saying, Dad, gas is, up because of this. But I think, as I explain to people, and most people understand the threat that Iran has been for 4 decades, that this is hopefully the beginning of the end of their proxies in the Middle East and the disruptions that they cause. Of course, their ability, they have a lot of money. I mean, the oil and gas that comes out of Iran is substantial. I mean, this regime has their hands on, billions and billions of dollars that they can sustain this for some time. But I think that, as I was talking to a friend whose family is still in Iran, she said that, many of the people that are there are hesitant to go out in the streets because of what they saw a couple of months ago with the protests, where the IRGC just simply went out and killed, anywhere between 30 and 50,000 people. So they're really hopeful that somebody comes in with some sort of ability to defend them and themselves to take out the IRGC and the regime that's there. So there's obviously still a lot of hope on both sides that the IRGC's days are numbered, and that the Ayatollah, of course, the senior Ayatollah is dead, but who's in charge now still remains to be seen.
Well, as your boys call you about gas prices, I also wonder what you're hearing, Congressman, from other constituents, like those that may be in the agricultural sector, as we consider also fertilizer, the wider economic impacts of how high diesel prices specifically are when we think about goods being moved throughout the country. Whose voices on that are the loudest right now?
Yeah, well, agriculture, I mean, it has been difficult for several years now, and this does cause, of course, disruption. Most fertilizers would have been pre-purchased, or they would have had those prices locked in. Diesel prices, some may not, depending on their financial situation. But, a lot of the larger operations would have a lot of that already placed for pricing. But it does have an effect. There's no doubt about it. And that's why, I know President Trump is very aware of that. We have, of course, shared our concerns about a long-term conflict that would cause prices to stay up. But I think that at the same time, and the ag community has been so supportive of President Trump, but this does cause issues, especially coming off of a couple of tough years. So I know that President Trump is aware. He's already is having conversations with China. They're obviously the biggest beneficiary of the oil and gas that comes out of that particular region, along with other countries. His conversations with India are really critically important. And so I think, a month from now, a lot is going to change, as you stated earlier, that the markets seem to be reacting more positively. And I think that's just simply the instability is starting to move out of the market, and some sort of end is hopefully in sight. Obviously, if things change, the markets will go the other direction quickly.
And they will tell us loudly, I'm sure, Congressman. I have to ask you about the Department of Homeland Security. I believe we are now on day 39 of the DHS shutdown, and there was a lot of optimism yesterday about a deal. That seems to have come crashing down with Senate Democrats saying that they just haven't seen the reforms at ICE that they need to see to vote yes. This idea of siphoning off ICE funding is apparently not going to be happening, and funding the rest of DHS. We talked to your colleague from Massachusetts, the Democrat, Jake Auchincloss, about the offers that have been on the table. Gave us a sense of how far apart everyone is, Congressman. Here's what he said.
It is totally unacceptable for our TSA agents to be working unpaid, and Democrats are ready to fund TSA today. Number two, the claim from the Senate Majority Leader that somehow ICE is unfunded just is not true. Last year, they put through on a party line vote $75 billion of funding for ICE over 4 years. Finally, the impediment is absolutely not Democrats' willingness to look at this deal. The impediment is that the president said that he's only willing to look at a deal if it's paired with the SAVE Act, which is a voter suppression measure.
I realize that SAVE Act might be moving to reconciliation, but so too might ICE funding. Congressman, would you support, knowing that ICE is funding the rest of DHS and getting TSA workers paid?
Absolutely, and I think that, you know, there's obviously the debate with the Save America Act in the Senate right now, but that does not have to be paired with funding DHS. The House of Representatives, Republican-controlled and led by Speaker Mike Johnson, we send over funding for DHS alone, separate from the Save America Act. So these two could be handled separately. By conflating the conversation, it's what's confusing to people. And so I think that we have to be, you know, straight up with the American people, that these can be handled separately. And, you know, we're already starting to see that the president had some success by using ICE agents out at the airports that helped get those lines through. And my suspicion is that he'll continue to do so. He's just not going to bend on some of the reforms, or the so-called reforms that the Democrats want the ICE agents to be held by. And I think that the Democrats, the sooner we get just an agreement made on funding DHS, then we can go back and continue to talk about the way ICE is behaving much better and much differently than what it was about 3 months ago. So I would hope that they would realize that the administration made some really critical changes to be sure that we didn't see more problems like we saw up in Minnesota.
And finally, Congressman, as the president, of course, initially wanted the Save America Act included in this push, now there's talk of getting some of those components into future budget reconciliation. I know you're not the Senate parliamentarian, but how do you make that budgetary? What could that actually look like?
Well, with the Save America Act, you have the policy language, but then there would also be funding pieces that would go along with that. And so, you know, I'm hopeful there's some smart attorneys over on the Senate side working for Senate Republicans that would put those pieces together. And that's oftentimes what happens, is that there's maybe enforcement dollars that is assigned to a particular policy. Maybe the policy language isn't clear, but the money would follow those particular actions if the states decided to do so. So I think there's a way to do, you know, at least the funding portion. If the parliamentarian didn't like the policy language, I think we can still get there. But, you know, the Senate, again, you know, moving around the filibuster rule could pass the Save America Act as it stands by itself, as well as the DHS funding. So that's something that Senate leadership needs to realize, that that's how they're going to have to get some of these things done.
Well, interesting. Speaking to us from his perch on the Financial Services and Budget Committees in the House of Representatives, Congressman Marlin Stutzman, Republican from Indiana's 3rd. We thank you for the insights. We'll assemble our panel for their take on all of this. This is Balance of Power, live from Washington on Bloomberg TV and radio.
It's 1:21 on Wall Street. I'm Amy Morris. Merck will buy Terns Pharmaceuticals for $6.7 billion, giving the company access to a promising new leukemia treatment. The acquisition is expected to close in the second quarter. The deal is part of Merck's efforts to find growth drivers as it prepares for generic competition and lower prices for its blockbuster cancer therapy, Keytruda. Shares of Merck now about 3% higher. Stocks and bonds rose, oil fell, traders trying to gauge the viability of U.S.-Iran ceasefire talks. WTI near $91 per barrel. Brent crude now near $102 per barrel. We do check markets for you all day long here at Bloomberg. The S&P 500 up 0.7%. NASDAQ up 0.9%. The Dow up 0.7%. The Russell 2000 index up 1.2%. The 10-year Treasury yield at 4.32%. The 2-year yield at 3.87%. Walt Disney CEO Josh D'Amaro has seen $2 billion technology bets falter, one of them unraveling entirely just days into his new job. A deal Disney struck with OpenAI has dissolved, ending a 3-year partnership that included a $1 billion investment to populate short-form AI-generated videos with Disney characters. Disney's $1.5 billion investment in Epic Games also impacted, Epic announcing it was laying off 1,000 employees after new versions of its hit video game Fortnite failed to connect with fans. Disney shares now about 0.3% lower. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Balance of Power with Joe Matthew and Kaylee Lines.
All right, Amy Morris, thank you so much. Checking on the markets for us. And we do have some breaking news that just crossed the terminal. Both Meta and Google have been found liable in a social media addiction case, which, of course, has been ongoing for several weeks now, Joe. The idea being, of course, that these platforms intentionally addict users to them in order to keep them on. And they have been found liable. I guess the question is now going to become what kind of penalty, civil penalty, these companies may have to pay up for now that this liability has again been found for both Meta and for Google.
Yeah, interesting to see the muted, well, there's no stock reaction. They're both holding positive. In fact, Meta continues to rise. It's up 1%, almost $6 since we got the headline there. Google, I guess not so much. We're just turning red here, Kaylee, but it's down a penny. So investors clearly weren't too concerned about this one.
Well, and investors, frankly, don't seem concerned today by a lot of things, including an ongoing war with Iran, which is now in day 26. No end is in sight, even as the U.S. is trying to make a push toward negotiating, having delivered a 15-point plan, which Iran has rejected, making demands of its own. All the same, equity markets are in the green today, and oil prices are lower.
Yeah, seeing oil prices drop seems to be kind of the underpinning here of seeing interest rates come back a little bit as well, with news that Iran is allowing some, I guess, quote unquote, friendly vessels through, as they've been calling this. They actually have developed some sort of controlling mechanism to get an isolated number of ships through the Strait of Hormuz. That does not include those with Western interests, but just seeing that movement in the global market seems to be making the energy market feel a bit better when you combine that with a 15-point plan, realizing it's been rejected at first, Kaylee. At least I guess they see some path to progress here, and it's what we want to get into with our political panel. Joining us today, Bloomberg Politics contributor and Republican strategist Rick Davis. He's our partner at Stone Court Capital, and Democratic strategist Arshi Siddiqui, Bellwether Government Affairs. It's great to see you both. Rick, do you share the optimism of the markets here? There's a lot of noise right now, and of course, what Iran is saying publicly, as Adam Farrer reminded us, is not likely what is being said to the White House. What should we be focused on?
Yeah, look, I mean, I think the number one thing is off-ramp, right? This administration is clearly looking for an off-ramp from the current status of the war. And that means that this could lead to a process, and a process could lead to a ceasefire or even a cessation of hostilities. And that would all be good for the markets, I would think. And even this move by Iran to show some willingness to take the pressure off of oil shipments out of the Gulf of Hormuz, probably mostly benefiting China. But the reality is it's a move in the right direction to loosen up the control, open up the strait, and allow some traffic, means a step in the right direction. And even though there's a lot of confusion out there about who's talking to who, the Pakistanis, the Egyptians, you know, Steve Witkoff, Jared Kushner, which Iranian official are they talking to, who's still alive today, I think it all portends a change in this war. I would say the wild card is whether or not we see the president and Bibi Netanyahu basically escalate to de-escalate. The president calling up ground troops into the region, that's an escalatory event. Bibi Netanyahu telling his military, we got 2 days, let's destroy everything we can get our hands on. That's escalatory. So right now, you don't see a lull in the war fighting, but you clearly see a strategy developing amongst Israel and the U.S.
Well, on the notion of ground troops, Archie, what would that optically, the perception around this war, how would that change things ultimately if we suddenly are seeing images of paratroopers or literal boots on the ground on Iranian soil?
The challenge for Democrats is that even though there was clearly no contingency planning, there was no consultation with our allies, no consultation with Congress, is that they are also in the same boat in terms of wanting to maximize outcomes. So, and the stakes just keep on getting higher. I mean, as Rick was talking, I mean, this war has taken on a life of its own. So when you get to the billions of dollars being spent and now American lives at stake, I think this goes on hyperdrive, and the challenge is there a clear off-ramp? And any deal or negotiation, that needs to be based on facts, not on any sort of face-saving exercise.
Rick, a lot of folks have wondered if the president would bring ground troops into theater if he didn't plan to use them. And the idea of seizing Carg Island, for instance, as leverage to open the strait is something that he has apparently been considering, and something he could do as soon as this weekend when that original batch of Marines arrive from Japan. Is that what you see playing out here, the diplomacy backed by a show of military force?
I think that's the key thing, Joe. It's you're only credible in your threats to invade if you have an invasion force. And the president's threats about a bombing campaign in Iran were backed up by a massive armada and shift of weaponry, jets and other things into the region. So if he wanted to use them, they were there. And I'd say the same goes for the boots on the ground. I got to believe it's the last option. It's not a good negotiating strategy. You put boots on the ground, you're going to have body bags coming back. President is highly sensitive to public reaction to this. There's not a lot of public support for this war as it is now. You start seeing body bags come through Dover in a scale that we haven't seen. You're going to see a deterioration of that public support, what's left of it. So it is something I think the president considers. And I think as a negotiating tactic, you're only as good as the bargaining chips you have on the table. And right now, if he wants to claim that he's going to go in and get, Carg Island or secure the uranium, then he's got to have the troops to do it. And I think that if anything is an important mobilization strategy.
It's a fair point, and obviously none of us want to see more American casualties. Archie, if there is a diplomatic off-ramp to avoid that, I also want to talk about the kind of cast of characters that is going to be pursuing it, because it is, yes, the envoys Steve Witkoff and Jared Kushner, who seem to be involved in any kind of negotiation. We have also the Secretary of State Marco Rubio and Vice President J.D. Vance, who we understand is one of the more skeptical voices around this, even though he is supporting what the president is pursuing here. Historically, he has been very against the U.S. getting more involved in the Middle East. I wonder what you make of him having now potentially an outsized role in the way that this moves forward, Archie.
Well, it's particularly interesting because he's been a bit MIA recently, right? I mean, we haven't seen a lot of him since this started, and the president also made some comments about who was his clear successor, which I think suddenly the vice president actually did reappear and reemerge. But it does show the complexity of this debate within the Republican Party in terms of what this means. So I think we'll see, but this is very fluid, as you well know, and it's not clear who's quite negotiating, and there's a lot of different layers to this in terms of who will be out front and who will be, but ultimately it all goes back to Trump.
Well, if that's the case, President Trump has a lot more to be messaging here when it comes to the future of this conflict, Rick. Caroline Leavitt decided to add a news briefing. That hasn't started, has it yet, James? We're still waiting for the White House briefing to begin. How important is it for the White House to start taking questions from the media in parsing some of the words that the president has brought? We've heard everything from this operation is winding down to we've already won it to there will be no ceasefire in just the space of a couple of days.
Yeah, it's a little bit head spinning, but it is standard Donald Trump confusion strategy. I don't think it's accidental. I think he throws out a lot of different issues, keeps the press chasing them, and at the same time confuses his enemies in Tehran. So this is a classic Trump move. I don't think anybody in the administration wants to get out there and have to reflect these things, because any given minute he's going to reverse his own messaging around this. So kudos to Caroline Levin to being willing to go out and face the press. That being said, it's a pretty tame press corps at this point, in the sense that you can't get ahead of this news cycle. Things are happening so rapidly this week. You think about it. I mean, the massive bombing campaigns, the movement of troops, the negotiations in foreign countries, you know, with an unknown set of leaders in Iran. It's enough to keep your head spinning. And so the fact that the White House wants to start to frame some of this in the most positive fashion shouldn't surprise anybody.
Well, I guess to Rick's point, with all that noise out there, Archie, I do wonder, while we are looking at every single headline and tracking developments as they come, for the American electorate, if they just are aware that a war is still ongoing at this point and their prices at the pump or higher, and that is basically the gist of it.
No, I think that juxtaposition is very stark. And when you look at it, Iran has taken over the entire news coverage, and in daily lives, Americans are dealing. And I think that's why we've seen some of these special elections go this way, because you look at the economic challenges, and this administration, their economic policies have made things worse, not better. Whether you look at tariffs, whether you look at now this war and gas prices, whether you look at the subsidies on the Affordable Care Act, those not being, the enhanced subsidies not being extended. So all of these things are working together to make things more challenging for American families, not better.
All right, Archie Siddiqui and Rick Davis, our political panel today. Thank you so much. And as we consider how Americans may be tracking the news when it comes to the war in Iran, of course, frequently they're not going to be tuning into an entire White House press briefing, but they may be getting their news off of social media, where the vast majority of Americans spend a lot of time. And we did have some breaking news in that realm earlier, as the red headline crossed the Bloomberg terminal, that Meta and Google were both found liable in a social media addiction case. It's a first of its kind lawsuit, essentially aiming to hold them responsible for harm to children who have used their services. We want to get more on this now as we turn to June Grosso, the host of Bloomberg Law. So June, walk us through what exactly the plaintiff was arguing here, and what consequence these companies may face now that they've been found liable.
Well, the consequences could be vast, because this is just one lawsuit among thousands of lawsuits that aim to hold Meta and Google liable for what's called social media addiction, and to the damages to teenagers who they say they were addicted to the social media platform. So this is sort of a test case, the first one to go to trial. And so the result will be devastating for Meta if it's upheld, I think. However, there are appeals coming, and the jury, it's unusual, the jury was out 9 days. And a few days ago, they told the judge that they were deadlocked as far as one defendant. And of course, they don't mention which defendant, the judge knows, but we don't know. And so then the judge said to go back and deliberate, otherwise there would have to be another trial for that defendant. And then the jury came back with this decision. So it's sort of surprising. And also, I mean, there was a lot of headwinds against the plaintiff in this case, because you know, she was a teenage girl, and there are so many, you know, think about mental health. There are so many different causes for why you may be depressed, and in the trial, Meta and Google tried to bring out some of the other factors in her series of depressions, and some, for example, her relationship with her father. So I find it surprising that the jury was able to put the full blame on Meta in this case, and Google, for something that's so hard for, I mean, any adult who's gone to a psychiatrist knows how hard it is to diagnose what you're suffering from. So, you know, I think it's a surprising verdict.
Really interesting, June. There were more than Meta and Google to start here. TikTok and Snap settled before this trial began over a month ago. To what extent did that affect the outcomes for Meta and Google?
I don't think it really affected the outcomes for Meta and Google, although it just showed what those companies thought of the case. And I just want to bring out that the plaintiff's lawyer here, Mark Lanier, is one of the country's top plaintiffs' lawyers. I mean, he has performed what I would consider some close to miracles in some of these cases. And, you know, he is just dynamic, and his presence in the courtroom, I think, probably aided the jury a lot in their decision. But I mean, they're out 9 days, 40 hours. I mean, that's a lot of deliberations. And, you know, it's fascinating to see how they finally came to this decision. It'd be so interesting if we get to talk to them, if some of them come out and decide to talk about how they, you know, how they wrestled through all this testimony and what the effect of Mark Zuckerberg's testimony was. You know, we know that he has said himself he's not good on the stand. So how much did that weigh in? There's so much going on in this case that we, you know, have to look back on once we hear what the final numbers are.
Well, and when we consider this case as well, we understand the jurors were told not to take into account the actual content of what the plaintiff was seeing on the platforms due to Section 230, which shields these companies from being responsible for content specifically. So is this more about their algorithms? Like, what exactly? I just wonder what how narrow this finding actually is.
So it's hard to tell because you never know what a jury does in the jury room until they come out and tell you what they did. So you don't know what they actually considered. And, you know, there's that old phrase that, you know, you can't unring a bell. So once they hear something, are they really able in their minds to, they may in the deliberations not talk about it, but are they really able to separate that out, what they've been hearing over weeks and weeks of testimony? So it's hard to know. But I think that, you know, when there's a liability, it probably does center a lot on the algorithm and the contentions that it was deliberately made by Facebook in order to addict young people. So, I mean, I think a lot of it has to be based on that, and perhaps more than even on the, you know, individual circumstances in this case. So what she was looking at and things like that. So, I mean, it'll be interesting to find out what the jury actually, if we get to talk to them. You know, it may take a little while for them to decide to talk, but how they actually came to this decision.
Yeah. June, there's been a lot of comparing to cases against big tobacco or the opioid makers, and I don't know if this is going to end with a Surgeon General warning on the front of Facebook, but did this case prove that social media is addictive for kids?
I don't know that it proved it. It proved that in this one case with this one jury and this one plaintiff that they found it addictive. But I'm not sure that, you know, you can make a broad generalization from this case, because we've seen, for example, in tobacco cases, in the cases over talc causing cancer, that different juries come out with wildly different decisions. So, you know, I wouldn't base it all on one jury verdict, but what it does do is it gives the plaintiff's lawyers in these cases, you know, a lot of ammunition to try to then settle the cases rather than bringing them to trial. And as I said, this is a bellwether case, so it's the first one to go to trial. And with a win, the plaintiffs have that and their ability to negotiate now with the companies about this. And also you have, I think, the companies, if there is another, you know, when there is another trial, let's say, they know perhaps more about what they did wrong, what they did right, and how to tailor their argument better so that they might do better in a second trial as well. You know, so there's a lot to consider on both sides, and it's just hard to put too much. For me, I don't think I would put as much in this one case. I think you have to do a few more cases to see how it really goes.
Sure. June Grosso, parachuting in on the latest breaking news, the host of Bloomberg Law. We're going to be looking forward to the next edition here. It's going to be an important one. June, great to see you. Thank you for the analysis. This has been not a stock mover, at least not for the worst that you might think. In fact, we're looking at shares of Alphabet right now holding positive, and shares of Meta, Kaylee, up over 1%.
Yeah. Well, maybe that's more due to the fact that the damages in this case seem to be relatively small for companies of this size. The jurors decided Meta must pay at least $2.1 million with an M in damages, and Google must pay at least $900,000. So these are not big numbers.
Maybe they can write those checks. Let's see how the rest of the market's doing. We're going to dig in here, beginning with Amy Morris, who's got her view of the markets live from Washington, D.C. Amy, how are we doing?
Well, everybody's in the green, Joe. Wall Street cutting its forecast for the U.S. economy this year, boosting its projections for inflation and unemployment. nudging up the odds of a recession as the impact of the Iran war starts to come into view. And we check the markets for you all day long here at Bloomberg. WTI at $90 per barrel. Brent crude topping $101 per barrel. But look at the markets now. S&P 500 up 0.8%. NASDAQ up more than 1%. The Dow up 0.8%. The Russell 2000 index up 1.4%. The 10-year Treasury yield at 4.32%. The 2-year yield at 3.87%. Bitcoin now more than 1% higher, around $70,000. Spot gold, which has seen a run of losses in the past 9 days, now up nearly 2%, around $45.60 per ounce. And a jury, as you were discussing, found both Meta and Google liable for a woman's mental health crisis caused by an addiction to social media platforms. Today's verdict in Los Angeles highlights the financial risk facing companies from thousands of other lawsuits, which claim Instagram and YouTube are intentionally designed to addict young users without regard for their well-being. Meta shares, though, don't seem to mind very much. More than 1% higher. Google shares little changed on the upside. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Back to Balance of Power with Joe Matthew and Kaylee Lines.
Amy, thanks a lot. She'll be back with more on the markets coming up at the top of the hour as we kick off this day's Bloomberg Business Week Daily with the market clearly focused on geopolitics today, and for the better. There does seem to be a string of optimism as we prepare to spend some time with Christina Kino on that. I just want to mention a couple of headlines that have just crossed from the White House. Caroline Leavitt just stepped up to the podium in the White House briefing room, and we do have a meeting back on the calendar with President Xi. Trump will travel to China May 14th and 15th, according to Caroline Leavitt. And Kaylee, it looks like President Xi is going to be coming here. President Trump will be hosting Xi in Washington, D.C. at some point later on this year. We've got another redhead on the terminal.
Yeah, no specifics for that visit yet, but it is striking to see that this has now been scheduled, knowing the reason that it was delayed from the end of this month in the first place was because of the ongoing war in Iran. President Trump said he felt like he needed to be here as that was ongoing. That would signal a certain degree of optimism that the president has that this will be wrapped up in time for this visit mid-May.
You wonder if the market interprets it like this as well, because there's already been a pretty positive vibe going on the street, and we are right near our highs of the session. Christina Kino is watching all of this with us as Bloomberg's managing editor for Markets Live. If you check out our Markets Live blog, Christine is the force behind it, and it looks like it's getting better all the time here. Christine, I'm just wondering, what is in traders' minds? Is it simply the fact that energy prices are lower, or is there a real optimism that this war is about to end?
Yeah, Joe. I mean, I think a lot of the headlines initially sounded positive, and that's what markets were really trading off of heading into the U.S. session this morning. But of course, we did get a flurry of pushback from Iran, not necessarily indicating that they are open at this point to a ceasefire. And so, yeah, what we're really seeing in markets is a lot of headline-based trading. The underlying optimism for a ceasefire is, of course, still there. We have markets, prediction markets in particular, betting on something happening by the end of this month, potentially at the earliest. But in the absence of kind of clear terms, I think we are stuck in this sort of very much a headline-driven sort of environment, even though at the moment, today anyway, based on the green on the screen, that mood is optimistic, but we'll see how long that lasts.
So a headline-driven environment, Christine, does that mean pay no mind to the fundamentals? How are they looking?
Yeah, well, Kaylee, very interesting. I mean, we saw, of course, data earlier today, just a first look at those import prices and export prices for February before the bulk of the energy price increase, right? And that is already indicating an inflationary sort of environment. So very interesting because, you know, we are seeing, of course, an oil shock at the moment, even though some of the energy prices, of course, are receding a little bit. But the underlying fundamentals actually also pointing to an inflationary environment. So we'll see whether that comes to pass and whether markets are in fact kind of waking up to this idea that beyond oil prices, there are very real underlying drivers of inflation at the moment.
All right, Christina Kino, managing editor of our Markets Live blog. Thank you for joining us from New York. Meantime, here in Washington, the briefing is underway at the White House. The White House Press Secretary Caroline Leavitt speaking to reporters now specifically on negotiations with Iran, which she says have been in productive talks for the last 3 days, that Iran wants to talk and that President Trump is willing to listen, that he does not bluff and Iran should not miscalculate. As in her words, Trump will unleash hell if Iran does not accept defeat. We want to get into this now with Mona Yacoubian, Director and Senior Advisor of the Middle East Program at the Center for Strategic and International Studies. Mona, welcome back to Bloomberg TV and Radio. The White House Press Secretary also contended just moments ago that the Iranian regime is looking for an exit ramp. And I wonder if you see Iran right now as properly incentivized to deal with President Trump.
I don't think yet. I think Iran senses that it has quite a lot of leverage with its control over the Strait of Hormuz. And I think Iran is going to look to use that leverage and extract as much as it can, even though it has been subject to these very, very significant bombing campaigns. Nonetheless, I think Iran still believes that it is in a position in which it holds some important cards, and it's going to want to play them.
Caroline Leavitt saying just now that we are very close to meeting the objectives of the Iran operation. Mona, there's been some confusion about what those objectives are. And if it's eliminating Iran's nuclear capacity, wouldn't that have to include the seizing of the highly enriched uranium that is still on the loose?
Absolutely. There are several questions around Iran's nuclear capabilities and, in particular, the disposition of that highly enriched uranium. Now, there's some speculation that the latest deployments, the new deployments coming in, a Marine Expeditionary Unit, as well as the 82nd Air Force Brigade, that they could be involved in some effort to take control of that uranium on the ground. But again, that is a highly risky proposition. Hard to know if that's actually what the administration is thinking.
Well, and so when we consider the deployment of more troops this time around, we keep recalling that several weeks ago, when there were, before these strikes were launched on February 28th, there were talks underway between U.S. and Iranian officials and mediators, even as the U.S. was amassing massive military force in theater. Now we're seeing a buildup of troops again, and I wonder how you believe Iran is interpreting that, if that actually makes them less likely to be negotiating with the president, because there may have been an erosion of trust given how this went the first time around.
Absolutely. It's happened twice, actually. And Iran is very well aware of that.
Hammer too. Yeah.
Exactly. And so from Iran's perspective, like as they say, they've been tricked twice, and they will not be tricked again. And they've actually noted this buildup in their statement, saying, we are watching, we are seeing your movements, and we will defend our territory at any price. I don't think you can overestimate just how deep this distrust is between the United States and Iran in particular, for example, reportedly refusing to engage with Steve Witkoff or Jared Kushner, and instead seemingly having a preference for J.D. Vance. Of course, we don't know if these details are correct, but what we do know is that there is deep, deep distrust that Iran has, and that is an obstacle to any sort of successful negotiation.
We know the troops are on the way, Mona. Marines from 2 separate expeditionary units and members of the 82nd Airborne who will be arriving starting as soon as this Friday and over the next couple of weeks. We talked about what this means with Democratic Congressman Jake Auchincloss, a combat Marine Corps veteran of Massachusetts. He told us this on the late edition of Balance of Power yesterday. Listen.
What the president is doing right now is he's calling 911. He's sending the 82nd Airborne, and he's sending 2 Marine Expeditionary Units to the Strait of Hormuz. And the reason he's dialing 911 so frantically is because thus far this war has been a strategic failure. We have sacrificed a significant strategic card to Iran, which is now they have sea denial. They have demonstrated to the world that they can selectively allow transit through the Strait of Hormuz through missiles and mines and drones.
Not to be confused with a tactical failure, Mona. If the president's calling 911, are these the forces that can reopen the strait?
I'm not sure these are the forces that can reopen the strait. I mean, my understanding is these forces may be used to, again, either attempt to take control of that highly enriched uranium, assuming we know where it is, possibly seize Harg Island, which is, of course, offshore, or undertake some operations along Iran's coastline. But I think the understanding is reopening the strait is a very complex endeavor. And that's why, as we recall, the president, in fact, was calling at one point on NATO allies to assist, precisely because this is not something that the United States could do on its own.
Well, and of course, while he's called on NATO allies, he actually has said that it's Gulf allies that have been more helpful so far. And I wonder, Mona, how you're thinking about the other Gulf states and what they would like to see here in terms of outcomes. I'm sure you saw reporting in recent days that the Saudi Prince Mohammed bin Salman is actually pushing the president to continue these operations to make sure that the Iranian government is fully eradicated, essentially, as it stands now. Can you just walk us through what the other Arab nations are likely to want to see here and push for?
Well, Gulf countries all, because they, of course, they are Iran's direct neighbors. They've borne an enormous cost because of these strikes. They're all looking for an end state that will not allow Iran to again threaten the region. I think the question, though, comes as to how exactly that happens. And while it's maybe correct that they want to ensure that the United States, quote unquote, finishes the job, and they don't want to be left holding the bag, they're also, I think, quite wary of being drawn into, for example, offensive operations against Iran, which has at times been speculated in the press. They're in an extraordinarily difficult position, very delicate. And I think at this point, they're quite wary of how this could go down. And in particular, as I said, most focused on how does this conflict end and what does Iran look like at the end of this conflict?
We're just hearing from Caroline Levitt again in the briefing room, Mona. She says about the prospect of Iran rejecting this peace proposal from the administration. They have not, she says. They have continued, referring to negotiations. They are productive, as the president said Monday, and they continue to be. She's in fact questioning reporting now about this 15-point plan, cautioning reporters from reporting about speculative points or speculative plans. How should we read into that answer?
Well, again, I think, the history of negotiations between the United States and Iran is one that is very much often deliberated in back channels and so forth. That being said, it is curious about the leaking of those 15 points. Did they just come out of thin air? Hard to believe that would be the case. I think what is clear is there is significant daylight right now between the United States and Iran, with the U.S. looking for maybe a 1-month ceasefire, Iran demanding a full cessation of hostilities, and Iran demanding, per its own press, that they retain sovereignty over the Strait of Hormuz. And I think that's going to be an enormous sticking point, not to mention the longstanding demands that the United States have had of Iran, whether it's its nuclear capabilities, its ballistic missile capabilities, or its support for proxies. And here, too, I think we can expect that Iran is going to push back on those demands. We've already seen indicators of that.
Okay, Mona. She's with the Middle East program at the Center for Strategic and International Studies. Mona Yacoubian, thank you so much for the insights and a conversation that we're not about to stop. In fact, we'll meet you on the late edition of Balance of Power, packed with more news. That starts at 5 p.m. Eastern Time. Alongside Kaylee Lines, I'm Joe Matthew in Washington. Thanks for being with us on Balance of Power, only on Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody across Bloomberg platforms. Welcome to Bloomberg Business Week Daily. Yep, never gets old. Another busy day.
That's why we do this.
I know. And there's a lot coming at us once again, even as we were just coming into studio. It is Wednesday, March 25th, 2026. We do have stocks. They are higher off our best levels of the session. We've seen both Brent and WTI pulling back a little bit today. It's all as traders and investors once again, Tim, weighing the likelihood of U.S.-Iran ceasefire talks. I feel like we have a lot we've got to kind of wade through, decipher, and try to figure out exactly what's going on.
Yeah, there was a lot of optimism in the trade early in the day. Before the markets opened, we saw what happened with oil then, and late yesterday too. But some of that optimism has given way, and reality potentially has set in. Brent's still above $100 a barrel. WTI still above $90 a barrel.
No, right, some perspective. We're still way up. All right, so we do see U.S., though, seems to be efforting some kind of deal. Iran rejecting earlier a truce proposal. We're also watching Meta and Google after being found liable in a social media addiction case. This is a big story, folks, something that we've been talking about a lot. In fact, we've got a documentary out here at Bloomberg that's all about it, or that we've definitely had on our platform. We're going to get more, though, on the trade for you on this Wednesday in just a moment.
First, though, again this hour, up ahead this hour, the U.S. and Iran, the latest on the war and the talks. Also, Carol, a view from the C-suite on a segment of the global economy that matters a lot. We're going to speak with Dan Leder, the CEO of Prologis, in just a few minutes.
Really an important view. And also on the AI trade and data center trade. And so long, Sora and Magic Kingdom. Bye-bye, OpenAI. Apparently, Tim has a plan.
Apparently.
We got to make sense of this.
We do. Hey, back to that trade, though. Amy Morris is standing by. She's in the Bloomberg Business Week studio. She's in for Charlie Pellet, and she's watching the trade. Hey, Amy.
Hey, Tim. A big drop in U.S. crude exports this week. Shipments fell over 1.6 million barrels a day to just over 3 million barrels daily, the lowest level since November of 2025. Imports also fell, so it was a slow week for U.S. oil trade. Well, WTI now at $90 a barrel. Brent crude near $102 a barrel. And we check the markets for you all day long here at Bloomberg. The S&P 500 up 0.75%. NASDAQ up just about 1%. And the Dow up 0.75%. Russell 2000 index up 1.2%. 10-year Treasury yield at 4.32%. And the 2-year yield at 3.87%. Bitcoin up just about 1%, near $70,000. Gold extending gains after it finally snapped that 9-day losing streak. Traders weighing the likelihood of ceasefire talks with Iran. Spot gold now 1.6% higher. The cost of imports into the U.S. jumped in February by the most in nearly 4 years, reflecting a broad pickup in prices even before the war in Iran. Labor Department figures showing that import prices increased 1.3% from the month before, boosted in part by higher prices for petroleum and natural gas. And JetBlue Airways is reportedly considering the option of selling itself to a competitor. Semaphore reports JetBlue has hired advisors to explore the viability of a deal and is considering scenarios of a tie-up with United Airlines, Alaska Air, or Southwest Airlines. Shares of JetBlue now 16% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Business Week Daily with Carol Masser and Tim Stenivek. All right, it's a story Amy's been talking about. We all have been since it crossed the Bloomberg terminal. I'm looking at shares of Meta platforms up about 1% here off their best levels of the session. Same story for Alphabet off its highs, just up about 0.2%, though, so still holding on to a slight gain. Meta and Alphabet's Google found liable for a 20-year-old woman who alleged that her addiction to the company's social media platforms caused her to suffer a mental health crisis. This is according to a jury. It was out on the West Coast. It's the beginning of a lot of litigation against these companies and about their responsibility. But we want to dig into kind of legally, what does this mean for the two companies? Because it's not like the share prices have fallen apart as a result.
Yeah, that's certainly notable. And that's why we have June Grosso with us. She's the host of Bloomberg Law on Bloomberg Radio. She joins us here in the Bloomberg Business Week studio. A significant ruling. I'm pretty surprised by the investor reaction, which is meh, but perhaps there's some, overhang that's gone.
Well, it's significant, and perhaps the reaction isn't so, bad right now because this is only the compensatory damages. So there were $3 million for compensatory damages. That's for pain and suffering to reimburse a person for what they went through. But the jury decided that there could be punitive damages. So there's going to be another proceeding to determine punitive damages, and that's where the big money comes in a lot of these cases where they want to punish the company. So things might change if there's a big punitive damages award.
So when we talk punitive, like how much are we talking? And then my understanding, I was listening to you, I think, on with the team over at Balance of Power, that this is the first of many cases to come to trial against these companies.
Right. There's another case, I believe trial is scheduled for July in Los Angeles, but there are thousands, I think 3,000 of these cases. There's also a case by state attorneys general against these companies. So what's really important is they call this a bellwether trial, so it's the first one to go to trial. So that does make this verdict very important. Because down the road, that might mean that Meta might be more pliable as far as settlements. But also, I think that it's hard to read into just the one verdict. Like people are comparing it to the tobacco cases. Well, the tobacco cases, it took a while before a pattern was established. So here, I think you have to go through more than one trial, a couple of trials before you see which way the juries are coming back. Also, I was surprised by the verdict because there was a lot of evidence that this young woman had a lot of other mental health struggles, that she had problems at home, she had a learning disability, she had bullying problems, I believe, in school. So there was evidence that there were other influences on her, not just Meta. And so another thing that strikes me as a parent is that, she was on these social media platforms like 16 hours a day or whatever, and where are her parents at that point? I don't think, I don't know what would happen if I had let my daughter beyond, all those different hours,
You raise a lot of good points, June, and I'm wondering from a compensation standpoint, is there a chance, not just from the perspective of, okay, punitive versus compensatory. Compensatory, thank you. But does it create some sort of precedent, that moving forward, this is how, and not necessarily a legal precedent, but this is how people are thinking about this technology.
Well, this is how people are thinking about this technology. And perhaps when they choose the next jury, they'll try to eliminate people who are thinking this way about this technology. But it is a trend. There are states that are passing laws. Yeah. As I said, the
countries that are ahead of this compared to the United States.
Right. So, but I don't know about pushing the blame on, one company, but, the problem was that in this trial, there were a lot of internal documents that were showed to the jury that, revealed a sort of ignorance on Meta's part or on the executives at Meta about what this was doing, or, we don't care about it. So I think that, those internal documents probably played a big part in the way the jury came back. But remember, they were out for 9 days, 40 hours. So they didn't come to this conclusion right away. It wasn't like, oh, wait, here, we saw what happened, we heard it, and we're ready to, rain down on Meta and Google.
Just real cookie. I'm a little hungry, perhaps. June, just real quickly, 30 seconds here. Can these two companies appeal, or is there any pushback?
They'll wait until they get the punitive damages verdict in, and then they're already saying they're going to appeal. There's no doubt that there'll be appeals in this case.
Okay, which is maybe why it explains to the stock reaction. Thank you so much. June Grosso, host of Bloomberg Law on Bloomberg Radio. Be sure to catch that every evening. All right, now let's just mention a quick headline. This is coming from the Wall Street Journal. The United States Postal Service to impose a fuel surcharge of 8% on packages. So this, you have to assume, is a result of what's going on in the Middle East and the U.S.
This is what we talk about when we talk about higher fuel costs going through the economy. And, when we spoke to Lee Klaskow last week after earnings from FedEx, he mentioned, I asked about higher prices, and he mentioned surcharges, that's what you see.
Yeah, exactly, right? There's going to be some, follow through, and you're going to see someone picking up the cost, and that certainly is safe to say that it will be felt by consumers and perhaps businesses as well. Hey, all right, let's get to the latest on that war, the U.S. war and Israeli war on Iran, something that is certainly top of mind for investors. I'm just looking at our live blog. We constantly are updating this. We did see Iran rejecting a 15-point truce proposal from the United States. Tehran sending out 5 conditions of its own for ending the war. And then we've seen some reports about Vice President of the United States, J.D. Vance, maybe traveling to Pakistan to discuss an off-ramp to the war.
Yeah, we're hearing a briefing, too, from Caroline Leavitt at the White House. She said no Iran peace talks should be deemed official yet. No sense yet on when the first tanker can pass in the Strait of Hormuz, and they're working on getting tankers through the Strait of Hormuz at the soonest. The U.S., too, working on creative solutions on oil prices.
So a lot of back and forth, it feels like, but we've been trying to get to the bottom of it. So we are going to head to the region. Let's get an update. We do head to Jerusalem and to Bloomberg News Jerusalem journalist Dan Williams, who is with us. Dan, good to be checking in with you once again. You've really been keeping us all super informed. I know it's later there. What are you hearing about movements towards a ceasefire?
I got to say, it would appear that we're back to square one being open warfare. We never actually left square one. Perhaps we put one foot out of square one in the direction of reconciliation, the direction of a ceasefire, potentially peace talks leading to a peace deal. However, 2 days after President Trump surprised everyone, potentially even Iran, by announcing that there had been back-channel talks on ending this war, there's been no confirmation. In fact, that was denied by Iran, although various Iranian statements indicated they'd received U.S. overtures indirectly through intermediaries. We're now, as you noted, a day away from talks that had been speculated upon that they would take place in Pakistan, bringing together senior delegates from those warring sides. That has yet to be confirmed, as you noted. So really all we have now is a very specific operational reprieve on those threatened U.S. attacks on energy assets in Iran, which at the time drew Iranian threats to attack energy assets throughout the region, potentially plunging it into darkness. That didn't happen. However, attacks continue elsewhere in this war, certainly on Iranian targets by the U.S. and Israel, certainly by Iran against Israel and neighboring Gulf Arab states. It's hard to know what has changed, except, of course, the yo-yoing of stock prices on the energy market and other markets. That's really all we can tell right now. We're looking for clarity, and I think the first sign of clarity would have to come from Iran, given that it is the party that is yet to really confirm that this overture was ever received and that back-channel talks were ever held seriously.
Well, what has Iran said publicly most recently, Dan, about how they could negotiate or begin negotiations to end this conflict?
Well,
yeah, go ahead.
That's an excellent question. You noted the 15-point plan put forward by the Americans. Bloomberg had a pretty exhaustive account of those 15 points. To be fair, what they are effectively is a recapitulation of the U.S. and Israeli conditions during this war and going back decades of Iran, conditions that the Allies sought to assert and achieve through sheer firepower. They're now giving Iran the chance to achieve that, or should we say meet those conditions, peaceably through a consensual agreement with a withholding of firepower. Now, the Iranians are not interested in that. In fact, they've come back with their own conditions, which include a total cessation of the war, not just against them, but against their ally Hezbollah in Lebanon by Israel. That's the second front of this war. And also compensation to be paid for them, for the damages inflicted upon them, very significant damages during this war. There's also some indication they would want new arrangements in place in Hormuz to institute what effectively is their new proprietary control over that critical energy waterway. So both sides are digging in. There was military brinkmanship. The military fighting continues, and now there's brinkmanship in terms of these peace offers. Hard to see how they can be reconciled.
Dan, I also can't understand, to be fair, how Iran gets its hands around being stripped of all of its nuclear capabilities and facilities. The conversations Tim and I have had is that, if anything, Iran's going to double down after this. So I wonder about that. And I do wonder about the role of Israel in all of this, because my understanding is, too, that they were caught off a little off guard when President Trump's initial ultimatum, he put off for another 5 days in terms of, and giving Iran some more time. So How do we think about those two issues?
I think you're absolutely correct. In fact, a member of Prime Minister Netanyahu's security cabinet said on the radio that Israel had an inkling that there would be a Trump announcement that would change the rules of the game, but he said they didn't really know the content of it. So while they have been apprised, it wasn't too far in advance. I'm not sure they're consulted much in advance. However, they are fully aboard with this 15-point plan that has been submitted. As I said, it would satisfy core Israeli demands that well predate this war. Israeli demands going back some 20 years, which would satisfy Israel in terms of its national security needs. You asked about why Iran would give up these things. Well, this is existential. The U.S. and Israel came in effectively announcing the end of this regime. And now they're giving the regime a chance to stay in place, but to give up elements which, if you hear the regime tell it over the years, are a key to regime survival. Of course, the regime would say a key to national Iranian survival as a whole. So the real question is, where does the national interest play? The question is, how much pain is the Iranian regime feeling? The question is, were they to comply with these rules, effectively rid themselves of projects that they've invested in for many, many years? The nuclear project, the ballistic missile project, related projects, withdrawing from Iran their stockpiles of highly enriched uranium. Those are the crown jewels of this regime's practices and output going back many years. They've defined it as essential for their national security. The question is whether that calculus will change when they're now being confronted with a threat to their very existence as a regime.
I thought I saw a headline, and maybe my control room can help me out here, but I thought it was Caroline Leavitt, the U.S. White House spokesman, talking about another 2 to 4 weeks, perhaps, for this war. I'm going to look for some clarity and confirmation. But Dan, what are you guys hearing, or what are you expecting, just quickly, in terms of what the expectations are from Israel about how long this war continues to go on?
We're in week 4. 2 more weeks would take it to 6 weeks. 6 weeks is what we're told from the outset by both U.S. and Israeli planners, was pretty much the outer envelope for full tilt war fighting. Obviously, that could continue. There could be enforcement actions in the Gulf of Hormuz. That corresponds to what we're hearing. I suspect it corresponds to the dwindling target bank and the assessments that Iran's offensive capabilities, specifically missiles and drones, are also dwindling. So even if there's no accommodation or peacemaking, they may simply run out of things to bomb, and the Iranians may run out of ways of bombing back.
All right. Great stuff, as always. Dan Williams, thank you so much. Bloomberg News Jerusalem journalist. Stay safe, and really appreciate you having a pretty long day there and giving us an update. And I do want to thank Talia in our newsroom and in our control room. Caroline Leavitt, of course, White House press secretary, reiterating a 4 to 6 week timeline for Iran operations. So we did get that update in her daily press briefing. Tim?
Well, speaking of Washington, D.C., let's go now to Washington, D.C., to what we're hearing from the White House. As we've reported, the Trump administration has compiled a list of a dozen demands along 3 points that Iran would get in return. We also know Iran has said thanks, but no thanks. I want to bring in Michelle Jamrisco. She's White House and national security editor for Bloomberg News. She joins us from our Washington, D.C. bureau. Michelle, I just want to bring everybody up to speed on what we heard from Caroline Leavitt just now. Some other headlines. Too soon to say if the U.S. is satisfied with Iran regime change. Control of uranium is a point of conversation still. How did her statements that she just made to the press in the last hour or so gel with what we heard in that 15-point plan and what we've heard from the president?
Well, there's a lot of work here, Tim, and I think, first off, what we heard from Caroline Leavitt today is not consistent with what we heard from Iran earlier today, which should come as no surprise. I mean, the two sides have been trying to jawbone each other, definitely at odds, and especially because we don't know exactly who the U.S. is purporting to be negotiating with on the Iranian side. It's hard to kind of parse who's saying what from the regime's angle of events. And now on that 15-point plan that Bloomberg reported on earlier, Caroline Leavitt referred to that and cautioned against speculating via such a proposal. Of course, she doesn't want to, she uses the tried and true line of not wanting to negotiate through the press. She did acknowledge that there are some elements of truth, as she said, to that plan, but that no one should take that as sort of the final negotiating end piece that the U.S. is operating with. Now, at the same time as we have that U.S. proposal, of course, we have Iran's own counter demands today, earlier, demanding, and we've been through this before, especially with Dan just before me, but demanding that the U.S. U.S. and Israel issue a guarantee of no further attacks, that they issue war reparations, among other things. And then key, especially for our Bloomberg audiences, is that Iran is stipulating that they want to retain sovereign control over the Strait of Hormuz. So there's a lot at play here. We haven't really moved forward, it seems, in any way to end the conflict. And as we approach the fourth week, we're kind of nearing that time frame where the U.S. has said that they would like to be concluding and winding down this war.
Hey, Michelle, we've been talking in the newsroom before we went on air about this 20-point plan that President Trump and the White House has come up to end the war between Israel and Gaza, like going back to that really is yet to be delivered on. And so we're thinking about this 15-point plan, which we know Iran has already pushed back on. I mean, what is it that is it just some kind of off-ramp, just getting something out there to kind of save face perhaps for both sides? And they can say, we agree to this, and yet nothing's really signed officially, and it just lets everybody to put down the weapons? Is that kind of what we're expecting?
Well, one thing I think is key to remember here, Carol, is that the White House hasn't publicly issued this 15-point plan. It's something that we've reported on, that we heard through other sources, and they have since said, nothing is official until Trump says it is so, which, Caroline Leavitt herself often jokes about, she could be overturned in 5 minutes by a Truth Social post. So, we could hear differently from the president himself on what is sort of on the negotiating table at this point. But I think what that proposal and the reports of it do show is just kind of the breadth of the issues at hand and what the U.S. is trying to put forward as the negotiating points with Iran. Now, Iran's counter demands, again, kind of offer another insight into how the regime is trying to handle this, at least the public relations campaign over the war, but also what they're trying to kind of work toward in a resolution to this conflict, which, as we've been saying, are two very starkly different sides to this conflict.
Well, as Carol has mentioned, Caroline Leavitt reiterated a 4 to 6 weeks timeline for the Iran operation. Also today, we learned details on the president meeting with Chinese President Xi Jinping. He's just out on social media saying that it was originally postponed due to our military operation in Iran. It's been rescheduled. It will take place in Beijing on May 14th and 15th. And that the First Lady and the President will also host President Xi and Madame Peng for a reciprocal visit in Washington, D.C. at a later date. Should we look at that May 14 to 15 date as maybe a bookend for this conflict?
Well, that was, precisely the question that our own Mario Parker put forward to Caroline in the briefing. And I think what we saw is Caroline herself and others in the administration continue to be at pains to kind of separate the two. They don't want the Iran war issue to be clouding the eventual Trump-Xi summit, even as they publicly acknowledge that this was the reason for the delayed trip that was supposed to take place at the end of this month. So I think, that remains to be seen how the Iran war's conflict timeline might play into the eventual trip, and if it might be delayed further, or if it will color it in some way or change location. That's still up for grabs. I mean, it's a long way till May, but as for now, I think the White House is at least trying to keep those two issues separate.
All right, great update. Thank you so much, Michelle. Thanks on another busy day there out of our D.C. bureau. Michelle Jamriska, of course, Bloomberg News, White House and National Security Editor, joining us from D.C. Hey, and in just a moment, we're going to get a macro view. We're going to talk with the CEO of Prologis. Plays into a lot of different narratives that are out there, so we'll get that view from the C-suite in just a moment.
In the meantime, we are a little over 90 minutes to the close of equity trading here in New York City and on Wall Street. Let's stay in the Bloomberg Business Week studio and head on over to Amy Morris. She's in for Charlie Pellet. Hey, Amy.
Hey, Tim. Merck is going to buy Terns Pharmaceuticals for $6.7 billion, giving the company access to a promising new leukemia treatment. The acquisition is expected to close in the second quarter. That deal is part of Merck's efforts to find growth drivers as it prepares for generic competition and lower prices for its blockbuster cancer therapy, Keytruda. Shares of Merck right now 2.6% higher. Again, just to be clear, that purchase is for $6.7 billion with a B dollars. Stocks and bonds rose, oil fell. Traders tried to gauge the viability of U.S.-Iran ceasefire talks. WTI now around $90 a barrel. Brent crude around $102 a barrel. We do check markets for you all day long here at Bloomberg. The S&P 500 up 0.75%. NASDAQ up 1%. Look at that. The Dow up 0.8%. The Russell 2000 index up 1.3%. The 10-year Treasury yield at 4.33% and the 2-year yield at 3.88%. Walt Disney CEO Josh D'Amaro has seen $2 billion technology bets falter, one of them unraveling entirely just days into his new job. A deal Disney struck with OpenAI has dissolved, ending a 3-year partnership that included $1 billion investment to populate short-form AI-generated videos with Disney characters. Disney also made a $1.5 billion investment in Epic Games that was also impacted. Epic Games announcing it was laying off 1,000 employees after new versions of its hit video game Fortnite failed to connect with fans. Disney shares down about 0.3%. For on-demand news 24 hours a day, you can subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Business Week Daily with Carol Masser and Tim Stenovec.
All right, Amy, thank you so much. Well, we'd like to remind everybody that Amazon, Home Depot, FedEx, UPS, also GigaCloud Technology are just some of our next guest big customers. We're talking about the $125 billion market cap company. It is a warehouse logistical REIT. It is Prologis. That is massive, and it owns, develops, and manages logistical warehouses for the biggest companies like we just mentioned, and they've got more than 1.3 billion square feet in 20 countries. So what a great person to get a view in terms of the macro of what's going on around the world, considering, Tim, our backdrop.
Shares up about 3% so far this year. We've got Dan Leder with us, CEO of Prologis. He joins us here in the studio. Dan, good to see you again. You just took over as CEO, though we've spoken just a few months before that. I want to start with what Carol mentioned in the macro, because we are just squarely focused on an increase in oil prices as a result of the war in Iran, what that means for consumers, what it means for business leaders. How are you looking at the macro environment?
Yeah, well, first, thanks for having me. Great to be here with you, too. I look at the macro environment right now, and I think about all the chaos and turbulence our customers have been through going back to COVID. Mm-hmm. 6 years ago, the world was shut down, right? Over the course of these 6 years, think of all of the geopolitical events, post-COVID, the rate hikes and how that impacted our customers. And I actually look at these customers and I realize they've built a lot of endurance. They actually, this turbulence is more of a feature of the environment that we're living in today. And I look back to a conference where we were talking to investors a couple weeks ago, actually right after the weekend of the original Iran bombing. And we were telling our customers 2026 started really strong. 2025 was our second largest leasing year ever, and we were seeing that go into 2026.
Does that continue? There's a lot that's happened. Like, it's just, I think, kind of shocking, and we talk about this so much. No one expected some of the things that have come at us, Dan, in 2026. So since that was just a few weeks ago or a month ago or so, that update, and that you were talking with, like, is that optimism still there? And is your outlook on 2026 still the same?
So what we see at this time is customers don't necessarily pull back. I look back to last year at this time, we had expressed a little caution that led into what was Liberation Day, right? And you see customers just look around and see what's going on and then lean in. They make long-term decisions, 5, 7, 10-year decisions when they're working with us.
Right.
And so they're really kind of seeing through that noise. And when you look at these decisions they're making, it's really only 3 to 5% of the overall cost of the supply chain.
So no people who were maybe going to sign a contract that backed out or anything like that?
Well, we hadn't seen that.
Okay.
And it's really just a matter of they digest it and then it comes in different forms. Maybe you end up seeing some short-term leasing but certainly no pullback.
What about when it comes specifically to data centers? Because last time we talked with you about the data center activity you're seeing, and in that time, a lot has happened. We've heard from different companies. Microsoft is renting a Texas data center that was dropped by Oracle and OpenAI. Are you seeing any signs of weakness or slowdown or changing trends when it comes to the data center business?
So our data center business was really born from our higher and better use business. When you have 6,000 buildings, 14,000 acres of land, close to 78% of the world GDP, that is where the next wave of the economy is. That's where data centers need to be. And we have deep relationships with these hyperscalers. We have a fortress of a balance sheet. And every megawatt we can deliver over the next 3 years is in some sort of lease discussion right now. And we have 5.7 gigawatts of power that we control or are in its advanced stages.
Meaning you're at full capacity in terms of negotiations right now?
We're at full capacity.
So nobody else could come to you right now and say, we're interested in the next few years, and you have an option for them?
No, that's not the case. Just the next 3 years of power that we can deliver.
Right.
These hyperscalers, these major data center users are heavily focused on near-term power, and we're focused on delivering power much longer beyond that. And so we're certainly in discussions beyond that next 3 years, and that's where this 5.7 gigawatts of power will come in.
So that's the power you've secured, right?
So we've secured 1.8 gigawatts,
okay.
And then we have 3.9 gigawatts that we call in the advanced stages, which means it's a year or two behind.
Okay.
But again, think of the universe of opportunities we have behind that 5.7.
You have,
with
right, the opportunity.
Which is just the size of our platform.
All right, so then I'm going to say, are you looking to secure even more power?
Absolutely.
Yeah.
We are working, and remember, we're a global company. As
Yeah.
you said, we're in 20 countries. And so we're working around the tier 1, tier 2 markets in the United States. We work around the flap D markets in Europe, and we're starting to see it actually in Latin America and Japan as well.
So has anything changed because of the war, or is really everybody kind of looking through this? Because we talk about an energy environment, you know, we've talked a lot about LNG specifically because Qatar's lost about 30% of their capacity, and that's going to take 3 to 5 years to build. There's going to be a floor where energy prices are higher. And so I'm just curious, has any of that impacted you guys in terms of how you think about outlook, build, spend, costs?
Well, as it relates to logistics real estate, again, it's 3 to 5% of the overall costs.
Okay, so
and our
it's
customers need to make these decisions long term, and they want to be close to those population centers, so can't necessarily sit back and wait.
Can I just throw one thing out there? This could be a little wacky, but it's Elon, and so that's kind of wacky. But we've talked this week, right, about data centers in space. Is that something you are thinking about and how that might impact you guys? Because you obviously are doing this on Mother Earth. And I'm just wondering, is that just something that...
Well, we're going to stick to these 20 countries that we're focused on. And,
no Mars, Pluto,
Earth. I think there's plenty of opportunity for us for the foreseeable future, but maybe ask me in 10 years.
Okay.
Yeah, I mean, but to Carol's point, why, you know, with that getting so much discussion right now, why are you just focused on terrestrial? I mean, I know it would have sounded crazy a year ago to be talking about this, but this is something that, you know, a lot of people think is the future of these data centers.
Well, we do this business 100% on a build-to-suit basis. So we have leases in place before we put a shovel in the ground, and we have so much opportunity in front of us, we don't need to be thinking about another vector to grow this data center business.
Yeah, that's pretty fascinating. What would change your mind, though, in terms, would it have to be an economic slowdown, which some have talked about depending on when this war ends, or even if we see inflationary pressures continue and whether there's demand destruction that slows down essentially the global economy. A lot has to fall into place, as you know. Is that what would maybe change your outlook? Or again, because everything's locked in place, if the economy slows down, what kind of impact might that have on you guys? Or it doesn't matter because you've already kind of signed things and are moving ahead because it's longer term?
When I think about our core business, if you think about the building blocks for our core business is 70% of the U.S. GDP is consumption. Our buildings are close to the major population centers in the United States. So on top of that, there's the e-commerce secular demand driver. We've been talking about e-commerce for a long time. Pre-COVID, e-commerce penetration as a percentage of retail sales was in the 17-ish% rate. Now it's like mid-20s. We see that growing another 75 to 100 basis points a year through the end of the decade. That alone is additional demand on top of that. So there's a big tailwind for our growth.
So, but if there was an economic slowdown, that could be a problem.
Well,
or would that not even impact? That's what I'm trying to
One thing I forgot to mention is
with
e-commerce, for every dollar retail sales, it needs 3x the warehouse space. Because think of all the activities that happen in the brick and mortar, and the returns happen there. There's the stock in the back.
Yeah.
And then with e-commerce, there's been that proliferation of SKUs. And all of us, we're looking for speed and we're looking for choice, right? And so that's been a big driver. And you may see flat retail sales, but you'll see e-commerce penetration. That e-commerce penetration is great news for logistics real estate.
On that, I'm interested in the joint venture that you guys announced last week, $1.6 billion JV with GIC to build to suit warehouse development. Why partner with GIC? Why not do this solo?
Well, we've long been developing on our balance sheet, but now look at our development business. We can build $43 billion more of logistics space in our land bank alone, not buying any more land. On top of that, we have this data center business.
Wait, say that one more time. That's tremendous.
So we have 230 billion worth of AUM today at the end of last quarter.
Yeah.
We can build another 43 billion of logistics buildings on our 14,000 acres of land.
Yeah.
That's 240 million square feet. We can grow the company 18% without buying another piece of land. Then we have this data center business. Think about it from a megawatt perspective. If you build a powered shell, that's on the continuum, powered shell over here, that's about $2.5 to $3 million a megawatt. You go out this side of the continuum, and that's a turnkey. That's everything soup to nuts built out. That's 15 million a megawatt. So think about how big that data center development could be. So we're looking at diversifying our capital stack there, and our partners. Great to have a new partner with GIC here. Yeah. They want a piece of this development business, and when we're doing that to help build bigger relationships globally.
It's a shame you're not optimistic. Dan, come back soon.
Thanks for having me.
Really appreciate it. Dan Letter, CEO of Prologis. Hey, when we come back, so long, Sora. OpenAI has some other plans when it comes to that. We'll get an update. This is Bloomberg.
It's 2:40 on Wall Street. I'm Amy Morris. A jury has found both Meta and Google liable for a woman's mental health crisis caused by an addiction to social media platforms. Today's verdict in Los Angeles highlights the financial risk facing the companies from thousands of other lawsuits, which claim Instagram and YouTube are intentionally designed to addict young users without regard for their well-being. Meta shares now less than 1% higher. Google shares little changed on the downside. Wall Street cutting its forecast for the U.S. economy this year, boosting its projections for inflation and unemployment, nudging up the odds of a recession as the impact of the Iran war starts to come into view. Goldman Sachs says the risk of a downturn over the next 12 months has risen to 30%. The jobless rate could climb to 4.6% by the end of the year. We do check markets for you all day long here at Bloomberg. WTI now at $90 a barrel. Brent crude around $102 per barrel. The S&P 500 up 0.6%. NASDAQ up 0.8%, and the Dow up 0.7%. The 10-year Treasury yield at 4.32%. The 2-year yield at 3.87%. Bitcoin now more than 1% higher, around $70,000, and spot gold up nearly 2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Back to Bloomberg Business Week Daily with Carol Masser and Tim Stinovec.
All right, Amy Morris, thank you so much. Amy in for Charlie Pellet. All right, so this was a bit of an eye-opener, I think it's safe to say, when it crossed late Tuesday. This was OpenAI basically saying bye-bye soon to its Sora AI generator in 6 months after that high-profile launch of a standalone app for the service as the company works, Tim, to simplify its portfolio of artificial intelligence products. I mean, this was kind of a big deal. Everybody was talking about it, playing with it. We thought it was a big deal.
We thought it was a big deal, but then I guess everybody did the same thing that I did when stopped playing with it and stopped looking at it.
I stopped pretty quickly.
That's what ended up happening.
I made a horse or something.
There's also a Disney angle here that we're going to dig into a bit later with Chris Palmieri in our 3 o'clock hour. For more on OpenAI and what they are up to ahead of a potential IPO, let's head to Bloomberg News' San Francisco bureau and to Bloomberg AI reporter Rachel Metz. Rachel, when Sora first came out, I mean, even before it came out, when we just saw the capabilities of it, when nobody could use it except for OpenAI employees, we were all like, this is crazy that this type of video that looks so real can be generated by AI. When we tried it, people thought it was, I think really, really novel. What ended up happening? Why did it not stick?
I mean, I think that an overarching theme here is OpenAI is trying to simplify what has become a pretty vast portfolio of different kinds of AI products. And I mean, the fact of the matter is that generating video is extremely computationally intensive. And if there is one thing that OpenAI has not quite enough of, it's compute. I mean, the company is very, very, very hungry for more compute. So this is an easy thing, I think, to say, hey, you know what? Like, this is interesting and it looks cool, but it is not our core product. And if we need compute, let's put it toward other things. So that, in my mind, that may be part of it. And the company is trying to sort of like unify, slim down some of its product line a little bit, which has gone in a lot of different directions. The codex for coding is really important to them. ChatGPT is really important to them. And I think trying to figure out how people are going to pay and pay over time for these products and keep using them.
Are they just trying to be like Anthropic?
I don't know if they're trying to be like Anthropic, but I think they have realized that coding, using AI as a coding assistant is a really good application for them, and it's something that people may be willing to pay for over time. And also, it seems like a number of these companies are realizing that once they make their models good at completing coding tasks, they're also able to expand that out into some other things, such as different kinds of office work. I mean, ultimately, these companies have to make money, right? And what they're doing is very expensive to build and to run. So they have to figure out ways that they can up the revenue.
Yeah, that's what that's about, right? We're how old now into kind of this process, Rachel? What, 3 years and counting? And right now you got to think about, okay, a lot of money's come in, a lot of investors excited, a lot of hype, a lot of activity and actions, and then you got to think about return on investment. What's the long-term viable business model, right? As the landscape continues to evolve and get more competitive.
Absolutely. And I'm not sure that anybody has really cracked the code for that with AI imagery, whether it's still images or videos. I mean, AI video is still very early days, and there's no getting around the fact that it takes a lot of computing power to build and to run these kinds of models. So, and you need people then to pay for that. And right now, the companies are heavily subsidizing that stuff. And there's just, you can only do that for so long. And you need to find like a market fit at some point. And you'll notice people have not been talking about it that much. You haven't seen anything really splashy that obviously uses Sora or other competing companies' products either. It's just a very tricky market.
But it's still really early days for that type of technology, and it does seem really promising, especially when it comes to, and we're going to talk with Chris Palmieri in a few minutes about the Disney side of things. But I mean, that was a potential $1 billion investment in OpenAI, and to license license IP from Disney to OpenAI to then create, these characters for AI shorts. Does that I guess my question is, are consumers not interested in this? Do we know a difference at this point between what is AI generated and what isn't? Does that matter for consumer tastes?
I mean, I'm not sure if it's really at this point in like the cycle of this technology, if it matters that much how the consumers feel about it. I mean, obviously it does matter, and we are consumers. And I think people do care about knowing whether something is AI generated or not. I mean, ultimately they probably care how it looks and how it feels to watch something that's either AI generated or animated. But really, I think there's a lot of mixed feelings at the studio level about whether or not they want to use this kind of software, how they want to use this kind of software, if it's just one more tool in the toolbox that they have to produce like an animated movie or an action movie, or if it's going to be taking over large swaths of their production pipeline, in which case some people might have really big issues with that. And we know that in Hollywood in general, this is a very contentious issue, the idea of using AI either to augment or instead of people's work for certain things.
So, there's a couple of stories. I just want to roll into this. I mean, we did a story about OpenAI set to raise $10 billion from MGX, Code 2, and Thrive. So we're talking about a major funding round. We also still have Microsoft. Is it a 27% stake in OpenAI? And I wonder too, Rachel, are investors, people investing Microsoft saying, all right, guys, it's time to grow up a little bit and like figure this out. Is that part of this, or we don't know exactly?
I think at this point we don't really know what's behind it, but this idea that you would spread your technology out into a bunch of different directions and then like rein it in somewhat, that seems to make sense to me as part of the process as you move toward an IPO.
Did we talk about SPUD? Can we talk about SPUD? What is this new AI model? What do we need to know about this?
I mean, this is a forthcoming model that we have heard about, but it's still TBD what exactly is going to be coming out about that one.
Is it a model for like that ChatGPT uses? Like, what is it? What is the iteration of it?
I am not sure, to be honest.
So
okay.
To be determined when it comes to SPUD. I like the name.
I don't know. Just to wrap up here, Rachel. I mean, you cover this stuff. This seems logical. Like, it's so funny. I feel like we're still so much in the exploratory process, but it does feel like the conversation has shifted more to agentic AI and some different things. I know at Bloomberg Invest, I had conversations about the importance of vertical AI data and how that's going to be important. It's still an evolution, right? Or is there anything that you think is a stronger narrative? And just got about 30, 40 seconds.
Yeah, I mean, I think for all of this stuff, it's still very early days, still early stages. There are so many questions about how much information you should give over to any of these models or any sort of agentic AI that's going to carry out any actions on your behalf. I think there's still a lot of questions there. It's also not clear to me how people are actually using this stuff and then finding it really useful. So there's a lot of things that we still need to figure out.
All right, that's why we have you. We count on you. Rachel Metz, be well, Bloomberg News AI reporter, joining us from our San Francisco bureau. When we come back, we're going to do a check on trading.
Yeah, and stocks on the move. That's next on Bloomberg Business Week Daily.
You're listening to Bloomberg Business Week Daily with Carol Masser and Tim Stennebeck on Bloomberg Radio and Television.
All right, everybody. Getting ready to wrap up on the first hour of Bloomberg Business Week Daily, and we're coming into our final hour of trading, just a few minutes away. Taking a look at the trade right now, off our best and worst levels of the session, but we are still seeing green across the screen, up about 0.6% on the S&P 500. Tim, a little bit higher, though, percentage basis in terms of gains on the NASDAQ 100, up about 0.7%.
Relatively speaking, oil barely budging lower. 102.46 is what we see for Brent futures right now. WTI still at $90.68. Both of those down about 1.82% today.
And most names in the S&P 500 actually higher, some big gainers, some big movers. So let's get to that.
Still got some good decliners.
I'm so happy for you. It was really hard for you yesterday.
It's okay. I'm okay.
I'm Carol Masser, along with Tim Stennebeck. Let's get to some stocks on the move. With us is Bloomberg News equities reporter Alex Semenova in the house. Right, there are some big moves in either direction today.
Yeah, absolutely. And I'm going to start with one that is seeing a big swing right now. JetBlue. It is exploring the option of selling itself. This is according to a report from Semaphore. Apparently, it already hired advisors to explore the viability of a deal. They're considering the potential regulatory hurdles of what that would look like, kind of exploring all scenarios. Worth noting, though, that these are very early conversations. They have no idea what it would look like yet. They're just kind of exploring these discussions right now. But they considered a potential tie-up with United, Alaska Airlines, Southwest, and investors are liking the idea of that. The stock is up about 18% right now. Its best day since Liberation Day last year when everything was rallying. So that just gives you some context on the scope of this move.
It's a $5 stock.
I was just going to say it's been getting beat up. I mean, if you go back to,
time.
look, 2015, it was at $26 a share. Now it's down to $5. It's just it exists in this challenging place where it's neither, an ultra low cost carrier or one of the premium big three. So it's a challenging place for an airline to be in the U.S.
You go back 14, 15 years. I mean, this was the airline to beat.
Yeah.
Their planes were new. They didn't have a lot of legacy issues.
They had screens in the seats.
Exactly.
And guess what? If you get on one of those planes now, a lot of times those screens in the seats are the same ones they had 15 years ago.
Wow, coming in hot there.
It's what it feels like, truly.
No,
really,
but it's interesting how they really disrupted in many ways, right? And the legacy carriers were having such a hard time, and now they're kind of one of the legacy carriers and have to figure things forward.
Years of operational losses for them. Hence that reaction from investors. They're hoping that maybe some kind of mix-up with another company would be good for them.
It's amazing, though, if that brand goes away. Or, does it, somehow they keep it? Don't you think? I don't know. It's interesting.
We'll see what happens. At this stage, they might not have any deal at all.
Yeah. All right. Good point. So that stock is definitely rallying. Let's go to Meta.
So also taking a look at another stock that is in the green today, that is Meta Platforms. It's up just slightly, about 0.5% right now. It is cutting several hundred jobs as part of a restructuring. This will be across several teams in the business, including sales, recruiting, and its Reality Labs division. It's worth noting that this isn't necessarily a cost-cutting effort because they did, report capital expenditures at a record high this year. They're going to roll out a lot of AI investment. It's perhaps a reorganization of the business like we've seen. We saw them scale back its Meta unit, now the Reality Labs division. Apparently, the layoffs will impact about 1,000 employees in total, so some culling here. Meta had about 79,000 employees worldwide at the start of the year. So a little bit of trimming, pretty standard with what a lot of companies do every day as they kind of reorganize the business.
It's like fine-tuning, right? What are you focusing on? And
exactly.
It's unfortunate if you're part of the cut, no doubt about it, but that's what businesses unfortunately need to do. And you just hope you're part of the growing part of the business where a company's investing.
Yeah, and also, of course, the liable and social media addiction case that we saw earlier today.
The verdict on that just came out as well.
Yeah, and I think what was notable there, and shares up about 0.5 percentage point right now, but we didn't see shares really dip lower on that news.
Yeah. I'm going to transition here.
What else do we have?
I have a pretty smooth transition now from Meta to ARM Holdings because Meta will be the first major customer for its chips. So ARM Holdings was always known for licensing its technology to semiconductor makers, and now it'll sell its own chips for the first time ever. This move is forecast to generate about $15 billion annually within 5 years. Investors are liking this too. The stock is up nearly 18% right now. So like you, Tim, kind of hard to find any stocks in the red.
It comes with
sometimes.
3 great names, but they're all in the green. They're of no use to me.
Yeah.
Thank you, Alex.
You have to break the bad news to us about the stocks that are falling today. But good day for ARM Holdings.
Oh yeah, no, it'll be fine.
You know, 2 sides to every trade. There's always a couple of stocks to the downside.
We did have a great Tom McKenzie sat down with ARM CEO Renee Haas yesterday.
Yeah.
Do encourage everybody to check it out if you missed that interview.
I'm looking for some decliners for you.
Oh, I have decliners. Come on, I'm not going to give them away right now.
Very frustrating market right now.
I got everything.
Okay, we're just want to make
don't
sure we'll
worry.
make sure you're okay. All right, Alex, thank you so much.
Thank you, guys.
You bet. Alex Semenova, she's Bloomberg News equities reporter. For more conversation, Stock Movers podcast, 5-minute episodes, big winners, big losers in the stock market. You can find it on Apple, Spotify, or anywhere you get your podcasts.
Coming up next on Bloomberg Business Week Daily, we continue our discussion about the no good, very bad week that Josh D'Amaro over at Disney is having. It's his first week on the job, and a couple billion-dollar plus deals certainly under pressure.
Magic not feeling so magical at the Magic Kingdom. All right, do not go anywhere. The close coming your way on TV. Tim and I continuing on Bloomberg Business Week Daily. This is Bloomberg.
CBS News on the Hour, your home for original reporting.
I'm Jennifer Kuiper. Meta and Google are found liable of fueling social media addiction among children. The jury has voted to award $3 million in damages to a woman who alleged that using YouTube and Instagram as a child led to addictive use and mental health problems. CBS News tech contributor Ian Scher.
The jury decision effectively says to the tech industry that regardless of the intentions of their products, they are creating meaningful harm toward people. And the companies who made these products need to be held responsible.
Loyola Law School professor Lori Levinson.
I do expect down the road there will be an appeal. In fact, before there's ever an appeal, we still have to find out whether there are punitive damages and whether the judge thinks that there should be a new trial.
A Meta spokesperson says they're evaluating their legal options. Senate Democrats make another counteroffer to end the partial government shutdown over DHS funding. This as many travelers are exhausted. CBS's Cammie McCormick.
The acting head of TSA says the wait times at some airports are the longest in history. These travelers miss their flights due to the long lines.
I did not make my flight. My flight took off and landed before I even got through security.
More than 480 TSA agents have now quit, and at multiple major airports, 40 to 50% of agents are calling out sick.
White House Press Secretary Caroline Leavitt says President Trump will, quote, unleash hell if Iran does not agree to a peace deal. Leavitt also says talks between Washington and Tehran have not hit a dead end.
Talks continue. They are productive, as the president said on Monday, and they continue to be.
President Trump will travel to Beijing for a rescheduled China trip May 14th to the 15th after a delay due to the war with Iran. An American citizen held hostage in Afghanistan for more than a year is back home. Dennis Coyle was released by the Taliban yesterday and greeted by family members when he touched down in San Antonio today. His sister, Molly Long.
There's been so many people praying and supporting our family, and from the bottom of our hearts, we thank everybody for this day.
The NBA is eyeing expansion.
The league's Board of Governors voted to explore the possible addition of Seattle and Las Vegas. Seattle, of course, once had a team.
The Seattle Supersonics have won the...
That was their only title in 1979. The Sonics moved to Oklahoma City in 2008 and became the Thunder.
Viva Las Vegas!
Las Vegas has become a booming sports town with the NFL's Raiders and the NHL's Golden Knights. Baseball's former Oakland A's are scheduled to move to Vegas in 2028. Michael Wallace, CBS News.
Stocks are up on Wall Street. This is CBS News.
What?
OpenAI is shutting down its social media app Sora, which went viral last fall as a place to share short-form videos generated by AI, but raised alarms in Hollywood and elsewhere. You can enlist in the Army as young as 17 with your parents' permission, and now as old as 42.
The Army's decision to raise its maximum allowable enlistment age this month brings the service in line with the Air Force, Space Force, and Coast Guard. The Navy's limit is 41, the Marines is 28. In 2006, the Army began allowing recruits as old as 42 as it struggled to find new soldiers to man major combat operations in Iraq and Afghanistan. It dropped its maximum enlistment age back to 35 in 2016. Christopher Cruz, CBS News, Washington.
The BBC names former Google executive Matt Britton its new Director General. The appointment comes as the UK's national broadcaster faces an uncertain future and a $10 billion lawsuit from President Trump. Jennifer Kuiper, CBS.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenevec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, coming up on about 55 minutes to go until we wrap up the trade on this Wednesday. Carol Masser, Tim Stanovic, live at our Bloomberg Interactive Brokers studio. A little bit of a leg down, I feel like, over the last half hour or so. So what does that mean? Down about 0.5% on both the S&P and the NASDAQ 100, Tim. So we've seen, I think, investors trying to make sense of it and just kind of waiting until something is really solid when it comes to negotiations between the U.S. and Iran. I think that's safe to say.
Yeah, safe to say that, yield and price for bonds move, in different directions. Same when oil goes up, maybe stocks go down, because that leg lower for equities points to a leg higher for oil, above $91 a barrel for WTI.
Are we moving up now?
We're
still down on the day.
We're still down 1.3%, 1.2%, but we were down more than 4% earlier in the session, and that coincided with higher equities too.
Yeah.
So, but Brent still above 103. So they were talking about sub 100 a barrel, but now above 103.
Right. And we've talked about certainly when it comes to European exposure specifically to what is going on in the Middle East in terms of where they get their oil and a lot of energy supplies, they will probably feel this longer and more of an impact. So it's something we keep an eye on. I will say 320 names in the S&P are actually higher, Tim, so far in the session.
Hey, over the next 2 hours, we got a great program. We're going to talk a lot about AI and specifically in the context of OpenAI and what it means for Disney, because Josh D'Amaro's first week as Disney CEO has been marred by Fortnite and OpenAI woes. Chris Palmieri joining us in a minute.
Not easy always being a CEO.
That's why you get paid the big bucks.
That's what I hear. Hey, also on Bloomberg Opinion, the Dansu solution to ending the war in Iran. So we're going to talk about that. Andreas Kaluth argues that the war has slipped out of President Trump's control. So curious to see what he has to say. This is where, we've talked a lot about with our Tim O'Brien about not having a plan. This is not a president who necessarily
He literally said, maybe I have
that.
a plan, maybe I don't have a plan.
Right.
Andreas points that out in the piece. So, we'll see. Also, we continue our conversation around AI and medicine. We're going to be joined by the president and CEO of Hartford Healthcare and also the CEO and co-founder of the AI healthcare company K-Health in our 4 o'clock hour.
All right, let's get to it. Let's take a look at the trading session on this Wednesday. Back over to Amy Moore. She's in for Charlie Pellet. All right, thank you, Carol. A big drop in U.S. crude exports this week. Shipments fell over 1.6 million barrels a day to just over 3 million barrels daily, the lowest since November 2025. Imports also fell. It was a slow week for U.S. oil trade. Energy analyst Stephen Short with the Short Group says there's a disconnect between prices and oil futures contracts and the barrels themselves.
We're focused on these prices that are now, okay, yes, Brent and WTI are plunging right now, but their discounts are growing relative to where the actual war is.
Short Group President Stephen Short tells Bloomberg Daybreak he expects oil prices to settle to where they were before the conflict started, around the $50 to $60 range if the war is resolved. WTI right now topping $91 per barrel. Brent crude near, now topping $103 per barrel. S&P 500 is up 0.5%. NASDAQ up 0.6%. The Dow up 0.6%. Russell 2000 index just about 1% higher. 10-year Treasury yield at 4.32% and the 2-year yield at 3.88%. Bitcoin up 1.2%, around $70,000. Gold extended gains after snapping a 9-day losing streak. Spot gold 1.5% higher. The cost of imports into the U.S. jumped in February by the most in nearly 4 years, reflecting a broad pickup in prices even before the war in Iran. Labor Department figures show import prices increased 1.3% from the month before, boosted in part by higher prices for petroleum and natural gas. And JetBlue Airways reportedly considering the option of selling itself to a competitor. Semaphore reports JetBlue has hired advisors to explore the viability of the deal and is considering scenarios of a tie-up with United Airlines, Alaska Air, or Southwest. Shares of JetBlue up 18%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Amy Morris. That's the Bloomberg Business Flash. Let's go back to Bloomberg Business Week Daily with Carol Masser and Tim Stenovec.
Amy, thanks so much for that update. Do appreciate it. Talk about a tough first week on the job. Walt Disney CEO Josh D'Amaro hasn't even been in his new job for a week, and he's already seen $2 billion tech bets falter, with one of them unraveling entirely. I want to bring in Chris Palmieri, senior editor and entertainment team leader for Bloomberg News. He joins us from the LA bureau of Bloomberg News. Chris, we're talking about the $1 billion deal with OpenAI falling apart. We talked a little bit about that with Rachel Metz just a few minutes ago, and also that $1.5 billion investment in Epic Games. I do want to go back to the OpenAI deal unraveling, because OpenAI says it's going to close down Sora, its video generator app. Where does that leave Disney? Is the deal just done as a result?
Yes, it appears that way. I don't think this was Disney's fault per se. It appears like they were collateral damage in this overall OpenAI decision to abandon that property. But it does call into question their judgment, because they just signed that deal in December. And they had made this a big part of their pitch recently to investors. And in fact, the new CEO has said he wants to make Disney more tech savvy, more interactive, reach younger consumers. And this was a way to do it. They were going to create these original videos, have consumers create them, and put some up on Disney Plus. And it was really a watershed deal for Hollywood, which had been kind of resisting AI for quite a while. This was Disney's way of saying, hey, this is our forward-thinking activity here.
But part of that was a big investment in OpenAI that would have ultimately happened. Is that investment no longer?
It appears that's not going forward, yeah.
So Disney shareholders no longer have exposure to OpenAI?
I'm not 100% certain of that. We had reported that they were getting Disney was getting warrants in exchange for a license fee. It's a very complicated deal.
Yeah, good point. Okay. So, I don't know, Carol.
So, tough timing.
No Mickey Mouse
bummer.
AI slop, I guess.
Yeah, I don't know, Chris. What does this mean? How important were these deals to Disney?
They're very important. The Epic one was 2 years ago, was signed a $1.5 billion investment in Epic Games. That was real money. And it was negotiated by Josh D'Amaro. It was one of the things he pointed to, I think, in his candidacy for CEO, saying, "Look, I've got a forward vision here. I'm trying to reach consumers where they are today, which is online, interactive, And we're building this whole, epic Disney online Fortnite universe. They showed pictures of this right at the start. It looks a lot like a theme park. And that's still in the works. But the fact that Epic, which, by the way, Josh Tomorrow was an advisor or observer to the board of Epic. They've announced 1,000 layoffs. They were cutting $500 million in costs. Their Fortnite engagement is down. All that does not bode well for either the company's investment, Disney's investment, or the Fortnite product, whatever it ultimately is.
Hey, so in your story, in your reporting, you guys include some analysis from our own Bloomberg Intelligence analyst, Geeta Ranganathan. She put out a note, and she said, we expect Disney to find a new partner as it looks for ways to boost franchise monetization among younger audiences while also creating a pipeline for future franchise development. So, as my husband likes to say, don't look back, look forward. So I'm going to go there. So who might they, or who can they, is there somebody out there that actually can fill the shoes and fill this hole that's been created by OpenAI?
Yeah, there are quite a few. There's Runway AI. Google has a product that's similar. So there's other people that Disney could potentially partner with. But, it does speak to, as Geeta said very well, this overall issue that Disney has with Wall Street, where the stock has not done well in recent years. And investors are looking for what's next. The traditional TV is down. Streaming seems to be very competitive. Theme parks would raise prices as much as we can. So where do you go next? What's the sort of thing that's really going to excite investors? And Josh Tomorrow had articulated this vision, this immersive online world vision that now seems to be faltering.
Okay, Chris, I don't watch reality TV, but even I saw the TMZ video.
And you'd like to give Chris actually a rose, wouldn't you?
I know that's something from The Bachelor or The Bachelorette.
Sorry,
well, I do love Chris, so yeah, I think that is fair. But Chris, this TMZ video showing Taylor Frankie Paul hitting her then boyfriend, throwing chairs at him. This is a really important franchise for ABC, of course, owned by Disney. That kind of just factors into the damage control that Josh has to do this week.
And we're laughing a little bit, but that video was disturbing. I think it's safe to say.
Really disturbing. What's not clear, and these two franchises really, she's the star of the Mormon Housewives as well on Hulu. So, it's not clear exactly how much. I mean, it seems that Disney was aware that she had some legal trouble with these complaints. But it's not clear that they had seen that video, and when you see the video, you're like, it's a whole different story, right?
Yeah.
So big problems for the franchise. I mean, the Bachelorette franchise will survive with new Bachelorettes, I'm sure. Maybe even the Mormon Housewives will survive with another housewife. But it's definitely a PR problem for them. What did they know? When did they know it? And of course, the season that they invested tens of millions of dollars in is troubled.
So how should we be thinking about Disney right now? I mean, it's going to be a new era. We've talked so many times with you, the Bob Iger era, twice, but really the long time and really transforming that company. And then, of course, leaving and then coming back. But I'm looking at Disney and what the stock is doing this year. It's down almost more than 15% here. So, I don't know. There are strengths, a lot of strengths, right? When we think about the parks and so on and so forth. I mean, how is Disney, or how does it need to be evolved? How do folks say it needs to continue to evolve?
I think that the Tomorrow's strategy is a correct one. I mean, there is this amazing opportunity. If you think about 200 million subscribers around the world at Disney's streaming services, to figure out new ways to connect with them and bring more products, whether it's buying theme park tickets, creating new unique experiences only for the Disney Plus subscribers. All the merchandise that Disney does so well, the interactive component, the games, the short-form videos, all that makes sense as we evolve to this sort of new era where the theme parks, in a way, are both physical and virtual. That could be something huge, but it's easy to talk about and consultants discuss, but to make it happen in the real world, as we've just observed this week, is not as easy as it looks.
This is terrible to ask, 30 seconds though, but I mean, like any CEO, does he have a certain amount of time frame to kind of get this all on track? as the new guy?
Yeah, I think he's certainly, I've covered many Disney crises over the years, and the company has always bounced back. I think tomorrow certainly we'll have a sort of a honeymoon period here before things start to really look bad for him.
All right, really appreciate it. Chris Palmieri, Senior Editor and Entertainment Team Leader for Bloomberg News. He's joining us from our Bloomberg News LA Bureau. Thanks to Chris. When we come back, we're going to go back to the war.
Yeah, the Don Zoo solution to ending the war. Our conversation with Bloomberg Opinion's Andreas Kluth. That's coming up next on Bloomberg Business Week Daily.
.321 on Wall Street. I'm Amy Morris. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. A jury has found both Meta and Google liable for a women's mental health crisis caused by an addiction to social media platforms. Today's verdict in Los Angeles highlights the financial risk facing companies from thousands of other suits, which claim Instagram and YouTube are intentionally designed to addict young users without regard for their well-being. You can learn more from Bloomberg's original investigation, Can't Look Away, the case against social media, available on Bloomberg platforms. Meta shares are less than 0.5% higher. Google shares are little changed. Markets positioning for a conflict resolution with Iran. We check markets for you all day long here at Bloomberg. S&P 500 up 0.6%. NASDAQ up 0.8%. The Dow up 0.7%. The Russell 2000 index up 1.2%. The 10-year Treasury yield at 4.32%. The 2-year yield at 3.88%. WTI around $91 per barrel. Brent crude topping $102 per barrel. And Bitcoin is 1% higher at $70,000. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's return to Bloomberg Business Week Daily with Carol Masser and Tim Stenovac.
Thanks so much for that update, Amy. Do appreciate it.
Hey, just want to mention, crossing the Bloomberg terminal, this is coming from Axios, that Israeli Prime Minister Benjamin Netanyahu wanted to call on Iranians to flood the streets to protest their government last week, but President Trump told him it was just too risky. This is according to Axios, who cite 2 U.S. officials and Israeli source. That's their citation there. And, goes on to say why it matters. The U.S. and Israel agree on most of the military objectives of the war, but the outlooks differ on the question of regime change in Iran and the amount of chaos and bloodshed that's acceptable to try to bring it about. And I guess I feel like we're starting to see that there's not necessarily agreement totally between U.S. and Israel, maybe about an off-ramp or when to do it and so on and so forth.
And the off-ramp and the potential outcomes is exactly what we're talking about with Andreas Kluth. He's Bloomberg Opinion columnist who covers U.S. diplomacy, national security, and geopolitics. He was editor-in-chief at Handelsblatt Global and a writer for The Economist. He joins us from Washington. You write in this great column that talks about the online memes of Don Su, this portmanteau of Donald Trump and Sun Tzu. But you also write that this could be a forever war. You say the reality is this war has slipped out of Trump's control, if he ever had any to begin with, and it could yet mire America in another forever war. Why do you think that less than 4 weeks into this conflict?
Well, actually, that's the column I wrote on the day the war started, because J.D. Vance probably is concerned about this. This is what Trump ran against, is these forever wars in Iraq and Afghanistan, and now maybe through hubris, because it went so easily and so quickly in Venezuela, he may have stumbled into one. But that's not actually what I'm saying in this column. What I'm saying is the options. As a bad strategist, he's left himself with 2 bad options. One of them is to essentially try to declare victory and move on, where it's completely implausible that it can be called a victory. And the other is to double down and escalate. And as you know, we're currently preparing for both. So and of course, the escalation option, that scenario is the one that we have to go into what that would mean. That could lead to a forever war, which doesn't, what is forever? It's just to a much worse catastrophe and cataclysm. That's what I call it. So it could go wrong. It could mire the U.S. in a number of ways, hostages, casualties, and more.
But it does, Andreas, seem like the U.S., or at least the president right now, is going toward the other area, de-escalation. That seems to be what he's looking for.
So I don't know how you derive from that. What I think is, by the way, you mentioned the Don Tzu, the Sun Tzu memes on the internet. What's funny about that is the absurdity. Is one of the memes says, if you don't know what you're doing, neither does your enemy. So it turns Sun Tzu that there is a sense in the expert community here in Washington, D.C. that he has no idea what he's doing. But where we are now is he is sending ground troops, Marines, 82nd Airborne, for potential missions, also to apply more pressure in his mind to the Iranians. I think he's never understood the Iranian enemy, the mindset. So preparing for escalation while claiming on Truth Social that there are good and productive talks with the Iranians, which of course there were, up to the moment he started bombing them, and that was true last year too when he bombed. Whereas the Iranians have denied that these talks are going on. So what does that tell you? I think it is completely up in the air which of these two paths, and it really is a fork in the road. You can't sort of average them out, which of these two paths he will take.
Yeah, and I also, just to layer on this, Andreas, like I think about where Israel is in this, and as we, continue to kind of get some headlines, we just talked about Axios' reporting, but, whether or not, it seems like they agree on most of the military objectives, but they differ on regime change and kind of what happens. And you do wonder how that also either complicates the situation.
Oh, it complicates the situation. It has complicated this situation and everything for the past several years, in some ways decades. I mean, if you remember a few weeks ago, Marco Rubio got into hot water, and I columnized about that as well, when he sort of committed a gaffe defined as accidentally speaking the truth, perhaps. And when he said, well, what was the, you remember the one official for international law at the United Nations was, we had to attack Iran because there was an imminent threat. What was the imminent threat? Marco Rubio was asked as well. We decided that Israel was going to attack Iran anyway, and therefore Iran would retaliate against our kids, so we had to go first, which is strange. So from the start, this was, dog wagging the tail, I don't know. This was very complicated, and Benjamin Netanyahu all along has his own legitimate, I mean, he is acting in Israel's national interest. The problem with what Marco Rubio implied was if that's true, then Donald Trump was acting without perhaps understanding it in Israel's interest, or putting Israel first instead of America first.
It's interesting. We talked to a lot of people. We've talked to a lot of people over the last 3.5 weeks who've said, the Ayatollah had to go, and we agree with the idea of the premise of these strikes, that this regime had to go. But nobody's been able to offer sort of like a what's next scenario. And I think that that's probably the reason why over the last 47 years, you didn't see other American presidents perhaps do this. So, so I'm wondering about the other side of this, Andreas.
To bring the spirit of Don Tzu, because we're now in an ether of nebulousness, okay? But you just brought up the Ayatollah, and we all celebrated. A human being was dead, but we all celebrated that this particular Ayatollah Khamenei is dead. And what do we have now? We have Ayatollah Khamenei, just a different one, apparently without legs or damaged legs, wife, father, other family members gone, and more radical from everything that I hear than the previous one even. We have the same exact regime. We could sort of now do an asterisk and talk about Venezuela, which was decapitated, but the regime left in place. Here we have decapitated many rungs of the leadership down a regime, but left the regime in place, and I guarantee you more hostile, more fundamentalist, more bent on, if they survive this, getting a nuclear weapon, rebuilding, than they ever were. So Don Tzu, the whole point is, let's think wittily but strategically. Have we achieved anything strategically beyond physically destroying the Iranian Navy and these other assets? It's not clear to me.
Well, it's interesting, and I love that you went there, Andreas, because I think one of the things that Tim and I have constantly asked, I think everybody has been asking this since this started, what is the goal? What's the mission? What's the plan? And as we've had conversations, and I know you write in this column, that this is not necessarily an individual, meaning President Trump, and I think it's fair to say, I'm not speaking out of turn, that doesn't really plan things out. But is there a Don Tzu? And, for those who aren't familiar, Sun Tzu, of course, the legendary Chinese military strategist, right? So is there a Don Tzu solution among this zaniness and not having a plan? I'm just curious, is there?
it is completely clear, not just John Bolton, but people who worked in Trump 1 for him, they tend to agree on one thing. He does not think strategically. He doesn't plan, just as you said. He goes by news cycles. He thinks in terms of ratings. There is a lot in his mind, not necessarily long-term geopolitical outcomes and working backwards from those. But in terms of what's next now, I think that's the question. And I'm going back to the fork in the road that he didn't want, but that we're in, and this is bad planning. Double down, go in bigger, try to topple the regime. That's regime change. That's essentially... that should remind you of 2003 and Saddam Hussein, the megalomania of that, or saying, "Oops, that didn't work as I thought. Let's call it a victory. Let's have Pete Hegseth show all the photos of everything destroyed and just move on, maybe to Cuba or somewhere else, maybe distract someone." And I'm saying of those two options, because I don't see a third anymore, almost a war in. Of those two options, one is cataclysmic, I think, possibly a forever war, which is double down and escalate. The other one is very embarrassing and injurious, but much preferable. Let's help him declare victory and go home. This has to end.
Yeah.
But is it because, Andreas, remember that first video that the president put out when the U.S. struck Iran, talked about this being the Iranian people's moment for them to rise up and take the government. And that didn't happen despite the protests that we saw earlier this year.
That didn't happen. You know, we all have been rooting over the decades, and especially over the last few years when women were cutting their hair off for them. The whole world, except for the regime, wants the regime gone and wants the population to rise up. Has he helped the population? Objectively, no. And by the way, if he had wanted, he truth socialed during the recent uprising in January when the regime killed thousands, possibly tens of thousands of Iranians. He promised them support right there, but that didn't come. So we've had, last year he claimed to have obliterated the nuclear program, and he was really angry at everyone in the media who said maybe it will end. The defense intelligence community said it wasn't obliterated, or maybe not. Now he's stated that as a possible effect. How could it have been obliterated? We've got regime change, nuclear programs, missiles. What is it tomorrow? I don't know.
Yeah. And listen, I do think about President Trump, and as you write, like, how does he kind of wrap it up and sell it to the American public, which is another part of this. Andreas, thank you so much. Andreas Kluth, check out his column. It's on the Bloomberg.
It's 3:40 on Wall Street. I'm Amy Morris. We check markets for you all day long here at Bloomberg. Stocks are higher. Let's go to the First Word breaking news desk for today's afternoon call with Bill Maloney.
And good afternoon, Amy. That's right. U.S. stocks are trading higher in a choppy session. The Dow is currently up 271 points. S&Ps are higher by 0.5%, and the Nasdaq, that gains by 0.6%. The U.S. 10-year yield is at 4.32. Gold is in the green. Oil is in the red. And Bitcoin, that's trading higher by 1.2%. Among the main 11 S&P sectors, leaders are materials and consumer discretionary. Only energy was in the red. And leaders to the upside in the Dow, Sherwin-Williams and Merck, while Nike and Verizon led to the downside. In deal news, Merck is buying Terns Pharma for $6.7 billion. And in other news, Trump is going to travel to China May 14th and 15th. Wrapping things up, Semaphore reported that JetBlue is exploring a sale, though shares are up 15%. Live from the First Breaking News Desk, I'm Bill Maloney. Amy?
All right, thank you, Bill. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash.
Daddy, can I drive?
Yeah, sure, why not?
Do I look like I drive a minivan?
Shut up and drive.
Don't drive angry. Don't drive angry. I'll drive. Shotgun.
This is the drive to the close.
If you had access to a car like this, would you take it back right away?
On Bloomberg Radio.
TikTok. Are you just dancing, Carol?
I'm kind of dancing.
Okay, Carol likes the new-ish.
I feel like
new-ish
this is what's going on with the indexes or indices. I want to make
indexes.
Indexes. I know Matt Miller.
Make Matt Miller happy.
I was actually just seeing something about this.
What were you saying?
You can't say indices. I'm trying to think.
You can. You said you can't?
Yeah. Well, we'll talk about it later. S&P 500 bouncing around here. Still up about 0.5% on the S&P 500, but we're off our best levels. You just heard Amy breaking down the TradeMasters 100 too, up about 0.6% again. I think there was a lot more optimism heading into the trade earlier on expectations that maybe we're seeing some negotiations between U.S. and Iran, but the back and forth continues, and so it's very hard to get a clear picture.
Well, look, as we just talked to Andreas Kluth about, there's, the president has been putting stuff out on social media that doesn't necessarily match what people think is actually happening, or match what the Iranians are saying is happening.
Yeah, no, exactly, right. And so unless everybody's on the same page, nothing's going to happen. Curious to see what our Drive to the Close guest has to say. Ted Neild is partner, CEO, and chief investment officer at Gresham Partners. They've got about $13.2 billion in assets under management. He joins us from Chicago. Ted, how you doing?
Great. Good afternoon. Thanks for having me.
Yeah, it's great to have you here. Moment in time, it feels like hour to hour, things can change day to day, certainly. How do you make sense of it for your clients? And I'm just curious, how much shifting around or changing have they wanted to do in this environment?
Well, a little bit of background here. We are fortunate to work for an exclusive group of what we describe as families who have created generational wealth. And by definition, our families have a long-term perspective. And the fun thing about that is most people say they have a long-term perspective. And in fact, when a little turbulence hits or a little volatility hits, everyone starts trading and running. But fortunately, our clients really afford us the latitude to look through these events. And it allows us to sit back and not have to react or overreact as human nature wants us to do. The other thing that contributes to that is that we have a reputation, we've got history of building portfolios that have some resilience as they go through these periods of time. So our clients are naturally calmer. They're in a better place to make decisions about the things that are happening in the markets. And quite frankly, sometimes one of my favorite quotes is this John Bogle quote, I think, that says, instead of saying, don't just stand there, do something, the opposite should be true, which is don't just do something, stand there. And that's partially true today.
So is your phone ringing at all from these folks?
Surprisingly, yeah, it's a really good question. Surprisingly, it has not rung that much. And one of the things we try to do with all of our clients is we contextualize this thing. So if we had a conversation in January and I said, hey, let's look forward to the end of the first quarter and there's going to be a huge conflict in the Middle East and the Straits of Hormuz are going to be closed and oil is going to spike above 100. And then on top of that, we're going to add SaaSmageddon, meaning a lot of these great software companies from around the world, their franchises are under attack from AI and the terminal values are going to zero. And I guessed what the market would have done. I would have said down 20, 25, something like that. You guys might have said more.
Yeah.
But today we sit year to date within a stone's throw of being flat, which is just absolutely remarkable in terms of resilience. I know we're going up and down by a couple percentage points and it's a lot of volatility, but it really is amazingly resilient. And then I'll add to that if you look overseas, a lot of those markets are actually flat and some of them are actually up significantly. So all things being considered, it's a pretty good showing for risky markets, for equity markets.
Can you just give us more information about who your typical client is, who the family is? I know you, in the profile, it's, more than 100 families, more, in terms of who the clients are, but more than $13 billion in assets under management. So what, that's, $130 million per account if we were to average it out. But what would you, and obviously it's not that, but what would you say is sort of the typical profile?
Most of them are what we call wealth creators, so they're actively in the business of creating wealth. About a quarter of them are professional investors, so these are people who are used to dealing with investing uncertainty, and then the vast majority of the rest of them are business leaders or business owners. So it's a really fun group. We're quite frankly fortunate to be able to work for families like this. There's some interesting common characteristics, and I would say fascinating to me is that probably the most prevalent is they've worked really hard to create this money, and so the idea of losing it pains them. And so there's this preservation. They take risk, right? We've got generational horizons, and they take a lot of risk, but there's this absolute orientation to everything that we do that's important. So when you get to a place like this, there's some confidence that the portfolios will hold up pretty well. They have this resilience to them, and that's embedded in.
Does that change the asset allocation or the profile of a typical portfolio?
Well, I would say when you look at the typical profile across our clients, it's still very equity-centric, very growth-oriented. And because we have generations to invest for, this is not necessarily about G1 money alone, first-generation money alone. A lot of the entities that we structure are multi-generational in their horizons, and so we can take an enormous amount of risk in those parts of the portfolio.
All right, so it sounds, obviously I get it, long-term, and they kind of go through a lot of crises. And I'm assuming that they felt the same way during COVID. Do they look through all of these things the same, or a great financial crisis? I'm assuming people think a little bit differently about different crises.
Yes, right. So a part of the context on this one is that it really hasn't created significant portfolio damage yet. So COVID was a different animal, and thankfully the money cannon that the government shot at the problems then created a very truncated downturn. One of the important things to recognize through any of these events is that nobody has a crystal ball. Right? We can't tell you what's going to happen tomorrow. We can't tell you when the Straits of Hormuz are going to open back up. We don't know what the ending framework will look like in the Middle East. Nobody knows. And a lot of people try to fill the space with creating the appearance of certainty. And as humans, we crave that certainty. We crave the illusion of understanding the future. But quite frankly, the price of long-term investing is volatility and uncertainty. And if you're not comfortable with that, we probably need to shift your allocations a little bit, because that's just what it takes to get through these period of time. If you overreact in the moment, if you're not prepared, that's when you start having problems.
Ted, real quickly, just 45 seconds though. I am curious, is it a lot of plain vanilla investing, or I'm thinking about these investors, private credit. Thank you. That's exactly where I want to go. That high net worth individuals have wanted exposure to this, and this is in an interesting environment. Are they being like, let's back out? And forgive me, I've only got about 40 seconds left here.
So a lot of our portfolios are what invested in what people would think about as alternatives. Private credit's the exception. We put out a paper 2 years ago, approximately. It's still up on our website if people want to go take a look at it, saying our clients are not invested at all in the space. We had some serious concerns.
Interesting.
And a lot of that's coming to light today. So it does look different, but it doesn't look like it's got a lot of private credit. In fact, it's almost got zero in it. We're certainly thankful